So let's begin the CA Final Advanced Auditing Revision Marathon applicable for May 26, September 26 and Jan 27 exams. Now please do not skip this introduction video. Immediately below you have timestamps for each and every topic that we covered. So this introduction I'm especially giving you what is this marathon, how many years it is going to be, what are we covering. We are going to cover 90 marks weightage. You will have paper for 118 marks with choice, MCQs, everything put together 180 marks. We are going to cover 90 marks. That too, we are going to cover it in two parts. First, part 1, 12 hours. Part 2, 12 hours. Simple, watch below timestamps. If the timestamp starts with audit report chapter, then that's a part 1 marathon. If the timestamp starts with ethics related continuation topic, group audit SDG, then that is part 2 marathon. So what I'm going to cover in part 1, audit report 20 marks weightage, CARO in-depth discussion I did, review chapter in-depth discussion, specialized, professional ethics, everything. It's like an in-depth marathon. It's not even like a routine just formality kind of marathon. Intensely, detailedly we discussed each and every concept. Then ethics continuation, group audit and SA 600. By the way, before I talk about part 2, let me tell you one important thing. What material I have used in this marathon? Goat notes. And at certain places, I have even opened my question bank and then showed. I even solved past exam question papers also as a part of this marathon. So what are all things you need? One is Goat Notes 2026. If at all you already followed some other faculty book, absolutely you can use that book along with this marathon, no issue. But if at all you are using my Goat Notes, it will be breeze for you. The marathon will be utmost easy for you. And question bank of mine 2026. One small request to every student before they watch the marathon. As soon as you finish one topic, go back and download my question bank PDF of 2026. PDF is there on our website. If at all you are already having a hard copy, see, I hope every one of you know my particular question bank is a colored question bank like this. This is complete like a colored question bank where we highlight keywords, everything. So this is how beautiful the question bank will be. And if you observe, the question bank will have 3 parts. You see blue color background, the color is here. Here it is yellow color background, the color. Again you see here orange color background, the color. Every chapter is divided into 3 color codings. Orange color background you will have test your knowledge, test your understanding illustrations. Blue color background test your knowledge questions of ICAI. Yellow color background we name it as MRP, mock revision past exam papers. Up to Jan 2026 attempt, this question bank is updated. In the May attempt, coming MTPs if at all were there, that will be updated later. We will give you an additional PDF. In this question bank, you will find something called exceptional at few questions. Like these questions, the answers were slightly different. In every chapter, you will find exceptional. Must and should. After finishing one chapter, go and solve the question bank. Something which I notice commonly in every CA final student and CA inter students also is they are neglecting question banks. Question bank you should never neglect. That is the most important resource in addition to the concept notes. Then there is something called chart book of mine is also available in my website. In our website, Sreshta for CACMA, you can download the chart book PDF and then use it. Chart revision is also uploaded on the YouTube for previous attempts, which I will re-upload. Whereas this part 1, part 2, which I am doing is completely a fresh new marathon. Okay. So part 1, I told you. Part 2, professional ethics. Okay, so professional ethics is continuation. Group audit 6 marks weightage, SDG 6 marks weightage, NBFC 6 marks, bank audit 8 marks weightage, related service 4, gap 10 marks. So almost you will find 12, 18, 18 plus 4, 22, 30, 40. So here it is 40 marks and here it is 25, 30, 46. So easily minimum 45 to 85 to 90 marks in these 2 parts. Apart from this, I will also, we have a chapter in CA final audit evidence, which is our 5th chapter in our book. Completion and review is there. These 2 topics were discussed in CA final only briefly. For those 2 chapters, I request you to watch my CA inter audit marathon. This is must, but this you should do only after you finish these 2 parts marathon. Apart from that, the first chapter in our CA final book is quality control. I will do a live revision of the same day before exam. Your day before exam, I will do quality control live revision. With these topics also put together, you can easily attempt 100 marks of the paper, minimum 90, even a worst case scenario. That's it. So what I'm going to cover in this marathon, part 1, part 2, everything I spoke. Below, look at the timestamp. You will understand which part you're watching. That's it. This is a common introduction video. So I spoke about the notes and material, colored material, book you can order on the website. PDF is also freely available on the website. Which part, what topics I'm covering, what is the level of coverage, question bank I spoke, and everything I clearly mentioned about this marathon, what you're going to get. That's it. Make use of it and do well. All the very best. Please continue watching. Yes. So let's begin the audit report topic. Tell me, what is the objective of auditor? You might have seen in SA 200, CA Inter, you might have learned what is the objective of auditor? Two objectives. One, to obtain reasonable assurance whether the financial statements are free from material misstatements, whether due to fraud or error. First, obtaining reasonable assurance whether the financials are free from MMS. Two, reporting on the financial statements based on the findings of the auditor. So the SA 200 objective itself says that we have to give an audit report which includes our opinion. What is reasonable assurance? It's a high level of assurance, but not absolute. Reasonable assurance is a high level of assurance, but not absolute, because of various reasons. You might have already seen in CA Inter, inherent limitations of audit. That is the reason why we can only give reasonable, but not absolute. Correct? Now, opinions are two types. Opinions are broadly two types. But before that, audit reports are two types. The audit reports are two types. Unmodified report, modified report. One is unmodified report, another one modified report. Don't confuse with unmodified opinion, modified opinion. No, I'm not talking about the opinion. I'm talking about the auditor's report. Okay. So what is an unmodified report? If at all you are giving audit report as per SA 700 format, if at all the real audit report that you are giving to a particular company, which is exactly as per 700 format, like you have taken 700 format of audit report as it is, without modifying that format, you are issuing the audit report to the client, just modifying the client name, period, all that. That report is called as what? Unmodified report. Whereas if at all 700 format of audit report you are not following intact, means there is a original format of audit report is given in 700. To that you are making some modifications. To that report you are making some modifications. What modifications you are making, we'll discuss. What modifications we are making, we'll discuss. If at all you are making some modifications, either through 705 or through 701 or through 706 or through 710 or through 720, if you are making any modifications with these standards to the format of audit report given under 700, then we call that report as modified report. Are you getting it? We will call it as what? Modified report, which means if you are including emphasis of matter paragraph, if you are including other matter paragraph, the report is called as what? Modified report. Why this understanding is very important. You have a question in SA 260. Under what circumstances audit report will be modified? Under what circumstances audit report will be modified? For that, many students confuse and write what answer? Modified opinion answer they'll write. Circumstances where we give modified opinion, that is different. Circumstances where we modify our report, that is different. Circumstances where we modify the report, why you need to learn that? Because you have to communicate it to those charged with governance. When you are modifying the audit report because of certain circumstances, those circumstances you have to communicate those charged with governance as per 260. So for that reason, you should know what is a modified report means. Clear? Fine. Before that, let us directly discuss elements of audit report to understand better what is unmodified report, what is modified report. So what are the elements of auditor's report? What are the elements of auditor's report? Just a minute. Yeah. These are the elements of audit report. In this notes, I gave comprehensive format of audit report. I gave comprehensive format. If you see this format of audit report, this will not match with ICAI format which is given. because this is a comprehensive format which considers all the scenarios of 701, 706, 570, everything. By the way, here there is one more point I missed, even 570. If you are modifying report because of 570 reason also, then also we will call that as what? Modified report. Okay. Now, if you look at 700 format of audit report, what are the elements I will show you? What are the elements of audit report which is as per 700 format of audit report? Look at this 700 format of audit report. What are the elements of audit report? Opinion. Correct? Elements of audit report is what? Opinion. Now you see my book. What are the elements of audit report? First of all, of course, title will be there. Yes or no? What is the title of the audit report? Independent Auditors Report. We should clearly title the report with a name clearly mentioning Independent Auditors Report. Then addressee. You see here, there is a title, there is an addressee to the members of the company. Addressee is decided by terms of the engagement or regulation. Law or regulation that decides the addressee. Yes or no? If it is a statutory audit, then the law and regulation will decide the addressee. If it is a non-statutory audit, terms of engagement will decide the addressee. In case of a company, 143 subsection 2, it talks about audit report. It has to be addressed to the members of the company. As per Companies Act, it is clearly given. It has to be addressed to members of the company. And one point you keep in back of your mind is this entire 1 to 11 chapters we are discussing from financial audit context. We have in our syllabus financial audit only. We do not have in our syllabus non-financial audits. Okay, we do not have. Only one topic we have which is dealing with non-financial audit is 3402-402, which is dealing with controls audit, which is a non-financial audit. It's not a financial audit. It's a non-financial audit. Whereas rest of the entire subject, we discuss it from the context of financial audit. Only 3402, there the auditor has to give assurance on controls at service organization. That's a non-financial information. Rest all other standards we are discussing from financial audit context. We don't have operating audit in our syllabus. We don't have compliance audit as a part of syllabus. No, we don't have that in our syllabus. So entire subject we are discussing, 1 from financial audit, 2 from the context of audit of listed entity. I'm also discussing this entire subject from the context of listed entity. 3 general purpose financial statements. We are discussing the entire subject from general purpose financial statements point of view. Only one chapter you have which is dealing with special purpose frameworks, that is 8th chapter, specialized areas. Only there we ignore the concept of general purpose financial statement. There we focus on financial information prepared using special purpose framework. Understood? So rest of the entire out of 11, rest of the 10 chapters, they are from general purpose financial statements context. Understood? So these are the 3 principles you should remember. 1, financial audit is what we are discussing. 2, listed entity point of view. 3, general purpose financial statements. These 3 points you have to keep in mind whenever we are discussing the subject. Clear? So there is a title, there is an addressee. Yes or no? Now look at this. There is a title and there is an addressee. So we have completed. Then the next element in the reporting is auditor's opinion. So even you see ICAI book also, it has same opinion. Correct? The side heading is opinion. Then the next one is what? Basis for opinion. Here also you see basis for opinion. Now here whatever I highlighted in black color, you will not find that here. You will not find that here. Key audit matter you will find only as an introduction. That's it. Okay. Even if you are giving key audit matter, we can still call it as modified report only. We can still call it as what report? Modified report. Key audit matter is given because it is compulsory for listed entities. It is compulsory. And this 700 format which they gave, they drafted from the point of view of listed entity. For that reason, always 700 format will always have what matters? Key audit matters, because the format is given from the context of listed entity. That's it. If it is not a listed entity, this also will not be there in the 700 format. If it is an unlisted entity, key audit matter point also you will not find in 700 format, technically speaking. The next one you see directly they are talking about, next one you see directly they are talking about other information. Again, other information may be there, may not be there in every entity. This is also generally possible only for listed entity. So this also, if you see the original format of 700, this also you will not find. Okay, then responsibilities of management. Now if you see the GOAT notes which I gave, material uncertainty related to going concern, key audit matter, emphasis of matter, other matter para, these 4 points were not there in the 700 format which I showed right now. Yes or no? The reason 700 format mainly talks about giving unmodified opinion. Expression of which opinion? Unmodified opinion, where you may not include key audit matter, you may not include other information matter, you may not include material uncertainty, emphasis, other matter para. Which means if you are including emphasis of matter para, then the report is getting modified. I'm not talking about opinion getting modified, I'm talking about report getting modified. Are you clear? So when the report gets modified, when you are giving MURGC para, MURGC means what? Material uncertainty related to going concern. MURGC. When you are adding MURGC para, when you are adding key audit matter para, when you are adding emphasis of matter para, or when you are adding other matter para, or even when you are adding other information para, yes or no? If at all you are including these 5 paragraphs, then I will say report is getting modified. Generally, if I give an audit report where simply opinion is there, basis for opinion is there, then directly management responsibilities, then auditor responsibilities, and then directly coming to the next one, report on other legal and regulatory requirements. If I simply include them, that's not a modified report, that's an unmodified report. That's an unmodified report. I hope you understood these two. Now, then we'll go to what are the types of opinions that we have. What are the types of opinions that we have? Unmodified opinion, modified opinion. Am I right? Unmodified opinion, modified opinion. Correct? When do we give unmodified opinion? When we give unmodified opinion, or in other words, when we give modified opinion, 2 circumstances. Only 2 circumstances we will give modified opinion. One, circumstance number 1. Financial statements are materially misstated. Financial statements are materially misstated. See, which may be pervasive, which may be non-pervasive, that's a secondary issue. Okay, which may be pervasive, which may be non-pervasive, that doesn't matter. For deciding about should I give a modified opinion, should I give an unmodified opinion, to decide about that, I don't have to worry about pervasiveness. So if the financials are materially misstated, I will give modified opinion. Or if auditor is unable to obtain, sufficient and appropriate audit evidence. Sufficient and appropriate audit evidence. Remember, in a review chapter, you will simply use the word SAE. Sufficient and appropriate evidence. You don't use the word audit in a review topic. When you are doing a review engagement under 11th chapter that we have, 10th or 11th chapter that we have, okay, you use the word sufficient and appropriate evidence, whereas rest of the entire subject, if it is an audit engagement, you are supposed to obtain sufficient and appropriate audit evidence. Okay, you are unable to obtain evidence, then also you will give modified opinion. Again, here possible effect, here the possible effect could be pervasive, could not be pervasive, anything it could be. That will decide again modified opinion which type we should give. So technically we will give modified opinion in only 2 circumstances. In Jan 26, one of the MCQ, the auditor is lacking independence. Which opinion he'll give? That is what indirectly tested in the 4 options. The audit team is lacking independence. So which opinion he should give? Modified opinion. No, that's nowhere linked with these 2 circumstances. You will give modified opinion only when these 2 circumstances present. Sir, auditor is not independent, client has done a fraud. These are all not relevant. Tell me only 2 answers. Are financials materially misstated? Yes. Then give modified opinion. Financials are not materially misstated. Financials are not materially misstated. You got enough evidence. You have obtained sufficient appropriate evidence. Then if these 2 circumstances do not present, you cannot give modified opinion. So this is how you need to understand. Clear? Only these 2 circumstances will make the auditor give modified opinion. Otherwise, if these 2 circumstances do not present, you will straight away give which opinion? Unmodified opinion, which is also called as unqualified opinion, which is also called as clean opinion. Correct? Yes. So which means, tell me, when do we give unmodified opinion? If auditor obtains sufficient and appropriate audit evidence and concluded that the financial statements are free from material misstatements and are prepared in accordance with applicable financial reporting framework, then the auditor will give which opinion? Unmodified opinion. Correct? So financial reporting framework means what? Basically, rules and regulations for preparation and presentation of financial statements. Framework means rules and regulations. Financial reporting means preparation and presentation of financial statements. If rules and regulations are drafted for preparation and presentation of financial statements, then we call that framework as financial reporting framework. Then which financial reporting framework is applicable for the entity depends upon the nature of the entity and purpose of the financial statements. With regard to nature of the entity, purpose of the financial statements, the financial reporting framework will be decided. Then when you're discussing financial reporting framework in the context of a particular entity, then we use the word applicable financial reporting framework. Applicable financial reporting framework means what? Depending on nature of the entity, depending on objective of financials, what financial reporting framework is applicable, then that is called as applicable financial reporting framework. For a bank, applicable financial reporting framework is Schedule 3 of Banking Regulation Act. For a normal company, applicable financial reporting framework is Companies Act Schedule 3. For an insurance company, applicable financial reporting framework is IRDA Preparation of Financial Statements Regulations. So what is applicable financial reporting framework is decided by nature of the entity. Are you clear? Then so we understood when we give unmodified opinion, when we will give modified opinion, and you are well aware this modified opinion is again subclassified into three types. What are the three types? One is qualified opinion, another one is adverse opinion, another one is disclaimer of opinion. Yes or no? This modified opinion is again subclassified into three types. One is qualified, adverse, and disclaimer. Now you see, qualified opinion is given in two circumstances. Again, qualified opinion will be given in two circumstances. That's why you see qualified opinion definition has two paragraphs. Qualified opinion definition has two paragraphs, whereas adverse opinion has only one circumstance. Disclaimer will also be given only in one circumstance. Are you clear? Now, first of all, again, modified opinion is given: 1, financial statements are materially misstated; 2, you are unable to obtain sufficient and appropriate evidence. You are unable to obtain. In these two cases, we will give modified opinion. Which type of modified opinion? We will give, whether we give a qualified, we give adverse, or we give a disclaimer. See, you can't directly express modified opinion. You can't directly express modified. My opinion is modified. Okay, tell me what is the intensity of modification? What is the intensity of modification? The intensity of modification can be qualified, can be adverse, can be disclaimer. Only these opinions you should give directly in the audit report. You can't straight away say, I will give modified opinion in the audit report. You modify the opinion, that's okay. But tell me, how are you modifying it? Are you just modifying in a qualified manner? Are you modifying with an adverse? Are you modifying with a disclaimer? What exactly you are modifying? You should clearly give this, yes or no. So the type of modified opinion, what is it? The type of modified opinion depends upon, one, nature of the matter. One is nature of the matter giving rise to modification. What is the nature of the matter giving rise to the modification? Nature of matter is only two types. Financial statements are materially misstated, or you are unable to obtain sufficient appropriate. Why you want to modify? First of all, nature of the matter giving rise to modification means what? Why you want to modify the opinion? I want to modify the opinion for two reasons. One, either I found a material misstatement. 2, I am unable to obtain sufficient appropriate evidence. Only for these two reasons we generally modify. Okay, then second one, pervasiveness of the effect or possible effect of the matter. Pervasiveness of the effect or possible effect of the matter. 1, nature of the matter, why you want to modify. 2, pervasiveness of the effect or possible effect of the matter. So these two will decide which opinion you'll give. Will you give a qualified? Will you give an adverse? Will you give a disclaimer? These two we will decide. These 2 points will decide. Now, the same thing we can express it as a diagram here. We just gave one table here. In 705 it was given. Small box is given. Yeah, look at this. Determining type of the opinion. Determining type of the opinion. So the type of modified opinion depends on which modified opinion you'll give. That depends on. In one of the exam, it was asked as a 4 or 5 marks question. In one of the exam, they have directly asked as a 5 marks or 4 marks question descriptive, or it can be tested even as an MCQ. The type of modified opinion depends on nature of the matter, giving rise to modification, and pervasiveness of the effect or pervasiveness of the possible effect on the financial statements. What is its pervasiveness, or what is the pervasiveness of the effect, or what is the pervasiveness of the possible effect? We use the simple word effect when we have sufficient appropriate evidence. We use the word possible effect when we do not have sufficient and appropriate evidence. When we don't have an evidence, we use the word possibility. When we have an evidence, we know reality, we know actual situation. So what is the pervasiveness of the actual effect, and what is the pervasiveness of the possible effect when we don't have the evidence? So this will decide the type of modified opinion. The type of modified opinion is decided by nature of the matter and pervasiveness. Again, nature of the matter. Our financials are materially misstated, for that reason you want to modify, or you want to modify because you are unable to obtain sufficient appropriate audit evidence which leads to a possible misstatements. So 2 reasons. Now the same thing is given as a diagram here. So nature of the matter. Evidence obtained, evidence not obtained. Evidence obtained means what? Material misstatement is there. Evidence obtained means what? Material misstatement is there. Sir, I got evidence. Complete evidence I got. Is there any circumstance where you are unable to obtain evidence? No such circumstance. Complete evidence I have obtained. Now, have you found a material misstatement? Have you found a material misstatement? No. No mistakes I found. Have you got complete evidence? Yes. Whatever evidence I want, I found. And there are no material misstatements, which means financials are free from material misstatement. I will give which opinion? Unqualified opinion. Suppose I got evidence, I found a misstatement. I found a misstatement, and that misstatement is going to be material misstatement. So is it material? Yes. Okay. Now, material misstatement, fine. But is it pervasive? No. It is not pervasive. Now, what do you mean by pervasive here? Pervasive means because of that mistake, entire financial position and performance of the company will be altered. Entire position, drastic difference. For example, you take Reliance company balance sheet. Reliance company P&L you take, for example, consolidated profit and loss account you take. It has a turnover of 10 lakh crore. It has a turnover of 10 lakh crore. Reliance consolidated turnover is approximately 10 lakh crore. Now tell me, in that P&L account, if you found a misstatement worth of 1 crore, 1 crore only you found a mistake, 1 crore. 1 crore in 10 lakh crore balance sheet means 1 rupee in 10 lakh rupee. Now, if 1 rupee is misleaded in 10 lakh rupee, will you consider it as pervasive? Will you consider even it as material? Immaterial. It's immaterial. Generally, when do we say material? 0.5% of turnover. We say material only when it is exceeding 0.5% of turnover. Only then we say it is material. Otherwise, we don't apply the word materiality logic there. Yes or no? So, for example, in a balance sheet, I found a mistake. Okay. For example, you take this, a simple example I'll take. For example, there is a balance sheet. Okay. So, here 10,000 crore worth of assets were there, 10,000 crore worth of liabilities were there. In this, there is one item of asset called inventory. There is an item of assets called inventory. This inventory is, this inventory is having one mistake. This is crores. Okay. This is crore. In this inventory, there is one class of inventory is there, one particular class of inventory is there. That particular class of inventory, NRV is 98 crore, whereas cost is 100 crore. Company showed at cost only, they ignored NRV, which means there is a misstatement, overstatement in P&L, overstatement in balance sheet worth of how much? 2 crore. Now tell me, 2 crore out of 10,000 crore, is it material? 2 rupees out of 10 lakh rupee or 2 rupees out of 10,000 rupee, is it material? Will it affect, first of all, anybody's decision making? No. Therefore, it's immaterial, and I will still give which opinion? Unmodified opinion. I will still give which opinion? Unmodified opinion. Same, I will take one more balance sheet. Okay, now same 10,000 crore, a same inventory. Okay, now in this 1,000 crore worth of inventory is there. 1,000 crore worth of inventory which we valued at cost. The company valued inventory at cost of how much? 1,000 crore worth of inventory, and NRV of the same is 950 crore only. NRV of the same is how much? 950 crore. Now 50 crore worth of overstatement happened. How much is happened overstatement? 50 crore worth of overstatement happened. Now tell me, will I call this as material? Yes. Compared to the previous scenario, here it is 20 times bigger. The mistake is 25 times bigger. Almost. In the previous scenario, it was just 1 or 2 crore, whereas here it is 50 crore the mistake. Moreover, if you see the 50 crore, it amounts to 0.5%. It amounts to 0.5% of the total balance sheet value, total assets value. So I will consider this as material. Now, what about remaining items of assets? Fixed assets, they were right. Current assets, they were right. Equity, liabilities, everything was right, except inventory mistake, which I found. Only inventory, 50 crore worth of mistake I found. Now tell me, just because I found a 50 crore worth of mistake, can I reject entire balance sheet and say, don't trust this balance sheet, company is cheating you? Can I have to pass a harsh statement like this? No. Yes or no? Mistake is no doubt material, I agree, but this is not pervasive. This is not pervasive. Yes or no? You can't say entire balance sheet and P&L is unfair. You can't say entire balance sheet and P&L is not true and fair. It is true and fair, except 50 crore worth of mistake which you found. Yes or no? So here I will give which opinion? Qualified opinion. Are you clear? Suppose in the same balance sheet, inventory 500 crore worth of mistake is there. You know, trade receivable, again 1,000 crore worth of mistake is there. Fixed assets, impairment worth of 2,000 crore, they didn't recognize. Impairment loss of 2,000 crore, they didn't recognize. Liability, trade receivable is understated by 500 crore. Equity and reserves and surplus, either not at all, completely true and fair. Now tell me which opinion I should give. Can I say balance sheet is true and fair, except trade receivable 500 crore, except inventory 1,000 crore, except current assets? You can't use that many exceptions. Clearly the balance sheet is misleading. Clearly the balance sheet is misleading. That's pervasive. What is it actually called as? Pervasive. Yes or no? Pervasive means entire balance sheet is misleading the public. Entire position is misleading. Performance is misleading. It's not misstated, it's misleading. There is a difference. Yes or no? If the financial position, if the performance of the company is misleading the public altogether, then we consider that as pervasive. And if at all there is a material misstatement which is also pervasive, then we give which opinion? Adverse opinion. We directly give which opinion? Adverse opinion. Now you understood, when there is a misstatement, how to give. Suppose sometimes we don't get evidence. Sometimes we don't get evidence from the financial statement. Evidence in our audit we don't get. Suppose same example you take. Out of 10,000 crore, there is some inventory. Out of this inventory, some 2 crore worth of inventory is lying with one third party. It was lying with one third party. Okay, so this 2 crore worth of inventory is lying with third party. I want to get a confirmation from third party whether he is really holding this 2 crore worth of inventory or not. He is not giving me confirmation. Or I want to physically go there and verify. He is not giving me evidence on that. And when I say this 2 crore, no, first of all, this is not even material. This is not even material. So I am not getting evidence on this. I am not getting evidence on this. Now tell me which opinion I should give. First of all, this evidence which I am not getting is not for a material item. First of all, it's immaterial item. For an immaterial item, if you do not get evidence also, it's not an issue at all. Even moreover, here inventory is lying with third party, right? Even SCA 501 says only when the inventory is material to the financial statements. If inventory is lying with third party and is material to the financials, then only you should get the evidence. Otherwise you can ignore. So if inventory that is lying with third party is not material to the financial statements, you need not obtain evidence on that inventory. Are you clear? Now here I did not get evidence. So which opinion I'll give? Still unqualified. Whereas rest of the items of balance sheet, rest of the items of P&L, rest of the financial statements, I have obtained sufficient and appropriate audit evidence. Only for one item in the balance sheet, that too inventory, that too an immaterial item, I could not obtain sufficient appropriate evidence. That doesn't matter. That doesn't affect your opinion. You can still give which opinion? Unmodified opinion. Are you clear? This is what they tested in Jan 26 as an MCQ. In Jan 26, they tested this as an MCQ. Once briefly we'll look into it. Inventory. I think, yes, look at this. The company hold a small amount of physical inventory consisting of so-and-so component. The auditor was not able to observe stock due to last minute restrictions. Okay, your team perform altered procedure and all that. The inventory balance is just 24 lakhs, which is not material to the financial statements. If you are not able to obtain, sufficient appropriate, you could not get the evidence here. Whereas inventory is not even material to the financial statements. When inventory is not material to the financial statements, SA 501 procedure will not apply. You don't have to obtain evidence on its existence. You don't have to obtain evidence on its condition. You don't have to worry about it. So which opinion you will give? Yeah, you can see. Considering the issue regarding physical inventory, so what is the most appropriate opinion? Issued a qualified opinion. No, wrong. Issue a disclaimer. No. Include the matter in inventory emphasis. No. Since the inventory is not material, the auditor should consider the auditor is complete without any modification. The answer is D. Are you clear? Since inventory is not material, we are not worried about it. So not obtaining evidence. Don't directly conclude. You didn't get evidence, directly give modified opinion, directly give qualified opinion, directly give disclaimer. No, don't conclude. Evidence not obtained for what item? Material or immaterial? Immaterial, no need to worry. Are you clear? Suppose inventory here it is 240 lakh for example. It is not 24 lakh, it is 240 lakh. Let us assume it is material. It is material inventory, but we are not getting evidence. We are unable to conclude whether it is there or not, whether the inventory is physically existing or not. We are unable to conclude. We did not get evidence. We did not get evidence for the inventory. In the balance sheet, they are showing you 20-25 crore worth of inventory. But when I ask management, show me the proof, show me the inventory directly, they are not able to show me. They are unable to locate the inventory. Now, evidence is not available. Whether inventory is existing or not, evidence is not available. But when I say pervasiveness, it is not pervasive. The possible effect is not pervasive. Possible effect is not pervasive. But it is material, but not pervasive. Still, I will give which opinion? Qualified opinion. Here I am giving qualified opinion, not because financials are materially misstated. I am not saying here financials are materially misstated. I don't know whether a mistake is there or not. I am unable to obtain evidence. Whether a mistake is there or not, I am unable to obtain evidence. Here I am giving modified opinion because I did not get evidence for a material item. Now here, what is my analogy behind? If I do not get evidence for 20 crore worth of inventory, which according to me is material, what I assume is, what if it is wrong? What if it is wrong? What if it is misstated? What if it is misstated? Is it material? Yes. Is it pervasive? No. If at all this is materially misstated, if at all it is materially misstated, which is going to be just material but not pervasive, what opinion I'll give? If it is a material misstatement but not pervasive, I would have given qualified opinion. Now also give the same. You didn't get evidence for a material item but not a pervasive item. You didn't get an evidence, give a qualified opinion now also. Now look at qualified opinion definition here. Look at qualified opinion definition. 1. It has 2 parts. Qualified opinion has what? 2 parts. So the auditor will express a qualified opinion. The auditor will express a qualified opinion when the auditor, based on sufficient appropriate evidence, conclude that misstatements are material but not pervasive. You have obtained evidence. See, you can say something is wrong only when you have a proof. Am I right? You don't have a proof. Can you say that it is wrong? Can you prove somebody it is wrong? You can't prove it because you don't have an evidence. Only when you have an evidence, misstatement can be proven. You want to say misstatement, you must have an evidence for it. You don't have an evidence, you can't opinion. You can't say my opinion is it is misstatement. You can't. So the auditor, based on sufficient appropriate, concluded that misstatements are material but not pervasive. Or second scenario, you see, when we give qualified opinion, the auditor unable to obtain sufficient appropriate evidence, but conclude that there can be a misstatement. But have you detected it? No, I didn't detect. I did not detect the misstatement. But it's a possible effect only. It's only a possibility. So the auditor is unable to obtain sufficient appropriate evidence, but concluded that possible effect of undetected misstatement, if any, could be just material but not pervasive. Some 20 crore worth of inventory lying with third party. Okay, I wanted to get a confirmation from him, or I want to physically go there and verify, which management is not permitting me, which third party is also not permitting me. So my doubt is, they are saying 20 crore worth of inventory lying with third party, but my doubt is, what if it is not there? What if it is completely a fraud? Okay, in reality there is no movement of inventory happened. I feel it is completely a fraud. Yes or no? But to prove it is fraud, I don't have evidence. To prove that management is indulged in a fraud, I don't have evidence. What if it is a fraud which I could not discover? Then what would be the impact? The impact is going to be just material on the financials, but not pervasive on the financials. Then still I will give which opinion? Qualified opinion I'll give. Understood or not? Now, first part of the qualified opinion definition is there, right? Where there is a material misstatement, evidence is there. Second part of qualified opinion, you are unable to obtain sufficient appropriate evidence, and you concluded that possible effect on the financials of undetected misstatement could be just material but not pervasive. Then also you'll give which opinion? Qualified opinion. Are you clear? Now, the first part of the definition is there, right? Here the word but not is there, right? I will just remove that word and put the word and. Automatically that becomes adverse opinion definition. Qualified opinion second part is there, right? In that also this word but not is there, right? Here material but not pervasive, that word I will remove and put the word and. Then automatically it becomes disclaimer. Are you clear? Simple. I found a material misstatement in financial. I found mistakes in the financials. To say mistake is there, I need evidence always. So if the auditor concluded based on sufficient and appropriate evidence that financial statements are containing misstatements which are material and pervasive, then we give which opinion? Adverse. If auditor is unable to obtain sufficient and appropriate evidence and concluded that possible effect on the financials of undetected misstatements, if any, could be material and also pervasive. A possible effect is material and pervasive. If at all possible effect of misstatements could be material and pervasive, and I don't have evidence right now, I can't even give an opinion. It is better for me, I will not give an opinion. I can't say anything here because I don't have evidence for pervasive items, major items of the balance sheet, major items of the P&L. I don't have evidence. How can I give an opinion? Simple. I can't give an opinion here. Are you clear? So because there is no evidence, there is nothing for me to comment on. If you give me an evidence, I will give my opinion. Opinion means giving your statement. Yes, it is right, it is wrong, like that, giving a statement. Here you don't have evidence at all for major item. How can you give a statement on it? Yes or no? So you can't give an opinion. Just like a mobile YouTube reviewer, without a mobile can he review? Exactly. So if evidence is not there, how can you give a review? How can you give a conclusion? How can you give an opinion? That's it. So when you don't have the evidence for material and pervasive items of the financials, then you give which opinion? Disclaimer. Are you clear? All of you. That's it. Now, when you're giving a disclaimer of opinion, when you're giving, now again, once again look at. So qualified, adverse, disclaimer. It depends on which matters, why you are modifying. I modify because of two reasons. Is either because of material misstatement or I am unable to obtain evidence. Then which type of modified opinion is influenced by pervasiveness of the effect or pervasiveness of the possible effect on the financials of the matter. Are you clear? That's it. Now let's look at the drafting part of it. In every exam, pakka 5 to 10 marks drafting question will come. Pakka. Drafting question possibilities generally from 700, 705 or from 800 series. Sometimes from 706 also. Drafting question. Minimum 5 marks, sometimes even 10 marks also they can ask a drafting question where you need to draft the para. Okay. Now look at. So how do we draft it? So if you observe Now I'm little deeper. I'm going now little deeper. See, if you only drafting part we'll discuss briefly and then we'll take a break. Okay. Now, if you observe the audit report elements, audit report, this topic can be divided into two parts. This chapter can be divided into two parts. One is part 1, another one is part 2. Part 1, where we discuss about reporting standards. Part 2, where we discuss about reporting requirements. This is how the chapter can be divided. The same way, the audit report is also divided into two parts. The audit report itself is divided into two parts. First, there will be audit report. Within the audit report, part 1, report on financial statements. Then part 2, report on, or you can also call this as other reporting requirements. What is it? Other reporting requirement. Remember, other reporting requirements, other matter para, other information para, all the three are different. They are not same. Other matter para 706, other information para 720. Be careful, don't use the different terms here. Other information 720, other matter para 706. Other reporting requirements, Companies Act 143 subsection 3, 143 subsection 1, 143 subsection 11, CARO, everything. They all come under which reporting requirement? Other reporting requirement. Are you clear? This other reporting requirement also has another name. Report on legal and regulatory requirement. It also has another name. Report on legal and regulatory requirement. It has another name. Other reporting requirements has another name. Are you clear? So one is report on financials. Second part of the audit report is dealing with other reporting requirements. Now, if you see the report on the financials, here only opinion, basis for opinion, key audit matter, emphasis of matter, other matter para, management responsibility, auditor responsibility, all these elements were there, right? They all come within the first part of the audit report. Are you clear? Then you give CARO report, right? CARO, all that, they all come under other reporting. CARO 2020, where you have 21 clauses. All the 21 clauses, you give reporting. You report on those 21 clauses under other reporting requirements. Then you give 143 subsection 1, 6 inquiries. You report on them under other reporting requirements. 143 subsection 3, checklist item, 16 items will be there. Dividend, is the dividend declared as per the law? Is the dividend declared and paid as per the law? Audit trail feature is there or not? Provisions were made as per accounting standards or not? Funding party, intermediary, beneficiary, that reporting requirement, yes or no? All that comes under 143.3. Remember, these all three are nothing but 143 reporting requirements. These all three are section 143 reporting. 143 is what reporting? Company law reporting requirement. It's a legal reporting and it's a legal reporting requirement. Yes or no? That is not as per standards on auditing. You are giving CARO, is it because of standard on auditing? No, you are giving CARO because of Companies Act 143. Now, so if at all you are giving a report, if at all you are reporting on any issues that are there under law and regulation, all those reporting you should give in other reporting requirement. If at all you are giving any reporting as per standards on auditing, then mention, report to them under report on financial statements. Standards on auditing is only dealing with reporting on financial statements. Standards on auditing is not dealing with other reporting requirements. Suppose if at all you are presenting other reporting requirements also along with reporting on financial statements, along with reporting on financials, if you are presenting other reporting requirements, then other reporting requirements should follow report on financial statements. Nothing but other reporting requirements will come later to reporting on financial statements in the auditor's report. Now, if you see the in 700, you can see here this font size you can observe. Okay, very simple. This font size is 14, this font size is 12. Yes or no? So this font size is 12. So reporting on financial statements, these are all opinion, basis for opinion, key audit matter, other information, management responsibility, auditor responsibility, all these because of standards on auditing. Then other matter para, if at all 7 or 6, all this is because of standards on auditing. And if you see other matter para, until other matter para, All these elements are coming under which section of the audit report? Report on financial statements. Then the next section in the audit report is what? Next part in the audit report is what? Report on other legal and regulatory. You can see other matter per a small font, report on other legal and regulatory requirements, bigger font, yes or no, which means audit report is divided into two parts, yes or no. One is reporting on financials. Under that only 700, 705, 701, 706, 710, 720, 570, all the standards related reporting comes under reporting on financial statement part of the audit report. Again in the audit report, second part is there. What is the second part? Report on other legal and regulatory requirements. Below this, CARO reporting, all that will come under. Are you clear? So in reality also companies do follow the same reporting format. Now until now clear? That's it. We'll take a small break and get back, and then we will cover drafting of opinions. Then we'll discuss remaining points in the 700, 705, all that, 706, all that. Hardly another 2 to 3 hours. 3 hours it might take. With CARO we can finish it off. Clear? You're able to get clarity. You're able to get connections. In Jan 26, till now whatever we discussed, 6 marks MCQs you can write. Till now based on whatever we discussed, you can easily write 4 to 6 marks of Jan 26 attempt. Clear? That's it. So conclusion is what? We can give modified opinion in two circumstances. One, evidence is obtained and material misstatements are found. Second one, evidence we could not obtain. Yes or no? In these two circumstances only we give modified. Which type of modified opinion is decided by first nature of the matter? Is it because evidence obtained, mistake found, or is it not? Is it because you are unable to obtain evidence? Which type of modified depends on nature of the matter. Two, pervasiveness of the matter. Are you clear? That's it. So that is one topic, 5 marks question. Opinions, MCQs it is possible. Definitions, MCQs is possible. Qualified opinion, I will give in two circumstances. One, the auditor concluded based on sufficient appropriate evidence. You concluded based on evidence that financial statements are misstated, material but not pervasive. If it is material and pervasive, I will give adverse opinion. Adverse means what? Saying that financials are not true and fair. Yes or no? Then second part of the qualified opinion. The auditor unable to obtain sufficient appropriate evidence and concluded that the possible effect on the financials of undetected misstatement. You see the wordings, they are not saying misstatements, they are saying undetected misstatements. The possibility could be material but not pervasive. Then I will give qualified. If the possibility is going to be material and pervasive, then we will give disclaimer. We will not give an opinion at all. We will disclaim. We will refrain ourselves from giving opinion. That's called disclaimer of opinion. Are you clear? That's it. So we'll take a break and get back and then do the drafting discussion, and then we'll proceed to 706. Emphasis and other matter per all the discussion. Clear? That's it. Yeah, let's begin the opinion wordings and all. So how the opinion wordings will be like, because for drafting this is very important. So as we discussed, the elements of audit report, if at all you look at elements of audit report, the first element is, we can also call them as para, you can also call them as section. Opinion section, basis for opinion section, key audit matter section, emphasis of matter section. So opinion section. So if you observe, the opinion section will always have two subparas. The structure is like it always have two subparas. First para they talk about we have audited the financial statements of the company comprising balance sheet, P&L, all that cash flow notes, everything. Then the second para is actually talking about the opinion of the auditor. Okay, you know what? This first para is also called as intro para. We also call them as what? Introductory or intro para. Yes. Now look at the opinion para. In our opinion, and to the best of our information according to the explanation given to us. In our opinion, to the best of our information according to the explanation given to us. The aforesaid financial statements give information required by the Act in the manner so required and give true and fair view. Okay, the aforesaid financial statements are giving true and fair view. Now here we said the word we have audited, right? The same will appear in qualified opinion, the same will appear in adverse. But if we are giving disclaimer of opinion, we don't use the word we have audited. We mention the word we were engaged to audit. We mention the wordings. We were engaged to audit. Okay. Now, the same thing is what given in your ICA material questions. TY illustrations will be there, right? TYU questions will be there, right? They're nothing but this only. Drafting questions only they have given. Okay. So that's opinion para. Clear until now? Now let's look at 705. Let's look at 705 illustrations. So where in these illustrations we talk about qualified adverse disclaimer. Now look at. So this is a circumstance where we are giving qualified opinion. If you see the heading independent audit report title to the members of the entity, yes or no? Then qualified opinion. We clearly mention the words qualified opinion, and we also mention the word basis for qualified opinion. First two paragraphs we have to clearly mention which opinion we are giving. If at all the audit report simply contains the word opinion and basis for opinion, it means it's an unqualified opinion. It means unqualified opinion. Whereas here the wordings were very clearly mentioned. If we are giving a qualified adverse disclaimer, headings should reflect that. Qualified opinion, basis for qualified. Adverse opinion, basis for adverse. Disclaimer of opinion, basis for disclaimer of opinion. Like that we should clearly mention it. Now, if you observe, even for qualified opinion, same, we have audited, that paragraph is common. In our opinion and to the best, this para is also common. But here, one change is there. In our opinion, the aforesaid financials give true and fair view. Positive opinion only we are giving here also. Qualified opinion is also a positive opinion, but with an exception. Except for, they are mentioning the word except for effect of the matter. Here the word used is effect, which means there is a real material misstatement they found. There is a misstatement which they found, real misstatement for which evidence is there. Suppose you give qualified opinion in one more circumstance. What is the one more circumstance? You are not getting sufficient appropriate evidence and you conclude possible effect of the matter could be material but not pervasive. That time, if evidence is not available, because of lack of evidence you are giving qualified opinion, then here we use the word possible effect of the matter. MCQ can come. Okay, if the paper want to be really tough, or at least some questions they really want to ask tough, they pick up MCQs like this. The auditor decided to give qualified opinion because of lack of evidence. Okay, and which of the following is the opinion, suitable opinion wordings? 4 paras they will give you, 4 options they'll give you. So in one para, possible effect of the matter, the word they will use. In another para, just effect of the matter they will use. So that's how they can twist also. Okay, so the possible effect of the matter is described in basis for qualified opinion section of our report. The aforesaid financials are still showing true and fair view. Are you clear? Next, now in the given case, they are qualifying. In the given case, they're actually qualifying because inventory is materially misstated. In the given illustration, inventory is materially misstated. Let us assume the cost of inventory is 1000 crore. Management, the cost of inventory is 1000 crore, and whereas NRV is 900, but management valued inventory at 1000 crore only. 900 crore is the NRV. Because of this, 100 crore P&L is overstated. 100 crore balance sheet position is overstated. Clear? Now, when you qualify the opinion, you should clearly tell the reason why you gave a qualified opinion. You can't simply, like again, look at, even in 700, you give opinion, right? Simply you're using the side heading. What side heading? Simple opinion, which indicates unqualified opinion. Yes or no? Why you gave unqualified opinion? There is no specific reason. There is no specific reason why I am giving unqualified. But still, I have to talk about basis for my opinion. What is the basis? On what basis you gave the opinion? I should still talk about. On what basis I give my opinion? Based on my audit. Based on my audit, because we conducted our audit. We conducted the audit based on standards on auditing. Like if you see, basis for opinion para has only one subpara. Basis for opinion para how many? Basis for opinion para has how many subparas? 1. But if you see qualified opinion, basis for opinion para has para number 1 and then again para number 2. 2 paras you will find. Basis for adverse opinion, you will find again 2 paras. Basis for disclaimer, you will again find only 1. Remember, you will find only again 1. Now look at. So what is there in the basis for opinion para? We conducted our audit as per standards on auditing. Okay. We have responsibilities, no, under those standards. We have some responsibilities under those standards, no. What responsibilities we have? In the same audit report, we have another section. Auditor responsibilities for audit of financial statements, like that one section is there. In that section, we talk about auditor responsibilities, nothing but auditor responsibilities section. So under the standards, our responsibilities under those standards, they are described. They are described. Where we describe it in the audit report? In auditor responsibility section of our report. In our report, there is a section called auditor responsibility. Below there is a section called auditor responsibilities for audit of financial statements. So here we discuss about what are all our responsibilities. So you want to know what are our responsibilities as per standards on auditing, go to that para and then you will get it to know. Now, what is basis for opinion? Further, what is the basis for opinion? We are independent of the company as per code of ethics. We have fulfilled our ethical responsibilities. We are mentioning we are independent. We have complied with code of ethics. Then we are also giving one statement. We have obtained sufficient and appropriate evidence to provide a basis for the opinion. You asked me what is the basis for my opinion, right? The evidence we have obtained. Have you obtained sufficient and appropriate? We believe we have obtained sufficient and appropriate. We believe that we have obtained sufficient and appropriate evidence to provide basis for the above opinion which we gave. So we are mentioning that fact. So basis for opinion para, we have to state that audit is conducted as per standards on auditing. State about your responsibilities and reference to the responsibility section. State that you are independent of the company and complied with code of ethics. State that you obtained sufficient and appropriate audit evidence. A 5 marks question can come in exam. What are the points that auditor has to include in basis for opinion section in case of unmodified opinion? This point will be in case of unmodified opinion. These points will come constant. Are you clear? Suppose if auditor is deciding to give qualified opinion, suppose auditor is giving qualified opinion, then you have one more requirement. You need to clearly mention why you qualified. See, I know you conducted audit as per standards on auditing. Your responsibilities are under various other para. You fulfilled your responsibilities. You believe that, you know, we believe all this para is constant. This para is common. Even you are giving unqualified opinion, qualified opinion, adverse. In these three cases, this para will be common. But this para will not come in case of disclaimer. However, in case of qualified and adverse and disclaimer, the basis for qualified opinion para, basis for adverse opinion para, basis for disclaimer of opinion para will be modified. Will be modified. How it will be modified? It will be modified to explain the issue behind the modification. You modify this para where you will explain why you modified the opinion. I modified the opinion in the form of qualified, in the form of adverse, in the form of disclaimer. Because of various reasons I modify. Mention that reason clearly. Not only mentioning it, you should also quantify. You should also what? Quantify. Now look at here. We have given clearly all that. Yes. So basis for modified opinion. Basis for opinion kara in case of modified opinion. So basis for opinion in modified opinion. When you are giving modified opinion, how basis for opinion para gets drafted. For example, you are modifying the opinion because material misstatement is there in the financial statements related to specific amount. In the financials, a material misstatement is there related to a specific amount. Okay, for example, in our example, misstatement is 100 crore. Inventory 1000 crore is the cost. NRV is 900 crore. 100 crore materially misstated. It's a misstatement in material amount. It's a specific amount, right? If misstatement in financial statement is related to a specific amount, yes or no, the auditor shall include what is the mistake description and also include quantification of the financial effect of the MMS unless impracticable. You quantify the mistake also unless it is impracticable. Sometimes quantification is very tough. Yes or no? I know there is a material misstatement or we don't have evidence, because of that reason I am qualifying, but sometimes quantification is very tough to mention. Now look at how here they have qualified. The company inventories are carried in balance sheet at 1000 crore. Management has not stated inventories at lower of 1000 crore and 900 crore, but has stated them only at cost which is 1000 crore, which is a departure from accounting standards. Yes or no? The company records. So now you see, we described description of the qualification. We first gave description. Why are we giving a qualified opinion? We described the reason. Now second one, quantification. Second part, quantification. The company records indicate that had, if at all, management stated inventory is at lower of cost or NRV, then an amount of 100 crore, would have been required to write the inventories down to their NRV. Accordingly, cost of the sales, net income, shareholder funds would have been decreased by or increased by so and so. Now, which means because of this mistake, which items are affected? I am telling what would be these items if this mistake is not there. That also I am telling. That's called quantification. So if at all you are qualifying the audit report because of a material misstatement in a specific amount, how you should qualify? Basis for opinion per, you should describe the misstatement. You should also mention the quantification unless impracticable. Are you clear? Yes or no? Next, there is one more example here. Adverse opinion. Here auditor is giving adverse opinion due to a material misstatement in consolidated financial statements. Now what happened here? The consolidated financial statements are materially misstated due to non-consolidation of subsidiary. Tell me, if a subsidiary is not consolidated, then we have evidence. There is a subsidiary, it was not consolidated, which is not as per applicable financial reporting framework. Therefore, consolidated financials are not showing true picture of the consolidation. Consolidation objective itself is we want to see the group picture as a whole. If you are ignoring one subsidiary within that consolidation, automatically the group picture is not clear. It's not a full-fledged group picture. Yes or no? So the consolidated financials are materially misstated. Now the misstatement is deemed to be pervasive. Yes or no? So therefore, which opinion we should give? Adverse opinion. Now again, headings, title, independent auditors report. Correct? Yes or no? To the members of the company. Then straight away, which opinion we give? Adverse opinion. Now again, you see, we have audited, the pay rise common. Then second part, if you see, in our opinion, to the best of our information, according to the explanation given to us, the accompanying consolidated financials do not give true and fair view. We are clearly straight away mentioning, do not give true and fair view. Why? Because of significance of the matter discussed in basis for adverse opinion section of our report. In the same report, there is a section, basis for adverse opinion section. Because of a matter discussed in that, because of significance of that matter, we do not provide opinion. The aforesaid financials are not showing true and fair view. They are not true and fair. Adverse opinion is given only in the following circumstance. Evidence is available, misstatement is found, and the misstatement is deemed to be pervasive, then only we give adverse opinion. Disclaimer will come only in one scenario. Evidence is not available for substantial portion of the financial statements. You know what? Pervasive can be understood in one more way. Pervasive means what? Substantial. Material means significant. Pervasive means substantial. I'll get back to the definition of pervasive also. Clear? Next, now look at basis for adverse opinion. Again, para number 1, again, para number 2. We have conducted our audit as per standards. This para is common. Whether you are giving unqualified opinion, whether you are giving qualified opinion or adverse opinion, this para is common. Now look at, so adverse opinion, look at, as explained in so and so, the company has not consolidated subsidiary. Tell me, we described the mistake. What mistake happened? They didn't consolidate, which is requirement as per accounting standard, which is a requirement. They did not follow the requirement. They didn't consolidate. We described it, but not only description, you should also quantify. But if at all a consolidated, a subsidiary is not consolidated, which item of the balance sheet, which item of the P&L will affect? Every item of the balance sheet, every item of the P&L will affect. Is it possible for us to quantify like that? No, it is not possible. So they clearly mention the effect of failure, to consolidate has not been determined. So unless impracticable, you mentioned, right? If it is impracticable, state why it is impracticable. Are you clear? Unless it is impracticable. If it is impracticable, you didn't state, then state that it is impracticable. So that's what it is mentioned here. You are unable to quantify. If quantification is not practicable, the auditor shall state so. Do you understand? This is what there in ICAI book, everything. Next, do you understand? Now sometimes we qualify or we give adverse opinion because we do not get evidence. Sometimes we do not get evidence. By the way, there is one more way where a misstatement will happen. See, first of all, what is a misstatement? Misstatement means what? First of all, you have this definition given in our book, in the ICAI book, or in our book at 450 standard. In 450 standard, misstatement definition is given. Okay, what is a misstatement? Misstatement is a difference between amount, classification, presentation, disclosure of reported financial statement item versus amount, classification, presentation, disclosure required as per applicable financial reporting framework. So what you reported, what is required under framework, if there is a difference in amount, or if there is a difference in classification, or if there is a difference in presentation, or if there is a difference in disclosure, yes or no, this is called as misstatement. Are you clear? Now I hope you know amount. Just now we have seen inventory, material misstatement, as per framework 900 crore you should show, but you showed 1000 crore. That's a misstatement. Misstatement in an amount. Misstatement in the form of non-disclosure. Disclosure can be two types: inadequate disclosure, non-disclosure. Both are misstatements only. You have to give some disclosure, but you didn't disclose them. So that's a misstatement. Or you have to give, you didn't disclose at all. That is also a misstatement. Now, classification. A long-term asset is classified as a short-term current asset. A non-current asset is classified as a current, or a current asset is classified as a non-current asset. So that's a classification misstatement. Are you clear? Then coming to presentation. Presentation means what? For example, you know well, right? In a bank, provisioning against standard assets. Provisioning against standard assets. You should not net it off. You should not net it off, You should not net off against advances. You should show provision against standard assets under other liabilities. You should show them under other liabilities. Are you clear? There is something else called non-banking asset acquired in satisfaction of claim. Non-banking asset acquired in satisfaction of claim. You should classify under other assets. Yes or no? I mean, I think this you can take. Presentation is what? Provision against standard asset. You should present it as a part of liability. You should classify it as a part of liability. You should not classify it as a part of advances. You should not net off against advances. Again, you should present debtors in the following manner in schedule 3: less than 6 months, 6 months to 1 year, 1 year, more than 1 year, more than 2 years, more than 3 years. This is the presentation requirement for debtors. Yes or no? This is presentation. Presentation means how much depth the breakup has to be given. The depth of breakup that you should give is called presentation and disclosure. Able to understand? So mistake can be in any way. Suppose if at all there is a misstatement by non-disclosure. With non-disclosure, because of non-disclosure, that's a material misstatement. Then auditor shall discuss with management, describe the nature of omitted information. You describe what is omitted. For example, company has not presented segment information. The company has not presented segment information. They didn't disclose at all. Discuss with management, ask them to disclose. They didn't disclose. Then you modify the opinion. You qualify or give adverse opinion as the case may be, depending upon the importance of the segment information. Okay. Describe. Describe means what? In the basis for qualified opinion, in the basis for adverse opinion, I will describe that segment information is omitted. If practicable, include the omitted disclosure if practicable, based on evidence. Whatever they omitted, no, you include that in audit report if practicable. By the way, you can include it only when there is no prohibition in the law. Right now in India, there is no law or regulation which prohibits you like that. Are you clear? Then sometimes we give modified opinion because we are unable to obtain evidence. Now when you are modifying the opinion, you are giving a qualified opinion or disclaimer of opinion. Whatever the reason you are giving, you should tell why are you giving a modified opinion, right? The reason. Describe the reasons for inability. Why you didn't get that evidence? Is it because management imposed a limitation? Is it because of the circumstance? What exactly the reason why you are giving? Why you are giving modified opinion? Why you did not get evidence? Mention that. Further, if at all you are giving a disclaimer of opinion. Further, if you are giving disclaimer of opinion, basis for opinion para shall not include. Basis for opinion para shall not include. That standard para I should know. In basis for opinion para, we have audited we conducted our audit as per standards on auditing. Our responsibilities under standards on auditing are further described under auditor responsibility section, we are independent of the company, we complied with code of ethics, the evidence obtained by us is sufficient and appropriate. You see this para, we conducted our audit as per standards on auditing. In 705, even in case of adverse opinion also, we conducted our audit as per standards on auditing. We believe that evidence obtained by us is sufficient and appropriate. This para will not come in case of disclaimer of opinion. If you are giving disclaimer of opinion, this para will not come. Look at disclaimer of opinion. Yeah, disclaimer of opinion. So here auditor is giving disclaimer of opinion because he is unable to obtain sufficient and appropriate evidence. He is unable to obtain. Now you see the headings have been modified. What are they? Disclaimer of opinion and basis for disclaimer of opinion. Generally basis para. In case of unqualified opinion, only one para will be there. That to what para? We conducted our audit as per standards on auditing. Our responsibilities are so and so. We are ethical, we are independent, we have obtained sufficient appropriate evidence. Like that we make so many assertions. We assert so many things. We will not assert that in case of disclaimer because we didn't conduct the audit. We were only engaged. We were engaged to audit, but we didn't do the audit. So when you did not do the audit, basis for opinion means what? You gave an opinion. What is the basis for it? Here you did not give opinion. Disclaimer of opinion means what? I am not giving opinion. You see here, straight away the sentence starts with we do not express. We do not express an opinion on the consolidated. Why you are not getting opinion? Why you are not giving opinion? Because because of significance of matter described in basis for disclaimer opinion section of our report. Below basis for disclaimer opinion section is there because of the matter mentioned in that. Because of significance of the matter mentioned in that, I am not giving opinion. Okay, why you are not giving opinion? You want to know the reason? Come back here. Reason will be given. Now, since you are not giving any opinion here, you don't have to talk about basis for the opinion. This is basis why you are not giving opinion. In all other paras, basis for the opinion. Okay, whereas here basis for not giving the opinion. So I should tell about why I am not giving opinion. That's it. Whereas in all other opinions, I should tell why am I giving that opinion. If I am giving qualified, why am I qualifying the opinion? I should specifically tell. Adverse, why am I giving adverse? Specifically I should tell, because unqualified opinion, qualified opinion, adverse opinion are actually opinions. Disclaimer of opinion is not an opinion because you are not giving an opinion first of all. Are you clear? So disclaimer of opinion means what? I don't have an opinion. That's what disclaimer of opinion. So technically you are not giving opinion. Why you are not giving opinion? Mention that reason alone. That's enough. So when you are disclaiming the opinion, the basis for opinion para should not have a statement about we conducted audit as per standards, we are independent of the company, we are ethical about the company, we believe that the evidence obtained by us is sufficient. And first of all, you didn't get evidence. You didn't conduct the audit. We don't bother about your independence and ethical requirements at the time because you didn't do the audit. You didn't obtain the evidence. So you should not mention those statements. That's what this meaning. In one of the exam, they have asked it for 4 marks question. So if at all you are giving a disclaimer of opinion, if you are giving a disclaimer of opinion, basis for opinion para should not contain what? What basis for opinion para should not contain? Okay, you have that in mock papers also, or some revision papers or past exam paper, it was there. So basis for opinion para should not contain reference to auditor responsibility section, a statement about whether sufficient and appropriate evidence is obtained. You should not mention these 2 points when you did not obtain evidence. Not only these 2, you should not state that you audited. You should not talk about ethical requirements, independence requirements, compliance with them. All that also you should not talk about that. Then what I can talk in basis for disclaimer? Just tell why are you disclaiming. That's it. Why you disclaim? Just tell about that. That's it. Clear? All of you. That's how the wordings and the paragraph and the structures will be. So qualified, adverse, disclaimer, all this. Next. That's it. Further. What will be there in auditor responsibility section? What will be there in auditor responsibility section? Look at. Now I'll go back once again to this elements of audit report. Elements of audit report. So we have completed right now title, addressee, opinion, basis for opinion, right? Now we will discuss auditor responsibility section. Auditor responsibility. Generally, what are auditor responsibilities? If you see auditor responsibilities, they are broadly divided into three types. Auditor responsibility section in the audit report is again subclassified into three parts, where you talk about primary responsibilities, where you talk about responsibilities under standards on auditing, where you talk about communication responsibilities. So auditor responsibilities will be discussed at three places. I mean, they will have three parts. One, primary responsibilities as per various standards on auditing, and then communication related responsibilities. So all these three we should talk. Further, auditor responsibilities location will be where? Location of responsibility is where? It can be within the body of audit report, it can be within the body of audit report, or auditor responsibilities can be given as an appendix, as an annexure. As an annexure we can give, or you can mention auditor responsibilities. I mean, if at all a law or if at all a regulatory has mentioned auditor responsibilities in a website, in the audit report you can refer to that website. That website link you can give here in the auditor's report on official website if permitted by law, where law or regulation expressly permits. So if the law or regulation expressly permits you to give a reference to a website link so that people can go there and read what are auditor responsibilities in the audit report, you put a side heading just to mention refer so and so website. That's enough. Now in India, within the body of audit report only we are using. We are using in India within the body of audit report structure. This was asked in some 2022 or 2023. In one of the attempt it was asked, write about location of description of auditor responsibilities. Location. Generally, if you are mentioning within the body of audit report, you don't have to mention anything regarding this, because in audit report anyhow audit responsibility heading is there, below matter is there. Or audit responsibility heading, refer annexure 1, you can give an annexure. Or audit responsibilities, refer so and so website link you can mention. But in India, which method we follow? Within the body of audit report. This itself was asked as a 4 or 5 marks question once in 2022 or 2023 attempt. Are you clear? So this is auditor responsibilities. Now when you're giving disclaimer of opinion, you don't have to talk about primary responsibility, secondary auditor additional responsibility, communication. All this you don't have to talk about, because you're giving disclaimer, you're not giving opinion at all. Why I want to know your responsibility? Your primary responsibility itself is to give opinion. That itself you didn't fulfill. Why I want to know your additional responsibilities? Yes or no? So if auditor is giving disclaimer of opinion, if auditor is expressing a disclaimer of opinion, auditor responsibility section will be drafted as below. Auditor responsibility section in case of disclaimer of opinion. It was asked as a 5 marks question in Jan 25 CA Inter. In CA Inter they have asked this. Okay, in Jan 25 of CA Inter they have asked this. Remember, in final and inter audit report topic syllabus is 90% same. Okay, the questioning standard will be same. The standard at which the question will be asked is same at CA Inter. In fact, at CA Inter only sometimes could you expect this? How auditor responsibility section will be altered in case the auditor is giving disclaimer of opinion. Look at, generally in case we are giving normal opinion we are giving, how auditor responsibilities, our objective is to obtain whether financials are free from material misstatement, whether due to fraud or error. Audit is not a guarantee. Yes or no? There will always be a material misstatement. Then we talk about our objectives as a part of various standards or risk assessment, understanding of control, accounting policies, appropriateness of going concern checking. All these points we mention. We evaluate overall presentation. Then we talk about communication responsibilities. First they spoke about primary responsibility, additional responsibility, communication responsibility. You see, these are all points you will mention in auditor responsibility section when you are giving unqualified, qualified or adverse opinion. Suppose you are giving a disclaimer of opinion, you see auditor responsibility section, very simple, just 4 or 5 lines, just a few lines. If you are giving disclaimer of opinion, you just talk about your primary responsibility. Our responsibility is to conduct audit of financial statements in accordance with standards and issue a report. This is what your responsibility. You have to do audit as per standards and then issue a report. However, because of the matter described in basis for disclaimer of opinion section of our report, we were not able to obtain sufficient appropriate evidence to provide basis for the opinion. By the way, remember, we are independent of the group, we have complied with all the ethical responsibilities. Generally, this point we will not mention in responsibility section. We mention this in basis for opinion section. Basically, we conducted our audit as per standards and auditing. You know, we are ethical, we are independent. All these points we mention in basis for opinion. But when you are giving disclaimer, ethical responsibilities and compliance statement, you will mention in auditor responsibility section. And in auditor responsibility section, one more para you will mention, we are responsible for conducting audit as per standards and give a report thereon, give an opinion thereon. But because of significance of the matter discussed in basis for disclaimer of opinion, we are unable to obtain sufficient appropriate to provide a basis for the opinion. So that point you will mention. Okay, now the same thing is given as a matter. You know, when disclaiming an opinion, the auditor shall amend auditor responsibility section where you will include only the following 2 points. 1, a statement that auditor is responsible to conduct an audit and issue an auditor report, and a statement that because of the matter described in basis for disclaimer of opinion, the auditor could not obtain sufficient appropriate. A statement on independence and other ethical responsibilities. Only these 3 points you will mention in the auditor responsibility para. Generally, auditor responsibility para will have primary responsibilities, additional responsibilities, communication responsibilities, so much you will discuss. But when you are giving disclaimer of opinion, you just mention your primary responsibility and why you did not give opinion and your ethical requirements. All that. Are you clear? Yes or no? Then key audit matter section will not be included in case of disclaimer of opinion. This point we will discuss in 701 key audit matter related discussion. Until now, clear or not? That's it. These are opinions and draftings, and then related to where and all, how the opinions affect which paragraphs. This and all were clear. Okay. So once again later, you know, you revise it once again this, and then go and read in the book. Then only you understand. Clear. In exam, many students, in case of disclaimer of opinion, basis for opinion para should not get. How basis for opinion para get altered in case of disclaimer? That means this answer you should write. How auditor responsibility para will alter in case of disclaimer? This point you should write. So this level of clarity is what expected from you. Understood? That's it. So with this, different types of opinion, different types of opinion we covered, and how each opinion will have an impact on opinion para, basis for opinion para, responsibility section. That also we have covered. Clear? Now one more point I want to. Pervasive means what? What do you mean by pervasive? What do you mean by pervasive? Pervasive means what? Basically what I told. Pervasive means substantial. What is pervasive means? Substantial. Material is different, substantial is different. So pervasive, 3 circumstances are called as pervasive. 1, circumstance number 1. Pervasive means what? It is nothing but impact. Impact of what? Misstatements. Or it may be impact of undetected misstatements. Either pervasive means we are talking about either misstatement impact or we are talking about undetected misstatement impact. Undetected misstatement impact means we are indirectly talking about inability to obtain evidence, non-availability of sufficient appropriate evidence. That time only we talk about what? Impact of undetected misstatement. Correct? Now, so impact of misstatement. So what is pervasive? So if a misstatement or an impact of an undetected misstatement is not related to a specific element, it's not related to a specific, it's not related to a specific account, it's not related to a specific item. So pervasive means it's a misstatement, but not confined to a specific element, specific account, specific item of the financials. For example, you see non-consolidation of subsidiary. Where the mistake happened, is it in a specific item? No, it is not confined to any single item. It is every item is affected, every item of balance sheet, every item of P&L is affected. Then we call it as pervasive. Second one, sometimes it may be one item only. It may be one item only. If so confined, it may be one item only, but that one item represents a substantial portion of the financial statements. We did not get evidence on an investment in joint venture. We did not get evidence about an investment made by the company in a joint venture. Now this investment represents 90% of the total assets of the balance sheet. In the total assets, 90% of the asset is represented by investment. That investment related evidence only we did not get. It's a single item only. A single item only I did not get evidence. But that single item is 90% of the total balance sheet value. Then again we call it as pervasive. So it may be related to a single element. It may be related to a single element. Correct? It may be related to a single element, but it could represent substantial portion. Or pervasive also means it may be in relation to disclosures which are fundamental to users' understanding of financials. Are you clear? Pervasive is something not localized to any one or two elements, but it generally impacts various elements. Yes or no? Is this general meaning? Sometimes it may be localized to one element only, but that one element could be substantial portion. That's called pervasive. Are you clear? That's it. So with this 705 major items were completed. Now, one of the reason why we don't get evidence, see, inability to obtain evidence, right? Why are not able to get evidence? Either because of circumstances were like that in the given scenario, or management is imposing. One limitation is management is restricting. Another limitation is circumstances. Circumstances means what? Management is quite cooperative, but some third party, inventory is lying with third party. He is not cooperating with us. He is not giving evidence with us. Or legal counsel, pending litigations were there. Legal counsel is dealing with that, some litigations. So we want to interact with them and they are not responding at all. So here, evidence is not available because of circumstances, not because of management. Suppose you are not getting evidence because of management limitation. What we should do? Okay, first request management to remove the limitation. First request them. You know, if at all there is a limitation before we accept the audit, before we accept itself, if there is a limitation, then don't accept the audit. We already accepted, we are doing the audit. Now management is imposing limitation. Request them to remove. Request the management to remove the limitation. Suppose management refuses to remove. Communicate the matter to those charged with governance and check whether alternative procedures can be performed to obtain sufficient and appropriate audit evidence. See whether alternative procedures can give you the required evidence. Just check it out that. Suppose even through alternative you are unable to obtain evidence. Even with alternative procedure you are not getting evidence. Ultimately you did not get evidence. Management is the reason why you are not getting evidence. Then if the possible effect of undetected misstatement is going to be material but not pervasive, then do one thing, give qualified opinion, no problem. But if possible effect is going to be both material and pervasive, first what you should do, withdraw from audit. Withdraw from audit where possible under law, where permitted under law. First you should resign. Suppose if resigning is not possible, if withdrawal is not possible, before giving the report, before you give audit report, withdrawal is not possible. Okay, here withdrawal is not possible. You can add this point before giving audit report. Okay, before issue of audit report, withdrawal is not possible. You must issue audit report, then only you have to withdraw. I didn't have evidence. Effect is material and pervasive, and I don't know what opinion to. Then say that only, man. Then disclaim the opinion. Then what you should do? Disclaim. If management imposed limitation, and if the limitation impact is pervasive, then you should first withdraw. Don't conduct audit. Don't continue. Just withdraw from the relationship. Withdraw from the engagement. Withdraw from the appointment as an auditor. If withdrawal is not possible before you give a report, first report giving is mandatory, then only you can withdraw. Then issue a disclaimer of opinion. So giving a disclaimer of opinion is not a straight direct process. Okay, disclaimer of opinion will come only when you cannot withdraw from the engagement, only when you cannot resign. Are you clear? Then only disclaimer will come. This process and all is applicable when the non-availability of evidence is because management imposed a limitation. Are you clear? Suppose if the non-availability of evidence is because of some other reason, not management imposed a limitation, but some other reason evidence is not available, then do one thing. You directly give disclaimer of opinion, no problem. Give directly disclaimer of opinion, no problem. If at all evidence is not available for some other reason. Clear? That's it. Now, before you withdraw, one responsibility is there. If at all you decided to resign, before withdrawal, one responsibility is there. Till now you have done some audit, right? some mistakes you found out, right? Communicate them and then withdraw. So before withdrawing, the auditor must communicate identified misstatements with the management. Are you clear? Further, sir, you said just now we understood withdrawal is not possible before giving report. If withdrawal is not possible before giving report, then we should give disclaimer. When? What is that? There is a SEBI LODR regulation. There is something called SEBI LODR regulations. As per that, if an auditor conducted audit of 3 quarters, then he shall give full audit report. If an auditor has conducted 3 quarters audit, he shall give full audit report. He gave a review report for 3 quarters, nothing but. Suppose, you are appointed as an auditor. Within 45 days from the end of the quarter, what is it? Within 45 days from the end of the quarter, you want to resign. For example, Q1 begins. June 30 is the Q1. Within June 30, you want to resign. Go and resign happily, no problem. But June 30 over. Now you want to resign. Then automatically it comes within 45 days from the end of the June quarter. You want to resign after the quarter is completed, but within 45 days from the end of the quarter. Then you must give a review report or audit report for that quarter. You must give a review report for that quarter and then you can resign. Suppose you want to resign after 45 days from the end of a particular quarter. Take one quarter. Suppose today I want to resign. For example, today date is what? Let us assume today date is, March 16th. Okay. March 16th comes under which period? Recently completed quarter, December 31st. From December 31st, March 16th is after 45 days. Since I have to resign after since I'm planning to resign after 45 days, then I have to give for the December quarter review report, for the next quarter also the review report. This is what the meaning. So auditor want to resign, no? On which date you want to resign, check it out. Last completed quarter, check it out. From that particular quarter, this date is what, check it out. Within 45 days, then that quarter review report you give enough. If it comes after 45 days from that quarter, then that quarter review report, the upcoming quarter review report also you should give. That's the second point. Are you clear? Third point, an auditor who gave a review report or audit report for 3 quarters must and should give review report for 4th quarter, annual audit report for the full year. For full year annual audit report, he must give, and then only he can resign. Are you clear? That's it. Then ICAI has given one announcement with respect to unlisted company. If at all auditor want to resign, no, he has to mention clear reason. He cannot mention professional preoccupation. He cannot mention professional preoccupation as a reason. He must clearly mention the reason why he is resigning. Some of this, I think, it was asked in MTPs of Jan 26, or maybe in the Jan 26 directly it was asked. Clear? That's it. So this is regarding, consequences of management imposed limitations. Clear? MCQ can come. Sometimes how an MCQ can come? If the auditor is unable to obtain sufficient appropriate evidence because of management imposed limitation. Okay. And the effect of, the effect is pervasive. Now what is the option? Option A, withdraw from the audit. Option B, option B, give disclaimer of opinion. Option C, like that they'll give you 4 options. First option we should select is withdraw. First always it is withdraw if permitted. If withdrawal is not permitted before giving report, then give the report with a disclaimer of opinion. That's it. Clear? So with this 705, almost entire content is covered. 705 entire content is covered. That's it. Now we have to go back and then see remaining paragraphs in the audit report. One is emphasis of matter para, other matter para, and then key audit matter. So once we complete that, then we have to discuss directly CARO. With that, major part of the audit report topic will be over. Yeah, look at. So what are the elements that we completed now? So audit responsibility is over. That's it. Okay. Responsibilities of management also I will strike that it is complete. Okay. So responsibilities of management. What are management responsibilities? Management is responsible for preparation and presentation of financial statements in accordance with applicable financial reporting framework. Management is responsible to provide information requested by the auditor, additional information requested by the auditor, unrestricted access to persons within the entity from whom auditor can obtain sufficient appropriate evidence. Then various other responsibilities relating to risk assessment, relating to going concern. Management is only primarily responsible for that. So mention those responsibilities. That's it. So with this opinion related context is also completed. Opinion context is completely done. Now we need to discuss emphasis of matter para and other matter para. We need to now discuss emphasis of matter para, other matter para. That's it. I'll just 2 minutes. I'll just stop the video. Immediately we'll start. Yeah, next one. Emphasis of matter paragraph and other matter paragraph in the independent auditor's report. Now, if you look at 700 standard heading, forming of an opinion and reporting on financial statements. 705 heading, modifications to the opinion. You see, it's not modifications to the report. It's modifications to the opinion in the independent auditor's report. Okay. Then in the independent audit report, if you are thinking to add emphasis of matter para, other matter para, then we call it as seven emphasis of matter and other matter para in the independent audit report. That is 706, which means emphasis of matter, other matter para. By heading, we understand that they are not modifications to the opinion. Am I right? By heading, we can understand it is not modifications to the opinion. Means because of these para, there is no modifications to the opinion in the auditor's report. Means these paras are not dealing with opinion. Do you agree? If they are not dealing with opinion, they are also not dealing with basis for opinion. So which means there is no link between opinion and emphasis of matter para. Clear? Now, if at all you have to modify the opinion, you have to modify as per 705. When do we have to modify the opinion? When the financials are materially misstated, we should give a modified opinion which is as per 705. Suppose I want to use an emphasis of matter para, when I can use it. First of all, emphasis means what? Highlight. Emphasis means what? See, right now what am I doing? I'm highlighting. Emphasis, I'm emphasizing. What am I emphasizing? You know, a point called additional communication words I am emphasizing. So emphasis of matter paragraph is a para in the audit report that refers to, that highlights, that emphasizes a matter that is presented or disclosed in financial statements. So emphasis of matter paragraph is a paragraph in the auditor's report referring to a matter presented or disclosed in financial statements, which in auditor's judgment is of such importance that it is fundamental to users' understanding of financial statement. In the financial statements, some matter is there and I want to highlight that matter. Why I want to highlight? Look at any real company notes to accounts. It will be 100 pages, 150 pages, 200 pages. SBI, their consolidated financial statements notes to account is 120 pages approximately. Reliance, you take consolidated financials, notes to account is 150 pages. Standalone financials, you take 100 pages it is. Now, who will read entire that 100 pages as a shareholder? I know very well there nobody will read this. But in that notes, there, almost some 60 note points were there. In Reliance notes to accounts, almost 60 note points were there, which are spread over 100 pages. And as an auditor, I must read 100% of the balance sheet, 100% of the P&L, 100% of the notes. Am I right or not? I must read it because I'm giving opinion on that. So I must read. I don't have an option. When I am reading, I found, note number 36. I found one point called note number 36, where that note point is talking about, that note point 36 is talking about an important matter. Okay, it is discussing about some contingent liability, where in that one pending litigation company is facing. If at all company loses the case, it's a significant damages company has to pay. Significant amount of damages company has to pay. That pending litigation point, they clearly disclose. They are not hiding anything. They are very transparent. Court case is pending. What is the status of the case? Amount involved, everything. Facts of the case were completely honestly disclosed by the company. Tell me, is there any modification I should do on that opinion? Should I have to modify my opinion on that? No need. No need to modify my opinion. Yes or no? Because they're transparent, they're clear, very honest. So I can't touch it in my opinion para. But I want every shareholder, every user of the balance sheet P&L compulsorily read this note number 36. What should I do? Emphasize it. What you should do? Emphasize it. Where I can emphasize? In audit report only. How can I emphasize? Put a separate side heading. In the audit report, put a separate side heading. Emphasis of matter. Put a side heading separately. Emphasis of matter. Below that, Draw attention to note number 36 point. We draw attention to note number 36, which describes about pending litigation involving 100 crore. So describe that matter. By the way, do you have any objection on this? Do you have any objection on this? Mention that you don't have any objection on that. Clearly mention, otherwise people might think, people may not have understanding like you, so they might think, why auditor is specifically talking about 36 note point? Is there anything wrong with that? People might misinterpret it. Mention at the end of emphasis of matter, our opinion is not modified. Mention the point that our opinion is not modified in respect of that matter. For example, I will show you Air India audit report. Just a minute. Yeah, look at this. This is one of the Air India's audit report related to 1920 financial year. Okay. How are they presenting it in the audit report? Look at this. So there is a qualified opinion. There is a basis for qualified opinion. Yes or no? Then MU or GC para is there. This we will get back to it later. Okay. Then emphasis of matter. So just like how opinion, basis for opinion as a separate section, how they were presented, emphasis of matter paragraph is also presented as a separate section in the audit report. And at the end of the matter, our opinion is not modified. We should clearly state that. And we should draw, you see how they are highlighting, we draw attention to note number 29, note number 26, note number 49, note number 46, all that. The auditor is simply, what is it trying to tell here in emphasis of matter paragraph? Is simply saying, please go and refer that, please go and refer that, please go and refer that. Why you need refer? Just that they were important. Okay, nothing. I don't have any objection on them. They were absolutely true and fair. I don't have any problem on that. This is how we are referring. Correct? Now look at. So what is the presentation of emphasis of matter paragraph? In exam they asked as a 5 marks question. Manner of presentation. This itself can be asked as a 5 marks question. Manner of presentation. Now include the para in a separate section of audit report with a heading containing emphasis of matter. Clearly express the matter being emphasized. Provide reference to the relevant disclosure in financials. Air India auditor, we draw attention to note number 26, note number 29. Clearly draw attention. Yes or no? State that opinion is not modified in respect of matter emphasized. Yes or no? Further, emphasis of matter paragraph is not a substitute for. It is not a substitute. See, suppose if there is a material misstatement in note number 26. Suppose note number 26 in the balance sheet P&L notes to accounts, there is a material misstatement. You should not emphasize it. You should highlight it. You should give a modified opinion on that. You should have given a modified opinion on that. You can't highlight it. Emphasis of matter para you can highlight only when the matter is appropriately, look at it, only when the matter is appropriately presented and disclosed. Appropriately means what? Without a misstatement you presented. If a particular point in the financials you want to highlight, you can highlight only when it is free from MMS, only when it is free from material misstatement and you have sufficient appropriate evidence on that. Only then you can highlight. Suppose in the balance sheet, in the P&L, in the notes, one point is there where material misstatement exists. I can't highlight it. I cannot highlight it under emphasis of matter para. That's why usage of emphasis, when you can use it. Emphasis of matter paragraph can be included in audit report only in respect of a matter. You can include it in the audit report only when the auditor is not required to modify the opinion on such matter. Only when you don't have a requirement to modify, means that matter is free from MMS, or you have obtained sufficient appropriate and the matter is not decided as a key audit matter. When you decided that not as a key audit matter and on that matter you don't have to modify the opinion, then only use emphasis of matter para. Otherwise don't use. What are the examples of emphasis of matter? Examples, what matters you can highlight? You can highlight about an uncertainty related to a pending litigation or regulatory action. You can highlight about a major catastrophe related disclosure that is shown in the financial statements. You can highlight about a subsequent event that happened between date of financials and date of audit report. You can highlight about an early application of a new accounting standard which has a material impact on the financial statements. Only these points you can highlight. Examples, they're just an example. In exam they can ask you, write about usage of the para and manner of presentation. Sometimes they can ask you both. Suppose if you're not clear whether they're testing usage, whether they're testing manner of presentation, if you're not clear, write both. Write both, no problem. Now, so emphasis of matter paragraph is not a substitute for modified opinion. Emphasis of matter paragraph is not a substitute for disclosure in financial statements. Suppose company forgot to disclose some important information and now they are coming and asking you, sir, can you disclose it under emphasis of matter paragraph? That no, emphasis of matter paragraph is not a substitute for disclosure. Suppose if the company forgot to disclose something, they did not disclose some information in financials, that's a non-disclosure. Non-disclosure is a misstatement, and if it is a misstatement, you should give a qualified opinion or adverse opinion as the case may be. Yes or no? Further, emphasis of matter paragraph is not a substitute for 570 reporting when a material uncertainty related to going concern exists. When a material uncertainty related to going concern exists, emphasis of matter paragraph is not a substitute for that. It's not a substitute for 705 modified opinion. It is not a substitute for disclosure required as per accounting standard. It's not a substitute for 570 MURGC. That's it. Then what is emphasis? Simple. In balance sheet P&L notes, some important point is there. According to you, in the auditor's professional judgment, were of significant importance, were of important for the users of financials. For whom it is important? Users. Who felt that it is important? Auditor felt that it is important. Then highlight that. Are you clear? That's emphasis of matter para. So we understood now when emphasis of matter paragraph can be used, when what is the manner of presentation, and we also understood the definition. Half the standard over 706. Are you clear? Then we have another part. In the standard, it is also dealing with another para, which is other matter para. What is other matter para? Here also you can refer about a matter. You can refer about a matter, but that is not presented or disclosed in financials. It is not presented or disclosed in financials. See, you want to report about a matter, you want to highlight a matter which is presented or disclosed in financials, emphasis of matter is there. You want to talk about something else. What you want to talk about? I want to make the users understand about audit, auditor responsibilities, auditor's report. If I want to make the users understand about audit, auditor responsibilities, auditor's report, then I will use which paragraph? Other matter paragraph. So other matter paragraph will be used by me to make users understand about audit, auditor responsibilities, auditor's report. If these three issues I want to make my user understand, then I will use which paragraph? Other matter paragraph. That's it. So other matter paragraph, what is the presentation requirement? Same, other matter paragraph also shall be included in a separate section of the auditor report with a heading clearly mentioning other matter. Remember, other matter para is different, other information para is different, other reporting requirements para is different. Other reporting requirement is first of all not a section in the audit report. I mean part 1. It will come as a part 2. Yes or no? Within the audit report, other reporting requirements means it's a part 2 of the audit report. It's not part of part 1. Other matter paragraph is one element, part of part 1 of the audit report. Are you clear? Next. Now example of other matter para. Other matter paragraph is a paragraph in the audit report that refers to a matter other than disclosed in the financial statements, which in the auditor's professional judgment was of important to understand, to make the users understand about the audit, auditor's report, auditor's responsibilities. So in order to make the users about these three things, then we can refer about other matter para. For example, you want to make the user understand about audit report. You remember SA 299 joint audit? Yes or no? Joint audit, you remember? In joint audit, there is one point regarding disagreement among joint auditors. When the joint auditors are disagreeing, then the joint auditor who is disagreeing with the remaining auditor can give a separate audit report. Remaining auditors can give a separate audit report. That time, within the joint audit report, each joint auditor within their report in other matter paragraph should refer about other joint auditor report. Should refer about other joint auditor report, audit report. Understood? You might have seen in 710 disclosure requirement in case previous year financial statements were audited by predecessor auditor. If previous year financials were audited by predecessor auditor, in other matter paragraph we should mention the fact that prior period financials were audited by so and so firm. This is the opinion they gave. This is the date of the report. Like this, we need to give a disclosure about their audit report. Other matter paragraph. So regarding audit report, example is given. Now, other matter paragraph is used to describe about auditors' responsibilities. It is also used to describe about auditors' responsibilities. Now, I'll give one simple example of SBI, okay, which is what I give a classic example. Now, SBI, you know, there is a State Bank of India. The State Bank of India is having so many branches, so many subsidiaries. Accordingly, the State Bank of India will prepare standalone financial statements. The State Bank of India also prepare consolidated financial statements. Now, whoever is auditing standalone financials, the same person has to audit the consolidated financials. Yes or no? That's it. Further, the consolidated financials is a result of State Bank of India Limited plus its subsidiary companies, associate companies, and joint venture. Correct? Whereas standalone financial statements is a result of head office plus approximately 24,000 branches they have. Approximately 24,000 branches State Bank of India is having across India. All these branches plus head office put together, they prepare a combined balance sheet, combined P&L, and that balance sheet and P&L is called as standalone balance sheet, standalone P&L, or standalone financial statements. Correct? Now this entire State Bank of India is being audited by 11 joint auditors at now. Okay, at present, how many joint auditors State Bank of India is having? 11 joint auditors they are having. Now, these auditors were responsible to report on the entire entity. They were responsible to report on the entire entity called SBI Limited. They're responsible for reporting on entire entity. Okay, now we call them as principal auditors. We call them as principal auditor. Let us assume one of the principal auditor is Mr. P. Mr. P is who? Principal auditor of State Bank of India Limited. Who should sign the audit report on standalone financials? He should also sign, he should issue and sign one more audit report on consolidated financials. So there will be an audit report on standalone, there will be an audit report on consolidated financials. Now, who should sign this audit report? Mr. P should sign. Are you clear? However, if you observe, you know, standalone financials includes head office and 24,000 branches. You know what? Mr. P did audit of head office only, and he did audit of top 20 branches. Top 20 branches only he audited. Rest all 24,000 branches approximately were there, right? You know, rest all 24,000 branches, out of it 6,000 branches. What is it? 6,000 branches were audited by branch auditor. Some 19,000 branches were not audited at all. They were not audited at all because as per RBI regulations, they are exempted from audit. Now, if you observe, Mr. P is signing the standalone balance sheet, nothing but the State Bank of India balance sheet, which is a result of 24,000 branches plus head office. But he is signing the entire that balance sheet P&L, that entire total asset value, total liability value, total income value, total expense value. Who is signing? Mr. P is signing. But in this total income, total asset, total liability, total expense, he didn't audit that. Total expense he didn't audit. Total asset he didn't audit. Total liability he didn't audit. Out of that, a substantial portion of asset, substantial portion of liability was audited by branch auditors. And some of them were not even audited. Now, I should tell people the fact that, look, I am the one who is signing the audit report on the entire State Bank of India Limited. I agree, but I am not responsible for 100%. My responsibility is only with respect to head office and top 20 branches. Then how come you are giving opinion on entire balance sheet? Just like how you trust my opinion, my audit report, same way I have taken branch auditors report. They have given everything true and fair. I also trust them that everything is true and fair. I am telling you everything is true and fair. Are you clear? So now with respect to head office and branch top one, everything is true and fair. With respect to 6,000 branches, branch auditor said everything is true and fair. With respect to unaudited branches, they are immaterial, insignificant, not an issue. That is not an issue. On the rest of this, are they true and fair? Whatever I audited, they're true and fair. Whatever they audited, they said that they're true and fair. Now, as per their audit report, they're true and fair. As per my audit, it is true and fair. Therefore, as a whole, standalone financial statements are true and fair. Are you clear? Now here, people might think, because only my audit report, my signature is only visible on the audit report. So they might think I only audited entire these 6,000 branches also. So I should tell them in other matter para. What? In other matter para, I should clearly tell them that 6,000 branches were audited by branch auditors. To that extent, assets, liabilities, income, expense, these were audited by other auditors whose reports were given to me. And my opinion on the overall balance sheet and P&L is based upon their reports. I should mention this fact, and that fact I will mention which paragraph? Other matter paragraph. Further, I have to alert people, I have to tell people that 19,000 branches were not audited at all. Okay, this fact also I should tell the people. So I will tell that in other matter paragraph. So auditor responsibilities, one more term, over. Are you clear? Yes or no? Then, so other matter paragraph is used by the auditor to tell about his audit, his responsibilities, his auditor's report. Now we want to tell about the audit also, right? Audit means what? In the audit, if at all I have any other issue to communicate, then I will communicate it here. If it is not a key audit matter, if I want to discuss about any other audit matter which is not a key audit matter, I can discuss it in other matter paragraph. Are you clear? But popular is audit report and auditor responsibilities. Clear? That's it. If you observe State Bank of India, audit report also will be there. Just a minute. State Bank of India. Or even Reliance also you can take. Reliance audit report also you can take. I will show you Reliance directly. This is Reliance annual report. So in the Reliance annual report, we have consolidated financials. I'll go to the consolidated financials related discussion. Yeah. This is the consolidated financials of Reliance. And if you observe in the SBI example, I gave only to one extent. There is one more part of the example. There is little more discussion on that. Fine. So now we understood regarding State Bank of India standalone point of view. Correct? Now same way, Mr. P should also sign audit report on consolidated financials. But this consolidated financial statements is a result of SBI Limited plus subsidiaries. Okay. Now these subsidiaries I didn't audit. Other auditors have audited. This subsidiary companies and all who audited? Some other auditor. But consolidated balance sheet I am only signing. This consolidated balance sheet assets and liabilities includes assets and liabilities of subsidiaries, joint ventures, associates which are audited by other auditor. Then how come you are giving opinion based on their audit report? So they have said everything is true and fair, and holding company is true and fair, which I audited. They are all true and fair as per their reports. So as a whole it is true and fair. So this fact I should tell to the people. Where I will tell about this? In other matter paragraph. Look at the Reliance. For example, here we did not audit. In other matter paragraph, what are they mentioning? We did not audit the financial statements of 128 subsidiaries. Yes or no? And we did not audit 78 associates, 27 joint ventures. Yes or no? They were not been audited by us. These financials were audited by other auditors whose reports have been furnished to us by management, and our opinion on consolidated financials relating to these amounts and disclosures is based purely on the basis of other auditor. So indirectly I'm telling with respect to subsidiaries and associates, all this which I didn't audit, my opinion on the entire consolidation is based upon their opinion also. If something goes wrong tomorrow, just go and ask them, not me. Are you clear? So this is what other matter paragraph is used for. Understood? Now, is this point mentioned in the notes to accounts? No, it is not mentioned in notes to accounts. First of all, in notes to accounts, why the hell they talk about audit? Why they talk about audit reports and audit reports of other auditors? They won't talk about that in notes to accounts. So that's why emphasis of matter paragraph cannot be used for this. Emphasis can be used only when you want to talk about a matter, for that reference should be there in the notes to accounts. Reference should be there in the financial statements. Then only you can talk about that in emphasis of matter para. But here you want to talk about something which is not there in the notes to accounts of the financials at all. Therefore, we will talk about that in other matter paragraph. That's it. Clear? So with this, other matter paragraph is also completed. And now here itself you can learn. You have SA 600 now, using the work of other auditor. Who is using the work of other auditor? Principal auditor is using the work of other auditor. Who is a principal auditor? In our example, Mr. P. He is the principal auditor. He is the auditor appointed for the entity. Other auditor is the auditor appointed for component. From consolidated financials point of view, component means subsidiary company, associate company, joint venture. They are components. From standalone point of view, branch or division is a component. That's why you see in SA 600 the definition of component: subsidiary, associate, any other entity, branch, division. Component means branch, division, subsidiary, associate, or any other entity. That's how the definition starts with. Component definition starts with these 5 parts, 5 wordings. Branch and division are component from standalone point of view. Subsidiary, associate, and other entity will be a component from consolidated financials point of view. Component is an entity. Component means as branch or division or subsidiary, associate whose financial information is included in financial information of the entity audited by principal auditor. That's how the definition of component has been drafted. Who is a principal auditor? Principal auditor is a person who has a responsibility to report on the entity, which includes financial information of the component audited by other auditor. Who is other auditor? Other auditor is an auditor who has a responsibility to report on the component financial information which is included in financial information audited by principal auditor. That's how SA 600 starting 3 definitions were: principal auditor, other auditor, component auditor. Able to understand? That's it. Anyhow, once we go back to SA 600, there I will discuss. Clear? That's it. With this, other matter paragraph is also completed. So I'm concluding 706 standard, everyone. So other matter paragraph can be used only when it is not prohibited by law, and only when the matter is not determined to be a key audit matter. Only when these 2 conditions are satisfied, other matter paragraph can be used. Further, if you are using other matter paragraph, put it under a separate section of the auditor's report. Clear? That's it. Now we'll go to Jan 26, one MCQ we will solve. Now look at what should be the auditor's conclusion if management refuses to disclose a pending litigation. Some pending litigation is there, they are not disclosing it. Non-disclosure. Non-disclosure is a material misstatement. When there is a material misstatement, you should either give qualified or adverse. Non-disclosure is a misstatement, no? Yes or no? Non-disclosure. They didn't disclose. I have evidence. Disclaimer, when do we give? When we don't have evidence. Yes or no? Non-disclosure, when I am saying, means I have an evidence. No? When will I say something is not disclosed, I have evidence for it. That's why I am saying non-disclosure. Now, which opinion I will give? Non-disclosure. Non-disclosure. Yes or no? Auditor should include in other matter paragraph? No. The auditor should issue disclaimer? No. Yes or no? The auditor should include an emphasis of matter paragraph in? No, that's a non-disclosure. The auditor has to express, wait a minute, just a minute. I think this answer, what would be the, if the management refuses to disclose? Wait, full case study, we need to see that. Yeah, here it is there. Yeah, look at it. Your team identified a significant transactions where the company provided a loan of 20 crore to a subsidiary company, which is a related party. The transaction was approved by board, but was not adequately disclosed in draft financials. When confronted, management explained that since both the companies have common ownership and control, they did not deem it necessary to disclose the transaction, believing it was an internal matter. I think this, even in the question paper analysis I told, the options were wrong. Okay, the options were wrong. I told even in the paper analysis video clearly. So here, so in the context of related party, okay, fine. I think here it is there. In the context of related party transaction, what is the auditor's responsibility? We should, because it's a, I mean, related party separate question is given, so that question will solve. Okay, the auditor has to related party loan transaction with ABC solution. What is the primary responsibility? Okay, they're asking what is the primary responsibility of the auditor. They're asking what is the primary responsibility. Primary responsibility is to, no, actually the question is wrong again here also. I'll tell you why the question is wrong. SA 550 primary responsibility is to do risk assessment, fraud risk assessment. What is the 550 responsibility? To identify fraud risk factor in transactions with related party. But still here, the options, if you see, it's a reporting question which they are asking. So reporting, since it's a non-disclosure, we should issue a qualified opinion with respect to related party. This answer is right. Second option, the report the matter to serious fraud investigation, wrong. To assess if non-disclosure constitute material misstatement and request management to disclose it. This is also partly right. Okay. To issue an unmodified opinion with an emphasis of matter para. So now rule out method. This is wrong. This is wrong. Absolutely. Am I right? Now, here they did not disclose related party transaction, right? Now look at once again the case study. Look at once again the case study. Identified a significant. So you're only saying it's a significant transaction. Yes or no? And you already discussed with the management. Yes or no? When confronted, the management explained, and they were saying it was not necessary, and it moreover was an internal matter. So which means audit management already discussed with the auditor and said that we are not going to disclose. So discussion with the management is already over. Therefore, you directly have to give opinion, which means the answer is qualified opinion. You understood? You understood? So to assess if disclosure constitute and request management, this part you already did it. You already did this part. Therefore, the answer is A. So the answer is A. So MCQ number 3, the answer is A. Are you clear? Now, fourth question. This is regarding what? What should be auditor's conclusion if management refuses to disclose the pending litigation, which means this is some other case. Some other case. Yeah, here you see here. A former employee has filed a significant lawsuit against so-and-so company claiming intellectual property theft. The claim amount is some 6 crore and the legal counsel has advised the company that outcome is highly uncertain, but a potential liability cannot be ruled out. The management has provided a contingent liability note in the draft financials, but it only mentions the lawsuit without quantifying the potential financial impact or detailing the nature of the claim, stating that they do not want to alarm the potential investor, which means they disclosed partly. They disclosed partly. Even still, it's an inadequate disclosure. Technically speaking, it's a material misstatement. Technically speaking, it's a material misstatement. You should either give qualified or adverse opinion. But let's look at the answer. If at all this answer is not there, then I will choose emphasis answer. If this qualified opinion and adverse opinion answer is not there, option is not given, then I will choose emphasis. Why am I choosing emphasis here? At least a footnote disclosure is there. In the financials, something is disclosed, so I can even highlight it, at least that. But the answer should be qualified or adverse. Look at the auditor should include other matter paragraph, wrong. The auditor should issue disclaimer of opinion, wrong. Yes or no? The auditor should include an emphasis in the audit report and highlight the answer regarding pending situation. I think this is partly right. The auditor should express unmodified. This is also wrong. So the answer I'll go with is C. Technically, all the 4 options wrong. Because it's an inadequate disclosure. When it is inadequate disclosure, it's a material misstatement. You must either give a qualified opinion or adverse opinion. Qualified, adverse, none of these 2 options were given in the given question. Therefore, since at least they disclosed a footnote, based upon the question, I am interpreting the answer as C. Based upon the options given, best answer I am selecting. But actually, this is not a right answer. Yes or no? That's it. So question number 3, option number A, na? Question number 3, option number A. Question number 4, option number C. We'll see. We'll see the answer. 3A or C. And then 4, C. That's it. Okay. 4th one is C. 3A or C, they said no. What is the C option? I'll tell you. I will go. 3rd question, A or C, they said no. That's what no. But I told you why this is not right. I told you why it is not right. Again here, what is the auditor responsibility relating to a related party transaction, they ask. Technically, in the context of related party transaction, what is the auditor primary responsibility? You know what is primary responsibility? SA 550 responsibility you should write. The primary responsibility is to do risk assessment, specifically risk of fraud. That option is not given. If at all that option is given, directly that option will be the answer. Objective of the auditor as per 550. That's what the meaning. But here, since that option is not given, okay, I will choose between all these four. Now, in the given question, it is already given that the auditor requested management to disclose it. Then management already objected that it is not required. Therefore, I ruled out the C point and then selected A. Technically, this answer is clear. Therefore, the answer is A, not C also. Clear. That's it. You understood how examiners paper setters themselves, they don't know the provision. No, that's actual. That's common sense. Many don't understand audit report itself. They don't understand audit. Many don't understand audit because this is how they need to interpret. Clear? Next. They just mug up. This means that means this. That's it. They just mug up. They don't clearly understand when an opinion will come, when qualified will come, when adverse will come, under what circumstances modified opinion, under what circumstances modified report will be issued. I think majority students, they don't know, they don't understand the difference between modified opinion and modified report. If at all a question has been asked, under what circumstances modified report will be given, it's a 260 answer. Under what circumstances a modified opinion will be given, 705 answer. Able to understand? That's it. So with this, other matter paragraph is also completed. Other matter paragraph is also completed. 706 is completed. Now we'll begin with 701, key audit matter. Okay, just we'll take 10 minutes gap and then we'll continue. Yeah, let's continue. 701, communicating key audit matters in the independent auditor's report. Communicating key audit matters in independent auditor's report. Now, so what is a key audit matter? I will show you Air India audit report itself, or even you can take Reliance audit report or anything else, no problem. In almost all the listed companies, key audit matter will be there. But first important thing, communicating key audit matter is prohibited when you are giving a disclaimer of opinion. Logic is simple. You gave a disclaimer of opinion because you couldn't do the audit. You did not do the audit. When you did not conducted the audit itself, how do you know key audit matter? Key audit matter means what? What is important? Important audit matter, which means first you must have conducted audit. And only if you conducted the audit as a whole, then you can identify what are important audit issues. Am I right? Disclaimer of opinion indicates you didn't do the audit. Substantial portion of the financial statements you don't have evidence, which means you didn't audit. That is the reason you are not giving opinion, because you didn't audit. When you did not do audit, how key audit matter issue first of all arises? How come you know important audit matter first of all? Because you didn't do audit itself. That's the logic. So key audit matter will not appear, will not arise. The requirement to communicate will not arise when the auditor is disclaiming the opinion on the financial statements. Now, look at the Reliance auditor's report, key audit matter. So this is the Reliance auditor's report. Immediately, where key audit matter is presented, immediately after basis for opinion para. And even emphasis of matter paragraph will come after key audit matter. Other matter para will come after emphasis of matter para. You can mention like that. Now, key audit matters are what? Key audit matters are those in the auditor's judgment most significant in the audit of financial statements for current period. These matters, they were addressed. These matters were addressed in the context of our audit as a whole and in forming opinion on the financials. But we do not provide a separate opinion on these matters. What is a key audit matter exactly? I'll give you one example. A simple example I'll give you. A lame example. You went to a restaurant. You ordered some biryani. Okay? And you're having the biryani, and suddenly the chef reaches you. He just asks you, sir, wait a minute. Let me explain you how I cooked this biryani, how I made this biryani. Okay? The chef is explaining you the process of making the biryani, the spices he used, the procedure he used, the procedure he followed, all that, the time, the downtime that he waited, everything is telling you. How does it affect you? He's just explaining how he made that biryani. Suppose you ordered, let us assume on the table, a 10 of you, a 10 friends, okay, have attended, have been visited the restaurant. Like 10 of them have ordered different dishes. In that, some 3 dishes are important. Okay, and the concerned chef is explaining you how he made those 3 dishes as a part of this entire order that you given. He's just explaining how he made that biryani. Exactly key audit matter. How does that is relevant to the eater, the person who is eating, the one who is consuming the food? For the consumer, how does it matter how you make the biryani? For me, what matters is it tasty or not? As a user of the financial statements, I want to know whether financials are true and fair or not. And is there any important matters? You are highlighting an emphasis of matter. If any responsibility aspect I want to know, you are explaining another matter paragraph, some responsibility issue. So responsibility of the auditor issue, other matter paragraph is there. Important point in the balance sheet P&L, if I want to know, you are highlighting it in emphasis of matter para. Whether financials are true and fair, you are giving it in opinion para. Then what are you telling in key audit matter? What are you explaining in key audit matter? Look at what is key audit matter. Okay. For example, restaurant you went. One of the key audit matter is biryani. And how auditor has prepared it, how the chef prepared it. Okay, we have sourced some rice, so have procured certain spices, used certain oil, like olive oil or some oil. All that is explaining you how he prepared it. Tell me, how does it relevant for the consumer? Now you look at the auditor's key audit matter. Okay, disallowance of some cost related to so and so, deposit of some differential revenue against gas, claim against a parent in respect of so and so related. So you see, one of the key audit matter is some litigation. Litigation is a key audit matter. Our audit procedures include, but were not limited to the following. Means we did so many on litigation matters. On litigation matters, we performed some audit procedure. What we did, we tested design, implementation and operating effectiveness of controls established by the entity. We assessed management's position through discussion with legal team. We discussed with the management and developments till the date of approval of the financial statements. So they're just telling you what audit procedures they did on litigations. Litigations is a key audit matter. What we did relating to litigations, we are telling. First of all, why does it relevant to me? As a reader of the financial statements, how does it gives me an idea? Like you're just telling, like, okay, litigation matters, one key audit matter. Okay, then we have another key audit matter, some fair value of investments. Then another key audit matter, revenue recognition. Then another key audit matter, IT systems and controls over financial reporting. There are some key audit matters which auditors of Reliance have selected. They first explain what is that matter. Then they explain how they audited that matter. Just like how the chef in the restaurant is explaining you what is that particular item that you ordered, biryani, and how he prepared it. He's just explaining, coming and explaining to you, the user. How does it relevant? How much impact it will have? The same here also. Maybe what the standard also says, 701, it says key audit matter will provide insights into the audit. Key audit matter will provide insights into the audit. Means people, if at all, want to know how auditor will conduct the audit. Through key audit matter, we are giving insights. Able to understand? So that's what even in the in the book also it is clearly given. So key audit matter, what is the purpose of communicating key audit matter? What is the purpose? It is to provide transparency in audit report by providing insights about the audit. How auditor will do the audit? You want to know an example? I will take some 2 or 3 examples and then tell you how we audit that generally. So people want to know how auditor will do the audit. By looking at audit report, we don't know how we are doing audit. We know you do audit as per standards. We know, you do risk assessment, all the theoretical part we know. But can you give me a practical example of 1 or 2 examples you take and tell me how you audit? Okay, I will take some examples in my audit. In my audit of current period, I will take 2 to 3 examples and explain you how I do the audit. Which examples I will take? I will not take some random example. I will take important example. That's it. Key audit matters or those matters in our professional judgment were of most significant in the audit of current period. These matters were already addressed as a part of our audit and while forming opinion thereon. We do not provide a separate opinion on these matters. Do you understand? Look at the key audit matter further. So look at the manner of communication. How you should communicate. Key audit matters are described under appropriate subheading in a separate section in the audit report. You see Reliance audit report separate section, key audit matter heading they kept. Again they kept subheading litigations, revenue recognition, yes or no, valuation of financial instruments, information technology. Subheadings also they gave, no? So that is the meaning of subheading. Separate section means what? In the Reliance audit report, you saw key audit matter, just like opinion, just like basis for opinion. Key audit matter is also separately given. Am I right? So in a separate section of the audit report, where you are talking about multiple key audit matters, for each key audit matter, there should be a subheading. Do you understand? So key audit matters are described under each separate subheading. That too under separate section in the audit report. The introductory matter explains key audit matters are those in auditor's judgment were of most significant in audit of financial statements of current period, and these matters were addressed in the context of audit and the auditor does not provide a separate opinion on these matters. Yes or no? Suppose no, if there is no key audit matter to communicate, suppose you decided there are no key audit matters, then state that there are no key audit matters. State that. By the way, to which companies key audit matter is applicable? Key audit matter is mandatory for listed entities. That's why, since it is mandatory only, all the auditors are giving it. Otherwise, nobody knows what is key audit matter. Nobody knows. Most of the practicing CS right now are qualified 4 or 5 years before key audit matter standard was brought. So they definitely would have not attended. What is a key audit matter? They definitely no chance at all they know it. Some key audit matter standard was in force from 2019-18 financial year. Okay, up to 17-18, okay, 18-19 financial year onwards only key audit matter standard is applicable, because this standard was brought somewhere in 2017 or somewhere in 2018. This standard was brought. So those who qualified before this, they don't know about key audit matter, but they are using because it is mandatory. That's it, nothing else. So, or key audit matter is mandatory if there is a requirement in law or regulation. Right now, there is no law or regulation in India which mandates key audit matter or at the public interest. If auditor feels communicating key audit matter at public interest, okay, then he can communicate. Suppose you are doing audit of a listed entity and you don't have anything to communicate. You really don't have any key audit matter. Suppose you felt there is no key audit matter at all. Then you can say that there is no key audit matter. So key audit matters are nothing but those matters which caught significant attention of the auditor. Those matters in the audit period, the period for which you are doing audit, the days that you are present for audit, the days that you are working on audit, in that audit, whatever matter that caught your significant attention, whatever matter that caught auditor's significant attention, we can call it as key audit matter. Now this key audit matter can be related to a financial element, can also be related to a non-financial element. For example, we have one question in our question bank also, one exceptional question. Suppose the company has implemented new software for accounting, where the software is completely different from the softwares which we saw all these years. That was completely new. Complete financial reporting software is something different, where auditors spent lot of time to understand how the software works, how that is integrated with different business operations. We wanted to know. So we spent a lot of time. You can take that as a key audit matter. Key audit matter can be related to financial information. Key audit matter can be related to non-financial information. There is no specific restriction of the key audit matter. But it is an important audit issue that you have given enough time in audit. That's why you are selecting it and then communicating it to the people. What you need to communicate? What is the matter? Litigations. How you responded to it? How you performed audit? What audit procedures you performed for the litigations? Communicate that. Revenue recognition. Why revenue recognition is a key audit matter? Explain. And what audit procedures you performed? What audit procedures you performed for revenue recognition? For example, you see here revenue recognition. What auditors did? They evaluated internal controls. They evaluated IT systems involved in revenue recognition process. They took even help of IT specialist experts. They tested collections and reconciliation between revenue as per billing system and financial records. Yes or no? So these are all they did. So our audit procedures as reported by subsidiary auditor, the audit procedure performed by them, but were not limited to the following. So the auditors have performed the following procedures, but not only this. For revenue recognition, we did so much of work, but I'm just giving you an idea about what processes we performed. So by looking at key audit matter, what am I getting to know as a user of the balance sheet or P&L? What am I getting to know from the user of, as a user of the audit report? The auditor is telling revenue recognition, something as a key audit matter, and how they performed that. How they performed audit of the revenue recognition. That's it. Are they telling me revenue is important? Are they telling me to refer about anything in the balance sheet? Are they talking anything about my decision making? Nothing. They are just explaining their skills, how they do the audit. Okay, that's it. You gave a car for service or bike for service, and they're calling you, sir, please come to the workshop. I will show you how I replace engine oil. Exactly. Yes or no? Key audit matter is just exhibiting the auditor's way of doing the audit of a certain items. Some 2-3 examples they're taking and then explaining it. How many matters we should communicate as key audit matter? Your discretion. Since it is mandatory, communicate at least one. If you decided still that there is no key audit matter, say that there is no key audit matter. Tell me, if the financial statements are materially misstated, can I communicate that fact under key audit matter? Hey, don't be clever. Yes or no? You have to modify the opinion. If the material misstatement is there in financial statements, you have to modify opinion. You can't cleverly communicate that under key audit matter. Management missed to disclose a material item. Non-disclosure of a material item which is required as per applicable financial reporting framework. They didn't disclose. Can you disclose it under key audit matter? Non-disclosure, first of all, is a material misstatement. You should have given a qualified or adverse opinion. Yes or no? Or giving a key audit matter, is it like, am I giving separate opinion on this revenue recognition? No. Key audit matter is not a separate opinion. And key audit matter is not a substitute for 570 MURGC reporting. Key audit matter is not a substitute for MURGC. So key audit matter is not a substitute for modified opinion. Is not a substitute for disclosures in the financial statements. Is not a separate opinion. Is not a substitute for 570 MURGC requirement. Understood? Then what is key audit matter? That's what I told. You understood? What is key audit matter? I select one matter which I felt important in audit and explain you how I did the audit. How does it is useful to me? I don't know how it is useful to you. It is mandatory, I communicated. That's it. Over. Clear? So, no, true. That's what the key audit matter. Even nobody knows. Nobody can explain why. And if you ask them why, they give you this answer. Hey, key audit matter is an additional information. So, which is providing transparency. No, I don't want the transparency. I didn't ask for this transparency. In fraud happened behind. You disclose that. I want that transparency. I don't want this transparency. Yes or no? So, now definition. Key audit matters are those matters that in auditor's professional judgment were of most significant in audit of financial statements of current period. These matters were selected from the matters communicated with those charged with governance. Tell me which matters you communicate with those charged with governance. 260. Significant matters in audit. Significant matter means what? Key audit matter. Hello? Am I right or not? So automatically key audit matters that you report in audit report are selected from significant matters that you communicated with those charged with governance as per 260. That's it. Nothing else. Okay? Yeah. Next. So communicating. So what is the purpose? If you ask, the standard is also not able to explain the purpose. So they're just dodging you. Look at, it enhances communicative value of the audit report. It increases value of the audit report because it is providing greater transparency and providing insights about audit. How auditor will do the audit. You are getting to know through key audit matter. They offer additional information to help users understand the entity and significant management judgment. Areas of significant management judgment. So the purpose is this, but the purpose is not a substitute for disclosure, not a substitute for modified opinion, not a substitute for MURGC reporting, and not a separate opinion. And how to decide key audit matter? How to decide key audit matter? Same, significant matters as per 260. The same is what you can select it as a key audit matter. Tell me, I will select key audit matter means that matter where significant risk is involved, where high risk of MMS is possible. Can I say that? So key audit matters are the key. First of all, selection of key audit matter is a matter of professional judgment of the auditor. Yes or no? What factors auditor will take into mind while selecting key audit matter? He will select it from those matters where higher risk of MMS is possible. Yes or no? Where areas involving significant management judgment, or areas involving accounting estimates with high estimation uncertainty, or the impact of significant events or transactions. 3 areas. 1, high risk of MMS or significant risk is involved. From that area you can select a key audit matter. Pending litigations, high risk is involved. 2, areas where significant auditor judgment is involved or significant management judgment is involved. Yes or no? 3, it can be selected from an area where significant transaction, significant event arises. So key audit matter can be selected from any of these 3 areas. Areas involving significant risk or high risk of MMS, areas involving significant management judgments including high estimation uncertainty, which leads to significant auditor's judgment. Okay. 3rd one, areas where significant transaction or events occurred. That's it. Examples of key audit matter: impairment, contingencies, valuation of financial instrument, matter related to revenue recognition, transactions. I think auditors mucked up this provision. That's why these 3 points as it is given. Reliance auditor. Same, these 3 were highlighted. Not just that, any audit report you take, you will find the same. Financial instrument point is common in most of the companies. Revenue recognition point is common in most of the companies. Key audit matters if you take, and contingencies, litigation matters, that is common in all these companies. That's it. Since it is mandatory, whether we understand it or not, follow it. That's it. With this, 701 is completed. Easy. So key audit matter can be even related to a non-financial matter. Clear until now? Now again, don't ask me, sir, what is the difference between emphasis, other matter, key audit matter? It's clear. Emphasis in the balance sheet P&L, note point, you want to highlight that, you want everybody to read that, highlight that. That's emphasis. Other matter para, you want to tell that you are not responsible for so and so branch, tell that in other matter para. Key audit matter, in the audit I did 40 days, I did audit. Within that 40 days, 10 days I spent on understanding revenue recognition, IT systems of the entity. What I did in the 10 days period, you want to tell to the people. Key audit matter. Clear? Yes or no? That's it. Now we'll begin 570. Easy key audit matter, right? Yeah. Next. So if you observe audit report, elements of audit report, title we understood, addressee we understood, opinion how to draft we understood, basis for opinion we understood, key audit matter we understood, emphasis of matter, other matter para, responsibilities management, responsibilities of auditor, all the points we understood. Technically we understood how to draft audit report. Yes or no? Now we need to understand one more element in audit report which comes very rare. Material uncertainty related to going concern. MURGC. Okay? But actual standard heading is going concern. SA 570, the standard heading is going concern. What is that standard objective? Auditor responsibilities related to going concern. I'll come back to it. You see in 705 introduction, unmodified report, modified report. Now remember, suppose I'm giving unmodified opinion. Suppose I'm giving unmodified opinion and I'm including emphasis of matter para. Then the report is modified, but the opinion is still unmodified. So I hope you are clear. Modified report not necessarily mean modified opinion. So when I'm including emphasis of matter para, other matter para, MURGC para, other information para, key audit matter, in all these cases, you will call the report as modified report. You will call the report as modified report. But actually diagram which is given in the ICAI book only consider these parts, but they're not clear. SA 260 tells that under what circumstances we modify the report. 260 standard clearly says that in all these circumstances we modify the audit report. Modify the report means what? You are not giving unmodified report. What is unmodified report? 700 format of audit report. If you follow exactly that format is called as what? Unmodified report. Are you clear? That's it. So which means a modified report can contain unmodified opinion or can also contain modified opinion. I hope you are clear. Now, what is unmodified opinion? I mean, what is unmodified opinion and what is modified opinion? First of all, I will give modified opinion in 2 circumstances: when financials are materially misstated, when I'm unable to obtain sufficient appropriate evidence to conclude that the financials are free from material misstatement. To conclude that I don't have evidence, then also I will give modified opinion. Tell me, if financials everything is true and fair, and I feel the financials can be as it is issued, I will give unmodified opinion. Suppose I found material misstatements in the financials, and I want management to modify them. They are not modifying it. So I want financial statements to be modified, which means financials are materially misstated, which requires adjustment, which require rectification, which require modification. But management is not readying it. Management is not doing it. I will modify my report then. I will modify my opinion then. Are you clear? So I will modify. So modified opinion means what? That's the context of the wordings. Getting it? I will give modified opinion when financials requires modification, which management is not modifying. That's it. So this is one clarification. So now we need to begin 570. Okay, 1 minute. Yes. Let's discuss 570 going concern. Okay. See, first of all, in CA final material, the going concern topic is discussed at a very nominal level, very basic level only they discussed. But in exam, they will ask you in-depth questions. Okay, on 570, they will ask in-depth questions in exam. The first thing, before I even talk about this, I want to explain you, first of all, what standards that we have in our syllabus. Okay, what standards that we have in our syllabus and what standards you are expected to know in depth. Okay, so I will just list it out very quickly. So 200, 210, 220, 230, 240, 250, 260, 265 and 299. Okay, then we have 300, 315, 320, 330. Then we have 402, 450. Then we have 500, 501, 505, 510, 520, 530, 540, 550, 560, 570, 580. Then 600, 610, 620. 700, 701, 705, 706, 710, 720. Then we have 800, 805, 810. Then we have 2400, 2410. Then we have 3000, no, 3400, 3402, 3420. Then we have 4400, 4410. Apart from this, we have SQC. That's it. We have totally 46 standards. 35 standards on auditing, 10 other standards, 1 quality control. Total we have 46 quality engagement and quality control standard. This is the what? This is what total standards that we have in our purview. 46. Apart from this, we have 3000 standard. Sustainability reporting standards. We have all that standards that we don't have in our syllabus. Apart from that, we have forensic accounting investigation standards. Standards on internal audit. They were not in our syllabus. So there are many other standards which are there, but that were not, they are not part of our syllabus. Now look at, so I will just give numbering. Okay, in our syllabus, it is covered as part of 7th chapter. These standards are covered as part of 7th chapter, entire 700 series. 800 series were covered as part of 8th chapter. Okay, then 4000 series is covered as part of related services, which is 9th chapter. Review is 10th chapter. Yeah, check it out once. Review is 10th chapter. Then this is covered in our 10th chapter. And 3400 is covered as part of 11th chapter. 600 series is covered as part of 3rd chapter. We have 3rd chapter in our book, Audit Strategy. In that chapter, these 3 standards were covered, 600 series. Then in the same 3rd chapter, 540 is also covered. In the same 3rd chapter, 520 analytical procedure is also covered. Then in our book, we have 6th chapter, completion and review. 560, 570, 580, they were covered in our 6th chapter. ICAI book, I'm telling you. My book and ICAI book exact. You will find the same resemblance, concept resemblance, structure is exactly same. Okay. Then remaining 500 series were covered as part of 5th chapter. Remaining 500 series was covered as part of 5th chapter. And if you observe, entire 500 series, in-depth discussion, you can find it only in CA Inter book. You will not find in-depth discussion on entire 500 series in CA final except 540. Only 540 is discussed in CA final in depth. What are all discussed in depth in CA final? I'm just highlighting. What are all discussed in depth in CA final audit, ICAI material, or even you can take my GOAT notes. In-depth discussion I've given only for this, and I can say even to some extent I have given in-depth discussion on 570 also. I have given in-depth discussion on 570 also. Then again 450 is discussed in depth within our syllabus. For 402, 450 is given again as part of third chapter. Audit strategy, yeah. Audit strategy topic only. 402 is covered as part of gap. 402 is covered as part of gap. Then again in gap chapter, again SQC first chapter, SA 220 first chapter, SA 240 gap, SA 250 gap, SA 260 gap chapter, 265 not covered in our syllabus, but they are asking advanced questions which is there in CA Inter. I will tell you, for these topics you must refer CA Inter book if you really want to get perfection. Okay, what are the topics? 200 in CA Inter also it is not given as a standard directly. That's what first chapter in CA Inter, nature, objective and scope of audit. That's nothing but 200. We have in CA Inter 11th chapter, terms of engagement. I'm talking about CA Inter new scheme syllabus. Okay, 11th chapter it was in CA Inter. 230 documentation is there only in CA Inter. 265 is there only in CA Inter. But those of you who are reading my question bank, in the question bank 265 related entire key concepts were given as a questions. So in my CA final question bank it is already given. In my regular and EO class I will discuss 265 directly from the question bank as a standard. Okay, 299 again 299 was given in 7th chapter for us, audit report. Actually it was given as part of audit strategy. Actually it was given as part of audit strategy. Actually it is given as part of audit strategy, but we will discuss in our class as a part of audit report. Now in-depth discussion you will find for all these standards only in CA Inter book. And you know what, 500 10 pages standard, 501 4 pages standard, 505 4 pages standard, 510 4 pages, 520 7 pages, 530 10 pages, the standard sizes I'm telling you, 550 2 pages, 560 4 pages, 570 is also 8 pages approximately. The standard size is 8 pages, 8 or 6 pages, 6 or 8. 580 8 pages approximately. If you really want to master 500 series, close to 55 to 60 pages content will be there if you really want to master 500 series. So any book that you follow in CA final in the market, they were only discussing brief standard which is given as per ICAI book. But if you see the question banks, those who follow my question bank especially, okay, so in the notes, in the GOAT notes also have given brief matter which is given as it is in the ICAI book. Whatever as it is in ICAI book they gave, no, the same is what I also gave in the GOAT notes. But in-depth questions and all, question bank, in the question bank all these standards in-depth questions were given in question bank. So those who read question bank questions of all these standards, yes, sorted. Clear? So whatever I've highlighted, again 320, for example, you see 320, it is there only in CA Inter. It is not there in CA final anywhere. 330, there only in CA Inter. 300, audit strategy chapter. 315, risk assessment chapter. So which means you can see here which I have not highlighted. For example, I'll highlight with only in CA Inter you will find, only in CA Inter. You will find this only in CA Inter. In depth 320, 330. So these 6 standards you will find content only in CA Inter. In CA final that related content is not at all discussed. Okay. And now in one of the exam in CA final 320 question is also asked. In one of the exam in CA final before 2024. 320 related question is also asked, but now I'm 99.99% sure they won't ask. Okay, why? See, before 2024, even this is what I tell to people, I tell to all the students, don't solve 2024 before attempt question papers, MTPs, RTPs. First of all, from 2024 till now, whatever is applicable to your exam, that itself you solve, which is a quite challenging task. You know what are they? May 24, 2 MTPs, 1 RTP, 1 suggested answer. Am I right? Number 24, May 24, number 24, 2 MTP, 1 RTP, 1 suggested answer. Then again, May 25, 2 MTP, 1 RTP, 1 suggested answer. September 25, 2 MTP, 1 RTP, 1 suggested answer. Then you have Jan 26, 2 MTP, 1 RTP, 1 suggested answer. Suppose you are writing May 26, 2 MTP, 1 RTP is there. Apart from this, you have 6 model test papers. How many? 4, 4, 4, 3 plus 6, 4 5s are 20, 23, 6, 29 resources you have. 29 resources into 6 descriptive questions into 4. In each question, 3 questions will be there. How many questions? Descriptive one I'm talking about. I'm only talking about descriptive. 29 into 6 into 3, 9. 29 into 9, 290 minus 29, 271, 261. You have 260 questions. Only from new scheme. May 24 onwards. First you finish this. Then you can solve about the previous attempt. These are exclusively given for new scheme. Yes or no? So that's it. First you finish this. Then only you can go for the previous one. Some students ask me, sir, 10 years question paper I want to solve. Array, first you solve 2 years. Then you come back. He never came back. So finish this itself. 29 resources you are having. If at all you are a September student, another 3 more will add, except suggest answer. Yes or no? 4 more will add. If you are Jan 27 student, another 4. Imagine that many resources you are solving. First you solve this, and all this is covered in our question bank. This itself is quite challenging. Now coming to old scheme. For example, I told no 265 related questions. 265 standard is not given in the ICAI book, but 265 related questions they are asking. So we kept that questions in question bank. So in our question bank, we literally kept what are all required in CA final. Okay, so if you follow that, that is more than enough. This is the overview of the standards. This clarity, if you already have, well and good. If not, I think now you understood. Okay, so what are all standards that we have? What standards were discussed in depth in CA final? What standards were briefly discussed in CA final? What standards were not at all discussed in CA final? I've given classifications. Standards that are discussed in depth. Standards that are discussed in depth at CA Inter but briefly discussed in CA final. Third category, standards that were not at all discussed in CA final. Standards which were not at all discussed in CA final but important in exam is 265 alone. Okay, then 320 is also actually important. 320 standard is also actually important. Okay, in this 320 you have a concept called benchmarking, all that. Now what final conclusion? You watch Final Audit Marathon for all in-depth discussion at CA final. Even I will just highlight this. 300 is in-depth only discussed in CA final also. 315 in-depth discussed in CA final. 240, 250, 260, 220. This is in-depth. 299 is also discussed in-depth. SQC is also discussed in-depth. So what is not discussed in-depth in CA final? 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay. Then 10, 11, 12, 13, 14, 15. Out of 46 standards, 15 standards were either discussed briefly or not at all discussed in CA final syllabus. You should touch them in-depth version only after you finish remaining 35 standards, remaining 31 standards. So first, in other words, in ICAI book, if I have to tell, chapter number 1, we have quality control, right? That is in-depth discussion. Chapter 2, gap, whatever standards discussed, in-depth. 3, in-depth discussion. 4, in-depth discussion they have given. 5 and 6, dummy chapters. For namesake they gave. For 5 and 6, you should solve question banks only. Because there is no concept discussed in 5, 6. 5, 6 standards are nothing but what? 500 series. Then 7th chapter, in-depth discussion. Then apart from that, 8, 9, 10, 11, all these were in-depth discussions only. So 5 and 6 chapters were basically discussed as at a brief level. Only for namesake they covered it. That's it. Understood? So 1, this contains SQC 220. This contains 240, 250, 260, 260, 265 is we have given as part of question bank. Okay, 240, 250, 260, and what else we have? 402. Then we have 260, 265 is covered. What else is there? In this second chapter gap, 240, 250, 260, 265 question bank is there, 402, what else is there? One, just can you, 299 here only, gap only. Okay, 299 is part of gap, but we discuss as part of audit report. Then third chapter, if you take 600, 601, sorry, 610, 620, 540, 450, 526 standards were there. Then seventh chapter, right now we are discussing that actually. Yes or no? That's it. Whereas sixth chapter, if you take 560, 570, 580, these three. So entire fifth and sixth chapter, in-depth discussion is there only in CA Inter. This is one important clarification you should know. Okay, what standards were first of all there in CA final, what were discussed in depth, what were not discussed in depth, that clarity you must know. And in my book, if you see one or two standards, I mean some 3-4 standards I didn't cover at all. For example, 200, you will not find discussion about 200 in my book. 210, you will not find. 230, you will not find. Okay, 320, you will not. 330, you will not. If I have to add those 5 standards, I have to add another 30 pages. If I have to add 500 series also, whatever is discussed in CA Inter, first of all, this point, please refer CA Inter book, is there in the ICAI material itself. Understood? If at all these standards you want to learn in depth, this book size will increase by 80 to 90 pages. Another 80 to 90 pages. Now here we need to apply the game. Again, we should be very smart in, playing here. Do you focus on that 90 pages which is there in the CA Inter, where the probability of questions will be very less? Or you focus on the final paper which is exclusive syllabus in final? To cover that, what people do is they dilute this preparation. So where everybody will focus on every chapter, every topic, mediocrity. And in exam, a mediocre answer. And marks 0. You understood? This is why they're losing. That's why I told at the beginning of the marathon, if you're solid in 8 to 10 chapters, you can bang exemption. If you're solid in 8 to 10 chapters, need not be perfect in 19, but if you're solid in 8 to 10 chapters, descriptive point of view, you can easily score 35-40 in descriptive. In MCQ, with conceptual understanding, you can go with, you can easily secure 26 to 30 out of 30. So one conclusion is 200, 210, 230, then 320, 330. Okay, these 5 standards do not touch until you finish rest of the standards. First finish rest of the standards, and then these 5 standards you have to focus on. Within these 5 standards also, again I'll give priority level 320. First priority is 320. The next priority is 210. Fortunately, one advantage we have is 210 also you don't have to discuss, because in review chapter it is discussed. Establishing terms of engagement, acceptance, preconditions. In review you have a concept called preconditions to accept a review engagement. Fortunately, indirectly audit related 210 is discussed there. Okay, that's it. 200, no need to touch at all. 230, documentation, no need to touch at all. 330 is what discussing about further audit procedure. What are further audit procedure? Substantive procedure, compliance procedure. That further audit procedure means what? 330 standard only discussing that. That's a 2-page standard which is there in the CA Inter book. For these 5 standards, I request you to watch my CA Inter marathon. Okay, or you can simply search CA Ram Harsha SA 320. You will find some video. You just watch that 320. You will understand there. This and all you have to do when only rest 41 standards you complete. Out of 46 we have, rest 41 standards you should complete. Then only you can touch that. You understood now? That's it. Okay. Yes. So we understood standards overview. You will not find this diagram, this in-depth matter, whatever I gave here. For 570, since it is important, I gave little extra content in my book itself, but you will not find that in ICAI book. Okay. Now, see, for all this, that question bank solving is complementary. It's not a substitute. Any question bank of any faculty that you follow, doesn't matter. Question bank should also be solved along with main material. So the main material that you're following, that is source number 1. Another most important source is question bank. If you ignore question bank, 500 series related additional topics you can't. See, two options. Either ignore question bank, take CA inter audit notes also and study that fully. Along with CA final audit notes, CA inter audit notes, standards topics. Study that fully. Or second option I'll give you. Those of you following my notes, GOAT notes, plus my question bank is there, that you follow. In my question bank, for example, I'll show you, for example, 505. One standard I'll take. 505. Even luckily now some of the questions were given as part of TYK itself, which is good. Majority of the mock RTP, MTP questions, no, they added as part of TYK itself now. You go and read latest ICAI study material questions, TYK questions, where they cover most of these questions. You can see here how in-depth they're asking questions in exams. So these are all 505 questions. Again, some 505 questions were there as part of TYK. Again, in this book, I have given something called exceptional. If you're reading these exceptional questions in the entire question bank of some 400 plus questions we have, exceptional questions will be somewhere around 150. If you're able to spend time on these 150 questions thoroughly and the GOAT notes, you're done. You don't have to touch any other resource. 118 marks of the paper you can attempt. But All India first ranker also will not attempt that many. So he will attempt 90 only, average. Mostly All India first rankers attempt for 90. And the guy who scored 13 would have attempted 114 marks. Okay, so perfection is important. Next. So now let's let's begin this 570 going concern. First one. See, because of going concern assumption only, we prepare financial statements on historical cost basis, right? If going concern assumption is missing, I'm not giving the logic behind why going concern all that, okay? I'm directly entering into the matter subject. If going concern assumption is missing in the entity, if the company does not have the ability to continue as a going concern, if the management does not have ability to continue as a going concern, okay, then they have to prepare, must and should, they have to prepare financial statements on liquidation basis. They must prepare financial statements on what basis? Liquidation basis. When they should prepare? If the entity does not have the ability to continue as a going concern. See, generally what we think of going concern, it's an intention of management. You might have intention, but you don't have the ability. Anil Ambani has an intention to continue the business, but his finances are not making him able to run the business. Yes or no? Going concern 570 focuses not just on the intention, it also focuses on ability of the entity to continue as a going concern. That's why you see nowhere in the standard they focus on the intention of the word, they focus on the ability of the management to continue as a going concern. If there is a substantial doubt, if there is a significant doubt on the entity's ability to continue as a going concern, that's how the sentence always starts with. If auditor has, even what SA 570 objective, the objective of the SA 570 for the auditor is to obtain sufficient appropriate evidence that the entity has the ability to continue as a going concern. Based on the evidence, evaluate whether a material uncertainty exists, then report accordingly. These are the 3 points which are there in the objective of the standard. Okay, one, auditor has to obtain sufficient appropriate evidence regarding management's ability, entity's ability to continue as a going concern. Based on the evidence, evaluate whether there is any material uncertainty, then report on that. Now, first of all, tell me, whose primary responsibility to assess about going concern? Management has a primary responsibility to assess about going concern. This requirement applicable whether management has an explicit requirement under the framework or not. The financial reporting framework might explicitly put a responsibility on the management, or the financial reporting framework might be silent on it. It doesn't matter. Must and should. Every year, management has to do assessment of their ability to continue as a going concern. This is a mandatory requirement for the management, whether accounting standard says it or not. Same way, auditor has to check. Auditor has to check whether entity has an ability to continue as a going concern or not, irrespective of financial reporting framework requirement. Irrespective of requirement in the framework, you have, see, tell me, our objective is what? Whether financials were prepared as per applicable framework. I went to Reliance company or I went to some company and I'm auditing and I want to verify going concern. Immediately management told, sir, which standard is saying going concern, sir? Why are you verifying going concern? There is no requirement in the framework. My responsibility to obtain evidence. My responsibility to obtain evidence on the ability of the entity to continue as a going concern will exist irrespective of requirement in framework. This is what 570 standard clarifies. Even management should do going concern assessment irrespective of requirement in financial reporting framework. Now, what is going concern assessment? 31st March is the reporting date, right? 31st March is the reporting date, right? Very simple. Look at your balance sheet. Look at your current liabilities. Simple going concern assessment, I'm telling you. Look at your current liabilities. These are the liabilities which are falling due within next 12 months, correct? From balance sheet date, whatever liabilities that are shown in current liabilities are the one which are falling due within next 12 months. Can the company, my evaluation is, can the company honor these payments as and when they become due? Can this company honor these dues as and when they become payable? If at all I have evidence that they can honor, if I have an evidence of no default possible, if I find that the default possibility is remote, they can definitely honor, I conclude going concern is adequate. Going concern is appropriate. I will conclude going concern is appropriate. Are you clear? For example, suppose as on balance sheet date, some current liabilities were given. When I see the current assets, they are 30% of current liabilities. Current assets were 30% of current liability. Why? Suddenly in this year, one debenture which we raised some 10 years ago became due. So long outstanding of long-term dues which become due in the next 12 months, we should classify it as a current liability. So we showed it as current liability, where current liability is almost 3 times more than current asset. And I asked the management, how are you going to repay? Sir, we are also not certain. So our funds are also freezed. You see P&L account, there is no business at all in the last year. So we are about to, all the employees already, they left the company. Majority of the employees left, key management left. Company is having no idea about it. Now in this case, I can conclude going concern is inappropriate. I can conclude that going concern is not appropriate. Then what company has to do? Sir, for you, there is no going concern. Okay, what should I do? You have to prepare financials on liquidation basis, compulsory. You have to prepare. But management, no, very clever. They didn't prepare financials on liquidation basis. But in the notes to accounts, they clearly mentioned, honestly mentioned, that going concern is missing. They clearly mentioned that. They mentioned the fact that going concern is not appropriate. They disclosed it. But have they prepared financials on liquidation basis? No. But they disclosed the fact that going concern is not appropriate. Not sufficient. I will still give which opinion? Adverse opinion. Look at, if the financial statements are going concern is not appropriate in the given scenario, it is not appropriate. And financials are not accounted on, financials are not prepared on liquidation basis, I will straight away give which opinion? Adverse opinion. Sir, but they disclosed it. They disclosed it in financial statements. The fact that going concern is not appropriate, they disclosed it. Mere disclosure of going concern not appropriate. The fact of disclosure of going concern is not appropriate is not adequate. When going concern is not there, financials must be prepared on liquidation basis. You prepared on going concern basis, mentioning in the notes to accounts going concern is not there. Don't be smart. Yes or no? I will give adverse opinion. Suppose financial statements are prepared on liquidation basis honestly. Company voluntarily understood, yes, going concern is missing. Let us prepare financial statements using liquidation method of accounting, where liabilities are shown at NRV, assets are shown at NRV, everything, fixed assets, non-current, current, non-current liability, current liability, everything is shown at realizable values. Financials were accounted on liquidation basis, and the fact is also clearly mentioned in the financials. Everything is honestly disclosed. Now tell me, can I give an adverse opinion or qualified opinion on this? I will give which opinion? Unmodified opinion. And remember, the financials were not prepared on usual method of accounting. They prepared it on liquidation basis. On what basis they prepared? In the notes to accounts, they highlighted that also. You take any company notes to account, the beginning of the notes to accounts, if you see, first about the company. Second point, basis for preparation. The notes to accounts, if you see, the first point about the company, second point basis for preparation. In the basis, they clearly highlighted the fact that they prepared financial statements on liquidation basis. Then do one thing, they prepared on liquidation, they disclosed everything honestly, so you decided to give unmodified opinion. But you need to tell people that financials are prepared on liquidation basis. That note point everybody should read so that they will understand that it is liquidation basis. Highlight it. Where you will highlight it? Emphasis of matter para. This question was asked in May 24 attempt. This question was asked in May 24 attempt. Are you clear? Understood? You have this question, Delhi branch. Okay. The company Delhi branch is about to close. The company is preparing financials on liquidation basis. That question is there. In our question bank also it is given. Okay. That's it. Suppose going financial statements, going concern is not appropriate. Financials were not accounted on liquidation basis. I will straight away give adverse opinion, even though they disclose regarding going concern inappropriate situation. Just a disclosure of going concern is inappropriate. That situation disclosure is not sufficient. You must prepare the financial statements on liquidation. Then only the preparation is right. If the preparation is wrong, but you are disclosing your facts, that is not sufficient, because when going concern is inappropriate, financials has to be put on liquidation basis, which is mandatory. Are you clear? Now let's look at Air India situation. Let's look at Air India situation. I told you, MURGC paragraph. MURGC paragraph. That way I'm talking about Air India situation of 1920, not 24-25. I'm talking about Air India situation in 1920 financial year. Now, what is Air India situation in 1920? Just a minute. Yes, let's look at Air India situation of MURGC. Okay, you can see here Air India, the standalone financials or related audit report, they have clearly mentioned as heading material uncertainty related to going concern. They mentioned it. What are they saying below? You understand. The company has incurred a net loss of 77,657 million, nothing but 7,765 crore during the year 31st March 2020, and the current liabilities exceeding its current assets by 54,000 crore and accumulated losses of 71,000 crore approximately. First of all, they have current year net loss. Current liability more than current assets is more exceeding negative working capital by 54,000 crore. Accumulated losses by 70,000 crore. The first question you should get is how the company is running then. Yes or no? In pocket, either cash can be positive or pocket can be nil. It cannot be negative. Am I right or not? Negative means what? They are somewhere getting borrowings. And with the borrowings they are running. Correct? Huh? The only way a company can run even with losses is with borrowings or with funding. Either through capital funding or through borrowing, so they're running. So now look at, they have a negative, and which has resulted in complete erosion of net worth of the company. In spite of these, even though all this situation is there, which may cast a doubt on entity ability to continue. The moment you see the situation, you understand how the company is running. The moment you see this, you got this doubt. In spite of these events and conditions, which may create a doubt on company's going concern, the management is of opinion that going concern basis of accounting is appropriate in view of support from Government of India and having regard to other facts mentioned in note number 53. So when I see this position, I went and asked Air India management, sir, you are having negative cash flow. First of all, cash flow cannot be negative, but still you are having a negative cash flow, and you are having negative net worth, you are having negative working capital, current year also losses, still everything AC is running, power is there, employees are working, everything is going smooth. How come? How are you able to get fund for this? Yes or no? Sir, Government of India support is there. We are government owned airlines, so Government of India is continuously giving us capital. You see our capital every year increasing. So our capital is increasing. So we are repaying loans, we are repaying salaries, we are repaying fuel costs, we are running operating costs, everything we are repaying it out of funding that we are getting from Government of India. Now, so as long as Government of India support is there, our going concern is appropriate. Clear? This is what the management told. But tell me, is truly going concern appropriate here? Is truly going concern appropriate here? So I agree. Okay, since government support is there, I agree that you are preparing financials on going concern basis. So Air India management, that is what they said. They prepared financials on going concern basis in spite of these many adverse situations. Okay, they prepared financials on going concern basis because they're having continued support from Government of India. They said our going concern is appropriate, which I don't want to agree directly. I asked them. So you are saying going concern appropriate because government support is there. I asked them this question. Next 12 months, do you think government will support you? From 31st March. For the next 12 months, please give me, is there any guarantee letter given by the government for the next 12 months? The company is silent. They didn't give me. Right now, are they supporting? Yeah, right now they are supporting. Next month salary, including my audit fee, government only has to give the fund. Then only I'll get back my audit fee. Yes or no? So right now they are supporting. My worry, you showed so many current liabilities, which is exceeding by 54,000 crore worth of, current liabilities than current assets, which are falling due in the next 12 months. You have to repay, right? Some current liability, some 10,000 crore you have to repay in February. After 11th month, you have to repay from balance sheet date. In the February month, where you have to repay this, is Government of India support is there for that month. Air India management is silent on this. They are unable to comment on this, which means right now it is appropriate. But how long the certainty is there, how long this appropriateness will continue is uncertain. How long Government of India will support is uncertain. Therefore, going concern is appropriate, but material uncertainty exists. But material uncertainty exists. A big uncertainty is there. Yes or no? Because we don't know when the company will wind up. Right now, is the company liable for wind up? No. Right now, is the operations are going smooth? Yes. Till when? Uncertain. For the next 12 months, is it certain? No. That is also uncertain. Are you clear now? So this situation is called as going concern appropriate, but material uncertainty exists. Now what auditor has to do? Simple. I will ask Air India management, sir, you have this situation, no? Please present this situation honestly in the financials. Okay, you can prepare financials on going concern basis. I don't have problem, but you have a material uncertainty also. Tell that fact to the shareholders, everybody, because in the next 12 months, anytime anything can happen. Tell this fact to the shareholders. Accordingly, Air India management honestly disclosed it in note number 53. See, we are running the business smoothly because government is supporting all these days. Yes or no? To this extent, we are also having uncertainty about the future. Able to understand, in spite of this many negative positions, we are still running because of support from Government of India. Now this itself is an uncertainty. If at all government withdraw the support, if at all government withdraw the support, we have to prepare financials on liquidation basis. We have to prepare financials on liquidation basis. We cannot, whatever in the balance sheet, no historical cost I showed fixed assets, I can't realize that much value. I can't realize that much value. If at all Government of India stops support, the assets and liabilities cannot be realized in normal course of business. That fact Air India management honestly disclosed in note number 53. Now tell me, right now going concern is okay, and there is a material uncertainty, and that fact is honestly disclosed by the management in notes to accounts. Now tell me, is there anywhere misleading? No. So therefore I will give which opinion? Unqualified opinion. Therefore I'll give which opinion? Unqualified opinion. But if you see here, the auditor gave which opinion? Qualified. Then what? We give unqualified. We will give unqualified opinion on going concern issue. We will give unqualified opinion on going concern issue. So with respect to going concern, my opinion is unqualified. Sir, Air India auditor gave qualified opinion. No, that is relating to some fair value adjustments, that is relating to some non-confirmations, that is related to some lease assets. So qualified opinion is dealing with these three issues, not dealing with going concern. So on going concern, which opinion we gave? Unqualified opinion only we gave. Some students think that emphasis of matter paragraph, you remember, if audit report contains unqualified opinion only, emphasis matter can be used. That's wrong. You want to highlight litigation, contingent liability. On that, if you are giving unqualified opinion, then you can use emphasis. That is what the meaning. Yes or no? Here, Air India auditor has used emphasis of matter paragraph. In spite, they have given qualified opinion. Why? The qualified opinion was given on different matters. Emphasis of matter is highlighting different matters. Are you clear? In emphasis of matter para, there are various matters. No, on these matters, auditor concluded unqualified opinion. Wherever, in every standard, you see, in every standard reporting will be there. Unqualified, qualified, adverse. 501 standard has qualified adverse. 505 standard has qualified and adverse and disclaimer. 510 standard has qualified adverse disclaimer. Everywhere in every standard reporting is discussed. That is dealing only with that matter. That is not dealing with overall financial statements. Able to understand? First we will form opinion on each and every item of the financials, then we will form overall opinion on the financial statements. Are you clear? Yes or no? That's it. So now if going concern is appropriate but a material uncertainty exists, look at a material uncertainty exists and going concern is appropriate, then what we will give? If at all this fact is disclosed in financials, then we give which opinion? Unmodified opinion. And we also use it under material uncertainty related to going concern para we highlighted. Now look at Air India. Now in note number 53, management honestly disclosed the financial position situation that they are facing, right? Tell me, is that important issue? Is that important issue? Everybody should read that issue. Yes or no? Generally, if I want to highlight an important point presented or disclosed in financial statements, which paragraph I will use for highlighting? Emphasis of matter paragraph. But this is not a routine matter to highlight. This is company's life and death matter. I will not highlight it under emphasis of matter. I will rather put a separate side heading for this. Material uncertainty related to going concern. Whatever I want to highlight, I expressed in heading itself. Material uncertainty related to going concern. I will put a side heading, separate section like this, MURGC, and there I will highlight this issue. Basically, MURGC paragraph is an emphasis of matter paragraph only. It is basically emphasis only. But here specifically we are emphasizing going concern uncertainty. Going concern material uncertainty we are highlighting. Are you clear? Only that we are highlighting. Now tell me, material uncertainty related to going concern. This will come in audit report only when the auditor's opinion is unqualified in regard to going concern. Do you agree? Do you agree? With regard to going concern, my opinion is unqualified. Then only this paragraph will come into picture. See, suppose no, I am auditor of Reliance company. Going concern there I saw. My opinion is unqualified only on going concern. For Reliance company also will this come? First of all, company does not have any uncertainty. What if the company has an uncertainty and they are disclosing it also in the financial statements honestly? Then I will use this para. Are you clear? MURGC para will come in audit report. 3 conditions. Condition number 1, the company has an uncertainty related to going concern. Condition number 2, they honestly disclosed it. And on that, your opinion is unqualified. On the disclosure, your opinion is unqualified. Then MURGC will come into picture. Sir, company does not have uncertainty at all. For example, Reliance Industries Limited, who has a profit of 75,000 crore, who has a profit of more than 60,000 crore consolidated profit. I don't have any uncertainty on them. There is no uncertainty about going concern on them. So with respect to going concern, my opinion is unqualified only. Does it mean this para will come for Reliance also? Exactly. This para will come only when your opinion on going concern is unqualified and material uncertainty is there, and that uncertain situation is honestly disclosed by the management in financial statements. That's it. Now look at, so this reporting part is only mostly important, and one more topic is there which is important. I'll discuss that. Okay, now look at look at audit reporting under 570. Okay, so for example, use of going concern basis is appropriate, but a material uncertainty exists. Now look at, material uncertainty is there, but still going concern is appropriate because government is supporting all these years. Even now also government is supporting, they didn't withdraw the support. So therefore right now is going concern become an issue? No, we can successfully continue. Right now also we are successfully operating, but how long you operate like this, that is uncertain. Okay, so adequate disclosure is made. If financials adequately disclose material uncertainty, then the auditor will express unmodified opinion on going concern issue, and he will include in a separate section titled material uncertainty related to going concern and draw attention to relevant note to the financials, state that material uncertainty exists that may cast a significant doubt on entity's ability to continue as a going concern, and also state that your opinion is not modified. Look at the Air India audit report. The auditors mentioned clearly, our opinion is not modified in respect of this matter. Exact emphasis of matter paragraph, how they follow reporting. Exact reporting is what they followed here. Yes or no? What they follow for emphasis of matter para, the same exactly they followed here also. Am I right or not? Next, look at. Next. For example, suppose financials are not disclosing. I requested Air India, please mention this. Air India said, no, sir, if at all we mention, people get to know all that. Let us continue like this only. Which means they're misleading public. Which means I should give adverse opinion or qualified opinion as per 705. For example, if there is a material uncertainty that may cast a significant doubt on the entity's ability to continue as a going concern, and that fact is not adequately disclosed in the financial statements, which results in misleading, then auditor will give qualified or adverse opinion. For this, you have illustrations in ICAI material. Okay, for this you have illustration 3, illustration 4 in ICAI material. 2 illustrations were there. Please go through those 2 illustrations, you will understand. Okay, then in the basis for qualified opinion, state that material uncertainty exists and what is its impact, and the financial statements mention that financial statements are not disclosing this fact, and that is the reason you are giving qualified or adverse opinion. Are you clear? Then suppose, sir, going concern itself is inappropriate. It's clear. Already company is facing issues. Already company business stopped already. Okay, this is much more different scenario than that scenario. In Air India, business is running still. Business is running smoothly. Airlines is operating. Employees are working. Everything is going smooth. Just that position was negative. The working capital was negative. Completed. To what level it is negative? Net worth itself gone. Net worth eroded. Still company is continuing smoothly because of support from government of India. So that situation is going concern appropriate, but material uncertainty exists. Whereas now, if going concern base is inappropriate and financial statements contains a disclosure of the fact in the financials, but they were not prepared using liquidation, still I will give which opinion? Adverse opinion, because a mere disclosure of fact that going concern is not appropriate is not sufficient. Suppose financials are prepared on liquidation basis. If the financials are since financial statements are presented fairly, the auditor will express unqualified opinion and he will use emphasis of matter paragraph to draw the attention. This is what they tested in May 24 exam, which is taken from pronouncement book, where the situation is taken from pronouncement book. May 24 attempt or November 24 attempt it was there in compulsory question number 1A. Understood? Now suppose sir, going concern is inappropriate, still the financials are prepared using going concern basis. It's complete negative. Adverse opinion. Straight away you give which opinion? Adverse. Easy or not? Hello everyone. Now tell me, management has to do going concern assessment for how many months? From the balance sheet date they need to do assessment for 12 months. Whose primary responsibility to do the assessment? Management primary responsibility to do the assessment of going concern. If they do not do the assessment, I will not sit here and then do the assessment. That is not my duty. Management has to do. They need to show me the workings. Based on that workings, I will decide whether going concern is appropriate, inappropriate, material uncertainty. All that I will decide based on management workings. If they did not perform the assessment, I will request them to perform. In spite of requesting them to perform, they're not performing it, then it leads to regarding going concern, evidence is not available. When evidence is not available regarding going concern, I will give a qualified opinion or a disclaimer of opinion. Suppose management did assessment, but they did only for 6 months. They need to do the assessment for 12 months. I asked them, sir, you did for 6 months, which is good. Please extend it to 12 months. Management is not extending its assessment for going concern to 12 months from balance sheet date. If they do not extend the assessment to 12 months, it again leads to absence of evidence for 12 months. Since evidence is not there, again I'll give which opinion? Qualified or disclaimer. Are you clear? So management unwilling to make the assessment or unwilling to extend the assessment, first I will request the management and I will consider implications on the audit report and I will express a qualified or disclaimer of opinion if sufficient appropriate evidence cannot be obtained regarding use of going concern basis of accounting. Are you clear? That's it. Most of the standard is over. Now, in the standard, actually so much depth discussion is there in the standard. Responsibilities of management, responsibilities of auditor, risk assessment process related to going concern, additional process material uncertainty is identified, and procedures relating to disclosures in the financials regarding material uncertainty. Like that, so much discussion is there, which is there in CA intermaterial. Are you clear? So for this standard, what I request you is you watch my latest CA Inter Audit Marathon, where all these points were covered. For example, audit procedures, if events and conditions are identified. You know what? In CA Inter, one question has been asked. Wait a minute. Yeah. So in Jan 25, CA Inter, that was one of the tough paper for CA Inter students. Jan 25 attempt was very tough paper for CA Inter students. Okay, audit. Look at what question they asked. Actually, this question is copied from one of the CA final question in 2018 or 17. Okay, that time it was copied from there. So look at. But for CA internal in-depth discussion is there. So there is a company, Project India Limited, which is engaged in manufacturing and trading of disposable glasses and plates. Okay, and some analytical procedure carried out by the team, okay, headed by so and so, indicated that business is going downward, and the company could achieve, actually Project India Limited bill, that's what. Okay, the company could only achieve 50% of the revenue compared to last year. Management had not taken any steps to increase the revenue or add new product or add customers to stabilize the revenue. Also, the suppliers are demanding cash payments at the time of purchase. Before finalizing the audit report, audit in charge asked for a cash flow forecast from the management for the next 12 months from the end of the financial statements. Okay, from balance sheet date for next 12 months, the audit manager has asked the company cash flow forecast, which is part of going concern working of the management. Keeping in the view, answer the following. What can be the likely purpose of CSZ in the above situation? 3 marks. And state any 2 audit procedures in relation to cash flow forecast to be performed by CAZ. Okay, so what is the purpose why he is asking cash flow forecast? 2, what are the 2 procedures that we do in terms of cash flow forecast? You know, the answer is so simple. In the book, it is clearly given here. Look at what is the audit procedure. First, write objective of the SA 570. First, write objective of SA 570. The purpose is we want to obtain evidence on whether company's use of going concern base of accounting is appropriate. Based on the evidence, we need to conclude whether material uncertainty exists. Based on that, we need to report. In the given case, there are some events. You see, company creditors are not giving credit. Only if you pay the cash, then take cash on delivery. Yes or no? Profits are downgraded. All these indicators, they are all nothing but events and conditions. These are nothing but what? Events and conditions. If any events and conditions identified that cast significant doubt on entity's ability to continue as a going concern, the auditor shall obtain sufficient appropriate audit evidence by performing additional procedures to conclude whether a material uncertainty exists. If at all symptoms are there related to going concern, we need to perform additional procedures to determine whether material uncertainty is there or not. One of the additional procedures that we do is analyzing cash flow forecast. 2 procedures are, there are only 2 procedures and they're asking those 2 procedures only in the exam. Okay, so analyze. If entity has prepared a cash flow forecast, analyze reliability of underlying data prepared, reliability of underlying data used to prepare the cash flow forecast, and whether adequate support is there for assumptions used in the forecast. For the forecast, the company would have taken certain assumptions, right? Certain assumptions. Are the assumptions substantiated? Means, are there an evidence for that assumption? Further, cash flow forecast is prepared based on some underlying data, right? Is it reliable or not? These 2 procedures we need to perform regarding cash flow forecast. When there is an event or condition that may cast a significant doubt on entity's ability to continue its going concern, then auditor shall obtain evidence whether material uncertainty exists or not by performing further audit procedure like this. One of the further audit procedure is analyzing cash flow forecast. Like this they can ask. You understood the question depth? Yes or no? In CA Inter it was even more depth. This topic is exact same only. This material in fact I copied from CA Inter only. It is not there in CA Final. Yes or no? But this question was there in CA Final. Right now I showed May 24 question, 1 question also. Yes or no? That going concern is inappropriate, liquidation basis is used, and management disclosure also we give unqualified emphasis of matter para. Tell me, in going concern, with respect to going concern, when emphasis of matter para will come? When financials are prepared using liquidation basis and the fact is disclosed in the financials also clearly. Yes or no? Then I will highlight it under emphasis. MERGC will not come there. MERGC will come when right now going concern is appropriate, but material uncertainty exists. Are you clear? Next, Will there be any symptoms of going concern? Yes, there will be so many symptoms. The symptoms are called as events or conditions. The symptoms are called as what? Events or conditions. These symptoms are classified into three types: financial, operating, other. Yes or no? So other indicator, for example, non-compliance with capital and regulatory requirement, pending legal and regulatory proceeding that could lead to claim the entity cannot meet. So if at all there is a pending litigation, if at all that litigation comes, that litigation is against us, ultimately the judgment is against us, we can't meet it. We cannot meet that liability. Changes in law, changes in regulation, changes in policy that adversely affect the entity. Uninsured or underinsured catastrophe. Yes or no? For example, non-compliance, Paytm. That question is also asked. In 2024, this issue happened. In 25, in one of the attempts, they asked Paytm's direct issue. So the bank has not complied with KYC norms. Because of this, RBI cancelled the license. Pending litigations that could result into claim the entity cannot meet. Vodafone. The same question we have in our book with a different name, AGR due, adjusted gross revenue due. One question is there in question bank on this. Changes in law and regulation that adversely affect the entity. Recently in Australia, they implemented one social media policy where children before 16 should not have a social media account. Yes or no? What if that same regulation is brought into India? Social media companies will badly affect, their revenue badly affects. And uninsured or underinsured catastrophe, a war going scenario, ships and all, why they're halting there? Because, you know, if any issue happened, they won't get insurance claim. War scenarios and all. Next. Operating events. So management itself is having intention to liquidate. Top management is lost without replacement. Loss of market, labor difficulties, important supplies shortage, emergence of highly successful competitor. These are all operating indicators. Financial indicators. Net liability position, Air India position. Yes or no? Fixed borrowings approaching maturity without renewal, without repayment. More reliance on short-term borrowings for long-term assets. That's why we need to report in CARO whether any short-term funds were used for long-term purpose. That's an indicator of going concern. And indications of withdrawal of support from creditor, converting from inability to pay creditors on time. Change from credit to cash on delivery with suppliers. Just now we saw Jan 25 CA inter question where suppliers are giving you delivery only when you pay the cash. That indicates an event or condition that may cast a significant doubt on the entity's ability to continue as a going concern. Because of this, what we need to do? We need to perform additional procedure. Why you need to perform? To establish evidence whether material uncertainty there or not. That's it. Are you clear? Now let's go back and conclude the diagram. What auditor has to do regarding going concern? First, management will do preliminary assessment. Get evidence for that. If management does not perform this, ask management to do it. If management already done, evaluate assessment. Management does not perform, then modify. What modified opinion? Qualified or disclaimer. What is it? Qualified or disclaimer. Management does not do going concern working, which means I cannot obtain evidence on going concern. If I cannot obtain evidence on going concern, we should give qualified or disclaimer. Sir, management performed, sir. Then look, are there events and conditions? Look, are there events and conditions? If events are identified, further audit procedure you should perform. One of the further audit procedure is cash flow forecast analysis. Yes or no? Why you need to perform further audit procedure? To know material uncertainty exists or material uncertainty not existing. To decide that, you need to perform further audit. Sir, material uncertainty is there. Okay, then do one thing. Further evaluation you do. Yes or no? Decide, is this uncertainty like going concern appropriate still or going concern is not appropriate directly? Both you need to check. Yes or no? Sir, going concern is not appropriate at all. Uncertainty is there, and moreover that uncertainty is turned into reality already. Going concern is not appropriate at all. Then financials are prepared on liquidation basis, unmodified emphasis. Sir, material uncertainty is there, but going concern is appropriate, which is what Air India situation. Have they disclosed it in financials? Yes, unmodified opinion. And highlight that situation in MERGC para. Sir, they didn't disclose at all. Then qualified or adverse opinion. That's it. Easy. All of you. That's it. Predominant standard is over. 570 related. Actually, there is a lot of discussion in that. Risk assessment procedure related to going concern, auditor responsibility under 570, management responsibility, auditor's objective, all this were there, which are there in the CA Inter. So I request you to watch my CA Inter 570 marathon once. That's it. Okay, done. With this, 570 is also over. Now we'll just have to go back to 700 once. We'll go back to 700 once. And then look at the elements of audit report. Look at the elements of audit report. We have understood key audit matter. We have understood MURGC also. Easy or not? Okay. Now we'll focus on other information. 720. Okay. 720 standard we will discuss. Yeah. Yeah, next one, 720. What is the standard heading? Auditor responsibilities for other information. Correct? Huh? What are the auditor responsibilities for other information? In May 25, there is a question on this. May 25 attempt, there is a question on this. That too regarding reporting requirement. In May 25, the question is asked on reporting requirement. We'll look at that question first. In May 25, that question is there. Just a minute. Yeah, look at May 25. Look at May 25, question number 1A, compulsory question, 720. Okay. There is a company called PQR Limited, a listed entity. Okay. Now, the company's management, look at this line, the company management is also responsible for preparing other information, which includes point number 1, annual report, point number 2, chairman message, point number 3, future projections. The statutory auditors have completed its audit of financials, prepared the audit report. During the course of audit, the following circumstances arise. 1. Director report and MDA, management discussion and analysis. Okay. And they are finalized and provided to the auditor before the date of auditor's report. Whereas chairman's message and future projections are not finalized, but are expected to be included in annual report, which will be released after audit report is issued. Now, issues identified. Management discussion and analysis, some issue is there. Chairman message is not yet reviewed. Now look at the answer. Answer the following. What should be included in other information section of the auditor's report in PQR Limited, which is a reporting question. So in this company, other information section you will put right in audit report, what points will include. Second question, you see, if the management does not correct the identified misstatement in MDA, even after the same was brought to their attention, what the auditor should report under other information section. Do you understand the question first of all? Yes or no? Fine. So to understand that, first you should understand the concept. Yeah. So what is other information? Auditor responsibility relating to other information. You see, Reliance company itself you take. Reliance company itself you take. You go to the page number index, you go. This is the index of the company, right? You see the table of contents given in the annual report. There is a corporate overview, management discussion, MDA, management discussion and analysis, some sustainability reporting, then governance related reports like board of director report, CG report, then finally you have something called financial statements. Our audit report is given on financial statements. We are not giving audit report on rest of the items, correct? Huh? Are we giving audit report on the rest of the items? No. We are only giving audit report on financial statements. Now here, the standalone financial statements, for example, you see in the second page or third page, the company has mentioned one point. What they mention, some highlights and all they're mentioning. Wait, look at it. Okay. So 10-year financial highlights. 10-year financial highlights. Value of sales consolidated. Here they mention in the current year 10,71,174 crore. Okay. And total income, earnings before depreciation, profit for the year, gross fixed assets, net worth. Like this, some financial highlights they are giving, correct? Like this, at so many pages in the annual report, the company has showcased about their financial performance, all that. But remember, we are not auditing them. We are auditing only financial statements. But any shareholder who is receiving, he is getting this annual report. He is not getting just financials and audit report as a separate document, and this as a separate document he is not getting. He is getting a single document, which includes financial statements and audit report and other information, which includes financial statements and audit report and other information. Now, a shareholder is going through the entire annual report. He found out that here 10,71,000 is there, whereas in consolidated P&L, let us assume it is 10,50,000 which is given, which is 10,50,000 crore which is there in the P&L, let us assume. And the auditor said in the audit report 10,50,000 is true and fair. Now immediately P&L account shows one amount, other information shows another amount. People get a doubt which one is right. In the process of this doubt, they even doubt you. Yes or no? They even doubt the auditor. Is auditor right? The auditor said everything is true and fair. Management is saying here this much amount. P&L account shows some amount, and auditor saying that P&L amount is right. Now what about this? Is this wrong, or is this right, or that is right? Immediately people get a conflict. Yes or no? Why this conflict is coming? First of all, because you are giving financials, audit report along with other information as a part of annual report. This is the reason why this confusion is coming for the people. Now if you know this fact, as an auditor, I know my financial statements which I signed and the audit report will be published along with other information. What is my responsibility regarding other information? That is what 720 standard is dealing with. Do you understand? So what is auditor responsibility under 720 standard? Simple. Read the other information. What is your responsibility? Read the other information. Why I need to read? Why I need to read? To check whether there is any inconsistency between other information and financial statements, to check whether there is any inconsistency between other information and my knowledge about the audit. By reading sometimes other information, I will learn new facts about the company. Yes or no? And respond appropriately if inconsistencies are found, and report this as per SCA. That's it. So what is my responsibility? Obtain sufficient appropriate evidence, or the auditor's objective is to identify material inconsistency between other information and financials, other information and my knowledge, and respond appropriately to the inconsistency. Report under this standard. Now look at Reliance auditors, what they reported. What they reported in other information. Just a minute. Yeah, 97. So this is board report. Yeah, look at the other information in the Reliance auditors report. Yeah, look at this. So what are they mentioning? Information other than financials and audit report thereon. What are they mentioning? Information other than financials and audit report. This only is called as other information. You see the definition of other information. You see the definition of other information. Other information could be information other than financial statements and auditor report, which is included in entity's annual report. Remember, other matter paragraph is different. Yes or no? So what is other information? It may be financial information or non-financial information included in annual report, but other than financials and audit report thereon. Correct? The same heading is what the Reliance auditors have used. Other information heading. They in fact they did not put other information. They straight away put the head definition of the standard. Yes or no? Other information is information other than financials and audit report thereon. Now look at. By the way, tell me, whose responsibility to prepare other information? The company board of directors is responsible for other information. What other information consists of? It comprises annual report, but that does not include financial statements and audit report thereon. Our opinion does not cover other information. In connection with our audit, our responsibility is to read other information and identify whether inconsistency is there with the standalone financials and our knowledge obtained. Yes or no? If based on the work we performed, we concluded that if there is a material misstatement of this other information, we are required to report the fact, and we have nothing to report here. If at all we read other information, we found out that some inconsistency is there. When we investigated, that mistake is in other information, not the financial statements. If mistake is found in other information, we have to report that fact in the balance sheet. Report that fact in the audit report. That is what our duty regarding other information. Are you clear? Am I right or not? Now look at. So what is the reporting requirement? Here you see. Auditors reporting requirement. This is what asked in May 25 exam. In May 25, 3 marks question is on this. Okay, what is the answer? The auditor must include a separate section titled other information. This section should include a statement that management is responsible, identification of other information, and a statement that auditor's opinion does not cover other information, and description about responsibility of auditor, like reading the other information, considering other information, reporting on other information. If other information is obtained, this point we will discuss later. Okay, so this point is only there in the suggest answer also. Look at. So what is the answer? Our responsibility, you see here, in the other information section the following: a statement that management is responsible, identification of information obtained, yes or no, a statement that auditor opinion does not cover other information, a description of auditor responsibility regarding reading, considering, reporting on other information. Are you clear? So the same reporting requirement is what they tested in May 25. May 25 was one of the tough paper, but you see, this is the level of toughness, not extreme tough and all like people say. It's because if you don't understand the subject, you feel tough. If you understand it and see the question, you will not feel the tough. You need to understand. Those who think auditing, mugging up is enough, gone. MCQs you can't answer. Descriptive you can't completely present. Yes or no? It's a risk. It's a risk factor. Like you might say, sir, my seniors and my friends are qualified even with mugging up also. What is the probability of qualifying? Probability analysis we should do, risk analysis. Okay. So which approach I need to follow? Understanding the risk is low to fail. Mugging up approach, if you follow, the risk of failure is very high. Okay. I'm not saying you will definitely fail, but the risk of failure is high. So look at, so this question is asked. Okay. Now, what is the audit procedure? First of all, what auditor has to do? You need to identify inconsistency between other information and financials. You need to identify inconsistency between other information and auditor's knowledge. Respond appropriately to the inconsistency and report it. Now tell me, suppose no other information contains some amount, financial statements contain some amount. Will you straight away say other information is wrong? No, I need to do further procedure to know whether is it a misstatement in other information or is it a misstatement in financials. Sometimes my financials which I certify, no, they are only wrong. Other information could be right. My opinion on the financial statements, my understanding of the entity could be wrong. Yes or no? So what auditor has to do? Audit procedures for other information. In one of the items they have asked this as a 5 marks question. What is the audit procedure? Simple. First, no, the auditor first should obtain other information. First, what you have to do? Obtain other information. Discuss with management what documents will be coming part of annual report. Arrange to obtain final version of the document before the audit report date if possible. Before even you give audit report date, get the other information and read the other information. Second step, what you need to do after you get other information, what you should do? Read the other information. Read. Why are you reading? To identify inconsistencies with the financial statement, to identify inconsistencies with my knowledge, yes or no, and to identify whether other information is materially misstated. Sometimes other information itself is materially misstated. Once you found inconsistency, suppose I found inconsistency, what should I do? I need to investigate further because I want to know, is it a misstatement in other information or is it a misstatement in financial statement? So if the auditor find inconsistency, then discuss with management and determine whether misstatement exists in other information and determine whether financial statements are misstated. See whether your understanding of the entity requires updating, because after reading other information you got to know the company is going to take up a new project. So your understanding of the entity, earlier you don't have this. Now you got to know about understanding of the entity. So, you know, what is the audit procedure? I mean, how to respond to inconsistency? If auditor identify inconsistency, discuss with management. Why? To determine whether other information is misstated, whether financials are misstated, or whether you need to require to update your understanding of the entity. Suppose if other information is only misstated, suppose if misstatement is there only in other information, not the financials. Thank God, financials are right only. I verified, I got the evidence. Management acknowledged, sir, other information only wrong, sir. By mistake our team put like that. With the GST they put the turnover. Actually they should put turnover without GST. By mistakes they put that. So they came forward and concluded that other information only misstated, and I performed. But still, for my safety sake, I just performed some process and I also concluded other information only wrong. My financial statements are absolutely right. Yes or no? Now I know if other information is wrong, what I will do? I will request management to correct it. Okay, if management agree to correct, I will check whether correction is done. If they do not agree, I will communicate with those charged with governance. Are you clear? Suppose financial statements are materially misstated. Upon investigation, it's not other information is right, financials are wrong, which I discovered only after reading other information. Now what I will do, if the financials were materially misstated, I will request management to rectify the financials. If they do not rectify, I will give modified opinion. Suppose tell me, if other information is materially misstated, will I give a modified opinion? Other information materially misstated, I requested management, they are not correcting it. I communicated those charged with governance and they are not correcting other information. What opinion I should give on the financials? unmodified. Why? Because here misstatement is not in financials. Misstatement is in other information. I should report that fact in other information section. In other information section, if other information is misstated materially, I should report that misstatement in other information. I just have to disclose about it, because my duty is not to give opinion on other information. I can only disclose it. Are you clear? If based on reading the other information, if we come across material misstatement of other information, we are required to report that fact. And Reliance Auditor said we have nothing to report. We have nothing to report. Yes or no? If auditor identified material misstatement, they should respond appropriately as per 705. If at all misstatement is in financial statement, you should respond as per 705. Are you clear? So which means if MMS is in financials, modified opinion and reasons you should give in basis for modified. If MMS is in other information, you still give unmodified opinion only with respect to other information. You don't have any duty there, first of all. And report in other information para about MMS in other information. Correct? So if other information is obtained, a statement that auditor has nothing to report, or if there is a misstatement in other information, describe the misstatement in other information. Where you will describe that misstatement in other information? In other information section of the auditor report only you will describe. Hello? Able to understand? This was asked in May 25. That's it. Major standard we have covered. Now here, sometimes what happens is, by the time you are preparing audit report and financials, some of the other information may not be ready. Okay, management is saying, sir, I don't know whether you will complete audit this early. So either wait for few days, sir, I will complete entire annual report and then give it to you. Or management might say, sir, remaining part of the annual report is subject to some holding company regulations. But now they're asking first audit report and financial. You completed your audit, right? You complete everything, right? Please give us audit report first. But in the audit report, I have to comment in other information whether your other information is right or wrong. But right now you're saying other information is not ready. I'll do one thing. Give me a representation. Give me a representation. Management representation. Written representation is nothing but written promise. Give me a promise that once you make other information, once you prepare other information, you will first make it to me. First you will give it to me. Only after I consent to it, you will publish it. Otherwise you will not publish it. Like that I will take a written promise from the management. Then I will issue my audit report. Are you clear? So if some documents are available after audit report date, request written representation from management to provide them to auditor when they were available, before making them available to third party. In May 25, this part is also tested. Okay, management discussion and analysis is not available on the date of audit report. So this part is also tested. Are you clear? Now, finally, suppose no, if misstatements are identified before audit report date itself, in other information you identified misstatements not corrected, consider impact in audit report or even withdraw from the engagement if needed. And if misstatements are identified after audit report date, if corrected by management in other information, perform necessary. If not corrected, 560 procedure we will perform. Okay, that's it. With this 720 standard is over. Main theme of the standard I covered. You understood? With this knowledge, you go and read the 720 standard in depth, you will get it. That's it. With this 720 standard is over. Clear or not? We discussed this almost 1.5 hours with all reporting requirements, all this, with all practical questions, everything. It will be 1.5 to 2 hours. Normal original discussion will be. But since it's a marathon, we cannot cover in depth, because if at all we focus in depth on every topic, we can't cover other topics. So everywhere I'm giving you a decent in-depth guidance. Yes or no? So almost everywhere I'm telling you where and all you lose, where and all you generally leave, and all those topics I'm clearly touching and then alerting you. So next time when you're reading, you should focus on. Clear? That's it. We'll continue in the next session. Yeah. So let's continue the discussion. We are still left with one more standard, that is SA 710. And what are the standards that we completed now? 700, 705, 701, 706, 720, 570. Okay. Now we have to cover 710, 299 also I'll cover. Okay, 299 also I'll cover in this chapter only. So 8 standards will be completing. Then we'll be focusing on CARO. And after this, immediately we'll go and discuss review topic. Then we'll go discuss specialized areas. After that, we'll discuss professional ethics. Then NBFC. Then group audit. So like that we discuss. Okay, see, literally I'm discussing from weightage point of view. By just focusing on 10 chapters, you should be attempting in the descriptive paper 50 marks. So that is the agenda. By just focusing on 10 chapters, in the descriptive, you must be attempting 50 marks of the paper. And of course, MCQs automatically 20 plus you will be able to attempt. Fine. Next. So 710, comparative information, where there are two approaches, corresponding figures and comparative financial statements. This is one standard where many don't understand. They think they understand, but actually not. Okay. So, because first heading decoding itself is the big deal. Comparative. This standard is basically dealing with comparative information. This standard is basically dealing with comparative information. That's what the standard heading actually. Now, this comparative information can be presented in two approaches. The comparative information can be presented in two approaches. One approach is corresponding figures approach. Another approach is comparative financial statements approach. We follow generally corresponding figures approach. What approach we follow for general purpose financial statements that are prepared across the world? Across the world, for all general purpose financial statements, what approach we follow? Corresponding figures approach we follow. Nothing but. You might have done in your articleship, you might have prepared balance sheet P&L of various companies every year as a part of your audit. You might have seen some private limited company balance sheet, you might have seen. In that, along with current year figures, you are having last year figures. You just gave it as a corresponding figure. That's it. Which is actually the logical term. The concept term is comparative. That's actually comparative information. You just gave it as a corresponding number in the last year. That's it. Did you audit that? No. We audit what? Only opening balances we audit, and current year transactions and balances we audit, and we give opinion on the current year. Correct? We don't audit prior period figures. That is what exactly we call it as what? Corresponding figures. Then the second approach, which is also dealt under this standard, is comparative financial statements. In this approach, you have to give opinion on all the years mentioned. You should give opinion on current year. You should also give opinion on comparative information. But here the comparative information is called as comparative financial statements. Here the comparative information is called as what? Comparative financial statements. Show me one law, show me one regulation where you have a duty to give opinion on comparative information. Where is the law? Where is any such law? There is no such law. There is no general purpose framework in India and across the world where you have to give opinion on prior period information. There is no such law. But the standard is dealing with dealing with opinion on current year and opinion on prior period figures. See, simple. The prior period figures are called as comparative information. The prior period figures are called as what? Simply comparative information. This comparative information approaches, one is corresponding, another one is comparative financials. Now, this comparative financial statements is generally popular in special purpose frameworks. They are popular where? Special purpose frameworks. For example, SEBI, which made mandatory. SEBI is making mandatory of what? As per SEBI, every company that is going for listing, especially if it is a company, until then it's a private limited and now it is becoming listed, where they have to prepare financial statements using Ind AS, where they have to prepare financials using as per the accounting policies recommended under Ind AS, where they need to prepare restated financial statements. What is it? Restated financial statements. And that restated financial statements were prepared afresh for last 3 years. An audit has to be done on the last 3 years. Audit report has to be given on these 3 years put together. There CFS approach is used. The comparative information is presented using what approach? Comparative financial statements approach, where auditor will give opinion on prior period figures as well. For example, you see there is a famous company Zomato, right? Zomato related comparative financial statements will be there. I'll just show you Zomato comparative financial statements. So this is Zomato's related. Zomato company, when they're going for listing somewhere in 2018, I think, okay, 2018 or 19, somewhere, some 4, 5 years ago it happened. So this is an audit report on, what is this? This is an audit report on independent auditors examination report on restated consolidated financial information. Now you see here, opinion, The opinion is given at last. In this audit report, the format is given. This format of audit report is dictated by the SEBI framework. Okay, here the format of audit report, everything which they followed is a old format. Okay, as per old format of audit report, the opinion will be somewhere at last, you see, based on our examination, according to the information explanation given to us, and also based on examination of reports submitted, so and so, you can see, you know, we report that consolidated financials have been prepared, you know, in accordance with so and so for 2020, 2019, like that, so no, and also 2021. They are mentioning 3 years. They are mentioning 3 years. So everywhere you see, wherever auditors were talking about opinion, everywhere they are mentioning 3 years. Okay, 2020, 2019, and of course 2021 will also be mentioned. 3 years they'll be mentioning. So here the auditor is giving opinion on 3 years financial information in single report. By the way, the financial statements are prepared with 3 amount columns, nothing but 2021, 2020, 2019. And all the 3 amount columns on all the 3 years, auditor has to give opinion. Which approach is the financial statements there? Comparative financial statements approach. This is a special purpose financial statements which is included in the prospectus. This is a special purpose financials which is included in prospectus, and that this is only for, you know, see again, sometimes special purpose financial statements means a specific user. Sometimes special purpose financial statements could be an occasion. This is an occasion where the company is going for listing. In the red herring prospectus, they need to mention restated financial statements for the last 3 years, and auditor has to audit them and give an opinion on that. Able to understand? So this is one example of comparative financial statements. I hope now you understood the heading. Able to understand? So without understanding this, there is no point in this standard. Like, you feel like entire standard is repeating itself. Yes or no? Why people have confusion on this standard is because many don't decode the heading itself. Okay, so that's it. So basically the standard is dealing with what? Comparative information. Now tell me, what is the nature of comparative information? Just now I told. The nature of comparative information could be, first of all, how the comparative information should be presented. It is decided by applicable framework. You are preparing financial statements as per some framework, right? That framework will decide nature of comparative information. So what is the nature of comparative? What is its relevance? What is its importance in the current period financial statements? The importance of that prior period figures is influenced by the nature of comparative information. The nature of comparative is influenced by applicability of the framework. Look at the first one. It depends on applicable financial reporting framework. There are 2 approaches. One is corresponding figures and another one is comparative financials. Which approach I should follow? It is specified in the law. Suppose you are preparing for a company general purpose financial statements, you should give comparative information as per Schedule 3. So why are you giving last year figures? Because it is mandated under Schedule 3. Yes or no? So the law will decide, the financial reporting framework will decide which approach to follow. So the approach is often specified by law, often specified by regulation, or it can be even specified by terms. For example, comparative financial statement approach is specified by a regulation. Yes or no? SEBI regulations, LODR, SEBI LODR regulations specified that. Next. Now, the basic audit reporting difference is, from the point of view of audit, the basic reporting difference is, in case of corresponding figures, we don't give opinion on the corresponding. The opinion refers only to current period, whereas in case of comparative financials, the auditor's report will also deal with, the auditor's opinion will also deal with comparative information. Are you clear? Now, tell me, what is the audit procedure? By the way, nature of comparative, in one of the attempts, they have asked it for 5 marks. Then, what is the audit procedure for comparative information? Another 5 marks question. Okay, so this has been asked, and previously that one also has been asked. Now look at, what is the audit procedure for comparative information? Tell me, how do I verify comparative information? Comparative information is a reflection of last year financial statements. Am I right? How you do opening balance verification? Same way. How you verify last year figures, whether are they correct or not? You check last year audited balance sheet, you will take that amounts, you will match it to you. Am I right? Yes or no? So in the current year, last year figure will be compared with last year current year figure. Am I right? Last year, when you are verifying, the source, you will verify with the source, right? What is the source? The source is audited balance sheet of the last year. Correct? Now look at, now again, see, when it comes to again listed company, SEBI, when it comes to, I also discuss this point once again in proforma financial information, proforma 3420. Okay, where you are appointed to report on proforma financial information. When proforma first of all be prepared, first of all, when a company will prepare a proforma financials, we'll discuss when we start proforma. Proforma financial statements preparation approach is something similar to consolidation approach. It is something similar to consolidation approach. That's why you see in proforma adjustment will be there, unadjusted financial information, proforma adjustments will be there. Same in consolidation, standalone financials of different companies will be there, consolidation adjustments will be there. And you apply consolidation adjustments on standalone financials of different companies, then you get the result is consolidated financial statements. Proforma financial information is also exactly the same. Okay, we'll discuss that in 3420. There also proforma financials are prepared because of SEBI requirement only. So there I will discuss. Okay, now next, what is the audit procedure for comparative information? Look at here, we are not differentiating on corresponding comparative financials. For comparative information, how to verify? The approach is same. Corresponding figure, comparative financial statements, these two kinds of differences I need to make only at the time of reporting. I don't have to worry about those two differences at the time of my audit procedure. My audit procedure is same. Whether you call it as corresponding figure, whether you call it as comparative financial statements, let me call it as CFS. Okay, whether you call it as CF, corresponding figure, or you call it as CFS, comparative financial statements, both are basically comparative informations only. And my approach of audit is same for both of this. My audit procedures will be same for both of this. The difference will be at the time of giving opinion. In my report, if I do not talk about prior period information, if I do not talk about comparative information, then the approach is corresponding figures. If I have to talk about comparative information in my reporting, where I have to give an opinion on comparative information as well, then that approach is CFS, comparative financial statements. Clear, all of you? Now, so what is the audit procedure? Simple. Verify whether financials includes, first of all, required information. If so, whether it is appropriately classified. See that comparative information is agreeing to prior period amounts and disclosures. Further verify consistency of accounting policies and changes in accounting policies are correctly disclosed, accounted and disclosed. First, does the financials include comparative information which is required? Yes, they are including. The balance sheet is corresponding comparative information is included. Second point, verify that this comparative information tally with prior period financial statements, and also verify whatever accounting policies they stated in the last year financials, the same accounting policies are consistently applied. If at all there is a change, the change has to be properly accounted and disclosed. This is what exactly the same two procedures were given in 510 also. The audit procedure in 510 for opening balances, the same two procedures. The 710 standard is linked with 510 standard also. Next, if a material misstatement is identified, suppose you identified a material misstatement in comparative information, nothing but a misstatement is identified by you in opening balance, nothing but do one thing, perform additional procedure to get evidence whether that has an impact on current period also or not, because opening balance misstatement will generally carry to current year also. Whatever mistake happened in last year, the same mistake might also happen in current period. If prior period financials were audited by same auditor, follow 560 requirements. Now you are the same auditor who audited last year financials, and now you found a mistake in last year financials. Do apply 560 procedure and try to resolve it. Okay, last year financials itself you amend it, try to amend it, ask management to amend it. This procedure is given under 560. Further, get a written promise. Written representation is asking a written promise, a promise in writing, nothing but get a written representation for all the periods reported in auditor's opinion. Even in SA 580, one requirement, for what period you should get written representation, for which date, on which date you should get written representation. You might have seen this point. The written representation date must be as near as practicable to date of audit report, but not later than the date of audit report. Have you seen this? Yes or no? Yeah. So the written representation must be as near as practicable to audit report date, but not later than that. And further, the written representation shall be obtained for all the periods mentioned in the financial statements or auditor's opinion. For example, if it is a corresponding figure approach, I get written representation for current year figures. If it is a comparative financial statement approach, I will get written representation for all the 3 years, just like in Zomato 3 years. Yes or no? Then finally, get a specific representation. Get a specific representation regarding any prior period item disclosed in statement of P&L. Any prior period item, if at all they disclose, get a specific representation that it is dealt appropriately. Are you clear? So what is the audit procedure? Simple. One, see whether comparative information is included first of all. If so, tally with the prior period balances. Then you need to verify consistency of accounting policies. Then you need to see if there is a misstatement in comparative, will it affect the current period? If the same auditor is doing comparative information audit, apply 560 procedure. Get a written representation for comparative information. Get a specific representation for prior period item. Over. Are you clear? Next, now how to report. How to report. Audit reporting for corresponding figures. Only this you understand. Okay, audit reporting for comparative financial statements you don't have to understand. So only for corresponding figures audit report you understand. Exam point of view, this is generally sufficient. But still in exam they might be asking comparative financial statements also, and I will show you one question which is asked in CA Inter Jan 25 attempt. In CA Inter Jan 25, CFS question has been asked, but they gave answer related to corresponding figures only. They gave answer related to corresponding figures only, because most of the examiners also, they don't understand the standard. So they confuse between these two. So they gave CFS question, but they gave corresponding figure answer, but they gave again CFS conclusion. In between, middle, main part of the answer, they gave corresponding figures answer. But conclusion part of the answer, they again gave comparative financial statements only. Fine. Okay. Anyhow, I'll show you that question also. Now, so look at corresponding figures. First of all, what is a corresponding figure? It's nothing but prior period amounts and disclosures. Corresponding figure is a prior period. First of all, look at comparative information. What is comparative information? It is nothing but amounts and disclosures of prior periods which are included in financial statements. Why are you including? Because of a requirement under applicable financial reporting framework. So comparative information is nothing but amounts and disclosures of prior period. How many prior periods? It may be one or it may be more. It depends upon applicable financial reporting framework. Now what is corresponding figure? They are also nothing but comparative. What is corresponding figure? It's a comparative information. What is comparative financial statements? It's a comparative information. Both are comparative informations only. Yes or no? Which are dealing with amounts and disclosures belonging to prior period, which are included in the current year financial statements. If audited, in the auditor's opinion, these also will be covered. Prior period figures also will be covered in opinion. Then that is called a CFS. If at all auditor's opinion is only dealing with, the auditor's opinion is dealing only with the current year figure, then we call that approach as corresponding figures approach. Further, what is the level of detail? Last year figures, no, what detailedness you should present, at what level of detailedness you should present last year figures. It is dictated by current year. If current year is showing breakup, detailed breakup you are showing for current year, then last year figures also you must show detailed breakup. For example, current year debtors, trade receivable good, trade receivable doubtful, trade receivable secured, trade receivable unsecured. You are giving 4 parts. Then last year trade receivable also will be shown in this 4 parts. Are you clear? Now, so further, the auditor's opinion in case of corresponding figures shall not refer corresponding figures except in the following cases. Only in the following cases, audit report will talk about corresponding figures. Only in the following 4 cases we talk about corresponding figures. In generally we don't have to talk about corresponding figure. But in the following 4 cases, we talk about corresponding figure. Now, case number D, look at. If prior period financial statements were audited by predecessor auditor, then you have OMP disclosure requirement. Other matter para disclosure requirement. What? If prior period financials were audited by predecessor auditor, give information about, the fact that for prior period financials were audited by predecessor auditor, mention the type of opinion, and if at all he gave a modified opinion, he would have given reason for modified opinion in basis for modified opinion para. Copy paste that, and date of the predecessor auditor's report. 3 points you should give. 1, the fact that it was audited by predecessor auditor. 2, date of the auditor's report. 3, type of the opinion including modification reasons if at all modified opinion is given by prior period auditor. So if at all prior period financials were audited by a different auditor, give this disclosure requirement. Further, Suppose if prior period financials were not at all audited, generally this incidence you will find in when a partnership firm is converted into a company, when a sole proprietor concern is converted into LLP, or when a sole proprietor concern is converted into company. Okay, generally what you will find, now company is liable for audit, but last year figures, that time it was a partnership firm or sole proprietor concern where they might not be liable for audit at all. So that's the reason they were never audited earlier. So in this scenario you will find this situation. Okay, if corresponding figures were unaudited, you need to mention the fact that they were not audited. So if prior period financials were not audited, state the same in other matter paragraph that corresponding figures are unaudited. Remember, just because you are mentioning a statement that they were unaudited, that doesn't mean you are exempted from getting evidence on opening balances. You have duty, you have 100% duty to obtain sufficient appropriate evidence whether opening balances are true and fair or not, which is a requirement under 510 standard. So this statement, just because you are giving a statement in other matter paragraph that they were not audited, does not reduce your responsibility to obtain sufficient appropriate audit evidence regarding opening balances, which is a requirement under 510. So two disclosures we understood. Are you clear? Now two circumstances we understood. Now for example, last year the auditor gave a modified opinion. Prior period auditor gave a modified opinion, and the reason why he gave a modified opinion is still prevailing in current year, means that reason is not resolved yet. Okay, the reason why he gave a qualified opinion or adverse opinion, nothing but modified opinion, the reason is still present, and you know what, and the matter still remains unresolved, then modify the current period opinion. You must, if at all prior period auditor gave a modified opinion and the reason was still not resolved, current year also you should give a modified opinion. Further, since you are giving modified opinion, what you should mention in basis for modified opinion para? In basis for modified opinion para, which may be basis for qualified opinion, which may be basis for adverse opinion, in the basis for modified opinion para, you need to clearly mention current period figure and corresponding figure if unresolved matter materially affects the current period. Last year why he gave a modified opinion, the reason is prevailing in current year, and in the current year also it is materially affecting, then modify the current period financial statements and mention in basis for qualified opinion clearly why, how much exactly it is impacting current period and how much it impacted already in the last year. Suppose it is not material in current year. Last year modified opinion was given because of some inventory misstatement in valuation, inventory valuation misstatement. Current year inventory valuation is rectified, but that mistake was still carried. To that extent there is a misstatement in the opening balances, but compared to current year closing balance, the opening balance was negligible. Okay, the opening balance of inventory is negligible. This year our operations have 10 times increased. Okay, the company has scaled up 10 times. So last year modification is unresolved. Okay, later that issue was unresolved. Later we changed inventory valuation, and current year we valued correctly, but in opening balance that mistake is still prevailing. Okay, so management have not rectified it. Now since it is not material in the current year, comparison is not right, because current year is opening balance is current year closing stock value is rightly valued. Last year closing stock value comparative information is wrongly valued. You are comparing a right value with wrong value. I should tell the people, don't do that comparison. So comparability will qualify. So explain current period opinion is modified because of unresolved matter on the comparability of current and prior period, even though there is no material impact on current figures. It may not have a material impact on current figures, but comparability is getting affected. See, you should not do the comparison. So that fact I will tell in basis for modified opinion para. Further, misstatement in prior period. For example, there is a material misstatement in prior period which you identified now. Understood? You identified now means it's not the previous auditor who identified, it is the current auditor who identified. What about that? If there is a material misstatement exist in prior period on which unmodified opinion was issued in the last year, the previous year auditor gave unmodified opinion, then ask management to correct it, because now you found a material misstatement in opening balance, nothing but ask management to correct, verify whether correction was done or not. If at all they have not corrected, means there is a material misstatement in opening balance I discovered which management have not corrected, therefore I will give a qualified opinion or adverse opinion. Over. Do you understand? Yes or no? So one is dealing with last year auditor gave a modified opinion. Another one is dealing with you identified a material misstatement in last year which was not identified by prior auditor who gave an unmodified opinion. Last year financials were not audited, last year financials were audited by another. C and D were disclosure requirements in audit report. A and B were dealing with your opinion paragraph. So these are the 4 circumstances that affect your current period audit report. Are you clear? Generally, corresponding figures will not affect your current period audit report, but in these 4 circumstances, it will affect your current period audit report. Then comparative information means what? Comparative financial statements means what? It is also comparative information, which is including prior period amounts and disclosure, which are meant for comparison with current period, but they were referred in auditor's opinion. Are you clear? This point alone you should write in exam. And here auditor's opinion must refer to each period in the financials which are presented and on which audit opinion is expressed. In the audit report, you must refer all the periods mentioned in comparative financial statements, just like I showed in Zomato. That's it. Okay, this standard is typically over. Now I will show you CA Inter Jan 25 paper. In CA Inter Jan 25, there is a question on this. Yeah, look at this. Look at in CA Inter, one question has been asked, which is a 5 marks question. This was actually there in CA final before, I think, some 6-7 years. The same question. Oval Enterprises Limited under legal obligation to represent its current year financials along with previous year financial statements. They have under legal. So, and bracket what they mention, comparative financial statements. Current associates have been appointed as stat auditor for the year. Current noticed that last year financials contains an adverse opinion for the financials as a whole due to a misstatement of evaluation and disclosure of debtors. Guide Karan for his duty regarding treatment and addressing the issue while drafting his report, what disclosures he should make. Okay, now, so here tell me, last year financials contain adverse opinion, they said, yes or no? And current associates were appointed for the year, they said, which means last year audit was by some other auditor, and last year auditor gave a modified opinion, and that misstatement probably is presenting in the current year. So first of all, what are the disclosure requirement? One disclosure requirement is prior period financials were audited by predecessor auditor. So mention that prior period financials were audited by predecessor auditor in the other matter paragraph, type of opinion, and reasons along with why they have given a modified opinion and date of the audit report. This is one. Further, prior period financial statements contain a material misstatement on which prior period auditor gave a modified opinion. Now regarding that, if at all it is unresolved and in the current period also it is material, then you should modify the opinion on the current period. In basis for modified opinion para, comment on the, state that current period opinion is modified due to the effect of prior period material misstatement. Suppose if it is not material in current period, state that comparability is not advisable. Yes or no? That's it. Over the answer. Look at, in the given case, current noticed that last year financials contain adverse opinion if the auditor's report on prior period included an adverse opinion and the matter which give rise to modification is unresolved, the auditor shall modify the opinion on current period financials. In the basis for modified opinion para, the auditor will refer to both current period and corresponding figure and matter giving rise to modification in case if the effect of the matter on current period is material. Suppose in other cases means what? If the effect of the matter is not material, then explain that audit opinion has been modified because effect of unresolved matters on the comparability to the current period. Nothing but comparability is affected now. Even though it is not material, current year it is true, it is free from MMS, but last year is not free from MMS. These two numbers are not true and fair technically. Yes or no? One is true and fair, another one is containing MMS. Comparability is not permitted. You see what answer they wrote completely? Corresponding figure answer they wrote. This is not CFS answer. This is what answer? Corresponding figures answer. Further, when comparative financials are presented, now they are giving comparative financial statements objective. The auditor opinion shall refer to each period for which financials are presented on which opinion is expressed. If the financial statements of prior period was audited by predecessor auditor, in addition to expressing opinion, you shall state in other matter paragraph what? The statement that prior period figures were audited by, prior period information was audited by predecessor auditor, type of opinion along with reasons thereof, date of report. Over. Easy. If the same question comes in final, this is the answer you need to write. Clear? 710 is over. That's it. Confident on this? With this understanding, you can write any question on 710. That's it. Yeah. Now we'll do one exercise. So I will read the entire 710 standard from ICAI material. Generally we have a fear, no, ICAI material is reading bulky, waste of time. I will read and make you understand each and every word within just 5 to 10 minutes, this entire standard. Now look at. So, reporting requirements in case of comparative information, correct? Now, SA 710, comparative information, where the heading is dealing with two more corresponding figures and comparative financial statements, where it deals with responsibilities of auditor regarding comparative information in an audit of financial statements. There are two different approaches of auditor responsibilities in respect of comparative information. One approach is corresponding figure, another approach is corresponding comparative financial statements. The essential reporting differences between these approaches are: for corresponding figures, the auditor's opinion on the financials refers only to current period, whereas for comparative financials, the auditor opinion shall refer to financial statement, shall refer to each period for which financials are presented. Now, what is the audit procedure for comparative information? First, perform specific procedure for determining whether financial statements contains, determine whether financial statements contain appropriately comparative information. For that, you should ensure comparative information agree with amounts and disclosures presented in prior period. Accounting policies applied are consistent. If there is any changes, then the changes has to be properly presented and disclosed. Further, if the auditor became aware of any possible misstatement in comparative information, then he should perform necessary procedure to obtain sufficient appropriate evidence. If the auditor has audited prior period statements, then he should follow SA 560 requirement. Finally, get a written representation as required under 580. The auditor should request written representation. Further, he should obtain specific representation regarding any prior period item disclosed in current period financial statement. See how easy? Yes or no? Hardly 2 minutes. Next, what is audit reporting? With respect to reporting, when corresponding figures are presented, the auditor's opinion shall not refer to corresponding figures except in the following circumstances. So, 4 circumstances basically. If auditor report of prior period contains other than unqualified opinion, nothing but modified opinion, and if the auditor is of the opinion and he has sufficient evidence that a material misstatement exists in financials of prior period which was not addressed earlier, if the prior period financials were not audited, then he should obtain sufficient appropriate evidence regarding opening balances. So this is one. Okay, nothing but here unresolved prior period modification. This is regarding material misstatement found in the prior period. Now look at reporting treatment, common in both the cases. If the financial statements of prior period were audited by predecessor auditor, you shall state in the report, where you should state in other matter paragraph, that the financials of prior period were audited by predecessor auditor, the type of opinion expressed and the date of the report. Further, if the financial statements of prior period were not audited, then he shall report the same in other matter paragraph that the corresponding figures or comparative information is unaudited. However, this disclosure does not relieve the auditor from obtaining sufficient appropriate evidence that opening balances do not contain material misstatement, which is a requirement under 510. Over. Hardly 3.5 minutes. Revising from ICAI material will not be taking time. Any standard, this is one of the tough standard I'm telling you. This is one of the tough standard to decode. Okay. Now here in between one more para is there which is dealing with comparative financial statement. But you see in the ICAI material this is not organized. Whereas in my book I have given in an organized manner, in an exam presentable manner I gave. Understood? That's the basic difference. So you take even 720 standard, you can finish any standard in a easiest way. What is other information? Financial or non-financial information included in entity's annual report other than financial statements and auditor's report thereon. What is the objective of auditor? In the standard, identify whether there is a inconsistency between other information and financial. Identify whether there is an inconsistency between other information and knowledge obtained. And respond appropriately when auditor identify inconsistencies exist, or when auditor otherwise became aware other information is materially misstated, and report in accordance with standard. Okay, for example, in this reporting part is only somewhat lengthy. Okay, in this entire topic reporting part is lengthy. Look at reporting. The auditor report shall include a separate section with a heading other information or other appropriate heading, yes or no, and For an audit of financials of listed entity, you mention that you have obtained or expected to obtain other information. For an audit of financials of unlisted entity, the auditor has obtained all or some of the other information as on the date of audit report. Look at, as on the date of, at the date of audit report. So mostly at the date of audit report, by the time you are giving audit report, in case of listed entity, all of the information should have been obtained or might not be obtained. In case of unlisted, generally you will obtain. Now this is what most important. When auditor is required to include other information section, then the para should tell. This is what asked in our exam May 25 attempt. Okay, when a statement that management is responsible for other information, and for an audit of financials of listed entity, if any expected to be obtained, if at all you are doing audit of listed entity, any other information which you didn't obtain on audit report date, but later you are getting, I told you what to do, get written representation. Yes or no? Fine. Anyhow, a statement that management is responsible for other information. Second one, a statement that auditor's opinion does not cover other information. Accordingly, auditor do not express any opinion or any form of assurance on other information. And when other information has been obtained prior to the date of audit report, a statement that auditor has nothing to report. If auditor has concluded that there is any material misstatement of other information, a statement that describing what misstatement happened in other information, and identification of what is other information, if at all any information obtained by auditor prior to the date of audit report. See, other information knowledge you must have prior to the date of audit report. So what constitute other information? Just give information about it. You see how much time it is taking. Entire audit report chapter you can revise if at all you are having command in less than 2 hours. If you have command. If you don't have command, you can't. And audit report chapter, for your information, the number of pages of concept alone is 60 pages. You can revise in less than 2 hours. Day before exam, you have 20 hours. Yes or no? 20 hours. Day before exam, 1.5 day time will be there. You can effectively allocate 20 hours of time for preparation. Means today AFM is over. Evening 7 o'clock onwards, if you take off until audit exam date, afternoon 12 o'clock. In between, sleep, everything you remove. Okay, then you still have 20 hours of time. Entire ICAI material can be revised in just 18 hours, not even 20. Understood? Command, your command on the subject decides the speed, not the size of the book. Clear? Just now I proved with 710. Any topic you take, I will make you understand each and every word in the topic. First, I will give you understanding of the topic, then I will read from ICAI material, you will understand it. So reading ICAI material is not at all a big task. It's all about the command that we have. Fine. So with this, 710 is completely done. Clear all of you? Where I even showed ICAI material also. Okay, that's it. Yeah, now let's discuss 299, another standard. Basically this topic 299 is covered as part of gap chapter, I guess, but we kept it as a part of audit report for discussion purpose. Now, joint audit. What is joint audit? Obviously, appointing 2 or more than 2 auditors, yes or no, for the same financial year, for the same scope of work under the same statute. Yes or no? The scope of work of joint auditors must be same. Then only we call it as what? A joint audit. Okay, that's it. What are the responsibilities of joint auditor? What are the responsibilities of joint auditor? Responsibilities are very simple. They have a divisible responsibility when the work is divided among the joint auditor. If the work is not divided among the joint auditor, they have indivisible responsibility. Yes or no? Now, joint auditors have individual responsibility and joint responsibility. In the following cases, joint auditors will have indivisible responsibility when the audit work is not divided among the auditors and the work is performed collectively. You know what? Most important, I told already once, question bank solving is utmost important. If you are neglecting question bank, okay, any question bank for that matter, if you neglect question bank, you cannot match the answer which ICAI is expecting. You can't match, no matter how good you're conceptually. Okay, question bank solving is utmost important for descriptive answers purpose, and you have to know how in different ways a question has been tested. You must definitely know. My PDF is already available, I told you. Just go through it once. So exceptional questions will be there. So just go through it once. You will understand a different, you will understand this at which the institute is expecting. Why people cannot score audit 40 also? The reason not because audit is tough, because they don't have enough practice. They don't have enough practice. How much time they give for FR? Not even 50% of it they'll give for audit. Yes or no? They don't even give 50% time. And they say FR is scoring. How much you scored? 55. If they score 90 in FR and they say audit is not scoring, then I'll agree. They score 55 in FR, 48 in audit, and they say audit is not scoring. You give on FR 450 hours of time, 300 hours of coaching, 200 hours of revision, total 500 hours of time you gave on FR. In audit, you look for 100 hours course. Is there a fast track batch? I received this request. Is there a fast track batch where I can finish in 8 years? What you can finish in 8 years? You can't. It's impossible. You see the complexity now. In the marathon itself, I'm introducing you all the remote concepts. Not even remote. They're all tested. I'm showing you with examples. Direct live in May 25, September 25, Jan 26, November 24 you take, May 24 you take. All these questions were tested. All these topics were tested. So we live in assumptions mostly. We don't look at reality. I say material, tough. Any chapter you give me, I will finish it less than 1 hour. Any chapter, ethics, audit report, I will finish. Maybe from your point of view, I will add double the time. I will read entire ICAI material of CA Final Audit in 8 hours. For me, don't take more than 8 hours. Considering you, I will take 18 to 20 hours it will take, not more than that to revise. So the biggest assumption, ICAI material reading is tough. I just now showed you. 710, one of the tough standard I took and then showed you. You take any standard, I'll show the same. Because grip, the concept command, that decides the speed. Now, coming to question bank, unless you solve at least these 29 resources which I tell. In the previous session also I told you 29 resources you have, May 24, November 24, May 25, September 25, Jan 26, May 26 related MTPs. You solve all these MTPs and model test papers which are all given. I bet your level, your command on the subject will be next level. Not ordinary, it will be next level. The same applies for every other subject. Okay, so don't just stick to ICAI resource which is there. You must solve question bank, compulsory. For that reason, I already gave my question bank where I even identified exceptional questions. So you don't have to solve entire questions. At least solve those exceptional questions. You will understand where you are lacking behind. What level you are lacking behind. Today, many certified copies people are sharing with me. I'm looking at the answer. They are thinking their answer is right. Only when they showed me, I'm telling them what exactly went wrong. Okay. In ethics chapter, I'll discuss, especially in ethics, they are unable to score at all. In ethics, they are not able to score at all because they're not writing provision. First, you should write the introduction to the clause. Then you should write the facts. Then you should analyze and then give a conclusion. Students are directly giving analysis and conclusion. Your answer is right, but not complete. Only complete answer will get higher marks. Correct answer, see, there is a difference between correct answer and complete answer. Your answer should be complete, not just correct. Many of us think wrongly that if I give a correct answer, I'll get marks. No. MCQs, it is applicable because you just have to bubble it. If it is correct answer, that's enough. How much, you need not comprehend the answer. But in a descriptive, you have to comprehend the answer. See, the biggest thing, paper valuationer, he don't know anything. Don't expect him to understand your version because he don't know anything. He has qualified. Paper valuation, if you see, I even made a video on YouTube, ICAI valuation. Okay, you must know certain things. Like I made one video, you just see that valuationers are the one who essentially completed CA and has a minimum gap of 4 years. Means you must have forgotten the subject. Then only you can become eligible as a valuationer. So right now, if at all I want to become valuationer, I'm disqualified. Why? Because I'm in teaching. People who are in teaching are disqualified for valuation. So there are some disqualifications. Okay, so I'm disqualified. Okay, whom are you permitting? Not latest buddies, latest who qualified. They are not permitting them. They're only permitting those who completed minimum 4 years of service or 4 years of practice. MCOM, they are permitted. MBS are permitted. So they have certain qualifications. They do some small testing also before they board the valuationer. They don't know anything about the subject. Sir, they qualified CNO, they must know, right? Then I'll give you one question. I'll give you mathematics paper. You all qualified foundation, no? I'll give you mathematics paper and student wrote alternative answer. Now tell me, how will you verify it? You don't know. Yes or no? You qualified some 4 years back foundation. Yes or no? So if I give you, mathematics paper to value, because you qualified foundation, I took an assumption that you know very well, mathematics. And if a student write an alternative answer, how do you know it's an alternative answer? Because you don't know the subject, right? Yes or no? So you compare what is there in suggested answer with what student wrote. Even though it is a right answer, even though it is an alternative answer, you don't know that it is an alternative answer. You think it's a wrong answer. That's it. That's how valuation works. So ultimately your result is decided, valuation is decided by the scheme of valuation, suggested answer. And that suggested answer you have to write well. For that, question bank practice is most important. Concept practice is not sufficient. All this GOAT notes, everything will be enough, very good for concept practice, but most important than this is question bank. Clear? Next. So what are joint responsibilities? One, when audit work is not divided and performed collectively, or when decisions were taken collectively regarding common areas, matters brought to all joint auditors' attention by one auditor and agreed upon by all, ensuring, joint auditors are collectively responsible for ensuring financial statements comply with statutory requirements. They are responsible for verifying presentation and disclosure requirement. Is it as per applicable framework? They are responsible combinedly, indivisibly for audit report which complies with relevant statute. Why? Because joint auditors generally give common audit report. You take SBI, 11 auditors together signed a single audit report. State Bank of India, 11 auditors have signed a single audit report. Look at this. I think I already showed, no? State Bank of India, 11 auditors will sign. You will see at the end of the State Bank of India report how the auditors have signed it. Standalone. Okay. You see at the end of the audit report, all the auditors have signed. 11 auditors they have. So like 1, 2, 3, 4. So 4, 4 and 3. So totally they have 11 joint auditors. So all of them have signed on a single report. Since all joint auditors are liable to give a single report, for reporting also they have a combined responsibility to ensure audit report is in accordance with standards on auditing. So combined responsibility. That's it. Next. Now, what do you mean by combined responsibility? There are some questions on this. Like, what do you mean by combined responsibility? I'll tell you one question. See, joint auditors have divided one area where it's a common area. Even though it's a common area, that common area has been subdivided into 4 stages. The work is divided into 4 steps or 4 stages. Each step has to be audited by one of the joint auditor. Even though it's a common area, but that common area is executed by auditors by splitting that area into 4 steps. Now, if one of the auditor is negligent about one of the step, okay, whatever the step of common area is allocated for him, whatever the stage of the common area is allocated to him, he is negligent about it, only he is responsible. Even though it's a common area, don't think that all the joint auditors are combinedly responsible. Remember, work who ultimately is responsible to perform that particular work, who is ultimately responsible to perform, for whom it is allocated, only he is responsible. So just because you see the word common area, don't think that all the joint auditors are completely responsible. Even though it's a common area, I divided, for example, debtors verification, I took external confirmation responsibility. Another joint auditor took, ledger scrutiny responsibility. Another joint auditor took sales reconciliation responsibility, he took. Now, if I do not perform external confirmation process correctly as per standards on auditing, only I am responsible, even though debtors is a common area. Even though debtors is a common area, external confirmation is delegated to me specifically. If I do not discharge my duty correctly, only I am responsible for it. Understood or not? Next. Again, you have a question. In question bank, you have a question. Joint auditors dealing with actuaries. Okay, one actual report went wrong. So like that, one question is there in question bank. Different questions. Joint audit, many students think they know very well. But only when you solve the question bank, you will understand how different the questions were. Okay, so by reading concepts, array, joint audit, nothing. But you see the question bank, you will understand how tough the questions on joint audit were. Okay, next. Further, joint auditors were responsible for determining nature, timing, extent of audit procedure. Each joint auditor is responsible for determining nature, timing, extent of procedure for their assigned areas. Suppose external confirmation, I took responsibility. Now, how to decide, how to perform external confirmation, how much time I should allocate, what procedure I should perform, I should only decide. So, in external confirmation, you have some steps. Step number 1, identify the confirming party. Step 2, step 1, identify information. Step 2, identify confirming party. Design the confirmation request. Step 4, send the request including follow-up request. Entire this procedures, I should only plan. Okay, so in case, for determining nature and timing and extent of area, each joint audit is responsible for the assigned area. They must individually assess internal control system and risk assessment related to their work. For common areas, generally joint audit decide on audit procedure, ensuring their appropriateness. However, look at the word, executing these procedures remains individual responsibilities of joint auditor. So this is the point which they frequently test on joint audit. So even though it's a common area, within the common area, multiple steps were there. Audit procedures were divided into multiple steps. Each step is allocated to one joint auditor. So it's a individual responsibility there. Yes or no? Executing the procedures in common areas again remains individual responsibility of the respective auditor. So the myth breaker, common area means combined responsibility. Wrong. That's a general concept. Within the common area, multiple stages or multiple steps work will be divided. For that step, whichever joint auditor was allocated, only he is responsible for that. Are you clear? Next, audit reporting. How audit reporting happens in case of joint audit? Generally, joint auditors issue a single audit report where they form a common conclusion, they give a common opinion, just like in what happened in State Bank of India. All 11 auditors gave a single audit report. However, there is no such mandatory requirement. Suppose in State Bank of India, out of 11 auditor, one auditor is disagreeing. Okay, then the remaining 10 cannot say majority will apply. He cannot say that. So a disagreeing auditor need not or is not bound by majority's opinion. If at all you are disagreeing, you want to give a different opinion on the overall financial statements, you can absolutely give a different opinion. Here one common doubt is, sir, he didn't do overall audit, right? How can he give a different opinion as a whole on the financial statements? He will not give opinion on the overall financials, or he might give opinion on overall financials as per other auditors, but for the area where he is allocated to him, according to me, he want to give adverse opinion on the overall financials because he felt it is pervasive. So he want to give adverse opinion, and in the basis for adverse opinion, he will mention the reasons why he is giving adverse opinion. Remaining auditors give unqualified opinion. They will be giving reasons in unqualified opinion, basis for opinion para. Yes or no? Now, public will have two audit reports. Which audit report I should believe? Public will read basis for para and they will decide whether that has to be trusted or not. Remember, why we need to give basis for para? Simple. According to you, it might be material and pervasive, and you gave an adverse opinion and you mentioned the reason. Another person in the stock market, a stock analyst, for example, he will look at the reason. Are this silly reason? Why auditor gave adverse opinion? No, ignore this. He will still invest in the company, because remember, what you are giving is just an opinion, not a fact. What we are giving is only an opinion. It's not a fact. So our opinion is always debatable. Even if you give adverse opinion, it is debatable. Management will give their own response to the MCA. If you think adverse opinion giving by us will affect the company, maybe temporarily. In the stock market, in the listed company, when auditor gave an adverse opinion, it might bring. But if board of directors come up with a solid explanation on this, and if they file notices and information with SEBI and MCA and solid explanations to the stock market, nothing. Your audit report again becomes a useless document. Understand? It depends upon the power of the response that they give, the fact that they come up with. So if they're coming up with wonderful facts and giving a solid conclusions and proofs, then nothing. Your audit report becomes again useless. Okay, so because it's an opinion. So directors, the first point of defense is it's an opinion. Okay, it's not a fact, it's an opinion of the auditor. Look at the wordings clearly. This is how directors will come and explain. Now look at common report. So a joint auditor is not bound by majority. If there is a difference of opinion, the disagreeing auditor can issue separate report. In such a case, each joint auditor should refer to other joint auditor's report. Further, joint auditor, if at all you want to modify the opinion, they must inform to those charged with governance regarding reasons and proposed wordings. This is a requirement in 260 standard. Okay, whenever you are modifying the report, whether you are modifying opinion, whether you are including emphasis, whether you are including other matter, whether you are including key audit matter, or you are including other information, material misstatement, you want to comment on a misstatement in other information, or you want to include MURGC para, anything you want, any way you want to modify the audit report, you must communicate this fact to those charged with governance. This point is there in 705, 706, 701, 570, everywhere individually that point is mentioned. All the points put together mentioned once again at 260 standard. Clear? Similarly, if at all they want to include an emphasis of matter, other matter para, communicate the wordings to ensure compliance with 706. So how are you including the wordings of emphasis? Please communicate to management. That's why we have a common requirement. Draft audit report, always give it to the management first and get their confirmation on the draft audit report, and then you prepare the final audit report and sign it. Why are you sending draft audit report in audits to the management and those charged with governance? Communication requirement as per 260. I won't communicate separately emphasis. I won't communicate separately other matter. I won't communicate modified opinion separately. Rather, I will prepare audit report. I will not sign it. I will send the draft audit report to the management and get their acknowledgement, and then I'll proceed further. Clear. Next. Now remember, there must be proper coordination. This coordination can be asked as a 5 marks question. Reporting can be asked as a 5 marks question. Responsibilities of joint auditor can be asked as a 5 marks question. Understood? Coordination can be asked, like how they should coordinate with each other. You know, joint auditors know there must be proper coordination. Simple. If any matter that I got to know which will affect the other joint auditor, I must communicate him before the date of audit report. If audit report is finalized and now I'm communicating him, what is the point? Yes or no? Yes, sir. Entitled. And moreover, by default, a joint auditor can trust other joint auditor. Suppose if at all he came up with findings saying something is not fair, something is not true and fair, you believe it. Because for his work, he is only responsible, right? Why you have to review his work? Is a joint auditor liable for review the other joint auditor's work? Not required. See, the very reason why joint auditor was appointed is because to reduce the work burden. This is a very huge company, State Bank of India, RBI guidelines, more than 15,000 crore asset size. Any bank which has an asset size of more than 15,000 crore, compulsory 4 joint auditors are mandatory. 4 joint auditors. And maximum number of joint auditors cannot be more than 12. Okay, earlier this 12 limit is not there. In 2018-19 and all, State Bank of India used to have 14 joint auditors. Later they reduced it to 12. Now they reduce it to 11. Understood? So maximum joint auditor number cannot exceed for a bank 12. First of all, is joint auditor compulsory under Companies Act? No. There is no provision relating to joint audit. However, shareholders can take a decision to appoint joint auditor. This power was given to shareholders under 139 subsection 2 rotation provision. Under rotation provision, one explanation is given. There the power was given to shareholders. Okay, it was discussed as a footnote. It was not discussed as a main provision in the Companies Act. It is the companies and audit committee that will decide whether joint auditors will be appointed or not in a normal company. For banks and insurance companies, regulator will decide. Are you clear? Now you can appoint more auditors than what regulator says also. But if the regulator has a maximum restriction, then restrict to that. Clear? Next, so each joint auditor can assume that the other joint auditor has completed their assigned work as per standards on auditing. They need not review or test the work performed by other joint auditor. Further, you can take an assumption that if at all he get to know some information which will affect my work, you can assume that he informed you. Okay, as on the date of audit report, you can assume that he informed you. If at all he didn't inform me, that's a negligence on his part. That's a negligence on his part. He is liable for clause number 9, part number 1, schedule number 2, failure to comply with gap. Clause number 9, part number 1, schedule number 2. If a CA in practice is not complying with gap requirements, as or no, generally accepted auditing principles, because one of the principle is what? 299. In that what it says, if you come across any fact that is affecting other joint auditor, you must communicate him. If you don't communicate, that's your guilty. He is not liable for that. There, if a situation comes, if an investigation comes, they only look for one fact. Is the joint auditor exercising due diligence or not? Is the joint auditor negligent? They will look at that. If he is not negligent, he is careful. In spite of he is being careful, skillful, diligent, still he could not find some information. That's not guilty. Yes or no? In audit, no. Sir, the financials were completely materially misstated. But I gave an unmodified opinion. This is what audit risk, right? What is an audit risk? Risk of expressing inappropriate opinion when the financial statements are materially misstated. Yes or no? They are materially misstated, but I am giving inappropriately an unmodified opinion. That is audit risk basically. Yes or no? Audit risk will always be there. There, even though you could not discover a fraud, even though you could not discover an error, if at all an investigation discovered a fraud later, and when they ask a question to the auditor, when they're investigating the auditor, what they look for is auditor exercising due diligence correctly or not? If the auditor has conducted audit as per standards on auditing, done. Nothing, nobody can touch you. If you prove you have done audit as per standards on auditing, nobody can touch you. Clear? Next. Standards are there to protect us. Institute has released all the standards, everything, just to protect the members of the institute. If you do as per standards, no matter, even if a fraud, you know it but you didn't report it, still doesn't matter. If at all you have a documentation as per standards and auditing, and if there is no evidence against you that there is a fraud you identified, that's it. You will not be having any responsibility on that. But again, ethics, yes or no? So that's why we have ethics, code of ethics, which says that law has to be interpreted principle based, not rule based. Fine. Next, if one joint auditor audits the financial statements of a this is not required. Okay, so this coordination means these 4 points you should write. Then again, another 5 marks question they can ask is special considerations. What are special considerations? Simple. All the joint auditors must jointly establish overall strategy as required under 300, and all joint auditors, each joint auditor must assess risk of MMS and communicate it to others. I will do risk assessment. In State Bank of India, 11 auditors were there, right? All of them will do risk assessment and they will inform to other joint auditor if at all they find a risk which will affect the other joint auditors work. Further, joint auditor should discuss and document nature, timing and procedures for common areas, nature, timing, extent of procedures for specific areas. Joint auditors must obtain common engagement letter. Here the word used is obtain common engagement letter. First of all, engagement letter is something that we give. Management will acknowledge it. That acknowledgement you should obtain. That's the meaning here. So obtain common engagement letter means what? Obtain acknowledgement of the management in a common engagement letter. In case of 11 joint auditors of State Bank of India, do you think all 11 of them will give 11 engagement letters to the management? No, they will give one common engagement letter where all the terms of the statutory central audit. It's a central audit, correct? For banks, what is it? It's a central audit. So what are the terms of engagement of the central audit? They will put all the terms of engagement in the letter of engagement and they will send it. Management has to give an acknowledgement. That acknowledgement, all of them have to commonly keep it, able to understand. So generally in joint audits, no, there will be specific documentations will be there. One common documentation folder will be there. Understood? So in the common documentation folder, engagement letter will be kept. Same way, representation letter we should get. As per 580, we should get one representation on management responsibilities. That is also you will get commonly. Clear? And work allocation must be documented and must be signed by all the joint auditors. And not only documentation, you should communicate to management also. You should communicate to those charged with governance. And joint auditors should develop a joint audit plan before starting the audit. When you are developing joint audit plan, you need to address the following. What are the division of areas? What are the common areas? What are the reporting objectives? Understand, reporting requirement is different, reporting standard is different, reporting objective is different. Reporting objective means what? SA 300 talks about that. SA 300 talks about reporting objective. Reporting objective means communication requirements. Okay, communication objectives. How auditors have to communicate to the management. They need to communicate status of the audit frequently. They need to communicate findings in the audit frequently on a timely basis. Like that, some communication responsibilities you have under SA 300. So those communication responsibilities from the auditor to the management will be called as what? Reporting objectives. Reporting standards means what? SA 700 is reporting standard. Reporting requirement means what? CARO is a reporting requirement. 143.3 is a reporting requirement. Are you clear? Okay, so reporting objective is different, reporting requirement is different. Then you need to communicate significant factors and you need to communicate preliminary engagement activities result. So these are the 4 points. These are the 4 points which you should consider while developing a joint audit plan. Common areas, division like separate areas, and reporting objectives. Then you should identify significant factors, and you should consider result of preliminary engagement activities. These are the 4 points. And you also should consider resources required. What is the extent of resources required while developing joint audit plan? So in exam they can ask you only this question: what is a joint audit plan? What are the points to be considered while developing a joint audit plan? A 4 marks question. Or what are the special considerations under SA? Under SA 299. This itself can be asked as a 5 marks question. Are you clear? That's it. So with this, 299 is also over. Confident everyone? Yeah. Let's begin CARO 2020. Now one more precaution you should take is ICAI has released one case study booklet which has some 70 case studies now. You solve that case studies and then MCQs, more than enough for practice. Don't participate in Telegram MCQs, YouTube MCQs, all that. They're useless. Show me one MCQ that is there in any Telegram channel that is representative of what is asked in ICAI. Your sample must be representative of population, right? Yes or no? Representative means what? The standard at which you are practicing should match with the standard at which you are tested. You are practicing a very basic fundamental standard. Yes or no? What is audit risk? That and all they won't ask in exam. Look at the case study. Yes or no? I'll show you one few case studies which are asked in past exam. You'll shiver. Like that's the level at which they were tested. You know, you'll panic the moment you see. You'll scare off attempting the exam itself. But nothing to worry. I will give you what are all points that you're missing. So in your preparation upcoming 1.5 month, whatever you're having before exam, rectify this. So you will go with more certainty to the exam hall rather with less certainty. Okay. Now CARO 2020 in the recent exam, Jan 26 exam, CARO 2020 applicability has been tested and 2 clauses they tested. You know what majority students did mistake in that? They wrote applicability of the clause correctly. And they made a mistake with respect to clauses presentation. I think in the recent exam what they have asked is clause number 70, cash losses. Okay, one point which they tested is cash losses. Fine, wait, I'll see. So yeah, look at this. So one clause which they tested is cash losses, and then there is a fraud related clause number 11 testing, and certain projects, ongoing project. Okay, this is regarding some CSR related one. This is regarding ongoing project. This is also regarding CSR. So 3 clauses were tested. CSR clause number 20 correct, and fraud clause number 11. This is cash losses clause number 17. These are the 3 clauses which is tested. Now first I will read the question, then we'll discuss the provision. Okay, now look at, you have been appointed. Again, by the way, for this question I have an alternative answer also. I don't know whether in the suggest answer they considered it or not. We will open and then see. You have been appointed as a stat auditor of a private limited company. This is where the trouble comes. Okay, fine. For the year 24-25, the company has a paid up capital and reserves and surplus of 2 crore. The company has a borrowings of 9 crore. Okay, total revenue of 9 crore, which is excluding revenue from discontinuing operation, which is 2. Yes or no? Fine. So during the year, required to state additional matters specified as may be applicable besides the report under 143 with regard to the following aspects. So you give report under 143 subsection 2 audit report, right? In addition to the audit report, what are the additional matters that are applicable under 143 subsection 11? CARO 2020 talks about additional matters which auditor has to report on. There are 21 additional matters which CARO order notified. Yes or no? CARO order notified 20. CARO 2020 notified 21 additional matters which you have to report. Remember, we have a reporting requirement, right? We have a reporting requirement. Reporting requirements, legal and regulatory reporting requirements. If you look at 143 subsection 1, 143 subsection 3, 143 subsection 11, 21 matters, 16 matters, 6 enquiries. Okay, 6 enquiries. You need to inquire on 6 matters. You need to report on 16. Actually, it is 10 plus 6. Okay, 10 only were there, 10 clauses only were there, but the 10th clause has 6 subpoints. Audit trial, dividend declared paid as per law, provisions made as per accounting standard, funding party, intermediary, that point is in a funding party, intermediary, ultimate beneficiary, that one, and then here 21 clauses. So total we are technically having 37 plus 6, 43 reporting requirements. We have totally 43 reporting requirements. Where these reporting requirements appear in the audit report, they are part of audit report only. They are part of audit report. Opinion, basis for opinion. I told you audit report has 2 parts. Audit report has 2 parts. Part 1, part 2. Yes or no? Part 1 will have opinion, basis for opinion, key audit matter, emphasis of matter, other matter para, management responsibility, audit responsibility. That's it. Then if you have other information, if possible, other information. Then part 2, it will have, part 2 is nothing but what? Report on legal and regulatory requirements. And below this first point, 143 subsection 3, 16 matters they will report. Then the second point, 143 subsection 11, CARO will be reported. Since CARO will make the report, audit report so lengthy, they will generally give it as an annexure. Annexure is equal to the main document. Am I right? Annexure does not have any lesser importance. Yes or no? It has equal importance just like a main document. So here they say refer annexure. Are you clear? So CARO is part of audit report. Where in the audit report it will come? It will come in one section of the audit report, that is reporting on legal and regulatory requirement. Conceptual term is other reporting requirement. What is the conceptual term for that? Other reporting requirements. But we will put a heading as report on other legal and regulatory requirements. These are all reporting requirements as per standards on auditing. This is a reporting requirement as per law or as per regulation. We don't have regulatory reporting requirements. We have only legal reporting requirement. Companies Act is a law. Legal reporting requirement. Regulatory requirement means what? If SEBI gives some points to report on, if RBI gives some points to report on. For example, you might have seen in bank audit, for nationalized banks, they have to report on the following, which is an RBI reporting requirement. Able to understand? Which is an RBI. NBFC has a reporting requirement. Insurance companies, IRDA auditors reporting requirements were there. So there are some reporting requirements under regulatories also for certain sector. So there you have to report as per regulatory requirement in addition to the legal requirement here. Clear? Now, so company 143 subsection 11, 143 subsection 3, 143 subsection 1, all these are legal requirements. Now, CARO 143 subsection 11, okay, CARO, which is applicable for all companies including foreign companies. However, CARO do not apply for banking company, insurance company, section 8 company, one person company, small company and private limited company, subject to 4 conditions. Condition 1, condition 2, condition 3, 4. All the 4 has to be satisfied. Yes or no? Condition 1, it should not be a subsidiary company or holding company of public limited company. Yes or no? For example, Tata Sons Private Limited, it's a holding company for public companies, listed companies. So for Tata Sons Private Limited, is CARO applicable? Yes. Yes or no? Condition 1, when you satisfy, not a holding, not a subsidiary of public company. Second, condition 2, paid up capital plus reserves and surplus. When I say reserves, including revaluation reserve. Remember, you have to take all types of reserves, including revaluation reserve. Paid up capital and reserves and surplus shall not be exceeding 1 crore. Means it shall be less than or equal to 1 crore. It should not be more than 1 crore. I will write. It should not be more than 1 crore on balance sheet date. Or what is it? On balance sheet date. Now, condition 3, borrowings from banks and financial institutions at any time should not exceed 1 crore at any time during the financial year. Which year? Preceding year or current year? Current year. For which year we are giving this audit report? I am giving audit report on 25-26 financial year. Then 1st April 2025 to 31st March 2026, 365 days I will list it out. On every day I will see what is my total borrowing from banks and FIs. On even one day, for 1 minute also, if it is exceeding 1 crore, CARO will apply. This condition is failing. When this condition is satisfied, entire 365 days, not even for a moment, you should have more than 1 crore borrowing. Your borrowing should be less than or equal to 1 crore throughout the year. Then only you are satisfying condition number 3. And revenue from operations. Fourth condition is what? Revenue from operations, including revenue from discontinuing operations, should not be more than 10 crore. Your revenue should not be more than 10 crore. Your borrowing should not be more than 1 crore. Paid up capital reserve should not be more than 1 crore. You should not have any relationship with public company. If these 4, if you satisfy, then only that private limited company is exempted from CARO. Are you clear? Now one point. This private limited company condition is now redundant. Redundant means what? This is useless. This private limited condition is useless because small company limits were enhanced to 4 crore and 40 crore. Originally small company limits are what, 50 lakh and 2 crore. Sorry, 50 lakh and 5 crore. Original small company limits were 50 lakh and 2 crore, I guess. So 50 lakh and 5 crore, 50 lakh and 2 crore. Original, as per the law. Original law, if you look at Companies Act, if you look at small company means this. Okay. Later it was increased to 1 crore and 10 crore, 2 crore and 20 crore, 4 crore and 40 crore. And now the small company limit has been increased to 10 crore and 100 crore to align with MSME. This amendment was made to make it aligned with MSME. Small enterprise is there na? In MSME, small enterprise definition is there na? There also small enterprise means what? Turnover not exceeding 100 crore. Small company in Companies Act also right now means what? Turnover not exceeding 100 crore. This 4 crore and 40 crore is applicable for May 26 exam. But for September 26 onwards, 10 and 100 logic is applicable. Because this 10 crore and 100 crore small company definition is revised on December 1st. And any amendment which is 6 months, with 6 months, amendment is applicable for your exam only when it is 6 months before it came. 6 months has to be calculated from May 1st, backward, November 1st. Not in November, December, Jan, Feb, March, April. Yeah, correct. November 1st. So if at all any amendment came up to 31st October, notification, circular or amendment up to 31st October 2025, only that is applicable for May 26 exam. Now from September point of view, this notification of 10 crore, 100 crore came on December 1st. This notification came on when? December 1st. So is small company 10 crore, 100 crore notification applicable for May exams? The answer is no. Is it applicable for September? Yes. And now as per this, if capital is not exceeding 4 crore, turnover is not exceeding 40 crore, then it's a small company and automatically CARO is exempted. Now look at this question. Here capital not exceeding 4 crore, turnover not exceeding 40 crore. My alternate one answer, CARO does not apply to this company. Accordingly, they don't have to report on all this. But if that is how, why they will ask it for 5 marks? So alternative 2. Okay, if it is a simple question like that, why they will ask? But actually this question is wrong. Why? Guidance note on CARO, 12th point in guidance note. Okay, you don't have the guidance note in syllabus, you can download guidance note. 12th point in the guidance note, they clearly mention CARO exemption order is there, right? You should apply in FIFO. In the sense, if at all a company is exempted under small company criteria, that's it, done, exempted. You don't have to apply private limited company criteria again. First of all, understand, small company should be a private limited company. I hope you know the provision. Small company should be a private limited company, correct? But again, if that small company has a holding company or a subsidiary company, then again small company definition will not apply to it. Yes or no? If at all my turnover, capital, everything is satisfied, but I have a holding or subsidiary company, automatically I will lose exemption. Now is there any indication that they have given you? There is no indication about holding company, subsidiary company information, correct? Is there any reporting requirements? If no, where and above matters will be reported. Okay, that's it. There is no holding and subsidiary company reporting information indirectly or directly was given. Therefore, I can apply small company logic and give exemption. This is what some students wrote, which is actually a right answer. But here they have taken alternative 2. Private limited logic they applied. But again, I'm telling you, the same question comes in next attempt. There is no guarantee that this same answer will be considered, because in institute also they have a review mechanism based on the students' comments, all that, whatever is they have received. No, they will update the answer for next attempt. We don't know. They might update the answer for next attempt. So what is advisable? 2 alternatives you have to write. So mention alternative 1. Again mention alternative 2. Okay, alternative 2. What is paid up capital and reserves and surplus? 2 crore. Enough. Condition failed. Second condition already failed. Since paid up capital reserves exceeding 1 crore, CARO automatically apply. When CARO is applicable, you know what majority students made mistake? They directly wrote reporting requirement on this. You should not directly write reporting. First you should write consent clause, then reporting requirement. Then again write clause number 11, then write reporting requirement, then write clause number 20, then write reporting requirement. Now look at what answer they have given. So here, so the CARO 2020 is an additional reporting requirement applicable. Yes or no? All that. So they have given. So they have given entire. So since accordingly KMT does not fall under exempted category, therefore CARO is applicable. Now in the given situation, company has incurred a loss of 50 lakh during the year, 75 lakhs negative. The auditor is required to report under clause number 17 whether the company incurred cash losses. You see the provision they are writing. Many missed to write the provision. Many wrote only up to this. So that is why they could not score. Only if you write full point, 1 mark. You here applicability 2 marks weightage. For this 1 mark. For this 1 mark. For this probably 1 mark for these 2 points put together, or maybe applicability to 2 marks. So for these items 1 and 1. So like that the answer will be splitted, and 1 mark you will get only when the provision is also given. If provision you missed, substantial part of this point is missed, no, automatically you will not get a mark, even though your reporting requirement answer is right. Clear? That's it. Fine. Anyhow, we'll discuss the clauses and then you can look back at this question, you will understand. Okay, that's it. So we'll take a break and get back and then continue with clauses discussion. Confident everyone until now? Yes or no? So let's discuss the 21 clauses in CARO. And if you see suggested answers or any like MTPs, RTPs or even any answer, they say paragraph 3. Actually, if you look at CARO 2020 order, they were actually called as paragraphs. So para 3 is dealing with 21 clauses. The clauses were numbered with Roman numbers. Okay, small Roman numbers. So when they say para 3, like this is how they express it. Para 3 clause 1, para 3 clause 2, para 3 clause 3. So basically they are clauses. So you can write like this, para 3 clause 1 clause 2 clause 3, like this you can write. Okay, one student messaged me, sir, it is clause number 11. No, why they are saying para number 3? It's actually in this para where 21 clauses were discussed. Understood? Yeah. So now first one. So what is the first clause? Fixed assets. So what is the reporting requirement in fixed assets? 5 issues we need to report. 1. Fixed asset register. One is fixed asset register. Is the company maintaining fixed asset register, which will contain full particulars of assets which they are holding, location at which they are holding, quantity of assets that they are holding. So the company has to maintain something called asset register. You see, audit report is not just an opinion on financials, which is just obviously everybody knows it's an unqualified opinion. Most of the cases, the opinion that we give is obviously unqualified. Why we are not giving modified opinion? You need to find mistakes, right? So most of the auditors end up giving unqualified opinion because they don't have a chance. So no, it's not by choice. Getting it? So they don't find a material misstatement. Obviously they end up giving unqualified opinion. No, I will give adverse opinion. Okay, give adverse opinion. Mention the reason. Why are you? You don't have a reason. You don't have evidence. You can't give. Yes or no? So most of the companies that you notice will have unqualified opinion because auditors failed to find a fraud, failed to find an error, nothing but failed to locate a material misstatement. For that reason, they will, give an unqualified opinion. So everybody knows audit report is unqualified opinion, but nobody knows insights about the company. What is happening inside? Like, is the company maintaining proper asset register? Is there any related party transactions? Are they properly disclosed? Have they complied with laws and regulations? Is there any frauds that they have identified? How the inventory is being managed? Are they physically verified? All these are various ownership aspects. Yes or no? So we don't know what is happening inside the company. Through CARO, through 143 subsection 3, we are getting to know inside information about the company. Yes or no? So this is an additional reporting requirement which provides lots of insights about what is happening inside the company. Doctor of indoor management. Yes or no? What is happening indoor? So nobody knows outsider. No outsiders knows it. So is the company maintaining asset register which contains quantitative details and situation of PPE and intangibles. Remember, asset register is mandatory for both, for PPE and intangibles, both. Then, whether these assets have been physically verified. Remember, physical verification is applicable only for PPE. In one of the exam, MTP, I guess so, they have tested on this point. Okay, is PPE and intangible physical verification, is it applicable for intangible also? No, it is not applicable. Then further, title of immovable property, whether they were in the name of the company. Is the title deeds of immovable property were in the name of the company? Generally, when a partnership firm is converting into company or a sole proprietary concern is converting into company, they won't register the proprietary concerns building into the name of company. They will not transfer it. On the proprietor name itself, it will be continued. This proprietor will become now a shareholder, will become now a director also. Yes or no? After they converted into company. So it will not be transferred. So you just have to give details. What you need to give details? Actually here, vertical format you need to give details. Like what? Description of the property. For example, factory building. Gross carrying value 1.5 crore. Held in the name of so and so. Who is he? Director. From when it was held? From incorporation date it was held. Why it was not held? Yes or no? Why it was not held? Because of various reasons. Since to save registration charges, or since there is no mandatory requirement. Since there is no mandate requirement for any reason, so it is decided to held the building used by the company in the name of the proprietor. That's it. So that's how they can write also. So title deeds, are they in the name of the company? If not, give these details. Clear? Then revaluation. By the way, physical verification, what is this? Whether the company is doing physical verification of all the fixed assets at reasonable interval. Are they doing physical verification at reasonable? You see Tata Motors, you see Reliance. Reasonable interval is once in 3 years. The reasonable interval for them is once in 3 years. Most of the companies, the reasonable interval for them is once in 3 years. But once in 3 years, they must once again verify physically the assets. In fact, in all these companies, physical verification is a continuous process. It's a continuous process. Any day you go, physical verification will be happening at one location. At any one location, the physical verification will be kept on happening. It's a regular continuous process. Every year, some portion of fixed asset will be physically verified. That's it. Now, revaluation. 2 points we need to check. Who did the revaluation? Is it by a registered valuer? Is the revaluation performed by registered valuer? And we need to specify amount of change. We need to specify amount. How much amount changed? We need to specify the amount. When? Condition. If the change is more than or equal to 10% of aggregate of net carrying value of PPE and intangibles. Both. Again, revaluation is covering with both the assets, PPE and intangibles. So revaluation is dealing with both. Fixed asset register is dealing with both. That's it. Now, if at all the change is 10% or more in aggregate of net carrying value of each class of PPE. Remember, in a company, there will be multiple class of PPE. Buildings is one class. Plant and machinery, furniture and fixture. So vehicles, these are all each class. Now buildings, building 1, building 2, building 3, building 4, building 1, upward revaluation, building 2, downward revaluation, building 4, upward, building 2, down, building 4, downward. Don't look at building wise. Look at the class of buildings put together. Aggregate of each class, all buildings put together you should see. All the buildings, if there is a revaluation happen, in net carrying value, the change is more than 10% or more than or equal to 10%, then the amount of change has to be reported. Are you clear? So entire class of assets you should see. That too, net carrying value you should check. Before revaluation, after revaluation. Check these numbers. If the difference is more than 10%, report it. That's it. And then fifth one, the last clause in that CARO, the last subclause in that fixed assets, Binami transactions. Are there any proceedings which are initiated under Binami Transaction Act, which are initiated against the company or maybe pending against the company? Are there any proceedings under Binami Property Transaction Act pending on the name of the company or initiated against the company? Check out. Yes, there were some proceedings. Okay, what is the reporting requirement? See whether these proceedings were disclosed in financial statements or not. The reporting requirement is we need to check, are they disclosed in financials? Yeah, company disclosed in financial statements. If the company disclosed it, then give a positive opinion here. Are you clear? Now, here the C and D and E, these 3 points are called as ARI, additional regulatory information. We call them as what? Additional regulatory information, which is to be given in Schedule 3 by the management. These 3 points the company should give as a disclosure in the financial statements. This is a mandatory disclosure requirement for the company itself. For auditor, it's a reporting requirement as a part of CARO. That's okay. But for companies also, it's a mandatory disclosure requirement in Schedule 3 as a part of additional regulatory information, which is an amendment in Schedule 3 in 2021 landmark amendment. Able to understand? These are additional regulatory. A company, you prepare Schedule 3 financial statements, right? These 3 points, directors have to disclose it in the notes to accounts clearly. How they should disclose it? They will disclose it as ARI. Are you clear? In one of the exam, they have asked it. What are the disclosure requirements regarding title deeds of immovable property in the financial statements? And most of the students wrote CARO reporting requirement. They didn't ask CARO reporting requirement from auditor. They asked disclosure requirement in Schedule 3. Which means it is actually ARI. Why this question has been asked? Because it is there in CA Inter Items of Financial Statements chapter. It is there in CA Inter Items of Financial Statements chapter. By default, fundamental assumption is you are aware of Schedule 3. They don't know that you are not aware. Okay, so they think you are aware of Schedule 3. That's it. Next, inventories. Second clause is inventory. Only 2 reporting requirements. 1. Physical verification. Is it at reasonable interval? Okay, if discrepancy was there on physical verification, which is 10% or more, discrepancy of 10% or more, where in each class of inventory. Remember, inventory has 3 classes: raw material, work in progress, finished good. In each class, if management identified difference, stock counting difference means what is there in the recorded and what is there physically were not matching, and the difference is more than 10%, then auditor has to check whether management has dealt them in the books of accounts properly. We don't have to report differences. Remember, we don't have to report differences. We have to check whether material discrepancy is dealt in the books of accounts correctly or not. Even you see in fixed asset, they use the word here 10% or more, they specifically mentioned for discrepancy, whereas in fixed assets they mentioned the word material discrepancy. Here they mentioned discrepancy, but actually what material discrepancy, the original wording, sir, material discrepancy. If there is a material discrepancy on the physical verification, whether they were properly dealt in books of accounts, you just have to check, are they properly, shortage, is it recorded? Excess, is it recorded? Same inventory, if there is any shortage or excess, whether they were properly dealt in books of accounts. This point we need to look at. Are you clear? Second one, working capital loan. The company sometimes will be sanctioned with working capital limit in excess of 5 crore rupees, okay, in aggregate. From whom? Banks and FIs, on the basis of security of current assets. If at all the company has got a cash credit facility, overdraft facility, LOC, letter of credit. Letter of credit is a non-funded facility. Non-funded facility will also be taken. Here, sanctioned limit only you should check, not the outstanding loan. What you should check? Sanctioned limit. So if the company was sanctioned with a credit facilities are 2 types: funded credit facilities, non-funded credit facilities. LOC is a non-funded, guarantee is a non-funded, term loan is a funded, OD is a funded, cash credit is a funded credit facility. Irrespective of that type of facility, total credit facility sanction, if it is exceeding 5 crore, then this 2B reporting requirement will apply. Clause 2B reporting requirement will apply. What I need to check in 2B? Okay, whenever a company was given working capital limit, they have to submit quarterly stock statement with the bank. With the bank, with FI, wherever they have an OD, wherever they have a cash credit, they need to submit, quarterly statement. Remember, if at all in a particular account, stock statement is older than 3 months, the account is to be treated as irregular. It is treated as irregular, where banks' internal auditors will give major attention on making it regular. Understand, this point is covered under bank audit, temporary deficiencies in advances. What is this concept? Is called as temporary deficiencies in advance. But most of the companies, on time they will comply. Every quarter they will file a stock statement with a bank. But most of the companies, what they're doing, earlier, they inflate stock. In the stock statement which they file with the bank, they inflate it so that they get better drawing power, so that they can get better withdrawal power, drawing power. So they inflate the stock and then file it with the banker. In the books of account, the stock value is 100 crore as on the quarter 1 ending. But quarter 1 ending, statement filed with the banker, stock value will be 130 crore. Like that, many companies do malpractices earlier, and now it is sorted because auditor will report on that. Not only this, this is also part of ARI. This is also part of ARI. Okay. Under additional reporting requirements, under additional regulatory information reporting disclosure requirement for the company has to show, sir, the statements filed by you with the banker, are they matching with books of accounts? If not matching, give the reasons why it is not matching. Directors have to disclose that in financial statements. The auditor has to report whether any such kind of discrepancy identified. Simple. Once again, whether the question is what you see, reporting requirement is what? Whether the quarterly statements filed with the banks and FIs, are they in agreement with books? So Q1 you file stock statement, Q2 you file. As on Q1, the date on which you are filing stock statement, right? On the day in the stock statement, how much stock you showed, how much current asset you showed. In the books, how much it is there? Check it out. If there is a discrepancy, auditor has to report that discrepancy. Right now, you don't find any negative comments here. In 21-22, you will find Tata Motors you open, 21-22 CARO report you open of Tata Motors, okay, audit report you open, and next year you open. You will find, auditor's qualification there, because Tata Motors have filed with bankers discrepancies, okay. They inflated the stock statements, they inflated current asset statement compared to books of accounts, and then they filed. This is a usual practice everywhere. This is a usual practice everywhere. That's it. Clear all of you? So if the working capital limit sanctioned is exceeding 5 crore, then only this reporting requirement will apply. Otherwise, this reporting requirement will not apply. Clear? Next, third clause. Third clause is regarding loans, advances, investments, guarantees. In fact, for the namesake, I use the word simple advance, but actually it's not advance. It's advance in the nature of loan. What is it? Advance in the nature of loan. Basically, you gave a loan, but you're writing in books of accounts as an advance. You know, advance is generally what? It is settled against a transaction. If at all I gave an advance and it's not settling at all, it is taking 2 years to settle that, then that's the nature of loan. That's the nature of loan. Okay. On this, one film distributor example is there. Okay. One case study was given in the MCQ booklet, film distributor case study booklet. Some question like that was there. So you will understand that. Now, so whether the company has invested, whether the company has provided loans, whether the company has granted advances in the nature of loans, whether the company stood guarantee or they provided security to any third party, if so, indicate 6 points. First one, what is the aggregate amount of investment, guarantee, loans, advances in the nature of loans given to? What is the aggregate amount given to subsidiaries, associate, joint ventures? How much? To others, how much? Okay. For example, you see Reliance audit report, they might have given this, reporting. They might have given this reporting. I told, right, CARO is like an annex show. They give it as an annex show. If you see the audit report, here, report on the heading, report on other legal and regulatory requirement. First they gave 143.3. Then the second point you see, under 143, under audit report only, as required by CARO, yes or no, issued by Government of India, okay, in terms of 143.1 on the matter specified in paragraph 3 and 4 of the order. So that's it. So now what are they saying? We given that in annexure B. So CARO report is part of audit report but given as an annexure. Now look at, you remember auditor responsibilities, location of audit responsibilities within the body of audit report or as an appendix or in the official website of a law or regulatory as permitted by the law. Fine, look at. So here clause 3, inside that A, the company has provided loans and guarantees during the year. How much is given to subsidiaries, associate, joint venture? How much loans were given? How much guarantees were given? So how much was given for subsidiaries and joint ventures and how much was given to others? Then again, balance outstanding you should report. So you should give 2 reporting requirements. How much amount is given? What is balance outstanding? So balance outstanding also, subsidiaries, associate, joint venture how much and others how much? Exactly is what given here. Yes or no? So, aggregate amounts given during the year, and the next one is balance outstanding on balance sheet date, and aggregate amount given, balance outstanding. These 2 points you should give. Again, breakup you should show. How much is given to subsidiary, associate, joint venture and how much is given to others. This is first 3A reporting. Understood? Next 3B. Look at what are the terms and conditions on which investment is made. What are the terms and conditions on which loan was given? Terms on which advance in the nature of loan was given, terms on which guarantee was given. Look at the terms and conditions. Are they prejudicial? Are they harmful? Are they unfavorable? Check it out. See that company interest is not affected. Third one, obviously when we give loans, we obviously mention repayment terms. Are they repaying us? By the way, clause number 3, right, we are discussing loans, investments, guarantees, which means we are talking about assets. We are not talking about liabilities. We are talking about loans given, which is an asset item of the balance sheet. Correct? So, in respect of loans given, is the other party repaying regularly? Check it out. Okay, if at all they are not repaying, that too, if there is overdue, for more than 90 days, is the company have taken recovery steps? Check it out. Then E point, renewals and extensions. Sometimes during the year, some loans will be falling due because I gave a loan to so many companies and some loans were falling due in this year only, but they might have approached me for rescheduling, or they might have approached me for extending a fresh loan, or they might have approached me for extending credit period. If at all I rescheduled any loan or I extended credit period or I gave a fresh loan to them so that they will repay the old loan, any of such transaction happen, we need to report that. So what we need to report? Specify aggregate amount of dues renewed, extended, settled by fresh loan. How much of the total amount of loans in this year you renewed or extended, or fresh loan was given, and what is its percentage to the total loans and advances in the nature of loans granted during the year. What is its percentage? This percentage we will report is based on outstanding as on balance sheet date. This percentage we will report it based on outstanding amount lying on balance sheet date. Like this, you have one question bank, one question. There it is given. In guidance note, this point is given. Originally in the ICAI book, they have not given this. Clear? This was a guidance note point. Now, you need to specify what is the percentage of loans renewed during the year, loans extended, credit period is extended, or fresh loan was given to repay old loan. Total it, divided by total loans and advances given during the year, check it out. Percentage, how much? Are you clear? In fact, total loans given, that is not taken. Total loans outstanding on balance sheet date and renewed loans, extended loans, all this given during the year divided by outstanding loans as on balance sheet date, you get the percentage. In exam, they'll give you the data. Question bank, one question is there. Just solve it, you will understand. Clear? Next, F. Did the company give any demand loans? Sometimes we give to subsidiaries, we give to holding companies some demand loans, or we give to directors demand loans. We give loan, and whenever we want, we'll ask them and they will have to repay us. This point is only called as money given at call and short notice in case of banks. In case of banks, these loans are called as what? Money given at call and short notice. Whereas in company, normal company, because this is a normal company, not a banking company, for them it is called as what? Demand loan. So whether any loans and advances which are granted, are they repayable on demand? Or you might have given a loan without specifying any terms. If so, what is the total amount loan in the form of demand loans? What is the percentage to the total loans? And how much of this amount is given to promoters and related parties? Check out. And in the clause 3, total 6 subclauses we have, right? A and E does not apply. A and E does not apply to a company whose principal business is to give loans. For example, NBFC. By the way, does CARO applicable for NBFC? Yes, because it is not a banking company, and in the exemptions list NBFC is not covered. Therefore, CARO is applicable for banking company. Sorry, NBFCs. It is applicable for NBFCs. And if you go and see Muthoot Finance, okay, audit report, this A and E reporting you will not find. They clearly mention, since it's an NBFC whose principal business is to give loans, this reporting requirement will not apply. In Muthoot Finance audit report, you will find this. Are you clear? Next. Now, fourth clause is technically speaking continuation of third clause. Third clause is talking about what? Loans, advances, guarantees, security given. First one, breakup between subsidiary, joint venture, associate and others. How much amount is given? What is outstanding? 2, terms, are they proper? 3, repayment regular. Overdue for more than 90 days, what steps you have taken? Loans renewed, extended, fresh loan was given. How much aggregate amount is given during the year, and what is its percentage to the total loans and advances given? Demand loans or loans given without repayment terms. What is the aggregate amount given, and what is its percentage to the total loans? Further, what is the aggregate amount given to promoters related parties? Over. Now, in all the 6, A and E does not apply to, a company whose principal business itself is to give loans. Nothing but NBFCs. Basically, they are what? NBFCs. Next. Now, we have seen all, various points of terms and conditions. Yes or no? Now we are looking at Companies Act complaints, because when a company is giving loan, they are liable for Companies Act provision under 185, 186. Are they compliant? So this is regarding Companies Act complaints. That's it. Then deposits. Right, some companies are permitted to accept public deposits. Okay, they accepted. The company which I'm doing audit has accepted public deposits. What I should report? Is the company satisfied, complied with the Companies Act provision under 73 to 76 of the Companies Act? Did the company satisfy RBI directives? Did the company satisfy Company Law Board Tribunal directives? Check it out. If there is any non-compliance, state what exactly the non-compliance you have to mention. Further, cost records. Is the company liable for maintaining cost records under 148? Check out. If so, whether they are liable to, whether are they really maintaining or not. Okay, a company which is manufacturing table A, table B products. Okay, in 148 they have given 2 tables, table A, table B, and the company might also be manufacturing some other products also. Okay, you take total turnover in the last year. If it is more than 35 crore in the current year, they must maintain cost records. They must maintain cost records. What you need to check here? You just have to check, are they maintaining it or not? Are they adequately maintaining? Is the cost records true and fair? We don't have the duty. Are they maintaining it or not? That's it. That is only our duty. Further, 7th clause, statutory dues. 7th clause, statutory dues. What are statutory dues? Income tax, GST, customs, property taxes, octroi, all this, yes or no, old service tax, old excise duty, anything. All the taxes and duties that are payable under a law, because of a levy under a law, if at all you are liable to pay, that's a statutory due. Not only that, here welfare funds related dues also will come. Statutory dues also includes payments liable to be paid by the company towards employee welfare funds, provident fund, ESI, gratuity fund, all that. What is the reporting requirement? The statutory dues are broadly divided into two types: disputed statutory due, undisputed statutory. Undisputed statutory, two queries. You need to report on two queries. One, are they regular? Whether the company is regular in depositing undisputed statutory due with respective authorities like PF, ESI, GST, advance tax, TDS, income tax, whatever. And if the company is not regular, that too, if there is an outstanding amount on balance sheet date, some outstanding amount is there, but this outstanding is not this month related, it is outstanding for more than 6 months already, then that amount has to be reported. If the company is not regular, indicate what is the extent of outstanding on balance sheet date for a period exceeding 6 months. It is not from balance sheet date 6 months backward. Yes or no? I'm doing audit of 25-26 financial year. I'm doing audit of 25-26 financial year. September 30. On or before September 30, I have to pay some statutory due. Due date already there, crossed. And we already reached 31st March also. That amount still not paid. So in the balance sheet, current liabilities, statutory due, outstanding amount is there. I will do aging analysis. So aging analysis I will do. Within this, how much is due for more than 6 months, I will identify. That amount has to be reported. I understood everyone. Next up, disputed. You just have to give information. What information you should give? If the company has any disputed due spending, how much amount is involved in the dispute and where the dispute is pending. Okay, for example, you see Reliance, they have given very clearly the information on disputed dues. How much amount is pending, where the dispute is pending, High Court, Tribunal, where exactly the dispute is pending. But companies voluntarily give even little more information. What is the nature of the statutory due, for which dispute is there, for which year they are belonging to. This additionally company voluntarily presenting. Okay, but basically as per the CARO document, only this and this, only these two you need to present. Are you clear? Now here you have one point. What is this? A mere representation. A mere representation to department does not constitute dispute. Suppose department is asking you some query and you're replying it to it. Just a reply, giving a reply to a department is not a dispute. So no, dispute means what? They have passed a demand notice on you and you didn't respond. I mean, you filed a counter notice on that. They passed a demand notice and you filed a counter appeal on that. Then the due is in dispute right now. And whether you have to pay it or not will be decided by some forum. That information you have to disclose. Clear? Next, 8th one, undisclosed income. This is also again ARI. This is also again ARI, additional regulatory information. Even in clause number 3, this entire clause number 3, E point is ARI, demand loans is ARI. These two are basically ARI. That's it. I think even, that's it. So these two will come as part of ARI. Additional regulatory information means what? This is the disclosure requirement as per schedule 3. That's it. Next, undisclosed income. Simple, what auditor has to report? If any transaction not recorded in books, some transactions are not recorded in books, and specifically it is dealing with incomes. Some incomes are not recorded in books, but later they were discovered during tax assessments. Some survey or seize or search or something would have happened. It was discovered in the tax assessment. Okay, if so, what I need to report on? Simple. It's an income which we identified, which was omitted to record earlier. Now we need to record it as a prior period item. I should check whether company recorded it or not. This year, some undisclosed income is identified by the department. Okay, earlier it was not recorded in books. Now they identified. Now I need to check whether company recorded it or not. That's it. If so, whether the same has been properly recorded in books of accounts or not. So what is the reporting requirement? Did the company record it? The undisclosed income discovered by the department in tax assessment. That's it. Are you clear? Next, default. Next, clause number 9, default in repayment of loans. What auditor has to check? Here, 6 points auditor has to check. 6 points auditor has to report. 1, lender wise defaults. First one, simple. See, the company might have taken loans from so many people. This is borrowings. This clause number 9 is dealing with what? Technically, borrowings. Clause number 3 is dealing with lendings. Loans and advances given, basically. Yes or no? So, whether the company has defaulted in repayment of loans or in repayment of interest, okay, to any lender. If so, indicate the following details. Remember, lender wise you should indicate. What you should indicate? Lender wise. Name of each lender you should put. What exactly you defaulted you should mention. When the lender is a bank, when the lender is a financial institution, when the lender is a government. You need not report when the lender is a debenture holder. Understand? If the lender is a debenture holder, you just mention that there is a default happened. You don't have to give lender wise breakup. Yes or no? You will simply mention so and so class of debentures. To them we did not pay interest on so and so time. That's it. Class of debenture wise, if you mention the details, that's more than sufficient. Are you clear? What details we should give? What is the nature of borrowing? For example, working capital loan. Who lended it? ICAI bank. How much amount defaulted? 10,10,000. Is it principal or interest? No, it's both. For how long the delay? More than 25 days as on balance sheet. Remarks. The company said we will pay it soon. That's it. Able to understand? Next. Is the company declared as a willful defaulter by any bank? This is ARI. Diversion of fund. ARI. Short-term funds invested for long-term. ARI. Again, this, all this is ARI, part of ARI. All these points are part of ARI. Are you clear? Now, is the company was declared as a willful defaulter by any lender? Check it out. Look at the CIBIL report of the company. You will understand the data. Third one, did the company has borrowed some term loans. Are they applying for the same purpose for which they were obtained? The company got some term loans for building construction and they got money in the bank account of the company, but they're using it to pay salaries. A long-term loan is used for short-term. This applies 2 clauses. Yes or no? Fine. First of all, it's a term loan which you borrowed for some purpose for building construction. You're using it for some other purpose. That's a diversion of fund. Diversion of fund is first criteria for willful defaulter declaration. Diversion of funds is a first criteria for a bank to declare whether a borrower is a willful defaulter or not. So see, if not, suppose if the company has not utilized it for same purpose, means they diverted. You should mention the loan diverted and for what purpose it is ultimately used. Further, whether the company used short-term funds for long-term purpose. If so, indicate nature and amount used. This is one of the going concern financial indicator. If a short-term fund is used for long-term purposes, then that's a going concern indicator. Further, whether the company has taken any funds to meet obligations of subsidiary, associate, joint venture. If so, what is the nature of transaction and amount involved? Sometimes holding companies will take a loan, not for their own business purpose, but for their subsidiaries, associates and joint venture. So if a holding company, being a holding company, if you have taken any loans for the purpose of meeting obligations of subsidiaries, associate, joint venture, what is the purpose of the loan? How much amount is given to them? Simple. And last one, sometimes a company will take a loan from a bank by keeping securities, shares held by this company as security. Which shares? Shares held by this company in subsidiary, in joint venture, in associate. Suppose I have shares in subsidiary, associate, joint venture. Yes or no? And these shares I went and gave it to a banker. Sir, take this, pledge it, give me loan. So if I get any loan by pledging securities held by me in subsidiary, associate, joint venture, if so, report whether the company defaulted. First, report whether the company has taken any such loan. Yes, the company has taken a loan by pledging securities held in subsidiary. Report the fact. 2, if there is a default, report the default also. Are you clear? That's it. So with this, 9th clause is complete. So what 9th clause has 6 points. Default in repayment of loan to any lender. Lender wise you need to give details. What details you need to give? Nature of the borrowing, name of the lender, amount not paid, principal or both, and what is the delay, and remarks. 2. Is the company declared as willful defaulter? 3. Is the company borrowed any term loan user for the same purpose? If not, for what purpose it is diverted? How much amount is diverted? 4. Whether short-term funds were used for long-term purpose? If so, how much amount is used? Indicate the nature and amount used. 5. If any loan is taken for meeting obligations of subsidiary company, what is the nature of the loan and amount used? 6. Whether the company has taken any loan by pledging securities held by that company in subsidiary, associate, joint venture. If there is any default, mention the details of loan taken. 2. Mention the defaults list. That's it. Clear? Then 10th clause. You see, borrowings is covered here. 10th clause is talking about share capital, which means sources of finance completely covered. Entire sources of finance is covered. Okay. Now, IPO, FPO, preferential allotment. Simple. What is the point that they're asking here? You might have raised money in IPO or FPO, or you might have raised the money under preferential allotment. Now, for what purpose you raised? Look at the prospectus. You will understand. And for what purpose it is used. If there is a variation, report default, because you're borrowed for one purpose and you're using it for some other. That's a default. And you might have borrowed it saying I will spend it within 31st March, but you didn't spend it. As on 31st March, the money is still unspent. That's a delay. And you might have subsequently rectified, which means you borrowed money, use it for some other purpose. Later again, you filled that bank account with again your own fund, again use it for the same purpose. Still, it's a subsequent rectification. All the three has to be reported. Delay, default, subsequent rectification. All the three has to be reported. The same is the case with preferential allotment. But here one more point you should check. Companies Act compliance. If the company has raised any money in the form of private placement or preferential allotment, Companies Act 4262 section, have they been complied or not? That's it. If at all they didn't comply, what is the amount involved and how much is what is the nature of non-compliance? What exactly the condition they fail? That we need to report. Clear, everyone? Next, fraud reporting. It has 3 clauses. It has 3 clauses. Whether any fraud by the company or any fraud on the company noticed or reported during the year. If yes, amount involved has to be indicated. Remember, is there a fraud by the company on the third parties, on the management, on the employees? Is there any fraud on the company by third parties, by the officers, by the employees? Check it out. Our company management might have done fraud on employees or might have done fraud on third parties. Our third party and company employees might have done fraud on the company. Anyway, yes or no? Either fraud committed by the company or a fraud committed on the company. Both are covered. Who did this? Either by officers or employees or third parties. Doesn't matter. Why this difference you need to understand. 143 subsection 12. Fraud reporting. Any fraud identified by auditor which is committed by officers and employees. Their officers and employees which they committed fraud, only that is covered in 143.12. If you identify that fraud which is more than or equal to 1 crore, it has to be reported to central government in ADT 4 form. Right now EADT 4 form has been released recently. So EADT 4. Are you clear? So that's it. So I hope you understood the difference. So here what is it? Any fraud by the company, any fraud on the company. Were they noticed? Were they reported during the year? Noticed or reported by whom? Management. Ask management. Dear management, do you have any knowledge of frauds? If so, give me a list of it. I will mention that in my CARO report. Indicate amount, nature of the fraud. Pay, some vendor fraud. And amount involved 15 crore, for example. I will indicate that. In Tata Motors they reported this. In Tata Motors, 3 people in the vendors management department has colluded and made a fraud to the tune of 15 crore. That's how they reported. Second reporting requirement. Whether any report under 143.12 has been filed by auditors in form ADT 4. 143.12 ADT 4 form, fraud more than or equal to 1 crore. This duty to report is there for stat auditor, company secretary, secretarial auditor and cost auditor. So for example, you didn't file. You ask cost auditor of the company, did they file ADT 4? Ask secretarial auditor of the company, did they file ADT 4? They also did not file, then no problem. If any of them have filed, then report it. Further, the company, listed companies, they implement something called whistleblower mechanism. Okay, so the company will be getting some complaints from whistleblowers. Okay, many employees or officers or third parties, somebody would have given a complaint through whistleblower mechanism. As an auditor, I should consider the whistleblower complaints. The CARO is asking, have you considered whistleblower complaints received by the company? Tata Motors auditor, Reliance auditor said, yeah, we considered it. Why? Considered means what? Considering whistleblower complaints as a part of our risk assessment. We consider this as a part of risk assessment. That's it. Then Nidhi company provisions. Okay, fine, we can discuss, no problem. Nidhi company is basically a financial institution which is exempted NBFC under RBI regulations. It doesn't have to require with RBI. You don't have to register with RBI as an NBFC. A Nidhi company has to maintain net owned funds ratio of 1 for every 20 rupees of liability that they are holding. So if a Nidhi company is accepting liability 20 rupees, they must hold 1 rupee minimum net owned fund. For banks, insurance, NBFCs, net owned funds is a minimum criteria. They all have to have some net owned funds. Capital requirement adequacy ratio, net owned funds is a common requirement for financial institutions. Getting it? Further, a Nidhi company is accepting deposits from members. So they have to maintain, since Nidhi company is accepting deposits, they have to maintain a liquidity reserve. So a Nidhi company has to maintain 10% unencumbered term deposit. So Nidhi company is accepting from members so much of deposit, and that deposit only will be given as loan to other members who are in need. You should not give 100%. Suppose I took 100 rupees loan from all my members. I accepted 100 rupees deposit from all my members. I can give out of it only 90 rupees as loan. 10 rupees I should not give it as a loan. I should maintain the 10 rupees as a term deposit in a bank. That's a liquidity reserve. You know, a bank has to maintain SLR. Exactly. For a bank, it is SLR, which is 18%. For Nidhi company, it is 10%. That's like an SLR. It's a statutory liquidity reserve, nothing but. Now, whether is there any default in payment of interest or deposit or payment of repayment thereof for any period? If so, details. Most of the students will write 2 points. This third point they'll forget. So first point, 1:20. Second point, 10% unencumbered deposit. Third point, is there a default? Nidhi company accepted deposits from members, right? Did the default in repayment of principal or interest or both? If so, details of default has to be given. That's it. Next, related party transactions. 2 points we need to check. Whether Companies Act provisions were complied. The company will definitely enter into a lot of related party transactions during the year. So you check whether the related party transactions are entered only in compliance with Companies Act. If there is a non-compliance, auditor has to report it. Second one, all the related party transactions, the company has to disclose in notes to accounts at one place, right? Check whether they disclosed it or not. Then, internal audit system. Under 138, there are some companies which has to mandatorily appoint internal auditor. Check whether is the company liable for internal auditor's appointment. If so, how many internal auditors were appointed? Is that department commensurate with the size of the company, nature of the business? Look at. So if the internal audit department company appointed, if the company has an internal audit function, internal audit department, is it commensurating with the size of the company and nature of the business? If so, if it is commensurating, well and good, no problem. Next, non-cash transactions. Whether company has entered into non-cash transactions with directors. If so, whether provisions of 192 has been complied or not. So if the company has entered into any non-cash transactions with directors of the company, check it out. There is one question in the question bank where company has sold one land and acquired one more land from the director. Okay, what is the reporting requirement in that regard? It's a non-monetary transaction conducted with a director, nothing but non-cash transaction. It has to be reported under CARO clause number 15. Are you clear? Then 16th clause, I will discuss directly under NBFC audit provision, this point. Okay, then 17, in the recent Jan 26, it was tested. Fraud, it was tested. Yes or no? 17, whether the company has incurred cash losses in the current year. Whether the company has incurred cash losses in the immediate year. If so, state the amount of cash losses, either in the current year or in the immediate previous year or in both the years. You have to report it. Are you clear? Next, resignation of auditor. By the way, how do you compute cash loss? How do you compute cash loss? Profit after tax is negative. For example, add back depreciation, non-cash items until you add back. Still, if the resultant picture is loss, then that's a cash loss. Able to understand? If P&L account shows loss, that's not a cash loss. You add back non-cash items. Still if the picture is loss, then that's a cash loss. Then resignation of auditors. Clause number 18. During the year, you are giving audit report, right? You were appointed in replacement of existing auditor. Existing auditor resigned from the company. And to fill that casual vacancy, you were appointed. To fill that casual vacancy, you were appointed. If so, why he was resigned? He might have given reasons in the resignation letter. No, you should consider those reasons. Have you considered or not? You need to check. Of course, we have to consider which is a requirement in clause number 8, part number 1, schedule number 1. Communication with previous auditor. That too, if the previous auditor resigned, we need to look at the objections raised by him before I accept the appointment. Correct? So definitely we would have considered it. So you just mention, have you considered it or not? You just mention. Next, material uncertainty. What is it? Material uncertainty. Yeah, just a minute. Yeah, let's continue. Material uncertainty. What? On the date of audit report, this fact has to be checked by you on audit report. This clause you should apply on which date? Audit report on which date you are giving. For example, you are giving audit report. For example, you are doing audit of 25-26 financial year. You are giving audit report on 10th June 2026. On that date, you should apply this clause and check, not on 31st March. You should apply this clause and check on the date of audit report. Okay, what I should check on the date of audit report? Fine. You are signing the balance sheet as on 31st March, right? In the balance sheet, liabilities were given, right? And these liabilities includes current liabilities, right? Current liability means what? Those liabilities which are falling due within next 12 months from balance sheet date, right? Now, you are almost 2.5-3 months away from balance sheet date already, which means you know what are the updates that happened in the company until now. Yes or no? Based on the latest knowledge that you have, do you still believe liabilities existing on balance sheet date which are falling due in the next 12 months, do you still believe company will honor them on time? Indirectly, they're asking you going concern question. See, as on 31st March balance sheet date, there are current liabilities. Current liability by definition means those which are falling due within next 12 months. As on audit report date, based on the latest information available with you, do you still believe the company current liabilities will be honored within the due date? Yes or no? Or is there any uncertainty? You should check it out. On which date you should check out this? On audit report date you should check out. Which liabilities you should check out? Liabilities existing on balance sheet date you should check out. You don't have to worry about audit report date liabilities because that is not the year for which you are doing the audit. You are doing audit for 25-26. So I am only worried about which liabilities existing on balance sheet date. But whether company can honor it or not, I should check on audit report date, latest data. Do you understand? So whether the auditor is of the opinion that no uncertainty exists, do you still feel positive? Whether there is no uncertainty as on the date of audit report, that what uncertainty? You don't have an uncertainty that the company is capable of meeting its liabilities which are existing at balance sheet date as and when they fall due within a period of 1 year from the balance sheet date. So do you still feel certain that the liabilities existing on balance sheet date will be honored by the company as and when they become due, which are due within next 12 months? Yes or no? This fact you should check on audit report date. Which on audit report date you should check this fact. Yes or no? Regarding which liabilities? The liabilities existing on balance sheet date, which are falling due within 12 months from balance sheet date. This fact you should check on audit report date. An MCQ can be asked on this 4 options with twisting they can give you. So be careful. Clear? Then 20th clause. This is asked again in the recent exam, Jan 26. Yes, sir. Again, sir, last attempt it was asked. This time it will not be asked. No, don't feel that. 8-10 question is there in September 25, Jan 26. Understood? 8-10 one standard is there. So there is a question in September 25 and Jan 26. Generally, what some students think is last time 8-10 was asked. This time 8-10 will not be tested. 800, 805 will be tested, but they tested the same. One student messaged, he wrote for 78 marks. He attempted for 78 or 80. he got 48 or 52 something. Okay, I even posted that screenshot on result date. Okay, so in that is clearly mentioned, in review 1 standard he left, in specialized areas also 1 8 and standard he left, thinking it was asked in September, it will not be asked in January, but the same standards were repeated again. Understood? Had he studied that, he would have attempted another 10 more and he would have got exemption. So this is what he messaged. So initially when you told, I didn't trust it, sir, but now I saw live. Okay, there is no such rule. Every time paper setter will be different, or it can be same also. And first of all, he don't remember what he said in the last time. He will not first of all think, hey, last attempt asked, I should not ask. He will not, think like that. He will look at the Sajay, he will look at the ICAI material, MTP, RTP, all these resources, and whatever he feels latest and important, that he will test. Simple. Okay, so last attempt it was asked, this time it should not be. No, there is no such rule at all. Clear? Next, so CSR compliance. CSR compliance. I'll tell you one solid example for this. Earlier in old scheme of CA course, company audit chapter we have read, company audit. In auditing subject we have a company audit. What company audit contains? Provisions relating to appointment of auditors. And the same chapter is there in company law also, in group 1. They test same question there and here both. Why? Then see, they're testing, since in audit it is there, in law we should not test it. In law it is there, so we should not test it in audit. No, that time also, since in law it is not important because it is tested rigorously in audit. That time this is how the the speculation was. But in law, every attempt a question will come from that. 5 marks question. In CA inter audit also, every time 5 marks question will come from company audit topic. So these are all just myths. Okay, they are not truths. That's it. So read everything. Now CSR compliance. What we need to check here? Yeah, look at. So the company, okay, I'll do one thing. CSR compliance I'll discuss later. I'll first finish 21st clause, which was asked in September 25 attempt. Which was asked in September 25 attempt. You know what they asked? Presentation requirement they asked. Okay, this presentation, they did not give an ICAI book, but they asked the presentation requirement. You know what? In my old marathon, I discuss presentation requirement from, generally I compare Tata Motors, all these annual reports, everything, and then discuss in the class. In fact, right now what you are seeing is only a marathon version, which is where I complete this entire chapter in 5 to 6 hours maximum. Okay, whereas in my regular class, it is 31 hours discussion. In my regular class, it's a 31 hours discussion. This chapter is 31 hours with question bank, with revision, everything put together, we discuss 31 hours. Revision means not this kind. It's a quick revision. Like how I did 710, no? That kind of revision we do, okay, in regular class. So 31 hours. So there we discuss, real audit reports, where how it is presented, everything. In September it was asked. In September 25, every student wrote this answer, but 0 mark. Only those who gave this format secured the marks. This format, where it is available, nowhere in the ICAI book. It is there in the guidance note. Or a student who have seen a real audit reports, only they can answer it. Majority of the students, even though they know the provision, but since they don't have a practical understanding of this, they lost it. 5 marks they lost it. In September 25 it was there. In Jan 26 MTP also it is there. In September 25 this question directly was asked. Understood? Directly it was asked. For this only the major weightage was given. Now look at what is it exactly. When I'm discussing applicability, one important point I missed to tell. CARO, one more point. Is CARO applicable for standalone financials or consolidated? Standalone. CARO does not apply for consolidated financials. However, 21st clause is there, right, in CARO? That is applicable only for consolidated financial statements related auditor's report. 1 to 20 clauses are applicable for audit report to be given on standalone financials. You see, this is Reliance auditor's report, standalone related one. You see the last clause is 20. Where is 21? It's not there, because 21st clause reporting requirement is applicable in the audit report, which is to be given on consolidated financial statements. Are you clear? Now, what is that 21st clause is dealing with? Suppose you look at Reliance company. Reliance is consolidating financials. So, what are the consolidating subsidiaries, associates, joint venture? How many companies were there? 550 companies. Reliance is consolidating 550 companies, which includes close to 400 subsidiaries, 100 joint ventures, rest of it are, 100 associates, rest of it are joint ventures. Close to 500 to 550 companies they are consolidating. Okay. Now, in all these 500 companies, the auditors could be different. And all these companies, auditors would have given CARO reports. In those CARO reports, modifications would have been there. Modified opinions would have been given by auditor in those CARO reports. Some modified opinion would have been given. In some clauses, the auditor would have raised some objections. Summary of all those objections at one place. Okay, where Reliance auditor will list out like this. For example, I'll show you the presentation requirement. Once this is discussed, this audit report chapter will be closed. Yeah. So in the auditor's report, annexure B, oh, no qualifications, they said. Actually, it is there in Tata Motors or Air India. Somewhere it would have been there. Somewhere it would have been there. So this is old Air India report. Just a minute. Muthoot Finance, yeah, it is applicable. I'll say Muthoot Finance itself. So this is consolidated financials. Okay, I think first they gave consolidated. Yeah. So I think you might find open Tata Motors, for example. I think I gave in our book that example only. Okay, I think better I gave already here. The same example only I gave already here. You know, how do we report, you know? For example, Tata Motors you take, this is actually one of the listed company in Tata Motors. That number only I have used it here. Okay, you open Tata Motors consolidated financials. There is one subsidiary company. Okay, this is an audit report given on consolidated financials of Tata Motors. Now, consolidated financials includes what? See, on the holding company, what are all the qualifications and remarks given by auditor? In CARO, you will find in audit report on standalone financials. But consolidated financials include so many subsidiaries, so many associates and all. Now, their auditors also would have definitely given some remarks, you know, in CARO reports. Now, should I read 500 companies CARO reports to know that? No. Yes or no? So, at one place, in all these 500 companies, which auditors gave an adverse remark or gave a negative remark relating to any of the matter in the CARO? Okay, give it one place. So I will list out company number 1, which is a subsidiary company. Go to that company CARO report 1C and then 7A. Some qualification is there. Company number 2, you know, so DEF Limited. So what is its corporate number? It's an associate company. Class number, you know, 7B and then class number 3A. I will simply list a third company, you know, some ABC Limited, you know, so and so corporate identification number, then relationship with this company and which clauses it has a point. Now, which companies I will include here in this list? Only those companies which are included in consolidated financial statements. So those list of companies, wherever in those companies CARO reports auditors have given negative remark, that list I will mention. That's it. This is what they have asked in September 25 attempt 5 marks question. Now look at. So whether there have been any qualification or adverse remark by auditors in CARO reports for companies which are included in consolidated financials. If yes, indicates details of those companies and paragraph numbers of the CARO report which contains qualifications or adverse, and you need to follow the below format. This format is not given in ICAI book, so this format I kept in the notes. Getting it? That's it. It was there in Jan 26 MTP. It was there in September 25 suggested answer also. That's it. Clear? So with this CARO 2020 over. Okay. Then apart from that, we have 143.3 reporting, 143.1 reporting. You please take it on your own, or you just refer my CA Inter World Marathons. You will find discussion on that. With this audit report topic is completely done. Most important, question bank solving. CSR. Okay, I forgot. I'm just testing you whether you're alert or not. Okay, fine. So clause number 20. Look at clause number 20. So in clause number 20, we have two subclauses. Okay, what we need to report. See, you know, a company, mostly you take Reliance company, it has a profit of some 30,000 crore in standalone. Now average profit into 2%, which is equal to 600 crore. 600 crore they need to spend on CSR project. So most of these companies, what they do is they take some project as rural development. Rural development they take as a rural development is a very popular project in CSR where many companies do take. Now developing rural area cannot happen overnight or cannot happen in a month or two. It will take 2 years or 3 years. So under Companies Act itself, we have a provision. Generally, CSR money you have to spend by 31st March. If you fail to spend by 31st March, current year 25-26, I have to spend 2%. Yes or no? Of the last 3 years average profit. I will take last 3 years average profit into 2% in the current year. I have to spend that 600 crore in the current year. But if I could not spend within 31st March the 600 crore on CSR approved projects, I should transfer it to Schedule 7 fund within 6 months. Correct? Huh? Suppose this is when if the company is directly spending CSR without any project mode. If at all company has taken some project, rural development is one project, infrastructural development is one project, company has taken some project, we call this as ongoing project. We call it as what? Ongoing project. If a company is taking one project which has a gestation period of more than 1 year but not exceeding 3 years, okay, then the company can spend the 600 crore over a period of 3 years. But as on 31st March, if any money is idle, still not yet spent, where time limit is still available, transfer it to a separate bank account. Transfer it to a separate bank account. This is the provision. Now, other than project expense, other than project means what? You should spend by 31st March. If you could not spend, you should transfer it to a specified fund under Schedule 7 within 6 months. Sir, it's a project expense, ongoing project expense. If any amount is unspent, it has to be transferred to special bank account. Special account means nothing but what? Special bank account. It's like a capital gain account scheme account. It's like a capital gain account scheme account. The same way here, it's related to CSR project related account. This question is only asked in Jan 26 attempt. That's it. Clear? That's it. So with this, entire audit report topic is completed. Confident? That's it. Yeah, we spent almost 6 hours. I thought of finishing it in 4.5, 5, but it took almost 6 hours. It's okay, no problem. Worth it. Question bank discussion, most important. If you neglect question bank, I'm telling you, you are risking your attempt literally. It's high risk. Don't neglect question bank. Compulsory solve question bank. That too, I told you, exceptional questions you solve. You don't have to solve other questions. At least to solve exceptional questions. That's it. Exceptional means a little difficult. That's it. Yeah, let's revise the next chapter. Review of financial information. In this topic also, mostly whatever reporting topics that we saw in 700 series, mostly it will be repeated. So even when you are preparing also, audit report, review and specialized, these three together you have to prepare. Then review and specialized areas becomes quicker to revise. If you revise in between some other chapter and then go back again here, again it feels like it will take extra time. But immediately after audit report, if you revise review and specialized areas, you can revise much quickly because it's a reproduction of same concepts with a different terms. That's it. Now, what exactly is a review engagement? You know, I told right in our previous session somewhere I told we have totally 46 standards. Now let's bifurcate those standards. We have, you know, whatever engagement that we take, whatever work that we take, okay, as a practicing CA, these works are broadly divided into two types. One is assurance engagement, another one is non-assurance engagement. This assurance engagement is again two types: on historical financial information other than historical financial information. You may be providing assurance on historical financial information, or other than historical means some other information you are providing assurance on. On historical, you can provide reasonable assurance, you can provide limited assurance. Reasonable assurance is a high level of assurance, limited assurance is a low level of assurance. Below limited assurance, there is no assurance at all. Okay, below limited level, which is already a low level. So below that, is there any assurance level? No. So if at all a client is asking us for an assurance engagement below limited assurance, that's a non-assurance basically. There is no assurance involved in that. Clear? Now, so for High level of assurance, we call them as standards on auditing. For them, we typically call it as audit engagement, and for that auditing standards are applicable. Whereas for limited assurance, we call them as review. For that, standards on review engagements will apply. Further, other than historical financial information, example prospective financial information, example non-financial information, that is control set service organization, these two are basically other than historical. They are not dealing with historical financial information, they are dealing with prospective financial information, or they are dealing with non-financial information. Then coming to non-assurance engagement, non-assurance, we have one service called SRS. We call them all non-assurance services as related services. For that, the standards applicable are standards on related services, correct? Now we know this is up to 200 to 800 series, entire 200 to 800 series. All these are auditing standards basically. 2000 series is review standards, 3000 series is other assurance standards. This we call it as 4000 series. Now for other than historical financial information, we call them as SAE, standard on assurance engagement. We call it as SAE. Actually you can call it as SA, but already SA word is given to auditing standard. So SA means standard on auditing, SAE means standard on assurance engagement, where the subject matter is other than historical financial information. Now if you look at what is an assurance engagement? What is an assurance engagement? For example, internal audit, is it an assurance engagement? No. Operational audit? No. Environmental audit? No. Just because the word audit is there, that doesn't become assurance engagement. To call an engagement as an assurance engagement, three-party relationship must be there. There must be three parties. One, there will be a responsible party. Two, there will be practitioner, and there will be user. Understand? User means a third party who will use the practitioner's report on what? Practitioner's report on subject matter. Subject matter is prepared by responsible party. For example, you take audit, financial audit. Financial statements is the subject matter, and that financial statements are prepared by responsible party called management, and these financial statements will be audited by a practitioner, and audit report will be given by him, which will be used by users of the financial statements to take a decision. This is when we call it as assurance engagement. Means only when there is a third party user who is not responsible party. User is different from responsible party. If at all user and responsible party both are one and same, there is no third party user and practitioner giving a report to the responsible party, where responsible party himself prepared the subject matter, then that's not an assurance engagement. That's not an assurance engagement. Stock audit is not an assurance engagement. Stock audit is an agreed upon procedure. Stock audit is an agreed upon procedure. I hope now you understood the difference. Yes or no? So just because the word audit is there, don't think that it's an assurance engagement. Assurance engagement, it has 3 points. 3 parties must be there: responsible party, practitioner, and user. So third party user must be there. Only then. See, otherwise, to whom you are giving assurance? Assurance engagement means what? It's an engagement where a practitioner is providing assurance. To whom? Responsible party, they prepared it. For them, they don't require any assurance. They know it. They only prepared it. They don't require assurance. Assurance is given to third party. Only when a third party is involved, assurance comes into picture. Otherwise, there is no question of assurance in the picture. Clear? All of you? Yeah, this is very important. Now, just like audit, review is also an assurance engagement. But in the review, the subject matter is same. Just like audit, in the review also the subject matter is historical financial information. Yes or no? But review involve, you know what is the difference between audit and review? Audit involves detailed audit procedures, where in audit involve detailed audit procedures, whereas in review we perform limited procedures. What do you mean by limited procedures? In audit, what are various audit procedures that we perform? Inquiry, inspection, observation, recalculation, reconfirmation, external confirmation, physical verification, so many analytical procedure. So many procedures we perform, yes or no, in audit. But in review, we generally perform only two procedures, inquiry and analytical procedure. We only perform two. Only these two procedures we perform. That's why the level of assurance that we get is only limited. Okay, we inquire management about the financial information. We analytically analyze the financial information to identify are there any variations. Okay, so we do just analytical and inquiry, and we form a conclusion. What do we form here? A conclusion. Basically, remember, conclusion is a wider term. Conclusion is a wider term. Opinion is a narrow term. In audit, what we give is opinion. Whereas in a review, we don't give our opinion. We use rather the word conclusion. Okay, so we form a conclusion. That conclusion we will give the management. Okay, in a review, limited procedures we perform. That too, what are the processes that we perform? Limited procedures, inquiry and analytical. Why we perform inquiry? Why we perform analytical? What is the benefit of inquiry? Benefit of inquiry? Benefit of analytical procedure? We'll see later. Okay, so this is what we do in a limited assurance engagement. And in audit, we give opinion, right? What are the types of opinion? Unqualified opinion, qualified opinion, adverse opinion, disclaimer of opinion. Same way, in a review, we provide unqualified conclusion, qualified conclusion, adverse conclusion, disclaimer of conclusion. Exactly, same wordings. Now, in audit, we give opinion, right? The drafting, how do we give opinion? In our opinion, to the best of our information and according to the information given to us, the aforesaid financial statements are giving true and fair view in accordance with applicable financial reporting framework. The wordings will be in our opinion, to the best of our information and according to the explanation given to us. So we got information, we got explanation. Yes or no? To the best of our information, according to the explanation given to us, in our opinion, the aforesaid financial statements give true and fair view. This is how we give, positively worded. This is what unqualified opinion. Now, in case of review, you give unqualified conclusion, unmodified conclusion. It's also called as what? Unmodified conclusion. How do we express this? We don't start with the word in our opinion. Okay, we rather use the word, nothing has come to our attention. We say like this. How do we give a positive conclusion? How do we express an unmodified conclusion here? Nothing has come to my attention to conclude that the financial statements are not free from material misstatements. Are the financials free from material misstatements, or are the financials containing material misstatements? I'm not saying yes, they don't contain, they contain. I don't directly say. Nothing has come to my attention that caused me to believe that the financial statements are not materially misstated. Are the financial statements not materially misstated? Are the financial statements not free from misstatements? Or else you can call, are the financial statements are not free from MMS? To say this, I don't have anything to say that they are not free from MMS. They are not free from MMS means what? I'm saying they are containing MMS. Financial statements are containing material misstatements. I can express this in two ways. They are not free from mistakes. Free from MMS means what? They don't have errors. Not free from MMS means what? They have errors. To say that they have errors, I don't have anything in my hand. Nothing has come to my attention to say that they are error. They have errors, they have frauds, they have misstatements. This is how we give. Whereas in audit, no, we straight away say they give true and fair view. In a review, we don't say they are giving true and fair view directly. Are they not true and fair? Nothing has come to my attention to say that. To say that they are not true and fair, nothing has come to my attention. Are you clear? So this is how, just like movie. You saying a movie that it is good is different. Saying a movie that it is not bad. Yes or no? Not bad means what? It gives a limited assurance for the other person. Yes or no? So he will decide not to watch. You say yes, good, wonderful, positively worded. If you give a feedback, he will think of watching it. Yes or no? So there itself you can see. So high level of assurance versus low level of assurance. Yes or no? So giving a positive, directly positively worded. Again, you see, you can even sync it with the real life example also. a marriage proposal is there, for example, a bride and the relatives are inquiring about the groom, okay, and then they just inquiring the neighbor, and they're asking the neighbor, how is this, how is this fellow, what is he? If at all the other person says, no, he's very good, all that, then automatically their confidence level will be very high. If at all they say, nothing has come to my attention to say that he's yes or no, I mean, if at all they say, no, I don't know anything about him, to say that he's bad. So which means he's not giving any information here. He's not even supporting him also, but he's not opposing also. So in a low level of assurance, we neither support the financials, nor we oppose the financials. Whereas in audit, we support it. In audit, we support it. That's the basic difference. Okay. Now in this particular topic, what are all we have? So one is, what is difference between audit and review? Directly they can ask it as a 4 marks question. So in audit is a reasonable assurance engagement where the level of assurance is higher level. Whereas in a review, it's a limited level of assurance where the assurance level will be lower. In audit, we perform extensive procedures like test of control, substantive, everything we perform. Whereas in review, we just perform few procedures like inquiry and analytical procedure. In audit, we obtain sufficient and appropriate audit evidence. In a review, we only obtain sufficient and appropriate evidence. Okay. In the book, no, when I'm drafting, by mistake, I have given SAE like that. But in review, we don't use the word SAE. We only use the word SAE. Okay. So in review, we draw limited conclusions based on sufficient audit evidence. Sufficient appropriate evidence. Sufficient appropriate evidence. Whereas in audit, we use the word as sufficient and appropriate audit evidence. Okay. This is a slight difference between audit and review. In a review, we don't call it as audit evidence, we simply call it as evidence, sufficient and appropriate evidence. Whereas in audit, we call it as sufficient and appropriate audit evidence. Reporting, we provide an opinion. In review, we provide a conclusion. In audit, the wordings of the opinion will be positively worded, and in review, it's a negatively worded. So positively worded, we word our opinion paragraph in audit, whereas in review, we word them negatively. Now there are 2 standards involved here. One is 2400, another one is 2410. There are 2 standards that are there in review. One is 2400, another one 2410. 2410, there you are giving review, you are giving a review, you're doing review of financial information, but they say it as interim. They say it as what? Interim. Or it may be annual also. Nothing. The same principle we can apply. You are reviewing, you are giving a review report on financial information where you are independent auditor of the same company. You are already an independent auditor. Review of interim financial information by independent auditor of the entity. Okay. Review of interim financial information by independent auditor. Okay. You are already an auditor of the company, and you are giving a review report, then 2410 standard is applicable. 2400 standard is what? You are not an auditor at all. You are exclusively appointed for review. You were exclusively appointed for what? Review. Only review. Your duty is to give a review report. That's it. You were not appointed for audit. So you are not the auditor of the entity at all. Still, you have to review the historical financial information and give a review report. Then 2400 standard is applicable. If at all you are already an auditor, 2410 is applicable. If you are not an auditor, you are just a reviewer, 2400 is applicable. So 2410 is applicable if at all I am giving a review report on a client where I am already acting as an independent auditor, which means to that client I will give a review report and I will also give an audit report. Generally 2410 is popular in case of listed entities. For listed companies, 2410 is very popular. Apart from that, if at all some other company, they exclusively called me for review engagement, then 2400 standard is what I use it. Do you understand? So first, most of the principles of review, entire concept of review, everything is discussed in 2400 only. Understood? Now let's look at 2400 reporting. In the September attempt or probably in the May attempt, they asked a drafting question on review. Generally, they ask a drafting question on audit report. But in May 25 attempt, I guess, they asked a drafting question in review. On review, they asked a drafting question. Fine. Anyhow, look at reporting. Will directly go to the reporting. Now, what are the elements of practitioner report? What are the elements of practitioner's report? You know, in a review, no, we call him as practitioner. In entire 2400, the audit, the person who is doing this review, we call him as what? Practitioner. Whereas in entire 2410, we simply call him as auditor, because in 2410, the review is performed by auditor of the entity. So for that reason, we use the word auditor. Whereas in 2400, we simply call him as practitioner, because he is not our auditor. Okay. But again, if you see, auditor is a general word. There is no legal meaning to it. Auditor means a general word. There is no legal meaning to it. For example, you're doing prospective financial information, you're verifying, and you're giving a report. There again, the word auditor is used. So just because auditor word is used legally means is an auditor? No, not necessarily. Here coincidentally it became same. In 2410, the person who is giving review, we can simply call him as auditor. One reason is because he's already auditor. Second reason, generally also you can call him as auditor, no problem. Yes or no? The person who generally verifies is called as auditor. But what level of assurance he is giving, that decides the name of the engagement. That decides the nature of the engagement. Understand? So anyone conducting verification, we can simply call him as what? Auditor. So just because in 2400 practitioner word is used, there is no necessity that you are prohibited to use the word auditor. Okay. Next. So what are the elements of practitioner report? So once the review is completed, you need to give a report, right? The report, what are the elements? You see, there will be a title. There will be addressee. Addressee is decided by circumstances of the engagement. So terms of the engagement will decide, because generally 2400 engagement is not a statutory engagement. It is generally what? Non-statutory engagement. Yes or no? So therefore addressee is generally decided by the client. Terms of the engagement. Okay. Next. Now you see, if you remember audit report format, first we start with opinion. First section, of course, title, addressee. Apart from that, we start with opinion. Then basis for opinion, key audit matter, emphasis of matter, other matter para. So which means the first one is opinion. But you see here, conclusion is somewhere in between. Here, conclusion is somewhere in between. See, for a review, parallel to audit, for opinion, parallel word in review is what? Conclusion. But the report should start with conclusion, right? It is not like that. It is somewhere, the conclusion paragraph is somewhere below practitioner responsibility. If you observe the old format of audit report until 2018, until 2017-18 financial year audit reports, if you look at, the same format is what there. The audit reports format up to 2017-18 also, first introductory para will be there. Then management responsibilities. Then practitioner, nothing but we call them as auditor responsibilities. Then opinion para will come. Basis for opinion para will never come. You know, olden days, right now basis for opinion is a standard para, correct? It's a constant. It's fixed. But earlier, basis for para, basis for opinion para will come into picture only when you are giving qualified adverse disclaimer. If you are giving unqualified opinion, no basis para. You see here, there is no basis para. After conclusion, that's it. Then date of the practitioner report, practitioner signature, place of the signature. Yes or no? In fact, in our audit report, date, place, that point I didn't talk. Now I will talk here. So similar concept you can apply there also. Okay, fine. So conclusion para. Where is basis para here? There is no basis para. Why? In a normal report, whether it is audit report or a review report, if you are giving unqualified opinion or if you are giving unqualified conclusion, basis para is not there in olden days. In 2018-19, audit report format is amended. Okay. So they changed. No. Opinion is most important thing. It should not be somewhere in between. It should be at the top. So they moved it to the top. Further, they made it immediately for every opinion. We should also tell people immediately what is the basis for the opinion. Whether we give positive or negative or leave it. So whatever opinion we give, basis should be given. Like that, they brought immediately the para. So which they made it mandatory, whether you are giving unqualified, qualified, adverse, disclaimer. Basis is common. Whereas olden days, 2017-18 until 17-18, audit report also will not have basis para. But this review standard is there, right? This is not amended that time. Parallel, whatever audit report format is there, no, that format is parallelly used in even 800 series also. But 800 series is recently 2024 they amended. 800 series is amended in 2023, 2024. Now 800 series audit report format is aligned with 700 series format. Corresponding alignment they have not yet brought in this. Okay, probably very soon they will change this also. Very soon they will change it. That's why you see when auditor is giving a modified conclusion, I will show you here. That's why when auditor is giving a modified conclusion, when modified conclusion is expressed, tell me when modified opinion is given, two circumstances. When financials are materially misstated, you are unable to obtain evidence. Exactly. The practitioner will express modified conclusion when financial statements are materially misstated or when the practitioner is unable to obtain sufficient appropriate evidence. See, wherever the word evidence comes, use the word sufficient appropriate evidence. SCAE, you can use the word SCAE. Yes or no? Now, tell me, material misstatement. Suppose, no, circumstance 1. Material misstatement in financials were there. If the misstatements are not pervasive, you will give qualified conclusion. If the misstatements are pervasive, you will give adverse conclusion. Now tell me, when you are giving a qualified conclusion or adverse conclusion, the heading of the conclusion para has to be named accordingly. Yes or no? Generally, if the word heading is simple opinion in audit, it means unmodified opinion, unqualified opinion, clean opinion. Am I right? In case of qualified opinion, we put the heading qualified opinion. Just like that, here also in a review, in conclusion para is there. By the way, in review, conclusion para will come where? First title addressing, then introduction. We have conducted review of so and so entity comprising balance sheet, P&L, introduction. Then who are responsible for this? Then what is my responsibility? Auditor responsibility, practitioner responsibility. Then conclusion para. Then basis for conclusion will come in case of modified conclusion. Otherwise, if at all you are not giving modified conclusion, you won't find basis for conclusion para. Then date of the report, signature. That's it. UD number. Able to understand? Yes or no? This is a format of review report. Be careful. Next, so qualified conclusion. When do we give qualified conclusion? If at all financial statements are materially misstated but are not pervasive. Suppose if the financials are materially misstated and are also pervasive, we give adverse conclusion. That time the headings of the conclusion para we need to change, like qualified adverse disclaimer of actually it is what ma? Conclusion. Actually it is what? Conclusion. Conclusion in the conclusion para. Further, provide description of the issue. Look at the second point. Description of the issue causing modification under appropriate heading. Why are you modifying? Reason, description will be, some reason will be there, right? Describe the issue causing the modification. Describe the issue causing the modification in under a separate appropriate heading. Basis for qualified conclusion. Yes or no? That too, where it will come? In the contents, no, I missed it. I forgot and I missed and told below. No, it will come above. Basis before conclusion para, most important MCQ. Okay, before conclusion para will come. Now look at the format. I will give you two differences. One, opinion, basis for opinion in audit report. Correct? Yes or no? Then we have key audit matter, emphasis of matter, other matter para. Yes or no? Material uncertain related to going concern, all this para you keep it aside. Then after that what you get is management responsibility, then auditor responsibility. And in a review, the first para is what? Introductory para. In audit opinion para, first we give introductory. I told you this, remember? In opinion there will be two paras. If you remember, two paras were there. First para is called introductory. Second para is actual opinion. Remember I told you this? So no? So the second para, within the opinion, second para will be actual opinion. Correct? Now this introductory para as it is copied in review. Yes or no? Then you get management responsibility. Then you get practitioner responsibility. Then you get conclusion. Suppose if you are giving qualified or adverse or disclaimer, then basis for qualified or adverse or disclaimer of conclusion will come above conclusion para. If at all you are giving unqualified conclusion, this para will not be there. This section will not be there. Am I right? Yes or no? That's it. Next. So clear, everyone? Yeah, next. Still, there are multiple differences. In one of the exam, they have asked regarding material uncertainty related to going concern in a review. Okay, in one of May 25 or maybe November 24. In one of the exam, it was asked MURGC in case of review. They asked. In a review, there is no MURGC para. In a review, there is no MURGC para. Why? 570 was amended in 2018, and 570 is applicable only for audits. 570 does not apply for review. MURGC paragraph in the audit report is result of 570. It's not 705 or 700 requirement. MURGC reporting is because of 570 reporting. That 570 will not apply here. So now, olden days, earlier, until 2017-18 or before, if at all I want to highlight about going concern, where I highlight, emphasis of matter para. Where do we highlight issues related to going concern? Emphasis of matter para. Even in audit also, until 2017-18. Later, in 2018-19, entire 700 series was amended. 570 was amended. 299 was amended. Okay, there are couple of standards on auditing which were amended. As per amendment, MURGC para comes into picture only for the first time in 2018-19. Able to understand? Corresponding amendment was not there in review. See, if you don't understand this background, you can't remember this. Able to understand? This is the reason why in a review the format, the content format is different. Why in audit the content format is different. This is the reason. Clear? Next. So, wordings for qualified conclusion. But before I say wordings for qualified conclusion, let me first show you unqualified conclusion wordings. Okay? When do we give unqualified conclusion? Tell me. When the practitioner obtained limited assurance and concluded that nothing has come to their attention that suggests financials are not prepared as per applicable financial reporting framework. Are the financials not prepared as per framework? To say that I don't have anything in my hand. To say that are the financials containing misstatements, are the financials not as per framework? To conclude that nothing has come to my attention. So this is positive. Now look at the wordings. Look at the wordings. When expressing an unmodified conclusion, you must use the following phrase. Based on our review. How do we give? Based on our review, nothing has come to our attention that causes us to believe that the financials do not give true and fair view as per applicable financial reporting framework. Nothing has come to my attention. You see, financial statements do not give true and fair view. Are you saying that not true and fair? No. Nothing has come to my attention to say that. Do you understand? See, financial statements do not give true and fair view. To say that nothing has come to my attention. Indirectly, what am I saying? I'm not saying they're not true and fair. Neither I'm saying they're true and fair. Okay? Neither I'm supporting them nor opposing them. To oppose them, I don't have anything in my hand. Clear? Now you see, qualified conclusion para. You see, except for the effect of the matter, how the wordings will be. Except for the effect of the matter. Same, no? A similar thing only we have used it. Except for the effect of the matter. When they say only effect, what does it mean? Material misstatement is there, you have evidence. If at all we are giving qualified conclusion because we don't have evidence, for example, remember qualified opinion will give for two reasons. Mistakes were found but not pervasive. Evidence we could not identify, evidence we could not get. Possible effect is going to be material but not pervasive. Am I right? Now, in case evidence is not available, because of that you are giving a qualified opinion or here qualified conclusion, then we use the word possible effect. Otherwise, real effect. Because if evidence is available, mistake is found, real effect you already know. There is no undetected misstatement, you already detected. So, except for the effect of the matter, described in basis for qualified conclusion para. You see, except for the effect of the matter, described in which para? Above this, there is one para, basis for qualified conclusion para. Except the effect of the matter, nothing has come to my attention, nothing has come to our attention that causes us to believe that the financial statements are not true and fair in accordance with applicable financial reporting framework. Easy. In case of adverse, due to significance of the matter, even in audit opinion, if you see, because of the significance of the matter described in basis for adverse opinion section, here you see how the wordings are. Due to significance of the matter described in basis for adverse conclusion paragraph, here they call it as paragraph, you can also call it as section. So basis for adverse conclusion paragraph of the report, yes or no, the aforesaid, the financial statements do not give true and fair. We straight away say the aforesaid, there is no, again, nothing has come to know. We are adverse means what? Don't trust them. They are not true and fair. So we straight away say they are not true and fair. So why are they not true and fair? You want to know the reason? Go to the above para. What is the above para? Basis for adverse conclusion. In that I described the matter. Because of its significance, I conclude that the financial statements are not true and fair. Able to understand. MCQs, they all can be possibilities or MCQ. Now again, now tell me, now you are giving a modified conclusion. Now when you are giving modified conclusion, automatically what happens? Conclusion para heading will change, wordings will change, and above conclusion para you will have basis for conclusion para more clearly. You cannot simply use the word BFC. Yes or no? You have to use basis for qualified conclusion, basis for adverse conclusion, basis for disclaimer of conclusion. Am I right? Only these three will come. Either of these three only will come. Am I right? Now, basis for conclusion. In that para, the practitioner shall, what you should? Describe what exactly caused you to modify. Not only describing the modification, quantification also. Am I right or not? Quantify the financial effect. Yes or no? Unless quantification is impracticable. Similar to what we learned in 705. How, in case of modified opinion, basis for modified opinion para will be modified. How basis for modified opinion section gets changed. In case of modified opinion, how it happens in 705, same thing. Further, in case narrative disclosures are misstated. In case narrative disclosures are misstated. Sir, what is a narrative disclosure? Narrative disclosure means what? For example, you see notes to accounts. Notes to accounts will have two types of disclosures. One narrative, two quantitative. One disclosure is narrative disclosure, two quantitative disclosures. The disclosures are two types. One is narrative, which is also called as qualitative disclosure, which is also called as what? Qualitative disclosure. Then the two quantitative disclosure. For example, trade receivable you showed in the balance sheet, main balance sheet, current assets below, trade receivable 10 crore. In the notes to accounts, you disclose the breakup, right? Less than 6 months, 6 months to 1 year, 1 to 2 years, 2 to 3 years. You show the number, right? That's quantitative disclosure. What is it? Quantitative disclosure. Fixed assets. You show in the balance sheet fixed assets, tangible assets total. The tangible assets, fixed asset schedule you will give, right, in the notes to accounts. Like what is fixed asset, gross carrying value, additions, deletions, net carrying value. You show that breakup, right? That's quantitative disclosure. Now again, if you see notes to accounts, if you pay attention, first 3-4 pages of notes to accounts generally will be matter. Yes or no? Revenue recognition policy of the company, accounting policy of the company, inventory policy of the company. They'll give matter. They are narrative disclosures. What are they? Narrative disclosure. For example, companies following different accounting policy and they are showing in the notes to account a different accounting policy. They are showing a different accounting policy in the notes to account. The narration that they are giving is different. That's a narrative disclosure misstatement. If at all you identify misstatement in narrative disclosure, the same you have to describe how the narrative disclosure is misstated. You should describe that in basis for qualified conclusion, basis for adverse conclusion, as the case may be. Are you clear? Next, suppose omitted information, non-disclosure. In the financial statements, segment information they didn't disclose. That's a non-disclosure. And non-disclosure is also material misstatement. Am I right? If at all there is a non-disclosure, first ask management to include it. Explain nature of omitted information. Explain what is omitted. In the basis for conclusion para, explain segment information is not presented, which is required as per so and so accounting standard. If practicable, include that. Include that disclosure. Yes or no? Look at. Describe nature of omitted information. Yes or no? If non-disclosure of required information, if the required information is not disclosed, just describe nature of omitted information and if possible, include omitted information. Include omitted information. Where you will include this omitted information? You will include it in basis for conclusion if practicable. Generally it is not practicable, that much segment information. How will I put in audit report? I can't. So it is impracticable for us. Are you clear? So in case of this itself can be asked as a 5 marks question. How basis for conclusion paragraph will be affected if the auditor has identified a material misstatement in a review engagement? How the basis for conclusion paragraph will be modified in different circumstances of misstatements found by auditor? Like this they can ask. They can put up a big case study. This is the question which they will test. 5 marks. Are you clear? Next, suppose you are giving a qualified conclusion. You are giving qualified conclusion, modified conclusion, because you did not get evidence. Because of lack of evidence you are giving modified conclusion. Again tell me, just because evidence is not there, I will not directly give disclaimer. I will see what is the possible effect. If the possible effect is material but not pervasive, still I will give qualified conclusion. If the possible effect is material and pervasive, disclaimer of conclusion. Am I right? Yeah, look at. So if practitioner cannot form conclusion due to insufficient insufficient evidence, then express a qualified conclusion. When? If the possible effect of undetected misstatement is material but not pervasive. If it is both material and pervasive, disclaim the conclusion. But tell me, if at all a disclaiming the conclusion situation comes, first I will not disclaim, I will withdraw. I will withdraw. Generally we end up giving disclaimer because of lack of evidence. One of the main reason for lack of evidence is management is not cooperating you. If at all management is imposing limitation and because of which you are unable to obtain evidence, better you withdraw. Okay, so the practitioner must withdraw if management imposes limitation on the scope of the engagement after accepting the engagement, where management limitation is preventing him to obtain sufficient appropriate evidence. Yes or no? Now further, if practitioner decides possible effect are both material and pervasive and withdrawal is possible under the law, withdraw. If withdrawal is not possible under law before giving a review report, then give a review report with the disclaimer of conclusion. Clear? Now how wordings will be? Qualified conclusion wordings will be, except for possible effect of the matter described in basis for qualified conclusion para, nothing has come to our attention that causes us to believe that the financial statements are not giving true and fair as per applicable financial reporting framework. Okay, then wordings of disclaimer, due to significance of the matter described in basis for disclaimer of conclusion paragraph, we are unable to, the practitioner does not express, we are unable to express conclusion on the aforesaid financial information. That's it. Are you clear? Now in the basis for conclusion, now here you are giving modified conclusion, either qualified or disclaimer, because you did not get evidence. So in the basis for qualified conclusion para or in the basis for disclaimer of conclusion para, you did not get evidence, state that. And why you did not get evidence, reason also you state that. You mention the fact that you did not get evidence, also mention the reason why you are not getting evidences. In the basis for conclusion para, you must include reasons for the inability to obtain sufficient appropriate evidence. Okay, it's only sufficient appropriate evidence, whether you are giving a qualified, whether you are giving a disclaimer of conclusion. That's it. Do you understand? So in exam they can ask you, write about conclusions on reporting in case if auditor is unable to obtain sufficient appropriate evidence. Guide the auditor. They will ask you like this, guide the practitioner. Your firm is appointed and the partner is doubtful about how it should be given, so guide him. Like this they can ask you. Or in case if at all modified conclusion and practitioner's report in case of material misstatement in financials. Actually from second point onwards it is about material misstatement. First one, under what circumstances you give modified conclusion. You given two circumstances. One, misstatements you found. Two, you are unable to obtain evidence. First, entirely they discussed about qualified conclusion, adverse conclusion from misstatements point of view. Then they discussed about inability to obtain evidence, qualified and disclaimer of conclusion. Are you clear? Then finally, how to draft the practitioner report they mentioned. Are you clear? Now in the report, in the practitioner responsibility section, one more important question I'm telling you. In the practitioner responsibility section, You should describe clearly that practitioner is responsible to give a conclusion, and describe clearly what is a review, what are its limitations, and state clearly that it's a limited assurance engagement which typically involves inquiries of management and analytical, and the procedures are less than those in audit, and practitioner does not express an audit opinion. You know what? This statement is expressed in a different way. In a review, auditor will disclaim the opinion. True. In a review, the auditor will disclaim the opinion, because you see a review report. We generally discuss that in the class also. I'll just briefly show you. Yeah, so this is actually a review report. This is actually a review report which is directly taken from the pronouncement book. Okay, now look at the headings, how it is looking like in independent practitioners review report. So obviously report on financial statements. There is only one part here. In audit report we have two parts: report on financials, other reporting requirements. In review, if other reporting requirements is there, second part will come. Okay, but right now for review engagements there is no other reporting requirements. You see 143 subsection 3, they apply for annual financial statements audit. CARO, they apply for annual financial statements audit. You don't have to give it on review. Clear? Next. So we have reviewed the accompanying financials of so and so company, then management responsibility, then practitioner. So look at how practitioner responsibility is drafted. Our responsibility is to express conclusion on accompanying financial statements. We conducted our review in accordance with standards on review engagement. Yes or no? And a review is a limited assurance engagement. The practitioner perform procedures, primarily inquiries and applying analytical procedure, and he will evaluate the evidence obtained. These procedures are substantially less than those performed in audit. Accordingly, we do not express an audit opinion on these financials. We are disclaiming the opinion. Able to understand? So we do not express opinion on financials. So even we do not express opinion. That's how the wordings also start. Yes or no? We do not provide an opinion on the aforesaid financial statements because of significance of the matter described in basis for disclaimer opinion section of our report. Same wordings. Next, conclusion. Okay, based on our review, nothing has come to our attention that causes us to believe that the financials do not give true and fair view. Clear? Then in case if report on other legal and regulatory requirement is there, you just mention it. If it is not there, you just ignore it. Clear, everyone? So this is our review report. Now if you see a qualified conclusion, if at all you are giving, first you will give basis for qualified, then you give again qualified conclusion. Same in case of adverse conclusion. You give first, this is for inability to obtain evidence. Yeah, then you give adverse conclusion, basis for adverse conclusion, then you give adverse conclusion. Same way, the basis for disclaimer of conclusion and disclaimer of conclusion. In entire 2400, half the standard is this only. And that half standard, if you try to understand without looking at this, means your understanding process is wrong. Able to understand now? Why we feel tough in audit is because we don't understand. We think we understand, but actually not. Okay? Yeah. Next, conceptual learning means understanding the reality behind, not understanding sentence meaning. Often we confuse. If you understand meaning of the sentence, it means concept you understood. No. Why here conclusion para, above basis for conclusion para will come, whereas in audit basis para will come later. Why? The logic is in 2017-18 also audit will be like this only. Later in 18-19 audit report format is modified. SA 700 was amended. Corresponding amendment they missed. They did not do in 800. They did not do in 2000. Yes or no? Whereas in 800 they did in 2023, very late. And 2400 series they have not yet seen it. Okay, once somebody point out, okay, then they will. Clear? Even today there are some audit firms which are using old format of audit report. Private companies, They do audit of private companies, right? In these private companies, typically there is no audit committee, there is no all this governance mechanisms and all will not be there. So these people will give audit report. Directors are not aware of all this. They just follow and submit it. ROC also will not see, because audit report filing is still manual. We are not filing electronic audit report, just like how we do in tax audit. In tax audit, the audit report is digitized. We just have to select VI, that's it. We just have to select the opinions, that's it. Whereas in a normal company, it is still manual. We just type, scan it and then upload it. Only if somebody in the ministry sees that, and if they remember audit report format is changed and they missed it, then they will send a notice to rectify. That and all is very late. Yes or no? Yeah. Next, that's it. So if you observe, major review 2400 standard is over. Do you understand? Now, emphasis of matter paragraph. In exam, they can ask you a 5 marks question. Write about emphasis of matter paragraph in a review engagement. By mistake, don't quote 706. Wrong. Your answer will be wrong. The moment if you quote 706 in a review related emphasis of matter paragraph, you're wrong, because 706 is applicable in case of audit. Okay. So in a review, can I use emphasis of matter paragraph? Yes, 2400 permits it. It's emphasis of matter paragraph in a review where it is explained in 2400 only. Understood? If you see 2400, it talks about objective of the review. It talks about terms of the review, terms of the engagement. It talks about planning. It talks about documentation. The same 2400 talks about risk assessment. It talks about review procedures. It talks about reporting. It talks about emphasis. It talks about other matter. It talks about going concern. Whereas in audit, for all these issues, you have different standards. Objective of audit, 200. Terms of audit, 210. Documentation, 230. Fraud, 240. Compliances with laws and regulations, 250. Like that, we have different standards in audit. But for review, there are no such many standards. So everything is discussed within a single standard. Are you clear? Next. So, emphasis of matter paragraph. Suppose, no, you want to highlight a matter. You want to highlight a matter that is presented or disclosed in financials, which is important for users. Yes or no? Then the practitioner may highlight. This can be done only by a reference to what is already presented, what is already disclosed in financial statements. Correct? So if the practitioner believes matter is important and appropriately presented, correctly presented means what? Appropriately presented, they will add emphasis of matter paragraph, ensuring provided you have sufficient evidence for that. Even in 706, we can use emphasis of matter paragraph only when that matter is free from MMS. Only when you have sufficient appropriate evidence that it is free from MMS. Only then you can highlight that matter. If at all that matter is containing material misstatement, you can't highlight it under emphasis of matter paragraph. Rather, you have to give a modified opinion on that. Yes or no? You remember? Same in review also, the conditions are common. You can use emphasis of matter paragraph in a review engagement only when the matter is already presented or disclosed in financial statements and you have sufficient appropriate evidence that it is that it is free from MMS. You have evidence that it is free from MMS. That's it. Now, where emphasis of matter paragraph? Placement. EOM paragraph will come immediately after the paragraph with conclusion. Conclusion para will be there, right? Below that. Yes or no? Which means basis for conclusion para, above conclusion para. Emphasis of matter para will be below conclusion para. Be careful. Whereas in audit report, in audit report, in audit report, we have key audit matter, emphasis, other matter, MURGC, other information. These 5 paras will be there, right? Yes or no? What is the order of them? One suggested method is follow standard order. SAS order you follow. Suppose if MURGC is there, which one comes in all the standard? 570. So MURGC at first. Then key audit matter. Then 706 emphasis, other matter para. Then other information which is 720. This is best. But actually in 706, explanatory material, they have given a clarification. What? If auditor feels key audit matter is emphasis of matter is most important than key audit matter. If auditor feels emphasis of matter is important than key audit matter, then he can first put emphasis of matter, then put key audit matter. And if auditor feels other matter paragraph is not that important here, he can post it, he can keep it at last. You see, that's why SBI, you see Reliance audit report, other matter paragraph will come after management responsibilities. after auditor responsibility section. It won't even come immediately after key audit matter. It will come just above other reporting requirements. Just above reporting on legal and regulatory requirement is there, right? There it will appear, because these paragraphs can be shuffled depending upon the judgment of the auditor. But what is my best recommendation? MURGC if at all comes, key audit matter, EOM, OMP, OI, other information para. Then you give management responsibility, audit responsibility, immediately report on legal and regulatory requirement. This is best order. Are you clear? Whereas in a review, you can't have that flexibility because here the format is fixed. Okay, so first introduction, then management responsibility, then practitioner responsibility, then basis for modified conclusion para, then conclusion, then emphasis, then other matter para. What about going concern para? MURGC here. There is no such para. If at all Air India, same Air India we will take. They prepared financial statements. On that you are giving a review report. In the Air India financial statements, they presented material uncertainty related to going concern issue. You want to highlight that issue, you can highlight it under emphasis of matter para. That's it. Next, other matter para. What is other matter para? Yes or no? You want to communicate something relevant but not presented in financials. You will use which paragraph ma? Other matter para, which includes responsibilities of the auditor, review or practitioner report. You want to talk about review, you want to talk about review responsibility, you want to talk about review report, then use this. There we call it as audit responsibilities, audit report. Then report on other legal and regulatory requirement. Yes or no? Sometimes a practitioner may be asked to address additional reporting responsibilities in the report on financial beyond the requirement of SRE. Then all those responsibilities will be reported under report on other legal and regulatory requirement. Documentation. Okay, this documentation can be asked as a 5 marks question. Write about documentation under SRE 2400. Write about documentation under SRE 2400. So the documentation serves as an evidence that review is conducted as per SRE and legal and regulatory framework, and it is a record for practitioner report. So what is the proof that I did review as per the standard on review engagement? I did review as per the law and regulation. How can I prove people? Only through documentation. You might have seen in CA into documentation. Documentation serves as an evidence that audit is conducted as per standards on auditing, that audit is conducted in accordance with legal and regulatory requirement, and it's a basis for the auditor's opinion. Same. Yes or no? Now, what you should document? I will document nature, timing, extent of procedures performed, review procedures, so as to demonstrate I complied with SRE. Yes or no? And I will document who performed the work, when it was performed, who reviewed the work. Yes or no? What is the extent of review? I will document result of the procedures performed, what conclusions I draw, any significant matters that arose during the engagement. Yes or no? Further, I will document discussions with management, discussions with those charged with governance, discussions with others about significant matters. Further, I will document about inconsistencies I identified and how the inconsistencies were resolved by me. This also I will document. Over. What you will document? Nature, timing, extent of review procedures, including who performed the review, when it was performed, who reviewed it, what is the extent of review, what are the significant matters that you discussed with management, governance and others. Yes or no? If inconsistencies are identified, those inconsistencies you should document and how you addressed it. Over. Clear? That's it. 2400 predominantly over. Now if you complete 2400, 2410 is nothing. It takes very lesser time because 2410 once again will have same answer, same discussion. Now beginning still not over. 2400 is almost over. Still it is there. Just a minute. Yeah, look at. Now in exam they might ask you like, what are the considerations? What are the considerations in forming the conclusion? Similar concept is there in 700 also. What are the considerations in audit? So you need to consider whether effect of uncorrected misstatements on financial statements. Effect of uncorrected misstatements on financial statements. This is a requirement as per 450 in audit. Okay, you need to consider the effect of the uncorrected misstatements which are already communicated to management but they didn't correct it yet. Okay, and what is its impact on the financial statements? You should consider before you form the opinion. 2. you should also consider whether evidence is obtained, sufficient appropriate evidence is obtained. Second one. Third one, some aspects. One is qualitative aspects of entities accounting practices. One is what? Qualitative aspects of entities accounting practices, where if any possible management bias is there or not, that you should consider. So after considering qualitative aspects, after considering whether uncorrected misstatements affect, including uncorrected misstatements related to prior period, both you will consider. And you consider uncorrected misstatements impact on the financials, you consider qualitative aspects of the entities accounting practices, then you will form the conclusion. That's it. Here only 2 points were given, but actually in EQC 700 they have discussed so many factors. What are the factors the auditor should consider while forming an opinion? What are the factors to be considered while forming an opinion? In 700 intro it will be there. 1, whether sufficient and appropriate audit evidence obtained. 2, what impact of uncorrected misstatements on financial statements as per 450. 3, evaluations of what? 3 evaluations. 1, evaluations about specific evaluations about financial statements. 2, qualitative aspects of entities accounting practices, evaluations in case of fair presentation framework. So there are 3 evaluations that we need to consider. So here also, what are the additional evaluations in case of fair presentation framework? Simple. If at all is the fair presentation framework is used, what is overall presentation structure and content? Whether financial statements including notes, are they representing underlying transactions and gives true and fair view or not? So whether the financial statements including notes, are they exactly describing underlying transaction in fair manner? How the overall presentation, how the structure, how the content? These are the 2 additional considerations that we should take into account when the financials are prepared as per fair presentation framework. Remember, across the world, by default, general purpose financial information is prepared using fair presentation frameworks only, not compliance frameworks. Generally, compliance frameworks will be there in special purpose financial statements. Compliance frameworks are used where? Special purpose financial statements. There, you don't prepare financials as per general purpose needs. You prepare as per requirement of a specific user. Able to understand? That's a special purpose financials. For example, Zomato restated financials I showed. You see there, they won't use the word true and fair at all. In the conclusion para, opinion para, they won't use the word true and fair. Why? Because it was prepared as per compliance framework. SEBI gave the format of restated financials, rules for restated financials. You have to prepare financials as per SEBI restated financial statements guidelines, exactly as per the guidelines. Whether are these guidelines resulting in true and fair or not, you don't have to worry. So you just blindly prepare financials as per the guidelines, done. The guideline says depreciation method is so and so, SLM only. Sir, SLM is not suitable for my company at all. It doesn't matter. Prepare as per the guidelines. So if you prepare as per the guidelines, you did prepare financials as per in compliance with the framework. That's called compliance framework. So where compliance framework is a framework where you prepare financials exactly as per the requirement of the framework without any deviation. In a fair presentation framework, explicitly framework itself permits to deviate. Explicitly the framework itself will have a provision. If at all my framework does not suitable for you, then you follow some other which is suitable for you and explain reasons for that in the financial statements. If this kind of permission is there in the framework, then that's a fair presentation framework. Able to understand? That's it. Then yeah, now there is one more. Written representations. Written representations. We all know written representation is not an audit evidence. Okay, another 10 minutes we'll conclude this, and then 15 minutes we'll conclude this and then take a break. Okay, yeah. So we all know written representation is not an audit evidence. That's not sufficient appropriate evidence. Written representation is a written promise by management. That is something you should take at the last of the audit procedures. In case of review procedures. Yes or no? It is never the primary source of evidence. In a review, primary source of evidence is from what? Inquiry, analytical procedure. So you get evidence from inquiry and from analytical. You try to analyze, you try to get the data from the company, you form some conclusion. To that, as a supportive evidence, as a corroborative evidence, you take representation. Able to understand? Representation will never be a sufficient appropriate evidence. It can never be a main source of evidence. It is only corroborative in nature. So you request written representation, rather oral representation. Why you are asking written promises? Because management will consider them more rigorously. Array, they're asking in writing means I should only give correct facts. If they ask orally, I give randomly whatever I feel that moment. If I ask in writing, they will consider my request rigorously. Next, so what are the responsibilities? By the way, representation will contain what? Written representation contain statement of the management regarding fulfilling their responsibilities. What are management responsibilities? Preparing financial statements as per applicable framework, providing all the information to the auditor, ensuring all the transactions are recorded. Yes or no? So these are all management responsibilities. Further, representations on additional matters, a 4 marks question can come. Management must provide a specific representation on additional matters, like management must provide, or auditor must request the management to provide representation on related party transactions, fraud or suspected fraud, non-compliances with laws, going concern assumption, subsequent events, non-monetary transactions. Able to understand any 5 points? Any 5 points? Management should give written representation that the assessment related to going concern is properly disclosed to the auditor. Management must give a representation that all the related parties identified and the transactions with them were disclosed to the auditor and disclosed in financial statements. Management must give a representation that non-compliances with laws and allegations of non-compliances with laws and regulations was disclosed to the auditor, disclosed in the financials. Management should give a representation that non-monetary transactions or transactions where consideration is not involved, the list of those transactions were disclosed to the auditor. Management should give representation about significant subsequent events that might affect the financial statements. Management should give various representations. Able to understand? That's it. Over. Clear? So what is, in exam they can ask you, what is written representation? For what additional matters the auditor can ask a written representation? Like this they can ask you. Clear? Next, subsequent event. Procedure related to subsequent. In audit we generally have a separate standard, whereas in review we don't have that flexibility. So within the review standard itself everything is discussed. For representation we have 580 standard, whereas for procedure related subsequent we have a 560 standard in case of audit. But you see, review, everything is part of single standard. Understood? Now, procedures related to subsequent. Obviously, if practitioner identifies events, which require adjustment or disclosure in financials, then you will ask management to rectify. Yes or no? Now, generally, you don't have to perform any procedures after review report date. Basically, you don't have any duty. Once you give a review report date, you don't have any duty to perform. But after you give review report, later you identified a fact. When this fact happened? Before review report date. This issue happened before review report date, but that issue was not adjusted in the financial statements, and that information you got to know after review report date. Then what you have to do? Discuss with the management. See whether financial statements require amendment. If so, how management is going to address it. Suppose if management is refusing to amend the financial statements and you already provided the report, tell them, sir, financial statements contains material misstatement, whereas I gave an unqualified conclusion in the review report. Now I got to know that the material misstatement is there and I already gave you the report. Don't distribute it. Give back my report. Notify the management and TCWG not to issue financials to third parties until amendments are made. Suppose if management issued financials without amendments, you should take appropriate action. What action? Resign. What you do? Resign. You generally resign. If management did not care your request and directly issued the financials which contain material misstatement, and whereas you gave unqualified conclusion on that, and that is unfair from the management side, you have a weapon, resign. Are you clear? That's it. So in exam they can ask you procedures for subsequent event under 2400. They can ask you like this. Next. Now, in one of the exam, why inquiry, why analytical procedures are performed? This question was asked as a 5 marks question in November 24 or May 24 or May 25. Somewhere it was asked. Why inquiry and why analytical are performed? First of all, tell me what we do in a review. We review, we perform We perform inquiry. We perform analytical procedure. What we perform in inquiry? Important. Inquiry, what we perform? 5 marks question. What we perform? We inquire. Inquiry includes seeking information from management and relevant person within the entity. So what are the inquiries includes? We inquire about estimates, related parties, significant complex transaction, suspected fraud, subsequent events, going concern assessment, events casting doubt, contingencies. You inquire about non-compliances with laws and regulations. Yes or no? The same. Whatever you inquire, further only you will take written representation, basically. Additional matters on which you take representation. So for what matters you take representation? For frauds, for non-compliances, yes or no? For related party transactions, for subsequent events, the same. Understood? Sometimes you also inquire non-financial information. Example, what are the decisions taken at the meetings? What are the communications that the company received from regulatories? What are the matters arising? Yes or no? Any other matters arising? Now, in inquiry, the most important thing is evaluating response. They might give you some data. Will you directly take the data and document it? Don't you read the data? Don't you analyze the data? Evaluating response to the inquiry is integral process. And you need to evaluate the response and see whether additional inquiry has to be made or not. Are you clear? Then analytical. What is analytical procedure? What is analytical procedure? Simple. They gave me P&L account. Okay. I'm reviewing the current year financial number. I'm checking, comparing with the last year number. And I found operating expense of the company have 5 times increased. But when I see the turnover, it is only 20% increased. Last year 100 crore turnover, current year 120 crore turnover. But you see operating expenses, last year it was 5 crore, this year it was 25 crore. Unusually high. Business has been increased only by 20%, whereas this is increased by 500%. Why? I went inside the operational, that operation expenses breakup I asked. Audit fee last year, this year similar. Then professional fee that year this is similar. Legal fee that year this is similar. Printing and stationery similar. All this is similar. I found one head, repairs and maintenance. I saw what I found. Last year it was 1 crore. Some 70 lakhs it is there. Right now it was 20 crore is there. Why 20 crore repair? I asked management breakup for the repair. I opened the ledger. April, May, June, July, August, September, month wise I saw. In 1 month, let us assume in November month, there is 18 crore debit. 18 crore worth of repair in just 1 month. I opened and saw it was a spare part purchase. It was a spare part purchase which meets recognition criteria as per PP. But the accountant of the company has charged to P&L. Because of this, the P&L performance, position, everything distorted. Now tell me, how did I find this? By analyzing the numbers. By analyzing, by comparing, trend analysis I did. Last year, how much is the operating expense? This year, how much is the expense? I found something unusual. This is what analytical procedure consists of. Analytical procedure means analysis of relationships between one financial item with another financial item, non-financial item with financial item, and then identifying fluctuations, deviations, differences with expected values and investigating them to identify a material misstatement in the financial statements. Are you clear? So that's the purpose of analytical procedure. Now look at why inquiry. Through inquiry only you will see. How do you know management intention? Only through inquiry. How do you know all the related parties are there? First of all, who are all related parties of the entity? You try your level best. You can only find few. Only when you ask management, you will get the full list. What are all books of accounts they are maintaining? You go to the finance team, you go to the accounts team, you just try to take all the books, documents, everything. Management has to confirm whether are they complete or not. Without management explicit confirmation, you can't understand that. So for that reason, you need to inquire. Okay. So inquiry provides evidence about management intention. Yes or no? Professional skepticism is essential when you're evaluating management responses to identify possible misstatements. Inquiry will make you understand the entity and its environment, and it will help you to identify areas of material misstatement. Why analytical? What is analytical? Analytical processes will help you understand the entity and its environment and identify areas of potential misstatement. Just now I told you, only when I analyze the current year number with last year number, I found a potential misstatement area called repairs and maintenance. Yes or no? Analytical processes will help identify inconsistencies, identify variances through trends, values, norms. It provides supporting evidence for inquiry analytical, which is already performed. The analytical procedure may also act as a supporting procedure for the inquiry, for the analytical, which is already performed. It serves as an additional procedure if you are suspecting MMS. Various methods can be used, right from simple comparisons to a statistical analysis, where you will evaluate financial information to know whether it is consistent or not, and you will develop expectation based on source such as industry information. The company has increased plant capacity compared to last year. Naturally, I will expect what? Production to increase, sales to increase, but that does not happen. Why it was not happen? Why you increase the plant capacity then? So I have to look for whether any fraud is there or not. An analytical procedure is the only procedure in the entire audit that will make you identify fraud. That is the most important audit procedure. Most important audit procedure. Whether you do vouching, whether you do inspection, whether you do all that, leave it. Do analytical, you understand the frauds. You will find out the frauds. Funds flow analysis you do. Analytical processes in funds flow, how the funds are moving in the company, you will find lots of frauds. Clear? That's it. Next, finally, performing a review engagement after accepting. In exam they can ask you this as a 5 marks question. Anything they can ask. Remember, any part of the question, any part of the standard they can ask. Now, first, determine materiality, get an understanding of the entity, design and perform procedures through inquiry and analytical. Why you need to perform procedures through inquiry analytical? To gather sufficient appropriate evidence to form a conclusion. Procedures should be designed to meet objective of the review engagement. You may perform other procedure if effective evidence can be obtained. Sir, in a review, should I only perform inquiry analytical? Can't I perform inspection? Can't I perform external confirmation? You can, if you think they can give you a better evidence. Just because you are performing additional procedures, still the objective remains same. It's still limited assurance only. Just because you have obtained reasonable assurance, don't deviate from the nature of the engagement. You still have to give limited assurance. Performing other procedures does not change the objective of obtaining limited assurance. That's what the meaning. So just because you are performing other procedures, it won't change. By the way, inquiry analytical we will perform. If at all you are suspecting a material misstatement, what you will do? You will perform additional procedures. You will perform additional procedures. Additional procedures when the financial statements are materially misstated. If practitioner believes that the financial statements may be materially misstated, he must design and perform additional procedures. Why are you designing? Why are you performing additional? To conclude whether financials are materially misstated. Yes or no? To conclude whether they are not likely to cause a misstatement, or determine whether they are likely to cause a misstatement. What additional procedures you will perform? It depends upon circumstances and my judgment. Yes or no? Additional procedures includes what? These additional procedures includes what? Additional inquiry, additional analytical, with a greater detail, with focus on the affected item repairs and maintenance. Understood? Or some other procedure like test of details, external confirmation, that also I can perform. Tell me, when the auditor perform additional procedures in case of a review engagement, in 5 marks question they can ask. First of all, what are the basic procedures? Inquiry, analytical. Based on inquiry, based on analytical, you suspected financial statements might contain material misstatements. Then you will design and perform additional procedures to conclude whether financials are free from MMS or whether financials are not free from MMS. These additional procedures include inquiry, analytical, with greater detail, with focus on the affected items, or other procedures such as test of details, external confirmation. Now look at, for example, in exam they'll ask you, when additional procedure performed, give with an example. This entirely is an example only. Now for example, here auditor reviewed trade receivables. He analytically reviewed trade receivable where large amount of overdue payment is found. What auditor has to do? This raises doubts that financial statements might be incorrect. Auditor is feeling provision for bad and doubtful debt is not sufficient. So the reviewer will ask the management, are there any uncollectible receivables? I will inquire first. Management says, no sir, everything is proper only. No, I will analyze. Here, when I perform additional procedure, the possible outcomes would be what? I performed additional, first point. That's it, no issues found. Second, I found a material misstatement clearly. Third one, still uncertain. Even after inquiring management, even after analytical procedures are performed, still I'm not getting clarity. Then do Extra procedure. What happens next? If additional procedure resolve the issue, either conclude 1 or 2. Yeah, there are no issues, or conclude yes, there is a misstatement. Suppose if the issue is still unclear, the reviewer must continue performing additional procedure. Suppose if a clear conclusion cannot be reached, even after performing additional procedures and all, if a clear conclusion cannot be reached, you cannot provide unmodified conclusion. You better use the word conclusion. You cannot provide unmodified conclusion. Even after doing additional inquiry, even after doing additional procedure, you're still suspecting something is wrong, then don't give unmodified conclusion. Here some limitation is there on evidence. Even after you're performing additional work, you're unable to conclude means somewhere evidence is not getting, you're not getting evidence. We will call it as limitation. Are you clear? So this example you should write. So when additional procedure we perform when auditor is suspecting financials are materially misstated. How much extent we perform depends on circumstance and professional judgment. What are the additional procedures? What are the additional procedures? Examples. These are the additional procedures. Example of an additional procedure if a given circumstance, trade receivable circumstance, example this one. By performing additional, what you should conclude? Yeah, there are no issues, or financials are clearly misstated. If you are unable to conclude, what you should do? You should still perform additional. Even after performing additional, if the picture is still remain unclear, don't issue unmodified conclusion. Over. Easy or not? Next, very lengthy standard. 2400 is a very lengthy standard because it covers so many issues. Next, finally, you need to agree to the terms. Yes or no? You need to agree to the terms. First of all, compliance with ethical requirements. Every ethical requirement is compulsory, including independence, because it's an assurance engagement. Since it's an assurance engagement, independence is by default important. Independence requirement is not required. Independence requirement is not required in case of related services. It's not mandatory, because in related service it's a non-assurance engagement. In a non-assurance engagement, you have to be competent, you have to be with integrity, all this is there. But independence is not important. But if client decides independence is required, then that is client wish. But in assurance engagement, independence of mind is utmost important. In case of statutory assurance engagement, not only independence of mind, independence in appearance is also required. Able to understand? Next step. So, what are the factors affecting acceptance and continuation of client relationship? Now, the same will be asked in a different way. Under what circumstances a practitioner should not accept a review engagement? Under what circumstances a practitioner should not accept review? There is no rationale. So just because a client is calling you, sir, you need to come and do review of financials, you don't directly jump into it and then start doing it. You need to ask, sir, why review? Suppose if a client is asking audit, why audit? I should ask. I should know what is the purpose of him behind asking me for an audit or review. I should know the rationale. Yes or no? Suppose the client is wanting to submit an audit report to its holding company. Clearly the holding company mail also he showed me. I clearly understood it's a reasonable assurance engagement. But client is now asking me for a limited assurance engagement. Sir, I will tell them, sir, here review is not appropriate. Audit engagement is required. So you should not accept a review. One, if you are not satisfied that there is a rational purpose, or if law regulation requires an audit, then that time review is not appropriate. Or further, if the practitioner believes review engagement is not suitable in the given circumstance, he may recommend another type of engagement, either audit or compilation. Remember, client may not be aware of the legal terminology like review means what, audit means what. He don't know. He will just Google it. Oh, review. Then he'll come and ask you review. So just because a client is asking, sir, can you review my financials once? Maybe in client point of view, review means verify. Not review as per 2400. So you should always ask the client what is the necessity of the engagement. This point is always required in every type of engagement. 800 series, you see, acceptability. You should check this. You need to check the necessity. Is the engagement correct or not in the given circumstance? So you need to look for it. Even the same point is there in 210 standard in audit. Further, you should not accept review if you are not complying with ethical requirement. You should not accept the review if you know very well the client is not giving you proper information. If at all you have a doubts about integrity of the management, don't accept review. Or if there is a limitation on the scope, don't accept the review. Under what circumstances you will not accept the review? No rationale, no review engagement is not appropriate, you are unable to comply with ethical requirements, information is not available, management imposing limitations, you have doubts about integrity of the management. That's it. Clear? Now, so indirectly, what are the preconditions? What are the preconditions for accepting review? In one of the exam, they have asked it as a 5 marks question. So 5 marks question. What are the preconditions? The preconditions are, you should determine the prepared financials, no? Are they as per acceptable framework? And in case of special purpose, understand who are the users. And management should agree their responsibilities. Only when they agree and acknowledge their responsibilities, I will accept the review engagement. Responsibilities of management are what? Preparing financials as per framework, ensuring internal controls are effective, providing information to the practitioner. Yes or no? And if practitioner is not satisfied with the preconditions, he must discuss with management and resolve it. If still you are not able to resolve, don't accept. Okay. Now, if issues cannot be resolved, he must not accept the engagement. And if at all preconditions do not present after acceptance, for example, you accepted and now preconditions do not present, you decide, discuss the issue, decide whether issue can be resolved, decide whether to continue with the engagement or even continuing the client relationship, or withdraw from the engagement or withdraw from client relationship. You should decide. If preconditions does not present after accepting, discuss, try to resolve. If unable to resolve, withdraw. That's it. Over. 2400 is over. Then agreeing on terms, there's a very simple point, they're not a big deal. Clear everyone? Most of the standard I covered. Now 2410 will become dead easy. 2410 will be dead easy, nothing, because in 2410 most of the principles we covered. In 2410 it is just very few points. Going concern point MURGC I told you, that is there in 2410 only. Clear? That's it. We'll take a break, get back, we'll finish 2410, then we'll go to the next chapter, specialized areas. Clear? Let's begin 2410. 2400, if you observe, review of financial statements, review of historical financial statements. Okay. 2410, review of interim financial information by independent auditor of the entity. Remember, every time when you're writing standard, number, heading has to be complete. Number and heading, both you need to write. Okay. Now, so here, this particular standard is applicable only when the review engagement is performed by independent auditor of the entity. Whereas if a review engagement is performed by not an auditor but an independent practitioner, then 2400 standard is applicable. If you look at 2400 standard, it does not specifically talk about annual financials or interim financials or nothing. So that 2400 standard can be applied for any financial statements. 2410 specifically talking about interim financial information because that was the necessity that time. Okay, because interim financial reporting is mandatory for listed companies. From 2021 onwards, even for unlisted companies, it is becoming mandatory because of 129A. There is a section in Companies Act 129A which is not yet operative. So right now it is not yet operative. So very soon guidelines will be released. So interim financial reporting might be important for even for unlisted companies also. So specifically the standard was drafted from listed entities point of view. And if at all you are doing a review engagement for a listed entity being an auditor, then also you can apply this standard, not an issue. Okay, though the standard is constructed for interim financial information, but inside the standard the content is nothing specific to interim. They simply mention financial information, that's it. So the principle of this standard can be used even for annual financial information reviewed by independent auditor of the entity. That's it. So the concept of review, everything is same. So what is the objective? Objective is what? Conclude whether anything from the review suggests that interim financials is not prepared in accordance with applicable financial reporting framework. Simple. You have to get a conclusion. You have to form a conclusion whether anything that suggests interim financials not prepared as per applicable framework. So this is different from audit, obviously. And in review, we do not give opinion. Yes or no, whether financials are true and fair or not. And the review does not provide reasonable assurance. A review just involves inquiries and also applying analytical procedures and other review procedures if at all required. Correct? Huh? That's it. Now agreeing to the terms of the engagement. What you need to agree here? Here agreeing to the terms is mandatory. I mean important, a 5 marks question. So you have accepted a position of auditor in the entity. This company is subject to LODR regulations. And accordingly, this company has to prepare interim financials which has to be reviewed by independent auditor. For reviewing these financial information, the company approached you only again for review. So establish terms of engagement. What are the terms that you need to agree? Simple. Nature of the engagement, objective and scope, what are management responsibilities, what are auditor responsibilities, what is the level of assurance required, what is the expected form and content of the report. These are the terms of engagement which are similar to 210 standard. Yes or no? Exact same, nothing different. Now when you are doing interim financial information audit, how to do the interim financial information review? First of all, first understand the entity. Yes or no? And if the auditor has audited annual financial statements, yes or no, they generally have an understanding of the entity. You don't have to do separately anything to get understanding. But if you did audit of last year, you did audit of prior years, now you are doing review where you already have understanding of the entity. You just have to update your understanding right now, because you already have an understanding of the entity. Right now what you need to do, just update the understanding. Now this update the understanding, a 5 marks question can come. So write about updating understanding of the entity, a 5 marks question can come. Okay, look at. So the auditor uses various procedures to update their understanding. So generally auditor uses various procedures to update understanding. Like how do the auditor update their understanding? One, read the documentation from prior period audit, because you are the same auditor who already conducted audit of the entity prior years. You already understood about the entity. Now you just have to update the understanding. How to update the understanding? First read the prior period audit documentation to know what exactly the entity, and review most recent financial information, be it annual, be it interim. Consider materiality relating to interim. Remember, for interim financial information, the materiality level will be lower compared to annual financial information. Again, for group audit, the materiality will be different. The materiality that is decided based on standalone financial statements is different from the materiality level for consolidated financials. Again, the materiality for interim financial information will be different from annual financial statement. Correct? Then evaluate continuing issues which are identified in previous audits and which have not yet resolved, which are continuing. Example, weaknesses in internal control. Inquire with management about risk that interim financials might be materially misstated due to fraud. Inquire with management about fraud risk factors that are newly present in this year. And inquire management about any changes in entity business activity. Inquire with management about changes in internal control. Inquire management about how interim was prepared and how reliable the underlying records. Assess risk including management overriding of controls from prior period. Okay, so if at all you identified some overriding controls, you identified management overriding controls as on in prior period audit, inquire whether still that is prevailing here or not. Getting it? These are all you need to inquire or you need to analyze to update the understanding about the entity and its environment. This itself can be asked as a 5 marks question. Are you clear? Next, suppose you have not audited annual financials, then you should obtain understanding of the entity for both annual financial statements point of view separately and interim financials point of view separately. Then and in interim, what procedures you perform? You perform basically review procedures. What are the review procedures? Inquiry, analytical, and any other procedure. A review usually does not require, in a review you generally don't have to perform inspection, observation, all that. It mainly involves inquiring and analytical procedure instead of corroborating significant accounting matters. You don't have to obtain corroborative evidences, all that. You just have to inquire, you just have to analyze. If you suspect any fraud, if you suspect any error, nothing but if you suspect a material misstatement, you do additional inquiry, additional analytical procedure. If you know, if there is no suspicious things, if you did not find anything suspicious, you just proceed giving unmodified conclusion. Clear? Then, so what are the procedures to be performed? The auditor typically performs, this itself can be asked as what are the review procedures? 4 marks question they can ask. What are various review procedures to be performed? Simple. The auditor typically perform like the following: read minutes to identify matters that may affect interim financials. What is the impact of earlier modifications, audit modifications, earlier misstatements which are uncorrected? So prior year audit, there are some unresolved material misstatements. Prior period unresolved modified opinion, yes or no? What is its impact? Consider that. Then communicate with other auditors regarding significant components. Inquire with management about various matters, including, these are all sub points. Inquire management about various points. Yeah, up to this, up to S points are basically sub points. Okay, up to yeah, yes points. Okay, these are all sub points. So you need to inquire. You know what, in exam they can ask you only this point as a 5 marks question. As a part of review procedure, the auditor has to review, the auditor has to inquire management regarding various matters. Give examples of few matters which auditor will inquire. Yes or no? What are the matters you will inquire? You will inquire about whether new transactions which require new accounting principle. You inquire related party transaction. You inquire changes in commitments and contractual obligation. You inquire changes in contingent liability. You inquire whether company is complying with the debt covenants, nothing but terms and conditions of the debt, whether significant transactions occurred around the cutoff period, near the reporting date. Are there any significant transactions that occurred? If you inquire the management about knowledge of fraud, suspected fraud, allegations of fraud, you inquire about non-compliances with laws and regulations, you inquire about unusual transactions like business combinations and disposals, you inquire about whether there have been any changes in accounting principles, you inquire whether financial statements, interim financial information is prepared in accordance with applicable financial reporting framework. Any 5 points. Any 5 points. You just inquire. You can even write like this: inquire about knowledge of fraud, suspected fraud, allegations of fraud, whistleblower complaints received. Inquire about significant transactions that are entered near cutoff period. Inquire about unusual accounting adjustments that happened during the year. Inquire about business combinations, yes or no, disposals, segments, all that. You inquire about subsequent events. Inquire about going concern assessment. You can inquire about written representations that you are asking for. You can write easily so many inquiries. 10 you write, any 5 will match. Okay, nothing difficult. Just read it once. 10 points you write in exam, any 5 will match definitely. And if any 5 points are matching, 5 marks you will get. Next. Then the next thing what auditor has to do in a review procedure, apply analytical procedure. So what are review procedures? What are review procedures to be performed means, first you should perform, first read the minutes. Consider last year, prior period audit modifications, all that. Communicate with other auditors regarding components, especially if at all the company has branches, all that. Then inquire with management about various matters. What matters you will inquire? So many they have given. Then apply analytical procedures to identify unusual relationship and read latest interim financial if anything suggests that it is not prepared as per applicable framework. Now look at some of these procedures can be performed before or during preparation of interim. Yes or no? Like this procedure, when should I perform this procedure? When I should perform inquiry? When I should perform inquiry? You can perform it before they prepare the interim financials, or even during the preparation time, or even after the preparation time. Next, performing some processes early will help you to identify accounting matters earlier. Auditor may perform procedures concurrently with the review of interim for efficiency. Like generally, you know, you're an auditor, you're also liable to give review, right? You don't do any review procedures separately in reality. We do audit, and the same procedures we use it for review. Understand? And a review usually does not require confirmation of litigations and claim with external legal counsel, lawyers, but a direct communication may be necessary if auditor feels interim financial information is incorrect. The auditor may reconcile interim financial information with accounting records. So what auditor typically do? He will read the latest interim financials, latest annual financials. He will identify unresolved audit modifications, unresolved misstatements. He will inquire management so and so. He will apply analytical procedure. He will read the interim. He will review whether any confirmation with lawyers is required or not, and he will reconcile whether interim financial information is matching with accounting records or not. He will perform some procedures early, or maybe during, or sometimes audit procedures will also be performed concurrently with review procedures. That's it. Easy. Next, you should also review, you should also inquire sometimes about subsequent events and going concern. Yes or no? What you need to, the auditor should inquire whether management identified events that may require adjustment, that may require disclosure. Yes or no? The auditor should inquire whether management has done assessment of going concern. If any events, if any conditions that suggest about going concern, auditor should ask management plans and see whether the going concern issue is adequately disclosed or not. If material adjustment is questioned, the auditor should make additional inquiries to resolve the issue. And in interim financials, you need to evaluate misstatements identified. This is what in our audit 450 standard. Yeah, 450 standard is what? Evaluation of misstatements identified in audit. 450 standard. But that standard we apply for audit. Here you identify some mistakes, no? Generally here in interim financial information review, when you are performing procedures, you might identify misstatements. You need to identify nature of the misstatement, cause of the misstatement. Look at, the auditor should assess whether the misstatements which are uncorrected, first of all, are they material to interim financials? First of all, assess whether they are material. Any misstatements, even including inadequate disclosures, they must be assessed, to decide whether they are material. Do they require material adjustment to interim? The auditor should apply professional judgment to evaluate materiality of uncorrected misstatements for the entity, if at all materiality is not fixed. Okay, so if at all materiality is not fixed for overall financial, for interim financials you should fix a separate materiality and evaluate the misstatements you identified which are uncorrected, by comparing with the materiality levels. That's it. Then get representations. You need to get representations for what? You need to get an acknowledgement that management is responsible for designing and implementing internal controls. You need to get a representation that management confirms that interim financials are prepared in accordance with applicable framework. Sometimes, you might have identified misstatements. You communicated misstatements to management. They said, sir, they're immaterial, sir. Okay, fine. Get a representation that uncorrected misstatements are immaterial. So management, get a representation that management believes the uncorrected misstatements identified are immaterial. And what are the misstatements that you communicated where management said they are immaterial? A summary of those misstatements, attach it to the representation. Okay, then a representation that management should give a representation that they disclosed to the auditor all the frauds or suspected fraud. Management should give a representation about risk assessment result is disclosed to the auditor. Management should give representation about disclosure of known, actual, possible non-compliances with laws and regulations with auditor. And management has to give a representation that they disclosed impact of significant events that occurred after balance sheet date, which may require adjustment, which may require disclosure in interim financial information. So what representations you should get? One, in this any 5 points, which are easy points are uncorrected misstatements are immaterial. Disclosure of fraud, representation about disclosure of risk of MMS, representation about non-compliances with laws and regulations, representation about subsequent event. These are the main representations basically. So the auditor as a part of review of interim financial information should obtain written representation from management. One, that management believes the impact of uncorrected misstatements are either individually or in aggregate or immaterial on the interim financial information. Two, management should give a representation that all the frauds identified by them, suspected frauds, allegations of frauds, were disclosed to the auditor. Management should give representation that the non-compliances with laws and regulations, allegations of non-compliances were disclosed to the auditor, were disclosed in interim financial information. Management should give representation that subsequent events which require adjustment, which require disclosure, were disclosed, were adjusted. Like that, they need to give a representation. And management should give a representation about disclosure of entity's risk assessment process and its result to the auditor. That's it. Clear? These are the representations we should get. Similar representations we get in audit. Clear? Next. Now, what about accompanying information? What is accompanying information? Nothing but other information. Same. What we saw in 720. The same. You need to identify whether there is a material. If a material inconsistency is found, you need to check whether the inconsistency resulted in MMS in other information or is it resulted in MMS in financial statement. So if you find a material inconsistency, the auditor has to decide whether to amend interim financial information or amend other information. When we amend interim financial information based on inconsistency, we found that it's a material misstatement in financial information. Then we ask management to amend it. If they do not amend the interim financial information, then we will give a modified conclusion. Yes or no? Suppose interim financial is free from MMS. The inconsistency leads to misstatement of other information only. Then we will ask management to rectify. If they do not rectify, in the review report, other information I'll put some heading and there I will mention that other information is wrong. Clear? So MMS in interim. If amendment is needed in interim financial and management refuses, then we will consider what is its impact in review report. MMS is in other information. if at all amendment is needed in other information and management refuses, then we will put additional paragraph in review report and we will mention that particular mistake in the other information. Suppose generally, if wherever management disagree with you, you always look for withdrawal. You always look for possibility of withdrawal, yes or no? Because when management started refusing, that questions integrity of the management. Until you find something severe, you feel like management is cooperative. Only when you find a severe lapse and you communicate them, how are they responding? That will show how integrity, what level of integrity they are with. That's why whenever there is a doubts about representation, doubts about external confirmation, when management disagree, everywhere you see management integrity will be questioned. Withdrawal concept comes into picture. Next. Then sometimes other information will be there which may not be related to interim financial information. The auditor may identify some misstatement of fact in information unrelated to financial matters. For example, BRSR report, business responsibility sustainability report. Let us assume company is giving annual financials. On that review report you are giving, and this financial statements are included in a document which contains BRSR report. BRSR report contains, it's a non-financial information. In that, some facts they reported wrongly. For example, in BRSR, principle number 6, environment related essential indicators were there. What are essential indicators for environment? Energy consumed how much, water consumed how much, all that, renewable sources how much, non-renewable sources how much, like that they need to give some factual disclosure. Okay, there they did misstatement. There's some mistake is there. Now what is the auditor responsibility regarding this? Okay, MMS in other information not related to interim financials, there is a mistake we found which is in fact misstatement in facts we found. Okay, first of all, there is no inconsistency between that and financials because that's not a financial at all. Okay, now the auditor will discuss the issue with management, yes or no, and assess validity of the misstatement, validity of the information, potentially involving a third party consultation. I will consult a third party, or I will look from the point of view of third party whether is that require correction or not. When discussing apparent misstatement, the auditor will consider whether differences in judgment or opinion and may suggest management to consult a third party. If management refuses to correct a misstatement of fact, then the auditor will consider notifying top management and seeking legal advice. Generally 99% they won't ask this because he won't understand it also. Okay, so if at all he understood this point, then he might test it for 4 marks. Write about material misstatement in fact not related to interim financial information. What auditor has to respond here? If at all the paper has to be really tough, this is one topic they can test. Understood? Because this is something which we don't focus on, which we are not attentive at. Next, communication of matters to management. Generally in audit, we have a standard called 260 for communication. So here there is no separate standard, so it is part of 2410. Yes or no? So what you need to communicate? So if material adjustment is needed in interim financial information, nothing but when adjustment is needed in interim financial information, when I found a material misstatement, to make sure it is error free, financial statements require adjustment, financial statements require modification. If management does not modify, I will modify my conclusion. If they modified and make sure it is clear, then I will give unmodified conclusion. Remember that modified, unmodified, that wordings? Yes. So if material adjustment is needed in interim financials, the auditor shall immediately inform to appropriate level of management. If management does not respond, then you should inform to those charged with governance. The auditor will communicate matters either orally or in writing. The choice depends upon nature of the matter, sensitivity of the matter, significance of the matter, and when are you communicating? Documenting oral matters. All the oral matters that you communicated, please document. What you should document? What you communicated, with whom you communicated, when you communicated, what response you received from them. Generally, these are the 4 points that we document when the matters are communicated orally. This point which I told right now is there in 260 standard. Okay, next, suppose top management is also not responding. The TCWG also does not respond. I communicated them so that they will resolve it. Now I understood that they themselves are involved in that. Yes or no? Now what will I do? I will modify the review report, or I will either withdraw from engagement or withdraw from, I will resign from the appointment itself. Further, if auditor believes a fraud is existing or a non-compliance existing, please communicate the matter to appropriate level of management. So, and C, consider collusion involved. consider involvement of management in a fraud, and all the governance matter, please communicate to those charged with governance. Communicate any other matter which auditor identifies matters that are important for those charged with governance for overseeing financial reporting process or disclosure process. So what are the matters you communicate? This itself can be asked as a 5 marks question. Write about communication of matters to management and those charged with governance in a review of interim financial in interim financial reporting. So when you will communicate, first of all, if material adjustment is needed in the interim financial information so that it is true and fair view, then the matter will be communicated to management. If management is not responding, you will communicate the matter to those charged with governance. You know what? Sometimes an MCQ will be there. In the MCQ, in the case study, they will give information like those charged with governance is involved as a part of management. Okay, TCWG themselves were involved in managing the affairs. Now they will give you the further case study where they will say management is not responding in reasonable time. MCQ, option A, communicate to those charged with governance. Option B, modify the review report. For example, option A, generally if management is not responding, what you should do? You should communicate it to those charged with governance. But in the given case, management and those charged with governance are one and same. Since they are one and same, why you will once again communicate? You will have to consider impact on review report. Able to understand? So that's how a question can be asked. So next, review report. What are the contents? How a review report has to be prepared? Same introductory para, a management responsibility, auditor responsibility, then conclusion para, then date of the review report, place, signature, firm registration number, UDIN number. Now here, date. What should be the date of review report? Date of review report should not be earlier. Should not be earlier than the date on which the interim financial information is approved. On which date interim financials are approved? At least that date or later date should be the review report date. Correct? What is date of audit report in audit? Date of audit report in audit should not be earlier than the date on which financial statements are approved by management. The date on which sufficient and appropriate audit evidence is obtained. The date of obtaining written representations that you needed. Only after obtaining all this, you can date the audit report. Can written representation be obtained after date of audit report? Can written representation be obtained after review report date? No. Representation is also an evidence. I know it's not sufficient and appropriate evidence, but it is an evidence. It is a corroborative evidence. So written representation, that's why you see written representation must be obtained as practicable as near to date of audit report, but not later. Why but not later? It's an evidence. Without evidence, how do you sign the report? So first get the evidence. So date of audit report should not be earlier than the date of evidences that you obtain. Date of audit report shall not be earlier than the date on which financial statements are approved. Only when I know this balance sheet, this P&L is what going to public. On that balance sheet, on that P&L only I should give audit report. Am I right or not? So when I have to give an audit report on the balance sheet and P&L which will be sent to the public, my audit report date should be after the approval date of the financial statements. Either on the date or after the date. Are you clear? Next. Now tell me, when will you give modified conclusion? You will express a qualified adverse conclusion if a material adjustment is needed. You see here in this entire standard, they don't say material misstatement and interim. They always indirectly say if interim financial information require material adjustment. And if management is refusing to do that, and you will give what? Modified conclusion. So when the financial statements require material adjustment, indirectly what does it mean? Financial statements are containing material misstatements. To make it free from MMS, it has to be adjusted. So that's how the wordings have been used. The auditor should express a qualified or adverse conclusion if they believe a material adjustment is needed for interim so as to comply with applicable framework. If the interim financial information is materially affected by a departure from framework and management does not correct it, then the auditor will modify the review report. Simple. If interim financial require material adjustment because it is not prepared as per applicable framework, it is departed and management refuses to correct it, then I will give modified report. Yes or no? That's it. What is the manner of modification? We know it. Basis for conclusion para. You should describe the nature of departure, And what is its effect? Nothing but quantification if possible, practicable. Yes or no? If necessary, omitted information must be given. Yes or no? The auditor modifies the review report and include the omitted information if practicable. Again, if at all you are modifying the review report because the interim financial information were omitting important disclosure. So when a non-disclosure is there, that's a material misstatement. When there is a material misstatement, you have to modify the review report. And when you are modifying, you should generally tell what is the nature of information omitted. And if practicable, include the omitted information. And the modification is generally done by adding an explanatory para to the review report and qualifying the conclusion. What is the explanatory para in a review report? Basis for conclusion para. Where it will be placed? Above the conclusion para. Are you clear? Next. If departure is material and pervasive, the auditor should express an adverse conclusion. Correct? Suppose limitation on scope. Okay, again a 5 marks question. Limitation on scope. A limitation on scope prevents the auditor from completing the review. If review cannot be completed, please communicate in writing reasons to management and those charged with governance and consider impact of that issue on the report. Now, generally, if at all limitation on scope is imposed by management, if at all you are aware of the limitation prior to accepting the engagement, don't accept. Suppose if the limitation after accepting the engagement, request management for removal. If management is refusing, you cannot complete the review, communicate the reasons in writing and withdraw. Okay. Material, if auditor believes material adjustment is needed, please communicate this matter. The auditor consider any legal requirements in this regard whether to issue a report or not. If required, auditor disclaims a conclusion. For example, management is imposing limitation and the limitation is so that you can't give a conclusion at all. You have to disclaim the conclusion. Generally, you withdraw. Generally, what you do? Withdraw. And when you are withdrawing, consider legal requirements. Suppose, as per the law, LODR regulations, withdrawal is not permitted before giving a report. Then, if you have to compulsorily require, you are required to give a report, then please disclaim the conclusion and explain why the review cannot be completed. That's it. Going concern and significant. This was asked once for 5 marks question. Now look at the point here. If auditor identifies a material uncertainty about entity's ability to continue as a going concern during the review, further, guess what? The company disclosed that material uncertainty. They disclosed in interim financials. Then auditor will modify the report. Remember, he is not modifying the conclusion. He is modifying the report with emphasis of matter paragraph. This is something different from audit. In audit, if you identify material uncertainty related to going concern, and if financial statements are adequately disclosing that material uncertainties clearly without any bias, they're clearly disclosing, you will give unqualified opinion on that and you highlight that matter under MURGC section of the audit report. That amendment was there in 2018-19 onwards in 570. So for that reason, MURGC paragraph comes in the audit report. Corresponding amendment they have not made in review standard. You see, 2400 standard was brought in 2011 somewhere. Then after it was not changed. Whereas audit report 700 series, you see, it was there in 2018. It was issued in 2000. That's why you see SA 700 within bracket revised. SA 705 revised. Why you see the word revised? SA 570 revised. SA 299 revised. SA 800, 805, 810 revised. So SA 800 is different. SA 800 revised is different. SA 570 is different. SA 570 revised is different. Understood? Next. So if auditor identifies material uncertainty about going concern, this question was once asked directly for 5 marks question. Okay, so you know, if an MCQ comes, you need to be very careful. So material uncertainty related to going concern in a review engagement, whether it is financial statements or interim, it doesn't matter. You will highlight that uncertainty in which para? Emphasis of matter para. Yes or no? The auditor will also add an emphasis. The auditor may have added an emphasis of matter para prior audit or prior review report to highlight an MURGC issue. If the uncertainty still exists, and is adequately disclosed in the current year review of financial information, the auditor adds an EOMP in the current report to highlight continued material uncertainty. If material uncertainty is not adequately disclosed, or a material uncertainty is there and you are not disclosing, you are misleading people, then I will modify the conclusion. Yes or no? Then I will express a qualified or adverse conclusion. Are you clear? That's it. So this is important. A 5 marks question can come, easy or not. Then other considerations, it's okay, not an issue. That's it. With this, review is done. Predominant topic of review we have successfully completed. Clear, all of you? That's it. Then we'll begin 800 series. By the way, again I'm telling you, solve question bank. Question bank is most important thing. Whether you read this GOAT notes or not, even I don't bother. Question bank is most important. Any subject, especially for audit, question bank is most important. And my question bank, whatever is there, comprehensively we cover all unique questions. 400 plus unique questions were there, and if you solve that question bank descriptive part, I'm telling you, no matter how hard it will be, you can answer it. Okay, and that question bank plus coming MTPs, MTP1, MTP2 of May attempt will be the rate, or September attempt, whatever the attempt you're writing, that also you add it. Okay, so let's begin the 8th chapter, specialized areas, where we have 3 standards: 800, 805, 810. Okay, in that first I will discuss 805 directly. Now, what is 805 heading? Audit of single financial statement and specific element or account or item of financial statements. Audit of a single financial statement and specific element, item or account of the financial statement. What is a specific element audit? Trade receivables audit, for example. A company requested you to do an audit of just trade receivables. They have some purpose. They want the creditors, before they give credit to this company, want to know how certain the collections are. Okay, so they want to know the company's collections mechanism. So how the company is giving credit, how are they collecting? For that, they requested company to prepare a schedule of trade receivable as per some guidelines. Okay, they have given certain guidelines. As per that, you prepare trade receivables and get that audited. Get that trade receivables schedule audited by a separate CA. Okay, and give us the audit report. This is a request from creditors, suppliers of the company. Only if at all they have a satisfactory answer there, then only the suppliers will extend credit facility to this company, which is very common in big industries. Okay, so sometimes we do vendor audit. Okay, I mean, that's again, vendor audit is a different procedure, but this example you can take up. Or a bank, they might appoint one auditor exclusively to do audit of your current assets, because they want to give an OD, they want to give a cash credit to you, so they want an audit report exclusively on the current assets. Now that's a specific element audit. Then single financial statement audit, audit of cash flow statement, audit of P&L account, audit of only balance sheet. These are all what? Single financial statement audit. Okay, so audit of single financial statement and specific element, item, account of the financial statements. 805 standard is dealing with this. Now this single financial statement, specific element, item or account, okay, it might have been prepared. This financial information might be prepared using a general purpose framework or a special purpose framework. Suppose if the single financial statement or specific element is prepared using special purpose framework, then 800 standard also applicable. The guidelines given under 800 standard is also applicable. 800 standard, audit of financial statements which is prepared in accordance with special purpose framework. Audit of financial information prepared in accordance with special purpose framework. Okay, that time 800 standard is applicable. If at all there is no special purpose framework involved, then 800 will not come into picture. 805, audit of single financial statement or specific element. How to audit? If it is a general purpose framework, then 800 will not apply. If it is special purpose framework, 800 also is applicable. Are you clear? This is what exactly the standard is dealing with. Now what is a single financial? A single financial statement is something which is different from complete set of the financial statement. Now in 805, these are the terms which is basically used. Single financial statement, a specific element. Single financial statement and specific element. In my book, I just used them as SFSE. Single financial statement and element. You have to write in exam full form always. Specific element, item, account of the financials, you should write full form always. Okay, so, and CSFS, complete set of financial statements. Complete set means what? Balance sheet, P&L, cash flow, statement of changes in equity, and notes to accounts. By the way, when I say single financial statement, related notes is always included. When I say specific element, related notes is always included. Remember, notes is not a separate item. It's an extension to all this. Notes contains what? Explanatory information. So notes to accounts is like a working note. Working note is part of your main answer, just like that. So notes to account is not an item, not a type of financial statement. Understood? Notes to account is an extension to everything. So even when I say single financial statement or when I say specific element, does it include notes to account? That question itself is wrong. Obviously it includes. Yes or no? So notes to account is like a working note, correct? So whether you call it a single financial statement or specific element, notes to account is something which is common. Now look at the definition. Further, what is a, now look at here. The single financial statement, a single financial statement or specific element includes related notes, which consist of accounting policy information, which consist of explanatory information. Now, suppose if a client is requesting you to do audit of single financial statement or specific element, what points I should consider while deciding to accept this or not? This is like a preconditions. This is like what? Preconditions. Considerations while accepting audit of single financial statement. The first thing I will look at is, if at all I have not audited complete set, I have to be very careful. You know, I'm not the auditor of the complete set financial statements. I'm only auditing single financial statement or specific element which they're requesting. Okay, now then if at all you're not the main auditor of the company, you should determine whether single financial statement or element, can you do audit of that as per standards on auditing? Remember, there's an audit engagement, which means all standards on auditing will apply. Going concern will apply. For example, suppose the company is asking you to do audit of reserves and surplus. They're asking you to audit reserves and surplus and then give an opinion whether they're true and fair or not. Reserves and surplus includes profit. Yes or no? Profit includes, profit is decided by P&L account. Or company is asking you to give opinion on true and fairness of fixed assets. In this fixed assets, impairment is there, revaluation is there, depreciation is there, and this fixed asset is prepared on historical cost basis. A company can use historical cost basis only when the going concern is certain. And so if a company is asking me to just give a report on fixed assets, I have to indirectly check going concern also. When do the fixed assets are true and fair? Only when going concern assumption is fair. Only when the company is permitted to use going concern assumption, then only they are permitted to use fixed assets on historical cost basis. Am I right? If at all company going concern is missing, they can't show fixed asset under historical cost. They have to show it under NRV. Am I right or not? Realizable value. So sometimes, even though I am auditing only specific element, even though I am only auditing single financial statement, sometimes the work I have to do is disproportionate to the element which I am auditing. Okay, because I have to comply with all auditing standards. Remember, when I'm doing audit of single financials or specific element, it doesn't matter. Wherever relevant auditing standards are there, all the auditing standards I should apply. Suppose if a company is asking me to do trade receivable audit, I need to comply with 550 related parties. Because trade receivables might include related party transactions. If related party transaction is there, fraud risk factor I should check. And if I have to check fraud risk factor, 240 standard I should comply. If I have to comply with 240, I need to comply with 315. Risk assessment I need to do. So when a company is asking me to do an element audit or single financial statement audit, is it practicable for me or not? I should check first. Is it practicable for me to comply with all standards on auditing? That's what. Whether complying with all standards on auditing is practicable. Remember, you need to comply with ethical requirements, including independence, and you should also comply with all auditing standards. Yes or no? And especially if you are not engaged to audit complete set of the financial statements, you generally lack understanding of the entity. You don't know about general quality of accounting records, general quality of evidence that you obtain. You don't have any information. Yes or no? You're directly auditing. Company might think our trade receivables, no, auditor will just finish audit in 2 days and then give report. Client might expect like that. So you should tell the client, sir, even though it is trade receivable audit, which is influenced by revenue recognition, which is influenced by fraud risk factor, which is influenced by risk assessment involved in the entity, which is also influenced by going concern, there are so many issues involved, I might require 10 days. Then the management will reply, sir, our full financial statements audit itself is completed in 25 days. Why are you asking 10 days? When one item I'm asking you, it's not about one or two items. It's about the complication involved around that item. Able to understand? So some standards may require audit work disproportionate to the element being audited. For example, you want to audit accounts receivable. Sometimes 570 may be impracticable to comply. Yes or no? I mean, if audit of SFS is impracticable, the auditor will discuss with management whether some other type of engagement is required or not. So, if at all single financial statement and element audit is not practicable in the given scenario, I will tell management, sir, auditing reserves and surplus is not possible, because reserves and surplus is influenced by P&L. P&L account is influenced by overall going concern. Going concern is influenced by risk assessment. So it is better you appoint me as an auditor rather than an audit of complete set financials I'll audit. So there is no point. It's just a matter of extra 2 days. So again, doing audit of fixed assets may require disproportionate effort. Able to understand? So these are the considerations. What considerations? Simple. You need to ensure all standards. You need to comply with ethical requirements. You need to check practicality of complying with relevant standards on auditing. You need to, especially you need to focus on all these points when you are not auditing complete set. And sometimes audit work might be disproportionate to the element being audited. That time auditor will request for an alternative engagement. That's it. Clear? So these are the considerations which itself can be asked as a 5 marks question. Important question. Clear all of you? Further, one more element that I should focus is, remember in this particular topic, there is one more important thing, reporting. Reporting is very different here. In 805, the reporting logics are completely different. Okay, fine. So, acceptability of financial reporting framework. Now, the single financial statement or specific element is prepared using some framework. No? What framework they have used? I need to check it out. If it is a general purpose framework, by default it is acceptable. But if they use a special purpose framework, the moment it comes into picture, user, I need to look at user requirement. What are the requirements of the user? What framework the company is following? Whether the framework followed by the company for preparing the single financial statement or specific element, is it matching the requirement of the user? I need to check it out. If it is matching the requirement of the user, then that framework is acceptable for me also. If at all you prepare single financial statement and specific element not as per the creditor's request, but you prepared using some other rules, that information itself becomes useless for the creditor, then my audit also becomes useless. Yes or no? So the SCA 210 standard require the auditor to determine acceptability of financial reporting framework. That too, in case of single financial statement and specific element audit, you must assess whether applicable framework enables disclosure to help users understand the information conveyed. Whether, yes or no, the auditor must assess what is the effect of material transactions and events on the information conveyed. A single financial statement may follow a framework which is established by authorized standard setting organization. The auditor will check whether framework will include all the requirements for adequate disclosure in presentation. When do I say single financial statement, specific element are having adequate disclosure? When it is disclosing the information that is necessary for the intended user. If intended user is satisfied with this information according to me, then I conclude that the single financial statement or specific element is giving adequate disclosure. So see, in 800, 805, 810, it's always the user who will decide. Because these are not general purpose frameworks. Basically, single financial statement is never a requirement in general purpose framework. In general purpose framework, the requirement is what? Complete set of the financial statement. Might be a single financial statement, specific element might be prepared using a general purpose framework, but that doesn't mean they become general purpose financial statements. General purpose financial statements by default mean complete set of the financial statement. They are not single financial statement or specific element. That's not a general purpose financial statements. Are you clear? Next, planning and performing. I'll come back to it. By the way, you see 800, 805. It gives guidance on accepting the engagement, planning and performing the engagement, reporting. So what is 805 scope? What is the scope of 805? You can see. What is the objective? The auditor's objective when applying standards on auditing in single financial statement is as below. You know, this standard gives guidance on accepting, planning and performing, forming an opinion and reporting on financial statements. But here, instead of using the word financial statements, we use the word single financial statement, specific element or account or item of a financial statement. Are you clear? 800 also, you see, scope of the standard, the same three. The standard deals with accepting the engagement, planning and performing the engagement, and then forming and reporting on the single financial statement. There it is, special purpose financial statements. That's it. Hello. Yes. Now let's focus on reporting part. Once 5 marks question has been asked on that. This 8th point is there right here. This was also asked as a 5 marks question once. I'll come back to it. Yeah. Forming of an opinion and reporting considerations. Forming of an opinion and reporting considerations. You know, generally, when the company is preparing a single financial statement and specific element, we have to give audit report on that financial statements. We will give an audit report. Basically, the single financial statement and specific element which they prepared, my audit report which I'm going to give, they will be restricted for circulation only between the intended users. Okay, they are restricted for circulation. Basically, they are restricted for distribution, they are restricted for usage. Sometimes no, restriction will not be there on distribution, but usage is always restricted. A single financial statement or specific element is to be used only by the specific user at whose instance we prepare this information. Yes or no? So this single financial statement or specific element is prepared by management at the request of a specific user. So usage is always restricted. Sometimes distribution is also restricted. Even when the distribution is not restricted, companies will not distribute it publicly. That's why you will not find single financial statement and specific element which are prepared in any company, because these are confidential documents. Basically, the report of auditor given on this is also restricted for distribution, restricted for usage. Now, how do you tell people that it is restricted for usage, restricted for distribution? In the audit report itself, at the end of the audit report, you will put a heading called restriction on use and distribution. Able to understand? So you will clearly mention that this single financial statement or specific element is prepared at the request of so and so parties. Fine. Now once I will show you that 805, I will show you once 805. Just a minute. Yeah, this is an audit report on single financial statement or a specific element. Look at this. You see again here the format of audit report is exactly like 700. Understood? Earlier, before amendment, it was different. Just like a review report format, it will be there. So first opinion and basis for opinion. By the way, simple, the word opinion means which opinion they have given? Unqualified opinion. And here also MURGC para came, because this is an audit engagement, all the auditing standards apply, which means 570 is also equally applicable. Then we give management responsibility, then we talk about auditor responsibility, then finally report on other legal and regulatory requirement. Now here we need to mention restriction on distribution and usage also. Generally restriction on distribution will be there. Wait, yeah, distribution or use of audit report is not restricted. Okay, so, and if you observe, in the previous one you did not find emphasis of matter, but now you are finding emphasis of matter in this illustration. When the financials are prepared using special purpose framework, when the financial statement is prepared using special purpose, it may be complete set or it may be single financial statement as referred under 805, or a specific element as referred under 805, where that single financial statement and element is prepared using special purpose framework. In the notes to accounts, they clearly mention what is the framework they followed. You should highlight it. Okay. In 800, 805, generally, if special purpose framework is used, by default we use emphasis of matter para to highlight basis of accounting. This paragraph is also called as alert paragraph. In 800, they name this as what? Alert paragraph. Okay. Then Since restriction on distribution is not there, that para will not come. Okay, I will show you. Third one is the restriction. Yeah, distribution of audit report is restricted. Okay, now look at that para will come here. Array, where is it? Okay, here itself they mentioned it. Here itself they mentioned it. One, emphasis. They mentioned about what is the basis for accounting, because now they are preparing here financial statements as per special purpose framework, and they are also mentioning about restriction on distribution. Now this emphasis of matter para can sometimes comes below practitioner responsibility also. Able to understand? Can sometimes come under below practitioner responsibility. So we draw attention to note number 10. The schedule is prepared to assist requirements of regulatory. If at all you are preparing financial statements as per requirement of a regulatory, that's a special purpose framework. So when it's a special purpose framework, you need to emphasize what framework you have used. And this schedule may not be suitable for another purpose. Our report is purely for the company and the regulated DF, and not to be distributed to parties other than the company and DF, and our opinion is not modified. So similar presentation, correct? Okay, when we are discussing 800, I will show you even restriction on usage and restriction on distribution, how it will be presented. Okay, we have a concept on that, restriction on usage and restriction on distribution. 4 or 5 marks question can come on that. Okay, now are you clear until now? Now if you see, only 3 illustrations were given on single financial statement. That's not an issue, no problem. So elements of audit report we saw, correct? Suppose you are appointed to do audit of single financial statement and specific element, and complete set of the financial statements were also audited by you or some other auditor. Okay, let us assume you only audited. Okay, convenience sake, you are giving audit report, a separate audit report on single financial statement and specific element, and you have given audit report on complete set. Whereas the single financial statement and specific element, the user is restricted. It is given for a specific user. Complete set financial statements are public documents. And you know what? In the complete set financial statements, I gave a modified report. What do you mean by a modified report? One, opinion is modified, or we included MERGC para, or emphasis of matter, other matter para, or MMS in other information. Am I right? Look at, if the audit report on complete set, includes a modified opinion, emphasis of matter para, other matter para, material uncertainty related going concern, or material misstatement of other information which is not corrected. Uncorrected means what? MMS is there in other information. Now when other information material misstatement is there in the audit report, in other information section we would have mentioned that, no? So when you are mentioning all that, nothing but your audit report is modified. Your audit report on complete set is modified. So on the complete set, the audit report given is modified, which contains either modified opinion or emphasis or MERGC or other matter para or other information which contains material misstatement. Now I am giving single financial statement. Here on the single financial statement or specific element, I want to give an unmodified opinion. Is it permitted or not? That is the question. Okay, is this permitted or not? Now look at what is the modified opinion that is there. What kind of modified opinion is there? Again, modified opinions are 2 types: qualified opinion, adverse opinion, disclaimer of opinion. Correct? Suppose there is a qualified opinion, or emphasis of matter is there, or material uncertainty para is there, or other information material misstatement para is there. Complete set is public document, audit report is public document. Now but this fellow is asking single financial statement and my audit report, I am giving to him this audit report, but I want to alert him, hello, look, complete set is there. When you are taking decision, you will not take decision only based on this, I know. You should also take decision based on complete set financial statements also. I should alert him. Yes or no? I will mention in the audit report on single financial statement, the audit report which I given 805, right? In that audit report, whatever modifications that were there in main audit report, all the modifications I will copy paste here. I will not modify my opinion on the single financials. Remember, I'm not modifying it, but I'm emphasizing. I am emphasizing whatever modifications that were there in the audit report on complete set financial statements. Now here one question is, see, if it is a qualified opinion or emphasis of matter para, MERGC para, if that is the case, single financial statement. See, single financial statement is generally taken from complete set. Specific element data is also completely taken from, single financial statement is taken from complete set. Specific element is also taken from complete set. So the single financial statement or specific element is basically derived from complete set. On the complete set, auditor gave a modified opinion, auditor gave an emphasis of matter para, auditor gave material uncertainty related highlight, and he gave other information MMS, which according to me, I must alert the reader of single financial statement. I should alert the reader of specific element. What I should alert him? Look, don't take decision based on my audit report only. Also look at audit report which contains modified opinion. So this fact I need to highlight. Where I will highlight, the auditor shall consider implications that these matters may have on audit of single financial statement or specific element and the report that you are going to give thereon. What do we mention? Opinion section is there, right? We will extend the opinion section. First we give opinion on single financial statement and we will extend the opinion section by mentioning. Further, we draw your attention to complete set financial statements related audit report. In that, the auditor has expressed modified opinion, and the reasons for the modified opinion, basis for modified opinion section will be there, right? That reasons I will draft it as it is. I will copy and paste it. Emphasis I will copy and paste it. Other matter I'll copy and paste it. MERGC I'll copy and paste it here. Even though the modification, even though the emphasis, other matter, MERGC may not be related to the specific element I am auditing, may not be related to single financial statement I am auditing, then why are you drawing? Because he should not take decision just based on single financial statement, based on just my audit report. He should not take. I don't know whether he's going through that or not. I'm not aware of. My duty, I will alert him. This is rule number 1. Second, audit report on complete set financial statements contains modified opinion. And you know which modified opinion? Adverse opinion. What it contains? Adverse opinion. The complete set financial statements are not true and fair. The audit report on complete set says they're not true and fair. Now, I am prepared. Now, the company is asking me to do an audit of a single financial statement and specific element. In this, can I give an unqualified opinion is the question. Can I give an unqualified opinion is the question. Do you understand my question here? Sir, I want to audit single financial statement, specific element. Before I accept the audit or before I proceed with audit or maybe at the end of the audit, I concluded this single financial statement is true and fair. And this specific element is true and fair. I want to give an unmodified opinion. Then 805 says, look at one's complete set financial statements related audit report. Does it contain adverse opinion or disclaimer of opinion? If so, you don't give unqualified opinion on single financial statement and specific element generally. This is general restriction. But if at all, look at, there is an adverse opinion or disclaimer of opinion on complete set, but you want to give unmodified opinion on specific element, yes or no? Then when auditor expresses adverse opinion or disclaims of opinion on entities, complete set, I mean this point to look at, that above point I'll come back to it. Okay, this point you said, when auditor expresses adverse opinion or disclaims or opinion on entity complete set, but he considered it appropriate to express an unmodified opinion on specific element. Look at the word is only specific element. I'm not using the word single financial statement here. Okay, specific element audit I'm doing. I felt it is true and fair. I wanted to give unmodified opinion, but look at complete set financial statements. It contains adverse opinion as a whole. Can I give unmodified opinion on a specific element where this element is taken from complete set financial statements on which auditor gave adverse opinion? Now here I want to give an unmodified opinion. You can do it only if the following 3 conditions are satisfied. Only allowed if it is not prohibited by law or regulation, and the unmodified opinion is expressed in audit report, no? Yes or no? That is not published together with audit report which is containing adverse opinion or disclaimer, and the specific element, most important, does not constitute major portion of the entity's complete set financial statements. If these three conditions are satisfied on the specific element, I can give unmodified opinion only when these three conditions are satisfied. One, there is no prohibition in law or regulation, and audit report on the other complete set, no, complete set audit report is there, right? Now I am giving audit report with unmodified opinion, right? Published. They should not be published together. 3, the specific element which I am auditing and reporting unmodified opinion, this is not a major item there. This is not a major item. Major means what? Pervasive. You can simply call it as pervasive. It is not pervasive element there. Then you can do. And if you see this point, if you see in 705 itself, this point is there, which I specifically did not touch it so that I can touch it now. Okay. In the book 705, one point also I told. You know, emphasis of matter para is prohibited when you are giving adverse opinion or disclaimer of opinion. Both. I'm telling you a statement, okay? I'm not asking a question. Yeah. So, emphasis of matter paragraph is prohibited when the auditor is giving adverse opinion as well as disclaimer of opinion. This statement you will not explicitly find in 705. Rather, what 705 says, you know, in the same audit report where you expressed an adverse opinion or disclaimer of opinion, unmodified opinion on a single financial statement or specific element shall not be included in the same report. In other words, you see, revised 705 does not allow the auditor to include unmodified opinion on single financial statement or specific element in the same audit report, because it would contradict the adverse opinion or disclaimer of opinion that you expressed on CSFS. Sir, I said complete set financial statements are not true and fair. In the same audit report, again I'm putting a heading, emphasis of matter paragraph, draw attention to note number 40. On that I don't have any objection. A groom family inquiring the bride, the bride family is inquiring the groom. Okay, that they asked the neighbor, how is this groom? Worst guy. Don't even look at it. And they're okay, fine, got the feedback, thank you sir, they're leaving. I called them, come, daily morning we'll go to temple. Are you trying to tell me not to choose him for the marriage, or are you trying to tell his good qualities again? Does it contradicting with each other? Am I right or not? Yes or no? Can I watch that movie? Don't even watch, waste 200 rupees. But in that one comedian did nice comedy. What are you trying to tell? Do I have to watch it or do I have to not watch it? Able to understand? So, what do you mean by adverse opinion or disclaimer of opinion? I don't have opinion at all. Disclaimer. I don't have opinion because I don't know anything inside that. Or adverse means they're not true and fair. Don't depend on this. Don't invest in this company. That's what indirectly. Again, if I emphasize one point and say that is true and fair, on that I don't have objection. Would it be contradicting with your own opinion or not? So they never said emphasis of matter paragraph should not be used in adverse. They didn't say directly. But emphasis of matter paragraph is what? We draw attention to so and so note point. At the end, our opinion on the above matter is not modified. Indirectly, on the matter that I am highlighting, I am giving unmodified opinion. Am I right? So this emphasis of matter paragraph usage is prohibited when you have expressed adverse opinion or disclaimer of opinion in the auditor's report. So technically what we know, key audit matter is prohibited when in case of disclaimer of opinion we know. But emphasis of matter paragraph is prohibited in case when you are giving adverse opinion on the financials or disclaimer. Emphasis of matter paragraph is prohibited. This point they didn't say. But indirectly what they mentioned, unmodified opinion on a specific element or single financial statement is not permitted in the audit report which contains adverse opinion or disclaimer of opinion on the complete set. If you are giving adverse opinion or disclaimer on the complete set on that specific element, don't again give emphasis, unmodified. How do we give unmodified opinion on a specific element in the same audit report? Through emphasis of matter paragraph generally. Am I right? Emphasis of matter paragraph, we draw to a contingent liability. Contingent liability, specific element. We draw attention to, trade receivable. It's a specific element. We draw attention to cash flow statement. It's a single financial statement. So when you draw attention to a specific element or single financial statement and you're mentioning my opinion is, I don't have objection on that. Above you said everything is not true and fair. Below you're saying I don't have objection on that. Contradicting or not? In a same audit report, which means in a same engagement, giving adverse opinion on complete set and unmodified opinion on specific element is not permitted. What if specific element audit is a different engagement where I'm giving a different audit report? Can I give a now unmodified opinion on the specific element? Yes. 3 conditions. This audit report, that audit report, published, not published together. And giving this unmodified opinion is not prohibited in law. This specific element is not a major item. Okay, fine. What about single financial statement audit now? With respect to specific element, I understood now. What about single financial statement? Basically, complete set is not true and fair. Now I am doing cash flow statement audit. Actually, even if I see the main audit report, their adverse opinion was given because of material misstatement, non-consolidation of subsidiary. But guess what? But guess what? Cash flow statement is prepared consolidation. Including that subsidiary also, cash flow statement is prepared. Including the subsidiary, cash flow statement is prepared. But balance sheet and P&L, they ignore the subsidiary. So balance sheet and P&L not true and fair. But cash flow is true and fair. But generally when we are giving opinion on the financial statements, we don't give opinion on balance sheet, P&L, cash flow separately. We give opinion on the financial statements as a whole. We don't give opinion on the financial statements individually for every component of the financials. Yes or no? So if at all you are preparing separate audit report for single financial statement, main financial statements audit report contains adverse opinion. On the single financial statement, you should also give adverse opinion. Because by default, a single financial statement is assumed to be a major portion. By default, look at. For single financial statement, you should give adverse opinion or disclaimer of opinion only when there is an adverse opinion or disclaimer of opinion in complete set financial statements. Yes or no? You can give unmodified opinion on a specific element, whereas on a single financial statements, you must give adverse or disclaimer of opinion. You understood now the heading I used? Yes or no? That's it. So now look at, the auditor shall not express unmodified opinion on SFS even if it is not published together with adverse opinion or disclaimer report on completed, because SFS is by default considered to be a major portion. Here I even have added the word element if element is a major portion. That's it. Able to understand? Basically this point is dealing only with single financial statement. But if specific element is also major portion, you are not permitted to give unmodified opinion on that. That's it. 805 related major adjustment is this. Clear all of you? Sir, complete set contains unqualified opinion, emphasis, other matter, MURGC, all this. Or it contains a qualified opinion. What about this? Your opinion, whatever is there, you give that. But in the opinion para, also mention about complete set financial statements related modifications in the audit report that they made. Just draw attention to that also. Clear? This is a requirement under 800 also. In 800 also, when you are giving audit report, no, of the audit report you are giving on financial statements prepared as per special purpose framework. Okay, in that audit report, general purpose financial statements related modifications you will have to draw attention, because any user will not take decision isolatedly only based on special purpose framework, special purpose financials. They have to take into account general purpose financial statements also as a part of decision making. Correct? So for that reason, even though you are giving an audit report in a single financial statement on a specific element or on a special purpose financial statement, we still draw attention to modifications in the audit report which is given on complete set, nothing but general purpose financial statements. Understood? Hello? That's it. Next, then obviously, you know, the auditor may refer to material uncertainty related to going concern section in the audit report on CSFS in the audit report given on SFS. So if I'm giving audit report on SFS or specific element, in that audit report, can I refer about MURGC that is referred in audit report on complete set? Yes, you can refer. Yes or no? Then if single financial statement is presented with complete set, okay, ask the management. For example, if single financial statement and specific element is published along with complete set, make sure management is differentiating it. In the index also, they should clearly mention. Next, fine. Here, one important point. This is 7 and 8 put together, 5 marks question. You are the auditor appointed for complete set financial statements audit, and in that you gave some modifications. You included certain modifications, be it modified opinion, be it emphasis of matter, be it other matter para, be it MURGC, whatever. How do you consider that impact? How do you consider those implications in the audit of single financial statements? How do you consider that? Look at, the auditor must consider matters which are included in audit report on complete set financial statements. You have included certain matters in complete set, right? Consider those matters in the audit of single financial statement or specific element. Now there are so many matters which are included there, right? Whether will you consider them in the audit report on single financial statements, it's a matter of professional judgment. Now there are certain factors, nature of the matter in the audit report on complete set and how it relates to single financial statement or specific element. For example, I'm giving audit report on trade receivable. In the main audit report, there is a qualified opinion given by auditor on inventory valuation. How are they related? No, I may ignore it. Look at, so that is one, nature of the matter consider to know whether the matter included in audit report on complete set, whether the matter included in complete set financial statements audit report, is that relevant or not? How do you consider nature of the matter, pervasiveness of the matter, okay, the differences in the framework, and look at the period differences also. For what period the single financial is prepared, for what period complete set is prepared. If at all complete set is prepared for last year, single financial is prepared for current year, in that audit report what matters are there? Why it is relevant to me? Because they both are not related to same period. Yes or no? Time lapsed. Okay, look at, so pervasiveness, how pervasive the matters in the complete set report and what is their impact on the single financial statement. The nature and extent of differences between framework used. So suppose no single financial statement specific element is prepared using general purpose framework, complete set is also prepared using general purpose framework. If there is same framework is used, no problem. Yes or no? You can draw attention, no problem. If different frameworks are used, different objectives, you need to decide there. Then period, the difference in periods between CSFS and SFS. So CSFS is prepared for 24-25, SFS is prepared for 25-26. Period difference is there. So that also decides whether that has an impact or not. Okay. The time lapse since audit report on CSFS. This is what indirectly period difference continuation only. So when the audit report on CSFS is given, so the audit report on CSFS is given related to last year. So obviously audit report date is also last year. Sometimes what happens is that last year financial statements audit now we are doing. The complete set financial statements of last year, they're doing audit latest now. And the current year related SFS audit might be conducted in the current year only right now. So that time you might include it. Because prior period financial information is audited by auditor now. Getting it? Since audit report is both are near, audit of last year data is audited now, current year's SFS or specific element is audited now, you might feel it is relevant. Simple. In the audit report on complete set, it contains some matters. Okay, whether should I consider those matters and what is its impact on the single financial statement audit or not? Yes, you must consider. It's a matter of professional judgment. There are certain factors, nature of the matter, pervasiveness of the matter, period differences, time elapsed since last audit report, and what is the differences in the frameworks used for complete set, difference between the framework used with single financial statement. That's it. Understood? Next, suppose here they have given an example. If there is a qualification on trade receivable, it likely to impact audit of single financial or specific element relating to trade receivable. Suppose if there is a qualification on debt, for example debentures, in the complete set, that is least likely to impact, if at all, I am giving an audit report on accounts receivable. Okay, so whether the qualification that is mentioned in audit report on complete set financial, should I as it is copy paste in audit report on single financial statement? If it is impacting, then copy paste it. If it is not impacting, leave it. But best practice is what, you know, in the opinion para, while continuation we mentioned, please refer to auditor's report where it was given an unqualified opinion. We generally mention it in other matter paragraph. We generally mention it in what para? Other matter para. We mention in other matter paragraph, in the audit report on single financial statement, in the audit report on specific element, in the audit report on special purpose financial statements, we will put a heading other matter para, where we draw attention to audit report matter. Where we draw attention to Audit report. Which audit report here we are drawing attention to? Audit report on complete set financial statements. Clear? That's it. In one of the exam, in the previous exams, this question was tested. These two questions were tested for 5 marks. On the complete set financial statements, if adverse opinion is issued or disclaimer of opinion is issued, what are the reporting requirements of the auditor in respect of single financial statement and specific element? That's it. Clear? 805 is predominantly over. Even I spoke about acceptance of the engagement, all that. Now we need to understand planning and performing. What are the considerations in planning and performing? Remember, considerations for accepting is different. Considerations for planning and performing is different. Obviously, you should apply all standards and auditing that are applicable. You should communicate with those charged with governance. First of all, determine who are the appropriate person in governance. Sometimes those charged with governance for complete set could be different from those charged with governance for single financial statement. Generally, for complete set of financial statements, those charged with governance is audit committee. But here, single financial statements we are preparing at the interest of CEO. Yes or no? So here, those charged with governance might differ. Even for special purpose financials and general purpose financials, the framework, those charged with governance can be different. So when both CSFS and SFS are prepared by the entity, those responsible for preparation of SFS may differ from those responsible for preparing CSFS. Now, sir, I am already auditing CSFS along with SFS. Can I use evidence I obtained in CSFS audit for SFS? Absolutely, no problem. Yes or no? So, when auditing SFS or element alongside with entity CSFS, you can use evidence obtained from CSFS audit for the purpose of SFS. Simple. Understanding of the entity and its environment. Should I have to do a double understanding once again for SFS audit? No need. However, the auditor will still obtain sufficient and appropriate audit evidence for SFS that you are doing audit. Okay, next. Individual financials which comprise CSFS and many elements, they might be interrelated. So the audit of SFS element cannot be considered in isolation. Nothing but you need to perform audit procedures to address on interrelated. For example, a company is asking me to audit trade receivable. I should audit sales also. I cannot audit trade receivable because trade receivable is just an outcome. Sale is the input. Only when the sales are correctly accounted, trade receivable will be correctly accounted. Correct? So if at all I have to give a report on trade receivable, I should also audit sales. I should also audit inventory. For example, if a company is asking me to audit inventory, I should audit purchases and sales also, because inventory is a result of purchases and sales. That's it. And of course, you need to consider materiality on SFS and specific element, which may be lower than CSFS, because this will affect audit procedures and this will affect your evaluation about uncorrected misstatement. So the materiality that you decide for complete set of the financial statements is different from the materiality that is applicable for SFS, because this will affect your audit procedure, this will affect your evaluation of uncorrected misstatements. That's it. 805 over. Major portion, major part of the standard is over. Clear, all of you? So when can I accept it? Only if it is practicable for me to comply with all standards on auditing. If it is not practicable for me to comply with all standards on auditing, I will discuss with management whether some other suitable engagement is required or not. Acceptability, then planning and performing, then reporting. Only 3 parts in the standard. In the reporting, you have form of report, forming of opinion. Form of opinion, forming of opinion. Should I give opinion using fair presentation or compliance? That is form of opinion. Forming of opinion is format for, in the complete set financials, what report or what audit report is there, in that what matters are there, that and all over there. Okay, form of opinion is very tough and it's not that important also. Clear? That's it. With this, 805 is completed. Fine. 5 minutes. We'll immediately begin 810. Then we'll go to 800. Next one, 810 standard, engagements to report on summary financial statements. Engagements to report on summary financial statements. See, you can accept this engagement only when you have audited the main financial statements. In this standard, they use the word audited financial statements. In 805, it is referred as complete set of the financial statements, whereas in 810, we call it as audited financial statements. The company might prepare summary financial statements for various reasons. For a quicker discussion by the management of the holding company, For any reason, they might have prepared a summary financial statements, which is also called as condensed financial statement, also called as abridged financial statements. Okay, these are different names which are used in different jurisdictions. Okay, in India, we generally call them as summary financial statements. Sometimes public companies, government companies, they present in newspaper financial results. Okay, annual financial statements, no, they have to present it as a part of their custom, accepted custom. They present, certain government companies present financial statements as a part of newspaper. Full financial statements is like 150 pages. It's not possible. So these companies will present a summary financial statements as a part of public announcements, you know, all that. So for that reason, they prepare summary financials. When these summary financials are prepared, whether the summary financials are prepared properly or not, yes or no, in accordance with applied criteria, in accordance with applicable criteria, generally an some assurance report is required on this. So for that reason, the company generally approach their own auditor to give a separate report on summary financial statements, so that summary financials will become trustworthy. Okay, so that is the main objective behind the summary financial statements. So basically, summary financial statements are what exactly? They are the financial statements which are in a condensed version. Here they have given definition. What is a summary financial statements? They are nothing but historical financial information derived from audited financial statements, but with less detail. Still, they provide structured representation of assets and liabilities at a point in time or over a period of time. Different laws may use different terminology to describe such summary financial statement. Okay, some laws might use abridged, some laws might use condensed, anything. Clear? Now, can you accept this engagement? Yes, you can accept only when you have audited the complete set. Nothing but in the standard, they call it as audited financial statements. Okay, so you can accept an engagement to report on summary financial statements only when you are the auditor for audited financials, because without auditing the financial statements at first, you generally lack necessary knowledge to report on a summary. Next, you can prepare a fast track material only when the main material is prepared. Simple logic. Yes or no? So without even looking at main material or understanding the main material content, you can't prepare a fast track material, and you can't give your opinion on the fast track, whether the fast track material, the flowchart material, is it complete, is it reliable? How do you know it? You compare it with main booklet, main book, yes or no, main source. That's it. Now, what are the points you have to consider before accepting? Determine acceptability of criteria, agreement with management regarding the responsibility, agree with the management the form of opinion to be expressed by auditor on summary. Now, first we will focus on reporting. In summary financial statements, how I will report? You know what I will look into is summary financial statements. Are they consistent with audited financial statements? Are the summary financial statement consistent with audited financials? Okay, see, there is a difference. Inconsistent space, yes or no? Okay, summary financial statements are inconsistent with audited financial statements. That's how the wordings are used. Summary financial statements, they remove the space. Inconsistent with audited financials. So summary financials are consistent, means they are equal to, means they are matching. Summary financial statements might not be inconsistent with audited financials. If it is inconsistent on the summary financials, we directly give adverse opinion. Clear? Suppose summary financial statements are derived. Summary financial statements are fairly presenting the audited financial statements. They are a fair representation of audited financial statements. They are consistent with audited financial statements. Then what opinion you will give? You will not directly give unqualified opinion. You will not directly. It depends upon on the audited financials what opinion they gave. Okay, suppose on the audited financials, on audited financial statements, if an adverse opinion or disclaimer of opinion is given, or on audited financial statements either unqualified opinion or qualified opinion is given, okay, and you felt summary financial statement is consistent with audited financials, and on the audited financials the auditor has given, by the way, which auditor? Same auditor. You can, who can give a report on summary financials? The same auditor who gave a report on audited financials. The same person is permitted first of all. Other person is prohibited straight away. 810 standard prohibits. 810 standard will not apply. In case if some other person is auditing, some other person is reporting on summary financials. You see in the entire 810, they don't use the word audit of summary financials because we don't audit. We only report. What we audit there, what we verify in fact in summary financials, we verify whether the summary has been correctly derived or not. We verify whether the numbers have been correctly brought forwarded or not. That only we verify, correct? So suppose on the audited financials, unqualified or qualified opinion is given and summary financials are matching. Summary financials are a fair summary of audited financials. Then we give unqualified opinion on summary financial statement plus in the same opinion paragraph, will continue and copy and paste. Simple. What you do? You just copy and paste qualified opinion, emphasis of matter para, other matter para, MURGC issues, all that we just copy and paste from audit report on audited financial statements. Clear? So if there is an audit report on audited financial statements which contains qualified opinion, emphasis of matter, other matter para, MURGC, other information, if something is there, we just copy paste it in the audit report that you are giving on summary financial statements. Okay, fine. Once I will show you how that looks like. So 810 illustrations. Yeah. Look at this. How the audit report on summary financial statements looks like. First of all, report of independent auditor on summary financial statements. Opinion. So in our opinion, the summary financial statements are a fair summary of audited financial statements, again in accordance with accounting standards notified and accounting principles generally accepted in India. Now, what do you mean by summary financials? First, you should explain it. Summary financials do not contain all the disclosures required by accounting standards. Accordingly, reading summary financials is not a substitute for reading audited financials. Summary financials and audited financials do not reflect events occurred subsequent to the date of our audit report on audited financials. Tell me, what is the date of audit report on summary financials? Generally later than the date of audit report on audited financials. Subsequent event means what? Events occurring before date of audit report, but identified by the auditor after the date of audit report. Okay, like for example here in summary financials. Okay, I'll do one thing. Subsequent event I'll come back to little while later because we have a separate discussion. Let's not deviate from the opinion discussion because that is most important. Now look at this. So then you see, we need to give a reference about audited financial statements and our report thereon. We should also talk about audited financials. We expressed an unmodified opinion on audited financials, and that report includes MURGC section, yes or no, key audit matters, if emphasis is there, emphasis, if other matter is there, other matter, if qualified opinion is there, qualified opinion, all this, which means first we talk about opinion on summary financials. Then we talk about what is summary financials. We give certain disclaimers. Look, reading this is not a substitute for that. Like that, we give some alert points. Then 3, what are the audited financials? Okay, what are the audited financials and our report in the audited financials? So that also we are mentioning. Where to download this audited financials, everything will be mentioned in this. Then finally, who is responsible for summary financial statements? Management is responsible, correct? So that point we will mention. Then finally, what is auditor responsibility? Our responsibility is to express opinion whether summary financials are a fair summary of audited financial statements based on our audit. That's it. These are the contents of the report on summary financial statements. Suppose no, the auditor report on audited financials include an uncorrected misstatement of other information. Okay, and there is a misstatement in other information. We expressed an unmodified opinion. The auditor report on audited financials include a statement that describe uncorrected misstatement of other information, like management discussion and analysis. Simple. In the main audit report, any modification that you include, that modification information you should give here, so that the person who is reading the audit report on summary financials don't need to even read the audited financial statements and its report. If at all he missed to read that, he will get to know entire that information here. Next, The auditor's report on summary financials is dated. Okay, that's okay. I mean, this we can do it later. Here, summary financial statements are prepared based on management established criteria. So if it is management established criteria, we just have to mention that management is responsible for preparing summary financial statements as per so and so criteria. We just mention that. Then here, adverse opinion is expressed on audited financials of a non-corporate entity. It doesn't matter nature of entity. Fine. That only we need to discuss now. Yeah. I hope now you understood this part, correct? So if at all we are giving a report on summary financials, and there is already an audit report which is given on audited financials, which might contain a qualified opinion, emphasis of matter, other matter para, MERGC para, then in the summary financials related audit report you are giving, right, put a separate heading, the audited financial statements and report thereon, put a separate heading. There you mention what opinion you gave on the main audit report, and also mention MERGC, emphasis, other matter, other information, misstatements that are reported by you in the main audit report. Just mention it. Okay, I think it is not the opinion section continuation. You just copy paste in a separate section, audited financial statements and report thereon. Yes or no? So first opinion, then summary financial statements means what, then audited financials and report thereon, then management responsibility, then auditor responsibility. That's it. These are the contents of the report on summary financials. Suppose on the audited financials there is an adverse opinion or disclaimer of opinion is given, and from that audited financials only summary financials were exactly drawn. To what extent audited financial statements are materially misstated and pervasively misstated, to the same extent summary financials are also materially misstated. Able to understand? But when the main financial itself is not true and fair, is it advisable for the user to depend on summary financials? First of all, I will tell it is not appropriate for me. It is not right for me to give opinion on summary financials. Here I am not worried about is it matching or not matching. First of all, preparing summary financial statement itself is not correct here, because the main financial statement itself is wrong. When the source itself is unreliable, summary also unreliable, on the unreliable data you are asking me are they matching or not. So it is not appropriate for me to give an opinion on summary financial statements which are derived from audited financial statements on which auditor has already expressed an adverse or disclaimer of opinion. So when you are giving adverse or disclaimer of opinion on audited financials, we disclaim the opinion on summary financial statements. This is some slight deviation. Again, one more example. This you understood, right? Why are we disclaiming opinion on summary financials here? First of all, when do we disclaim our opinion on summary financials? We disclaim our opinion on summary financial statements when the auditor has expressed an adverse or disclaimer of opinion on audited financials. Even though the summary financial statements are consistent with audited financials, they are exactly correctly copy pasted. No changes they made. Whatever mistake is there, exact mistake is there here also. So no changes they made. Still, I will not give my opinion. Suppose no, if summary financials are not at all matching with audited, then that is not a summary at all. Yes or no? Then that's not a summary. So I'll give adverse opinion. Adverse opinion means what? That's not a summary. So it is not a fair summary. It is not consistent with audited financial statements. So that's what adverse opinion signifies. Understood? So clear everything on this? Now look at that. Reporting when summary financials are consistent. Reporting when summary financials are inconsistent. If it is inconsistent, no. Main audit report contains what? That and all, leave it. Straight away, if the summary financials are not consistent with AFS, the auditor will directly express adverse opinion. Suppose summary financial statements are consistent with audited financials, and moreover, in the audited financials, qualified opinion is given, like audit report on AFS is modified. There is a modified audit report is given. What do you mean by modified audit report? You're adding qualified opinion, EOM, OMP, MERGC, key audit matter, uncorrected material misstatement of other information. If at all audit report on the main financial statements contains a modified report like this, but not adverse opinion, but not disclaimer of opinion, and the summary financial statements are consistent, the summary financial statements are consistent with AFS, yes or no, as per applied criteria, then the auditor report on summary financial statement shall state that auditor report on AFS includes qualified opinion, EOMP, OMP, all that, and describe the basis for qualified opinion on audited financials and effect on the summary financials, the matters referred in EOM, OMP, all that, the uncorrected MMS, all this you have to describe. Where you will describe this? In the report on summary financial statements, you will put a separate heading, the audited financial statements and report thereon. Audited financial statements and our report thereon. You will put a heading like that. Below that, you refer about your opinion given on audited financials, MERGC that you have used, all that. Just now I showed in illustrations. Do you understand that? Suppose no, adverse opinion or disclaimer of opinion is given on audited financials. On the audited financials, the auditor gave an adverse opinion saying don't believe it. Then on the summary financials, state that it is inappropriate to express an opinion on summary financial statements. Don't directly say this. In fact, state auditor report on AFS contains adverse or disclaimer of opinion, so that describe the basis why you give adverse or disclaimer, describe the basis, and also mention that it is not advisable, it is not appropriate for us to give opinion on summary financial statements. On this also illustration is there in 8. Clear until now? Now one question. Suppose no, audited financial statements is there, on that we give a qualified opinion because a material misstatement is there in inventory. Inventory is materially misstated. Because of that, some 10 crore profit is overstated. Whereas when they are preparing summary financial statements, no, they rectified that mistake. They rectified the mistake. Now summary financials are free from material misstatement. Now which opinion you will give? Adverse opinion. I will give adverse opinion on summary financials. Sir, but summary financials are free from MMS. No, I am not worried about, I am not worried about whether summary financials are free from MMS or not. I am only worried about are they fair summary or not. Yes or no? Is summary financial statements matching with audited financials or not? Only that I will see. Yes or no? Audited financials contain mistake, then the same mistake should be there in summary, then only it's a summary. If at all it is not contained, if at all it rectified, if at all this is free from MMS, it is not free from MMS, then it is not a summary. It is not a true reflection. Sample should be representative of population. Hello? Yes or no? So even though the summary financial statements are free from MMS in this regard, but the audited financial statements contain material misstatement to that extent summary financials were rectified, this is not a fair summary, then I will give adverse opinion on summary. So what do you mean by adverse opinion on summary? Indirectly we are saying this is not a summary. It's not that don't trust summary financials. It's like this is not a summary. Unqualified opinion on summary financials means what? Yes, it's a fair summary. Suppose on audited financials adverse or disclaimer of opinion is given, then I will not give opinion on summary financial statements. This is the reporting requirement. Clear or not? What are the elements of summary financial statements related audit report? First, opinion, summary financial statements, audited financials and audit report thereon. That heading, correct? Then management responsibility, then auditor responsibility. Over. These are the 5 elements that are there in the report that you are giving on summary financial statements. Now look at that engagement report. You have that point, no? Elements. Yeah. What are the elements here? You see, title, addressee, correct? First you should tell about summary financials, then you should tell about audited financials, then you need to clearly express opinion, then you need to give a disclosure statement. What disclosure statement you should give? You should give a disclosure statement that summary financials lack full disclosure and it is not a substitute for audited financials. This disclosure statement you will include it as a part of summary financial statements point itself. Further, you will also mention a statement that the summary financials and audited financials both do not reflect subsequent events after audit report date, after audit report date on AFS. It does not reflect subsequent events that are arising after the date of audit report on audited financials. Now let's focus on subsequent event point. See, because these two only the main crux in the standard understanding. Rest all are easy. Rest all you can easily understand. So now look at the subsequent event. Financial statement closing date is 31st March 2026, balance sheet date. Management approved the financial statements on 10th June 2026. This is what? Management approval date. Approval date. Okay, management approval. Audit report date. What is the audit report date? I'm talking about audit report date on AFS. That is also 10th June 2026. The company prepared and approved summary financial statements on 10th July. And auditor also gave an audit report on summary financial statements which is approved by the management on 10th July. The audit report date on summary financial statement is also on 10th July 2026. Now, what do you mean by subsequent event? Events arising after the date of, subsequent event. What is a subsequent event cutoff date? For subsequent event, there is a cutoff date, no events occurring after reporting period, balance sheet date, but on or before date of approval of financial statements. Approval date means this date you will take or this date you will take. 10th June, you will take only 10th June. This is just for certification of summary financials. This date does not have any relevance with subsequent event, correct? So just because I say summary financial statements approval date is 10th July, does it mean events occurring from 31st March to 10th July require adjustments? No. First of all, summary financial statements are approved because people have to trust it. When people will trust it? Only when the management took responsibility. How management take responsibility? By authenticating it, by approving it. For that reason they approved it. Yes or no? Basically the summary financials are summary of main financials which are approved on 10th June. So subsequent events do not include, just because, you know what people might think, no, audit report dated on 10th July. So people might think up to 10th July any event happened, auditor would have considered. People might think like that. I should give a disclosure in the summary financial statements related audit report that look, subsequent events after the date of audit report on audited financial statements were not considered. Both the summary financial statements and audited financial statement does not include subsequent events that arise after the date of audit report on audited financial statements. So just because I'm giving a different date here, don't think that I considered events up to this particular date. You know what? Date of audit report signifies what? Date of audit report signifies, from 560 point of view, that auditor considered until the date of audit report. You know, you remember clause number 19 in CARO? On the date of audit report, you should check whether there is any material uncertainty with regard to liabilities existing on balance sheet date. Which audit report date there? Which audit report you consider there? Main auditor's report on the audited financials. So summary audit report, summary financials related audit report, summary financials related approval date are irrelevant for decision making. They are only for formalities. That is not relevant for decision making. For decision making about subsequent event, main audit report on financial statements and main approval date of the financial statements is only relevant. That's it. So look at that. So on this a separate point is there. Timing of work and events subsequent to date of audit report on audited financials. Look at, if the audit report on summary financials is dated later than the audit report on audited financials, generally that is what happens. First I will give audit report on audited financials. I don't even know company will prepare summary. Later they prepare summary and they're asking me to report. Okay, now I'll give a report. So obviously date of audit report on summary financials will be later than date of audit report on audited financials. It must state that summary financials and audited financials do not reflect the effect of subsequent event after the date of audit report on audited. If at all both the dates are same, this disclosure requirement does not apply. If the dates are different, in the summary financial statements audit report, you clearly mention that subsequent events does not include events occurring after the date of audit report on audited financials. Now, if auditor aware facts that existed at the date of audit report on AFS but previously unknown, you must not issue report on summary until you rectify them as per 560. For example, you gave audit report on 10th June, main audit report. Now, 25th June, you got to know about a subsequent event which was not adjusted in that. At the time, you are also checking summary financial statements, are they consistent or not? Don't give the report on summary financials until 560 procedure is done. Able to understand? If you do 560 procedure and audit report date is amended, if audit report date is amended, then again you have to check once again summary financials has to be rectified. Able to understand? Next, when audit report on summary financials after the financials, there is no, when the audit report on summary financial statements is after the audit report on audited financials, then there is no need to obtain additional evidence on AFS or report on subsequent events, as summary financials are basically derived from audited financial statements. Do I have to obtain specific evidence regarding any events that are arising after the audit report date on summary financials? No need, because basically they are derived from audited financials, so you don't have to perform any separate subsequent event related procedure related to summary financial statements. That's it. Next, now auditors association, rare possibility, but if at all they ask this one, like what is this? What is auditors association? You know, when summary financial statements are prepared by the entity, they will publish it also sometimes. When they are publishing it, I don't have any problem. But if at all they are publishing that I have reported on them, then I will see whether my report is attached or not. If my report is not attached and the company is publicly stating that summary financials were verified by auditor and auditor already reported on that, but they're not attaching my report to it, then I will request management, please attach my report, because you are making a statement that they were reported by auditor. If auditor becomes aware, if auditor is aware that the entity plan to state that auditor has reported on summary but not including audit report, request management to include the audit report. If management is refusing to include the auditor's report on the summary financials and publishing summary financials as it is without including his report on that, you must take appropriate action so that people will prevent their reliance on the summary financials. For example, you are only engaged to report on entity financials, but you are not engaged to report on summary financials. Please ensure whenever the company is referring to auditor, it is only in the context of audited financials. It is not that statements, any statement made by the management does not imply that auditor reported on summary financials, because you are not appointed on summary financials. And if conditions given in 3A and 3B, if management is not satisfying with that, the auditor may have to take appropriate action. If management refuses to comply, auditor will take actions to prevent reliance. That's it. Simple. You are using my name related to summary financials. Make sure my report is included. Suppose you didn't appoint me at all for summary financials, you didn't ask me to report on that, and I didn't give report on that. Whenever you're referring to my name, it should be only in the context of audited financials. It should not be in any way imply that you're referring about me in the context of summary financials. That's it. That's about auditors association concept. Are you clear? Next, this information, again, this is also like other information in document containing summary financials. Suppose the company is publishing summary annual report, so that time similar 720 requirement only. Okay, then sometimes supplementary information will be given along with summary financials. If supplementary information is integral, generally our opinion on the supplementary information also we should audit in the main financials. If supplementary information is not integral, I will ask management to differentiate it and present separately, then it will come as part of other information. In 700 standard it is there. Remember unaudited supplementary information? No. In 700 it is there. One exam they have asked a question on that. Supplementary information. Okay. In 700 it is there. Just open any book that you are following, it is there. That matter will be there. ICAI book also it is there. Supplementary information. Sometime board of directors will give additional information to financial statements as an annexure. If at all that is given as an annexure or as an extension to financials, then it is integral to financials. If it is integral to financials, I should cover that as part of my audit, and I should give opinion on that also. Suppose if board of directors are saying, sir, this is just an additional information, sir, no need to give audit, no need to do audit, okay, leave it. Then I will ask them, in the index you mention this number separately. Differentiate it. People are thinking this is part of financials. No, differentiate. Moreover, you are saying annexure 1. Annexure means what? Extension to financials. Remove the word annexure, put a separate heading, give that particular item as a separate item in the index. Differentiate it. If management does not differentiate, I will take appropriate action. I will clearly mention in the audit report that my audit opinion does not cover supplementary information. Simple. If supplementary information is part of integral to the financials, then I will treat it as part of financials. If supplementary information is not integral to financials, then I will treat it as other information as per 720. Clear? Actually, supplementary information discussion is not that required after 720 is introduced. Before 720 was introduced, that supplementary information has some role. Okay, that's it. Then comparatives, obviously, if at all audited financials contains comparative but summary financials does not contain, see whether the omission is reasonable or not. If at all the omission is unreasonable, what is its impact in the auditor report? Check out. If summary financials contain comparatives reported by another auditor, auditor report on summary financials also includes matter related to 710. Comparatives on which audit report is given by other auditor means nothing but prior period financials were audited by predecessor auditor. If prior period financials were audited by predecessor auditor, in other matter paragraph as per 710, what you need to do? You should give a disclosure that other matter paragraph state that the prior period financials were audited by predecessor auditor, date of audit report, type of opinion. The same OMP requirement will come even here. Able to understand? That's it. Next one. Yeah, date of audit report. MCQ, it is important. What should be the date of audit report on summary financials? The date of audit report on summary financial statement shall not be earlier than the date of audit report on audited financials. It should not be earlier than the date on which management approves summary financials, and it should not be earlier than the date on which you obtain sufficient appropriate evidence that it is a fair summary of audited financials. You should obtain evidence that it is a fair summary of audited financials only after performing all the procedures under 810. Only then you can date the audit report given under 810. So the date of audit report on summary financials should be on or after date of audit report on audited financials. It shall be on or after date of approval by the management of summary financials, and that's it. Okay. Then is UDIN number required? Obviously, for all certificates and reports that you are giving from 2019 July 1st, all certificates and reports, UDIN is mandatory. Then now tell me what procedures I will perform with respect to 810, 5 marks question. What procedures we will perform under 810 standard? What procedures we will perform? So first, I will verify. I will evaluate whether summary financial statements clearly disclose their summarized nature and identify audited financials. Summary financial statements will be there at summary balance sheet, summary P&L, summary notes. In that notes, they should clearly tell that they are summary. In fact, the balance sheet heading itself is what? Summary balance sheet, summary P&L, summary cash flow, summary notes to accounts. That's how the word. The financial statement should clearly describe itself about their summarized nature. First, I will verify that whether the summary financials are clearly describing about their summarized nature, and they should clearly refer to audited financials also. And when summary financials are not accompanied by audited financials, the summary financials should clearly disclose from where audited financials can be downloaded, from whom and from where audited financials are made available. Verify whether summary financials clearly disclose the applied criteria. Okay, you are preparing summary balance sheet P&L using what format? Because there is some framework to it. You might have prepared summary financials using some criteria. Which criteria you have followed for summary financials? Verify that. Then compare summary financials with related information in audited financials to verify whether the data is agreeing. Check recalculation, all that, and verify summary financials are prepared in accordance with applied criteria. You see, disclosure of criteria is different, compliance with criteria is different. In one point, they are asking you to check whether applied criteria, the criteria followed for preparing summary financials, they disclosed it correctly or not. Suppose summary financials are prepared as per SEBI regulations, they need to disclose that. Now I need to check whether summary financials are prepared as per SEBI regulations. So this is checking whether summary financials are prepared as per SEBI regulation. This is regarding whether SEBI regulation about summary financials is disclosed or not. Do you understand the difference? Next, and obviously, I consider, first of all, summary financials are prepared for some purpose. Considering the purpose of summary financials, for what purpose it is prepared, considering the user needs and what they reported in the summary, are they matching? Then availability. I will have to verify whether audited financial statements are made available to users without any undue difficulty, unless law or regulation says making audited financial statements availability is exempted. If law says audited financials are exempted to be available, then leave it. Otherwise, those for whom company is sending summary financials, they should be made aware of how audited financial statements can be downloaded, from where it can be downloaded. Yes or no? That information should be made aware of. In fact, in the summary financial statement itself, you should give disclosure about audited financial statements and from where they can obtain it. That's it. So these are the procedures related to summary financial statements to be performed by auditor for 5 marks question. First, see, check whether summary financials are disclosing the summarized nature. Check whether summary financial statements are clearly describing about availability of audited financials. Check whether summary financials are disclosing. So let's continue. So check whether disclosure of applicable criteria is made or not. Check whether summary financial statement is tallying with audited financials. Check whether summary financials are prepared as per applied criteria. Check whether summary financial statement summarization is there, right? Is it appropriate in light of the information needs of the user? And see whether audited financial statements are made available to the user without any undue difficulty unless exempted by law or regulation. That's it. Next. Applicable criteria. This is very important in this, again, a 5 marks question. I think in one of the exam they tested on this. Applicable criteria on summary financial statements. You know, the criteria which they are using for preparing summary financial statements should be acceptable in light of the purpose of summary financials. For example, you know, okay, let me explain it further, then we will disclose. If no established criteria exist, management may develop a criteria based on industry practice. If the auditor concludes the criteria is unacceptable and you cannot obtain management agreement on the criteria fulfillment, you must not accept the engagement. What do you mean by applicable criteria is unacceptable? For example, no, see, for summary financials right now I'm telling you there is no specific framework on that. So if at all a company is preparing summary financial statements, they are summarizing it based on their own ideas, their own rules and regulations. So if management designed the criteria, if management decided the criteria, okay, they developed the criteria, I need to see whether that criteria is acceptable or not. For example, the company has a trade receivable where they have less than 6 months, more than 6 months, more than 1 year, more than 2 years, and they have more than 3. The total trade receivable is 100 crore, more than 3 years 80 crore is there, you know, this 0, and more than 6 months some 10 crores is there, and here 10 crores is there. Now the company is preparing summary financial statements where trade receivable is shown in only just 2 parts, less than 6 months, more than 6 months only they showed. Here 6 months they showed, here 90 crore they showed. Now look at, tell me, is this a fair summary of this? Because more than 6 months means what? It's vague. Yes or no? So management developed this kind of criteria, okay, for preparing summary financial statements. This criteria is unacceptable in light of especially this company having more than 3 years long outstanding due, substantial portion of trade receivable. Do you understand how through criteria they can mislead people? That is the reason you should always read audited financial statements, because summary financial statements may not give you full information, full depth of understanding. So it is always mandatory to see audited. And more than users, forget about users taking wrong decision, auditor itself was given responsibility to check this. If at all you don't have an engagement, you don't have a duty to report on that, no need to worry. If at all they're asking me to report on summary financials, I should check whether this is acceptable or not. Do you understand that? So if the auditor concluded the criteria followed is unacceptable, then do not accept the engagement to report on summary financial statements unless it is mandatory under law. Suppose if at all law mandated you to report on summary financials even though the criteria is unacceptable, if at all the engagement is conducted as per the law, then don't say that engagement is conducted as per this standard, because you are doing, basically that's an unacceptable criteria. You should not audit as per SA 810, you should not report as per SA 810, but still you are reporting because it's mandatory under law, not as per 810. So that time don't refer about 810 standard. You know, most of the standards will prohibit the auditor using that name if at all you didn't comply with that standard. Okay, if you do not comply with the standard, don't use that standard reference in the auditor's report, because we generally mention what we report on summary financial statements in compliance with SA 810. We conduct our audit as per standards and auditing. We conduct our review as per standards and review engagement. Like that we mention. To make user confident that don't worry, I'm doing audit, I'm doing review, I'm doing reporting all this as per established standard. But here you're not following the standard at all. How can you report about it? So if an engagement is conducted in accordance with law or regulation, where the law or regulation is conflicting with the standard, don't refer about this standard. In SA 700, you have one concept. I mean, audit report, reporting given under different framework, different jurisdiction, that concept is there. Audit report given under law or regulation is there. When you are giving audit report under law or regulation, can you use SA 700 reference? There some conditions are given. You can use only when they both are consistent with each other. There is no differentiation, there is no oppositions between each other. Yes or no? And minimum the report, audit report contains the following elements. Like that some criteria and all they have given. Audit report given under law. In one of the attempt in somewhere in 2018 or 19 it was asked. In one of the attempt it was asked. It was there as part of our syllabus. But that's bit advanced. Then next one. The terms of engagement should mention this fact. What fact? The criteria accepted by management is unacceptable, but this criteria is decided by law or regulation. The auditor should assess what is this effect it will have on the engagement to audit the financials from which summary is derived. Okay, you should also assess this impact on the overall financials. You know, generally at the beginning of the main audit itself, we will know whether are we liable to give report on summary financials or not, because at the beginning itself company will tell us what are all the requirements. Sir, not only main audit report, we also prepare summary financials after some time. Then on that also you should give report. So at that time itself you should consider all this. Then what are the management responsibilities for summary financials? First of all, management must agree on their responsibilities to prepare summary financials as per applied criteria. And they have one more responsibilities. They should make audited financial statements available to user. And the audited financials must be made available to user without any difficulty. How do you know whether they are made available easily without difficulty? What factors you will check? Whether summary financials clearly mention from where it can be obtained. Suppose if summary financials are clearly mentioning from where, from whom it can be obtained, then they made it without any undue difficulty. Or audited financials are on a public record, then automatically they were made available without any undue difficulty. Or management has a process for easy access to audited financials. They in the company website everywhere QR codes and all was presented. Even on the summary financials QR code is presented, for example. So they made it, they made it easy for the people to access audited financials. So whether the management has established any process so that people of summary, users of summary financials can access to audited financials, or if audited financials are in public domain, or in the summary financials clearly it mentioning from where and from whom it can be obtained, then these three factors I will consider to know whether management made available audited financials without any undue difficulty or not. Next, that's it. Almost major standard is over. Okay, now next one, you need to check acceptability of applied criteria. Before accepting the engagement, the auditor must assess whether applied criteria is acceptable. The criteria refers to nothing but guidelines used by management to prepare summary financials. There is an increased risk, especially when the summary financial, there is an increased risk of summary financials may be misleading if the criteria is not well defined but developed by management. So how do you evaluate whether criteria is acceptable or not? How do you evaluate? Nature of the entity, look at. Purpose of summary financials, you look at. Information needs of the users, you look at. And whether the criteria will ensure summary financials are not misleading. For the trade receivable example I told, that you can understand. That's it. So in exam they can ask you this itself. Write about acceptability of applied criteria. That's it. With this 810 is over. See the complexity. Yes or no? So read carefully, understand, analyze, solve question bank. You will understand it. Okay. Even in Jan 26, one question has been asked on this. Most frequent tested is 810 and 805. From this chapter, most frequently tested is 810 and 805. Within these two, 810 is most frequently tested. Yeah. So let's look at SA 800, which is a very small standard. Audit of financial statements prepared in accordance with special purpose framework, or you can simply call it as audit of special purpose financial statements. Better use the same heading, audit of financial statements prepared in accordance with special purpose framework. What are the special considerations you should take? You know, the standard says special considerations, nothing but means all other remaining auditing standards will as usual apply here. In addition to it, specially what you should consider especially if you are doing audit of financials which are prepared using special purpose framework, what additional points you should consider. This is what 800 standard is exactly dealing with. Simple. It talks about when to accept this engagement, how to plan and perform the engagement, forming of an opinion. Okay. Now, what is a special purpose framework? It is a framework designed to meet specific user requirement. It can be either a fair presentation framework or compliance framework. So, special purpose framework is for specific user. General purpose framework addresses common financial information needs of wide range of users. And here, financial statements in case of special purpose framework means complete set of special purpose financial statements only, and which also includes related notes. Next. Now, considerations when planning and performing the engagement. Okay. First and most important consideration, you must comply with SA 200. Means you must comply with ethical requirements, you must comply with all relevant standards on auditing. Further, you need to apply some of the requirement of remaining standards on auditing which may require special consideration. One example is, you need to understand accounting policies, you need to understand the entity, you need to understand whether the entity selection and application of accounting policies is proper. For contract based financials, you should understand management's significant interpretations in a contract, if at all. Special purpose financials are prepared in compliance with provisions of a contract. In the contract, some provision is there on one assumption that we should take. See whether significant interpretations exist on that. Means multiple interpretations are possible. For each interpretation, the value could be differ. The performance of the company, position of the company can significantly affect. If significant interpretations are there, auditor has to understand whether management interpreted correctly or not. What do you mean by significant interpretation? An interpretation is significant when alternative interpretation could result in material differences in the financial statement. Further, materiality. In special purpose financials, management might agree on a threshold below which misstatements will not be adjusted. Nothing but for special purpose financials, management might decide materiality level. Materiality means what? Performance materiality. Performance materiality means what? Below that, misstatements, if at all were there, will not be corrected. If any misstatements were there above performance materiality, they will be corrected. What is this performance materiality? All that I will discuss in 450 standard. Okay, next. By the way, even though there is a materiality level which is decided by the management, still you should apply SA 320 requirement. Okay, then further, the auditor need to determine, who are the right persons in those charged with governance to communicate. Yes or no? And when both general purpose financials and special purpose financials, those responsible for special purpose may be different from general purpose. So these are all the points you should consider while planning and performing an audit of financial statements prepared in accordance with special purpose framework. You need to comply with SCA, you need to consider special issues as per SCAs, you need to understand the accounting policies, you need to understand significant interpretations of a contract in case if the financials are prepared as per the contract interpretation. And materiality, you might agree with a different level of materiality with the management. In spite of it, you should also comply with SCA 320. You should communicate with the management, you should communicate with those charged with governance, and those charged with governance could be different for special purpose financials. And when reporting on special purpose, you must follow 700 guidelines. That's why in 800, what is the format of report of 800 is not given clearly. Even in 805, what is the format of audit report? They have not given, because we follow 700 series format only. Next. Further, in the financial statements, they should adequately refer to applicable framework. It is most important. Whenever the company prepares special purpose financials, basis for preparation. What is it? Basis for preparation should be mentioned in the notes to accounts. And that basis for preparation, we should highlight it in the audit report under emphasis of matter paragraph. We should highlight it under what? Emphasis of matter paragraph. So in case of contract based financials, significant interpretations should also be described. Yes or no? If the financials are prepared as per provisions of a contract, then what are all interpretations are possible? You should disclose those interpretations also in the financial statements. By the way, whose responsibility this disclosure responsibility is? Whose? Management. Next. For special purpose financials, the audit report clearly should include purpose for which the financials are prepared, and if management has a choice of framework, the auditor must refer to management responsibility for framework acceptability. And if key audit matters are communicated in audit report and special purpose financials, 701 will apply. You want to communicate key audit matter, take 701 and then do follow it. And if at all other information is also included along with special purpose financials, 720 requirement also will follow. Further, the auditor report, the audit report on special purpose financials, you can add other matter paragraph. In the other matter paragraph, you can refer about audit report on complete set of the financial statements, or you can also talk about material uncertainty related to going concern. You are giving audit report on special purpose financials, right? In that, add other matter paragraph. In that other matter paragraph, you can explain about audit report on complete set. You can explain about MERGC issues, all that. Clear? That's it. And alerting the reader. What is it alerting? Means in the special purpose financials, better I will show you once the format, then only you can comprehend the meaning. Otherwise you feel like mugging up. Yeah, this is specific element. Yeah, these are the illustrations. Yeah, look at this is the audit report on special purpose financial statements. Okay, an audit report on complete set of financial statements of an entity prepared in accordance with financial reporting provisions of a contract. Means it's a financial statement prepared using special purpose framework. Yes or no? An audit report on complete set of general purpose financials was not issued. Means this is special engagement altogether. It's a compliance framework. Distribution and use of audit report are restricted. And look at opinion as usual, basis for opinion as usual, emphasis of matter where you clearly mention about basis of accounting, because the financial statements are prepared as per provisions of a contract. We draw attention to so and so note number in financials which describes about basis of accounting. Further, restriction on distribution and use. What is it? Our report is purely for the company and the user and should not be used by other parties other than the company. By the way, our opinion is not modified. Now look at the second example. Distribution or use of audit report is not restricted. We will not mention that this report should not be used by others. That fact we will not mention, but we will clearly mention this financials are prepared exclusively for the company and DF, but it should not be used by others and all we mention. No, that point we will not mention here. You look at emphasis of matter, basis of accounting. There is no additional heading. Restriction on distribution and usage. The heading is not extended here. Yes or no? Like you see, here the financial statements are prepared to meet requirements of regulator. As a result, they may not be usable, they may not be suitable for other purpose. We are not saying this report should not be used by others. We are not mentioning that, and even heading is also not included that. Now look at the related to this one point is there. Restriction on distribution or use. Okay, this itself can be asked as a 4 marks question. Look at the auditor may indicate that the audit report is only for the purpose of specific user. Where he will indicate this? Emphasis of matter paragraph. That paragraph is called as what? Alert paragraph here. In this standard we call it as what? Alert paragraph. This involve restricting distribution, restricting usage of the report depending upon law or regulation. Sometimes you need to expand the alert. The alert paragraph may be expanded to include restriction on distribution or use with the heading modified accordingly. Remember I showed you in illustration 1, emphasis of matter para, basis of accounting and restriction on distribution and use. Whereas in second illustration I showed just basis of accounting is there. Expansion is not there. You understood the meaning of expanding the alert, all that? Yes or no? That's so. So that's why you need to refer always illustrations to understand the context of this. So that's it. So then alerting the readers. Special purpose financials may be used for purpose other than for which they were intended. Sometimes special purpose financials, if at all they were caught on public domain, people might use it and take a decision. This is not for other users. So to avoid misunderstanding, what auditor has to do? The auditor include emphasis of matter paragraph in report explaining that financial statements are based on special purpose framework, may not be suitable for other purpose. And at the time, 706 requires EOM to be placed in a separate section of the audit report with a heading called emphasis of matter. In that, you will sometimes expand that heading, restriction on distribution and usage, and even in the emphasis you should highlight basis of accounting. Clear all of you? That's it. If you remember, 706 has an examples. Emphasis of matter paragraph is used in which examples? If the financial reporting framework is a special purpose framework. One of the example. That's it. Clear? So 800 is over almost. Now, considerations for accepting the engagement. When can I accept the engagement? You can accept the engagement only if the financial reporting framework is acceptable in light of the users. Management prepared financials using some framework. See whether that framework is acceptable for the user or not, because you are preparing special purpose financials for the user requirement. And if you prepare not as per the user requirement, then there is no use of this. And it includes financial reporting standards set by authorized or recognized organization. These standards are presumed acceptable if the organization follows an established process. Right now, there is no special organization or standard setting organization for special purpose framework. Special purpose framework, first of all, special purpose financials are confidential. There is no established standard or some organization for dictating special purpose. Maybe tomorrow ICAI will come with a board, separate board, accounting standard board, that's actually committee of ICAI. That's basically one committee of ICAI. Auditing standard board, one committee of ICAI. Peer review board, one committee of ICAI. Like that, tomorrow ICAI might bring special purpose committee or committee for special purpose frameworks. Now, if that committee issued certain guidelines on how to prepare special purpose financials, that guidelines company can follow, and that time it might be acceptable. Are you able to understand? Or sometimes special purpose financials may be prepared in accordance with a law or regulation. That time the framework might be acceptable. If the framework is given by law, if the framework is given by regulation, for example, Zomato prepared restated financial statements. How they prepared restated financials? As per the framework, as per the rules given by SEBI, ICDR, LODR regulations. Okay, so as per ICDR regulations, Zomato prepared restated financials. Now, what is the restated financials principles, framework that they followed, rules and regulations that they followed? SEBI has issued it. I will assume it is acceptable. Sometimes sometimes the framework may also come from contract. Sometimes the financial reporting framework, the framework is nothing but what? Rules for preparation of financials. One of the rule, inventory has to be valued on FIFO, inventory has to be valued on weighted average, depreciation to be calculated on SLM, has to be calculated on WDV, revenue has to be recognized on PCA method, CSM method. These are all what? Rules. Rules of preparation and presentation of financial statements. If these rules are dictated in a contract, then auditor has to check whether the contract principles are followed or not. Yes or no? Ultimately, whether special purpose framework is acceptable or not, it depends upon various attributes that are used for preparing the framework, and auditor will judge based on professional judgment whether that framework is acceptable or not. Simple. What rules you have used and for what purpose the financials are prepared? Are the users satisfied with this? If the financials are prepared as per these rules, will the user be satisfied? If the user is satisfied with it, then who am I to question it? Simple. So acceptability. So what are the points you should consider? Acceptability of the framework and planning and performing the engagement. Then finally, the special purpose financial statement should describe the framework that they followed. And in the audit report, I need to alert through emphasis of matter paragraph. That's it. These are the points which are there. Clear? 800 is over. That's it. Read thoroughly 800 once again. You will get it. Okay. That's it. Specialized areas is over. Confident until now? Yeah, look at. So let's begin professional ethics. First, I will give you an introduction to the chapter. Okay, then we'll discuss in-depth elements. If you look at professional ethics, what is there in our syllabus? First of all, this is even called as, this professional ethics chapter is also called as code of ethics. It's also called as what? Code of ethics. So what are all there in our syllabus? First, we have principles of ethics. First, they are discussing about principles of ethics. Frequently these days from the principles they're asking 5 marks question. May 24 5 marks, number 24 5 marks. Even in May 25 some MCQ or some question has been asked. Second one, CA Act, certain important provisions were there, like membership of the institute, disqualifications for membership, removal of membership, deemed to be in practice, and branch office opening, branch office provisions, like that some provisions were there. Okay, so from that a 5 marks question will come. 4 or 5. Whenever I say 5, it can also include a 4 marks question also. Okay, or an MCQ at least will come. Then third one, schedule 1 and schedule 2. So what are all various offenses which a CA, whether in practice or in employment, can commit? Okay, various misconducts. So that were there in schedule 1 and schedule 2. And recently in the schedule 2, there is a part 2. In that, technically we have 4 clauses earlier. Now clause number 5 is added. Okay, this was added, which is applicable for Jan 26 itself. It was applicable for Jan 26 exams itself. I mean, that was an amendment which is important. That is something we should focus on. Okay. Earlier, Schedule 2 Part 2 has 4 clauses. Now it has 5 clauses, which is originally applicable from Jan 26 exams itself. It is applicable. The same is applicable again even onward, May 26, September 26, and Jan 27 onwards. Okay. Now, 4. Then we have council guidelines. We have what? Council guidelines. Then we have self-regulatory measures. Then we have what? Self-regulatory measures. Then we have ESB decisions. So this entire ethics is divided into 6 parts. Technically, ESB decisions are also important, very important. Every attempt, one question they're asking, at least 4 or 5 marks question they're asking. Council guidelines and self-regulatory measures, they may ask, they may not ask. Pakka from schedule, 4 or 8 marks question might come minimum. Sometimes all the questions can be from schedules only. Okay, so this is a very big chapter. Basically, ethics is a very big chapter. Just like how audit report is big, ethics is also big. But audit report has a weightage of 20, ethics has a weightage of 14 or 16, worst scenario. Clear? So totally 6 parts. So now we need to understand all this. Now what I'm going to cover is principles of ethics. You please take care, but remember, don't neglect it. Where they talk about fundamental principles, integrity, confidentiality, objectivity. In one of the exam they asked about confidentiality, May 24 attempt. Number 24 attempt, I guess, they asked about professional competence. In May 24 attempt, they asked about confidentiality. What are the factors you take into account? Professional competence, they asked in number 24. Many students could not write because they ignore it. They think it's a C category. No, don't do that. Okay, every part of the chapter you see. My recommendation, I always tell this: you want to selectively prepare, ignore a chapter. You feel ethics stuff, leave it, no problem. Rest 85 marks is there now with you. Paper is for 118. If you are able to write 70 to 80 marks of the paper correctly, you can score 60 plus. Okay, so aim perfection. That's it. Next, CA Act provision, where branch office related provisions, membership, FCA, ACA discussion, CA using other designations, like that some discussions were there, disqualifications of member, then schedules, which you are already aware of it basically. Yes or no? So council guidelines, self-regulatory measures, ESB provisions. In the last attempt also a question came from ESB provision. Ethical Standard Board, mystery audit. I will show you the answer also in Jan 26. That answer is wrong. That fellow who asked that question and the answer who designed it, absolutely that's a wrong answer. Complete wrong analysis. Where the CA has accepted mystery audit on a percentage basis or contingent upon finding. Okay, that basis he accepted the audit, and they linked it with clause number 10, and they said it is guilty, which is wrong. Actually, the entire answer is wrong, which is there in the Jan 26 suggested answer. I will tell you why it is wrong. I'll tell you. It's a non-assurance engagement. Mystery audit is a non-assurance engagement provided to a non-audit client. You can accept fees as a percentage of profit. You can accept fees which is contingent upon finding, because that's not an assurance engagement. I told you what is an assurance engagement. 3 relations, 3 parties must be there. You know what is mystery audit? It's a control audit. Surprise check. DMart appointed you to do a mystery audit about controls checking at one particular store. You just have to go to the store and check whether controls are being followed, everyone. If at all they're not following, you just go and report it to the management. They will take care of it later. Basically, you are giving report to the management only. There is no third party user. When there is no third party user, that's not an assurance engagement. First of all, that comes under non-assurance engagement. How operational audit is a non-assurance engagement, mystery audit is also a non-assurance engagement. Basically, the one who drafted that question, okay, question at least they drafted good, but the answer who drafted is something wrong. That's not a right answer basically. Okay, but if the same question comes once again, you should write the same answer. Alternate answer, you should write this. Okay, fine. Anyhow, I will discuss it. So this is what the introduction to ethics. Clear? Fine. We'll continue in the next session. Okay. So if at all, if 7th day, we initially planned for 6 days. If at all required, we'll go and work on 7th day also, Sunday. Try to come, no problem. Okay. For me, almost in the past 70-75 days, not even 75, 4 months almost, I've taken hardly 12 to 13 breaks. That's it. Even now Sunday this session will be over. That next again 1 week I have CA audit sessions. Then after again 1 week continuation, I have tax related MRP. We have a category called mock revision past exam. That solving session is there. So next 3 weeks, no, not even 1 day break. Next 3 weeks. So that's how it is. You want to grow in life, you have to work hard. You don't have an option. Taking you see my energy. 7:30 or 7:45 I'm starting, somewhere around 8, then up to 1:30. In between 1.5 hours is what I'm taking break. Rest 4.5 hours with the same level of intensity I'm talking. And try explaining your friend one topic for half an hour. Just explain, you will understand how much energy it consumes. Literally, you are studying 10 hours, no? I'm actually working 25 hours in a day. That is the amount of energy that I consume. 24 to 28 hours of energy is what we consume. If at all we take a marathon session, that too for a subject like audit. You see how intense it is. Talking with this pitch, making sure you're not sleeping, shouting in between so that those who are sleepy will awake. Yes or no? So maintaining this alertness is not that easy. So if I take 4 hours is equal to 4 into 5 desk job. 4 into 5, 20 hours of desk job it is equal to. Those of you who are sitting and feeling tired, just imagine me. Sitting here, no deviation, nothing, with high amount of energy, with high amount of intensity, with raw focus, giving like this lecture for 4.5 hours at a stretch is not that easy. That too, continuously for 1 month, continuously for 2 months. Passion drives you. How do you get that passion? Money. How to get that money? First you should be passionate. It's a cycle. So only when you do things passionately, you get the money. When you get the money, you naturally get motivation to do more passionately. Later one day, money will not be the more motive for you. Later, something else will become motive automatically. So initial levels for everybody, money is the motive. Okay. Even why are see other, if at all you don't get a job by using CA, why the hell you sit here? Why the hell you will sit here? Not for those 2 letters, right? Just exceptional candidates might be there. But for rest of us, what is important? Once we should clear, we should qualify. Why we have to qualify? So that we can go for a campus selection or something else and we can start making money. Correct? If at all that, for example, tomorrow CA Institute said CAs are no more. I mean, in the sense, there is no more demand for CA. No corporate will hire you. Every one of you will resign from this course, including myself. That's it. Fine. Okay. Take care. So we'll continue in the next session. Yeah. Yes, let's continue the revision of professional ethics. I already gave an introduction where this chapter will be discussed in 6 parts, right? Now, in that, the first part that we will discuss is regarding some provisions of CA Act, where it talks about membership of the institute, all that. So, look at, in that important topics I will be covering. Disqualifications for membership. A straight theory question can be asked or an MCQ can be asked. Okay, 5 marks question or a 2 marks MCQ. So what are the disqualifications for becoming a member? Simple. A person who has not attained the age of 21 years at the time of his application. So only one who has attained 21 years of age, okay, only he is eligible for making application. Unsound mind is disqualified. Undischarged insolvent, disqualified. Or a person who has been discharged as insolvent but he has not obtained certificate stating that his insolvency was caused by misfortune without any misconduct on his part. That's like an innocent certificate. Suppose a person was discharged as insolvent and he has got innocence certificate. Innocence means what? He is not the reason for why he became insolvent. He don't have any misconduct on his part, no criminal, nothing. Circumstances were like that. The business circumstances were like that, and that's how they became insolvent. Next up, or a person who has been convicted by competent court, you know, whether within India or outside India. It's actually outside India. Okay, for an offense involving moral turpitude or and punishable with imprisonment, or an offense which is committed in professional capacity. If a court punished a person for any offense of moral turpitude or for any offense on professional capacity, technical offenses are out of the purview. Technical offenses you need not punish. That is not disqualified. Technical offense means very simple. For example, no, sometimes we file tax audit form. You might have noticed. Signed balance sheet, signed P&L, we just put the word SD and then file sometimes. Okay, so that's a technical mistake. You should actually sign and then file. Suppose if the counterparty filed a case against you and the court has reprimanded you that this is not the right way to do, tribunal said right way, it is not a right way to do. These are technical offenses. These are not, negligence, professional negligence, not like that. Technical offenses, we simply call them as procedural errors, procedural mistakes that you do in the law. So these are all basically technical offense. So technical offense not an issue. Okay, next, unless because of the technical offense significant loss is suffered by the client. If the client has suffered significant loss, that's a different thing. Again, that might come under professional negligence. That might come under any offense conducted in professional negligence. That will come there. Next, or a person who has been removed from membership of the institute because he is guilty of professional or other misconduct. So if at all a person is removed from the membership of the institute and some 3 years ban is there, within the 3 years you can't apply, you're disqualified. Simple. Clear? So these are the disqualifications. All the 6 points you must write. So if at all a question comes on this for 4 or 5 marks question, preferably all the 6 points. Next, further, removal of name. Remember, disqualification is different, removal is different. Disqualification means what? First of all, I'm not a member of the institute. Now I want to become a member of the institute. Can I become? If you are falling under this list, you can't become a member of the institute. Means you cannot apply for membership. That's called disqualification. Suppose you already were a member. You are already a member. Sometimes your name will be removed from the membership. Removal of name. When? When disqualification attracts. Suppose you already became a member and now the disqualification attracts, your name will be removed. Or a member who died. Okay. So a member who is dead, or a member who has been subjected to any disqualification or disability under section 8. 8 is what dealing with disqualifications or disabilities. Then if a member fails to pay prescribed annual fee, once you become a member of the institute, you have to pay, annual fee to the ICAI. Membership you have to pay, COP you have to pay, all that. And if a member, he himself voluntarily applying for withdrawal, okay, he himself is requesting for removal, then the institute will remove. Or if any order is passed under the act, for example, professional misconduct, other misconduct, some order has been passed, then automatically your name will be removed. And when your name was removed like this, for whatever period you are prohibited, for that period you can't apply for membership. So corresponding point is also added in disqualification. Are you clear? Look, once you qualify as a CA, you have multiple options. Yes or no? Once you qualify as a CA, you have 3 options. One is practice, one is industry, where you call, we call it as employment, or you can do your business or some other profession, some other business or some other profession, family business, something like that you can take care. For example, look at me, I'm running an academy. Yes or no? So I was neither in practice nor in employment, so I'm in third profile. So anything you can do once after you qualify. Suppose if at all you want to practice, you need to first get membership of the institute and also you should get COP. Remember, if you qualify CA exam, you are not a member of the institute by default. Only when you apply for membership of the institute, then only you are treated as member of the institute. Are you clear? So CA is a qualification, chartered accountant is a designation. In section 7, in clause number 7, in section 7 as well as clause number 7, this is what the differentiation they will make. You can happily use, upon qualifying CA, you can use the word CA, but you want to use the word chartered accountant, then you must obtain membership. Without obtaining membership, you can't name yourself as a chartered accountant anywhere. Able to understand? Chartered accountant word again indicates deemed to be in practice. Fine. Anyhow, once I come there, you will be getting that point. So industry, of course, you want to go into the industry, you can enter into the industry even without membership. Okay, or you can simply apply certificate of membership alone. Okay, generally practicing will not be given. And in India right now under CA Act, practice means only full-time practice. There is no part-time practice concept within the institute. Part-time practice, there is no use also. There is no use also because of part-time practice. See how firms operate, mechanism, how the audit firms operate, the mechanism first. So let's understand the mechanism in which how the firms exactly operate. Suppose once you take COP, you are eligible to practice. How can you practice as a chartered accountant? You can practice as an individual directly, or you can practice as a firm. Firm means what again? Two types. Sole proprietary firm, partnership firm or LLP. A firm will have a firm registration number. Individual will have only member registration number. Now, practicing in the name of individual is not recommended directly. It is better you always practice with at least a firm name. Okay, you practice individual. Sole proprietary firm. Remember, the word firm means it can be a sole proprietary firm, it can be partnership firm, anything it can involve. Okay, only when you have a firm, you will have firm registration number. What is the difference between sole proprietary firm and individual? Suppose there won't be any firm name in my name. For example, I'm practicing in my name directly, in my personal name, I'm directly practicing, I'm signing, and then UD number, everything in my personal name. I don't have a firm at all. Now, tomorrow, if I want to pass on my firm to next generations, I cannot. I cannot pass on my goodwill, because once the member dies who does not have FRN, that's it, over, the practice sees it there. But if at all you have a sole proprietary firm where firm name is there and your individual name is also there, whenever you are practicing, you of course practice in individual name, you sign in individual name only, but you don't sign on your behalf directly, you sign on behalf of firm. Now, tomorrow, if this person want to pass on the firm to the next generation, he can pass on. Getting it? Goodwill is accumulated only for firms. An individual practicing CA who does not have a firm does not have a goodwill. Okay? No matter, goodwill might be there, but he can't encash. If family members cannot encash, he cannot, sell it, he cannot sell the firm to somebody else. Able to understand? That's the difference between an individual practicing CA and a sole proprietary firm. Now, this form is recommended. Tomorrow, when you want to practice, any of you, open a firm only. Open a firm. Apply for firm name with ICAI. For sole proprietary firm, you don't even have to apply with Partnership Act. In case you want to open a partnership firm or LLP, again you have to apply with Partnership Act. You have to get registration of the firm with CA Act. You have to register it with Partnership or even LLP Act. If at all you want to run as a partnership firm. So apply firm name and also apply COP in your name. Practice in the name of the firm. Okay, so that tomorrow you want to withdraw from practice, your firm can be sold to somebody. Your firm can be transferred to another. Simple. Hire one partner, you withdraw. Hire one partner and you withdraw. So he will continue as a sole proprietor. So this kind of benefit is there. Your firm name can be your name, the firm Ram Harsha and Co. Chartered Accountants. That name can continue. That's why you see most of the firms that you see, the main founding partner would have died long back. Still the firm is existing. That's it. So partnership means what we know already. Only CAs. A CA can enter into partnership with another CA. And clause number 4 we have, which permits you can also enter into partnership with other professions also. But right now, multidisciplinary firm concept is prohibited because guidelines were not yet given. CA Institute is ready to create multidisciplinary firms. Other institutes are also ready for multidisciplinary firms, but they need to sit and design common guidelines for running and operating multidisciplinary firms, which is not yet designed. Since guidelines were not yet available, forming a multidisciplinary firm is prohibited right now. Are you clear? This anyhow, this point once again we'll understand in clause number 4. So this is the reason why, the backdrop. I hope you understood now. Next. So removal. Now, once a member's name is removed, the member name, once it is removed, he can later on apply for restoration. Like what is restoration? Like when he can apply for restoration? Restoration means what? For example, 3 years I was disqualified. The professional misconduct on that cause, they disqualified me and removed me from the membership, and then they boycotted me for 3 years. After 3 years, I can again go back and apply with the institute. So when you apply, your membership will be restored. Are you clear? Now there is another type of restoration. Suppose I have not paid annual fee. Annual fee you have to pay. For example, the financial year right now going is 25-26. That is over already. Sorry. So 26-27. Suppose 26-27 financial year started. Okay. You have to pay membership fee annually. You have to pay COP fee annually. Annually means what? Financial year. Not from the date when you join. Suppose you joined into the institute database on 10th August. Again on 9th August membership due. No. That logic. It is like a financial year. So you are entering into institute. You want to become a member of the institute in 26-27. Then for 26-27, pay membership fee by 30th September 2026. Pay COPP fee by 30th September 2026. You don't want to COP, then pay only membership fee. Every year, for every financial year, by 30th September, you have to pay the membership fee. Now, recently I have seen some, Twitter post, all that. For example, in Jan attempt, some students qualified on March 1st. March 1st, they qualified. Now, what they say is, suppose you want to apply for membership on March 1st immediately. So that comes under 25-26, even for 1 month also, you have to pay full fee. Again, when the next financial year started, for the next financial year, by 30th September, you have to pay. So why to pay for this 1 month? Leave it, directly apply in the April month is what they're saying. For 1 month and all, don't think like this. This 1 month sometimes become a disqualification criteria later for you to get a bigger audit. Able to understand? Most of the banks appoint the auditor when? November, December. Around that time only RBI empanelment, experience counting, everything will be taken. So 31st December will be the cutoff date. So when they're taking experience certificate, even if you're lacking experience for 1 year, 1 month, even for 1 month if you're lacking experience, that time you will understand the pain. 10 lakhs, 20 lakh, 50 lakh audit fee client is you're losing just for that 1 month experience lack. So even if 1 month experience you are getting just by paying some less than 10,000 rupees, my recommendation not to neglect. That 1 month also important. We don't know where it will come. That necessity where it will come. Okay, fine. You are not that much concerned about it. No problem. Then leave it 1 month, and April 1st onwards you pay a fresh membership fee and fresh COP you apply. Then you get for 1 full year. Getting it? So you have to be, see, always know, most of us, we focus on how to save the money. We don't focus on how to create avenues. You should focus on creating opportunities, creating money, making more money, not how to save all these pennies. Understood? Fine. Next. I hope you understood this concept. Now, if you do not pay by 30 September, what happens? On 1st October, institute will remove automatically your name from the membership, from the COP register. Your name will be removed. But now they're not doing it. They're sending reminders. Even after sending reminders, if at all you are not responding, then only they're removing it. Okay. So somewhere up to, I think in my case, no, I generally don't forget. It's extreme. You know what? I have continuous 11 year COP. I mean, I was about to complete 10 year COP. I thought of surrendering COP. I thought of surrendering membership also. I have permission, special permission. Okay. So I thought of surrendering COP and COM. It was 10th year. I was just thinking, okay, let 10th year complete, because 10 years of continuous practice experience will be there. So even later on when I apply also, I already completed 10 years of completed practice, continuous practice. So about to complete, the 10th year was about to complete. Just 6 months before that, I am supposed to pay. They sent reminders also. In my mail, so many were there. I don't know why I didn't notice. It's impossible. Okay. And my membership number was removed, and COP was also cancelled even after sending reminders. Then after that, I sent a message also to one of my known person in the council. Sir, is it restoration possible? No, Harsha, it is already done. Like no, it is systemized, it's automated. Otherwise, I would have definitely helped. Like that, easy. That's what he told me. Then I understood. It's a God's call. It's a nature's call. Okay, that's what I decided. I moved on, and again I just applied for COM. I just restored my membership. That's it. I didn't restore my practice because it's not necessary, because I'm not doing practice technically. So I was thinking to submit. So that's how. So they're sending reminders. So by 1st October, they're supposed to remove, but they didn't remove. My membership was removed from January 10th. With effect from January 10th. Though I didn't pay by 30 September. Fine. Suppose, your membership was removed because you didn't pay the fee within the due date. Later, within the same financial year, you applied for restoration with late fee, penalty, all that. Then there won't be any break in service. Your membership will be restored. From which date, when it was removed? No, from the same date it will be restored. Restoration from the date of removal they will do. What is this advantage? You will have continuous certificate. Continuous practice, you will be satisfying continuous practice. For example, once you become a CA, once you apply COP, you are either classified as ACA or FCA. You know what is FCA criteria? Continuous practice of 5 years. Suppose continuous practice means what? When you see date of entering into practice and today, The gap should be more than 5 years, at least 5 years continuously without a break. Suppose if at all by mistake you didn't pay membership or COP in between, and your membership was cancelled, and you applied very late for COP, and restoration if at all they didn't do from retrospective date, what happens? Break will come. If break comes again, this 5 years will be freshly calculated. This 5 years will be again a fresh calculated. You know, one of the criteria for getting bank audit, the firm should have 15 years of experience. One of the partners should have, two partners must have 10 years of continuous practice. Two partners must have what? 10 years of continuous practice. And if at all you are wishing to go with the partnership, to go with practice tomorrow, immediately upon qualifying, don't apply immediately. Don't neglect it. I did 1 year late. After I qualified, almost 13 months late I applied. I'm not aware of all this. Nobody is there to guide. That time I met one friend, hey, why are you delaying? You just apply. Let experience count. Whether you get client or not, that's a second thing. Let experience count. The age, that experience is most important. So upon qualifying, the first thing you should do is get membership, get COP. If at all you are entering into industry, you can surrender the COP, or you don't get it if at all you are having a plan to enter into the industry. That's it. So I hope you understood now. So restoration, what is the restoration concept? What is the restoration concept? What is the effective date of restoration? Suppose you made application in the same year of removal, then restoration will be effective from the removal date. Yes or no? Restoration will be effective from the date of removal when the member pays required fee within the same financial year, which means there is no break in service. Suppose your name was removed in a disciplinary action, then you can apply for restoration with effect from only the date on which you are permitted to. Okay? And if any other case means what? Sir, my membership was removed because I didn't pay the fee. Up to 31st March also I didn't realize. Next year I realized and then paid now. From whatever the date you pay, from that date restoration will come, which means break in services arises. Are you clear? Hello? Next. Now, what is the penalty for falsely claiming to be a member? Suppose you are not a member of the institute, but you are claiming that you are a member. Or you are not having COP, but you are claiming that you are having COP. In both the cases, first time if they caught you, 1,000 rupees. Subsequent time, 5,000. It's up to 5,000 rupees, or imprisonment up to 6 months, or both. Suppose you are not an FCA. You're not an FCA, but your claims as FCA. What about the punishment for this? For this, the punishment is given under Schedule 1, Part number 3, Clause number 1. I guess this only. Just open it and then see. Right now, I remember clauses only vague, 50%. Concepts I remember, numbers I didn't remember. Absolutely. Okay? Briefly I remember. But by the time I complete this session, I will remember all the clauses. The same thing applies for you also. Okay? Fine. Look at just Schedule 1, Part number 3, Clause number 1. Is this? So a member. The Part 3 is dealing with members generally. Okay? If at all you are not an FCA, but claiming that you are an FCA, that's a guilty. So all the 3 points you have to read at a time. Okay, don't read these 2 points here and then FCA point there, so that you can't remember. You're not a member, claiming as a member. You're not in COP, having COP. You're not an FCA, you're saying as an FCA. In all these cases, yes or no, first of all, you're guilty. And for 2 cases, you have a penalty. For this particular case, though penalty is not there, misconduct. You will be guilty of professional misconduct and your name will be removed. Able to understand? Next. Now coming to the concept of CA in practice. You know, what do you mean by a CA in practice? Simple. A person who is a member of the institute holding certificate of practice. By the way, practice means CE, not SE. PRACTICE. It's not PRACTISE. Yes or no? Practice. That's a verb. Okay? SE means verb. CE means license, noun. Able to understand? This is a permit. Practice means permit. Able to understand? Next. And a practicing CA also includes a person who is deemed to be in practice. A person deemed to be in practice is also a CA in practice. Now, what is this importance of DTP, deemed to be in practice? What is its important? Now, tell me, how do I know whether a member is practicing or not? Because if at all he is in practice, he has to apply COP, and he is bound by entire Schedule 1, Part number 1, Schedule 2, Part number 1. Okay, these Part 1s are applicable only for a member who is exclusively in practice. Yes or no? So he is bound by certain regulations. How to regulate him? He must have COP, then only I can regulate him. What if some persons, some people, what they do, why should I have COP? I will practice without COP. It's getting clients. I will get it signed it from my friends and all. I will do like this. Yes or no? So without COP, they start doing works like a practicing CA. So to prevent that, they define deemed to be in practice definition. They gave a definition called deemed to be in practice. Now, under the deemed to be in practice, some circumstances they mentioned. If at all you are falling under those circumstances, you are deemed to be in practice, and accordingly you must obtain COP. What is the meaning of DTP? Why are we discussing DTP concept? Simple. If at all any activities that you are rendering falls under deemed to be in practice definition, which means you are deemed to be in practice, you must apply COP. This is like a charging section. This is like a charging section. When a member should apply for COP? If at all you are rendering services which comes under deemed to be in practice, that's it. You are liable for COP. So that's a charging section. That's an attractive. That's a section which attracts COP. That's what the meaning. Okay. So what do you mean by deemed to be in practice? Fine. Again, the moment you are having practice, a member is not allowed to practice without COP, yes or no, and he must pay annual fee which is determined by the council and due by 1st April. It is due by which date? 1st April. By what date you should pay it? 30th September. Due begins from 1st April. Due date will be 30 September. Don't confuse between these two. Okay. So the institute council will decide every year what is the fee. So the fee is liable from which date onwards? 1st April. Simple. I sold goods on credit. The very first day onwards liability arises. But I have given 90 days credit period. So the due date for payment will be after 90th day. Do you understand? The moment I sell the goods, I accrue the right. You are due to me. So that's what the meaning. You are due from 1st April. But you have to clear it by 30th September. So the 30th September point also there later. Okay. So cancellation and restoration of COP. What is it? If the holder's name is removed from register, or if the COP was issued based on incorrect, or if the member ceases to be practiced, or the member has not paid annual fee by which date? 30 September. I hope you understood the difference between 1st April there and 30 September here. Next. Upon cancellation, the member should surrender COP to secretary. Again, what is the restoration process? Just like membership restoration process, COP restoration process is exactly on the same lines with membership restoration process. COP was cancelled for non-payment of fee, and you paid the fee within 31st March itself. Restoration will be from effective of removal. Any other case, restoration will be from application date. Simple. Okay. Then what do you mean by member deemed to be in practice? Simple. You are engaging in practice of accountancy either individually or in partnership. Yes or no? And you are charging consideration or remuneration. If you are getting remuneration for practice of accountancy, or you are performing auditing, or you are performing accounting procedures presentation, or you are rendering any services which council is deemed to be, if any other service which council thinks only CA in practice can render. So if at all you are rendering all the services, you are deemed to be in practice. Further, even though you set up an establishment, even though no client is served, so you started an office, you are exhibiting to public as an accountant, as a chartered accountant. Till now, not even one client availed your service. Still, you are deemed to be in practice. Invitation to offer is an offer. Just like on the same logic. Yes or no? Yes. So whether really an offer was made, a promise was accepted, no, that and all is not required. Invitation itself is enough. The moment you establish an office, establish a practice, that itself is enough. You are deemed to be in practice. Further, a member is deemed to be in practice for the period he serves with armed forces. This is general exemption for every army individual. Those who are working in armed forces. Okay. For them, whatever the period for which they worked in army, that period, that number of years will be removed from the age for calculation of eligibility at certain government jobs, all that. For example, a bank job you cannot get if you are more than 28. Let us assume, 28 is the cutoff date. For example, there is an army guy who retired at 42, and he served with army for 18 years, or let us assume 20 years he served. So now 20 years will be removed. Now his age, for the purpose of bank job calculation requirement, his age will be 22, which is less than 28. The same way, you worked for 20 years. Now you want to come and apply for COP. You will not be counted as a fresh any other CA, like first 5 years you finish, then you will get FCA. No. The 20 years I will assume you are in practice. The 20 years you served with armed forces, I will assume you are in practice. Now, the moment you apply for COP, you will directly get FCA. Able to understand? So this is the benefit given to armed forces people. Next. Further, an employee, a CA who is working in a firm, a CA who is working in a firm as an employee, yes or no, full-time basis, that too. So then he is also treated as, COP. He is also deemed to be in practice for only one purpose. He is not absolutely deemed to be in practice. He don't have to get COP. But for only one purpose, he can be taken as a practicing CA for training articles. What is it? For training articles. Suppose I'm a sole proprietor. I'm recently qualified CA. And first year of my COP, I can only hire one article. And I hired one CA who is an employee. In my firm only, I hired him. Under his name also I can take one CA article. Under his name also I can take one article. Article need not be registered in the partner name only. Article can be registered in the name of the employee CA, provided that employee CA must be a full-time employee in this firm. Now, first of all, I will hire a CA. I'm hiring a CA means what? I will take an employee CA means what? On the records of the institute, he's associated with my firm. I will have to submit when I'm applying for empanelment with RBI, when I'm applying for empanelment with C&AG, when I am sending interest about getting audits in government, getting audits in banks, insurance companies, I have to file an empanelment form. In that, one first question that they will ask is, how many full-time CAs associated with you? How many full-time CAs associated with the firm? As partners, how many were there? As employees, how many were there? This is a question they will ask. Full-time only. Understood? So, if at all some CA is partly working, part-time is working with me, and he's having a part-time COP, he is not counted for me. And in banks, especially in banks, CA firms are categorized into levels: level 1, level 2, level 3. Only if you are level 3, you get a branch audit. Only if you are level 1, you get a central audit. What is the requirement for central audit? The firm should have minimum 7 CS full-time associated with the firm. 7 chartered accountants must be there full-time associated with the firm. Okay. Now, how they should be associated? Out of the 7, 5 must be in the form of partners. 2 must be as an employee. 2 can be as an employee. Okay. But partners must be minimum 5. Further, within this 5 partner, 2 partners should have 10 years of continuous COP. 1 partner should have 10 years of bank audit experience. Like that, RBI has given appointment eligibility for auditors. Able to understand? So, if at all I hire one CA who is an employee, who is also having his own COP, he is neither counted for his firm, he is not counted for me also. That's why part-time COP concept is not there it is not there in reality. Maybe theoretically you can have a part-time COP, part-time employment, but you are not counted anywhere. Then tell me, why the hell he will take part-time COP then? Able to understand? That's it. Next. Then MCOS. Now here the point is, what are management consultancy and other services? Like, what is the context first of all here? Why MCOS listed here? Context is, can a CA in practice? Generally, what public thinks practicing CAs means they only do statutory assignments. This is what everybody thinks. No, you are even permitted to render non-statutory assignments. You are also permitted to render non-statutory, which are basically management-oriented services, consultancy services, which are basically management consultancy and other services. Can a CA in practice provide management consultancy services just like any other professional? Absolutely. What do you mean by management consultancy service? It's very tough to define. That's why they gave inclusive definition. They gave what? Inclusive definition. Under income tax, income definition is there, right? How inclusive it is, how useless it is, the same level it is. Okay, MCOS definition is useless basically. Okay, what do not come under MCOS, that you should important, that you should know. What does not come under MCOS? MCOS shall not include what and all. Statutory audit is not an MCOS. Tax audit is not, tax representation is not an MCOS. Both direct tax and indirect tax, remember, it is tax representation, not other representation services. If at all you are doing representation services on behalf of a foreign company, acting as an authorized representative on behalf of a foreign company, or acting as a representative of a client in a transaction, they are representational services. They need not be tax representational services. Tax representational services means what? ITAT, before tribunal you are appearing, okay, or before CIT appeals you are appearing. On behalf of the client you are appearing as a tax representative. Yes or no? That's called as tax representative service. That's not a deemed to be in practice. Statutory audit is not a deemed to be in practice. Stat audit means what? Company audit, income tax audit, society audit, partnership, LLP audit. All these audits which are mandatory under law, they are all coming under stat audits. Then, if at all you are giving advices on tax matters, transactional advisory. What is it also called as? Transactional advisory on tax related matters. Or you are acting as a liquidator, trustee, executor, administrator, arbiter and receiver. If at all you are acting as these, of course these are generally provided by you in independent capacity, not as an employee. Okay, in all these three, if at all you are providing, they will not be treated as MCOS. They will not be treated as MCOS. So indirectly these are all comes under deemed to be in practice. Practicing CA generally provides them. Able to understand? But these items will not come under MCOS. Why this exclusion is important? You have a council guideline, remember? Remuneration limit you have a remember? Audit fees ceiling. What is the fees for audit ceiling? For example, to an audit client, I am providing audit services, non-audit services. The fees that I am charging for MCOS should not be more than the fees which I am charging for audit. Now, what do you mean by fees that you are charging for MCOS? MCOS fees means every service fee that you are delivering, excluding stat audit, tax representation, tax advisory, and then acting as liquidator, trustee, arbiter, all this. So exclude that. Remaining services are you providing to the company? Yes, I am providing remaining services to the company. That services, how much fee you are getting, identify. That amount should not be more than fees that you are getting for stat audit. For that reason, this exclusion list is very, very important. The practical questions were there on this. You can refer our question bank on this. Exceptional questions were there. You can refer our question bank on this. Clear, everyone? Next. These services are treated as deemed to be in practice, but obviously, this note point is not that important. Even a person who is having deemed to be in practice, or a person who is a practicing CA, he can provide MCOS services. But remember, MCOS, if you want to provide, there is no mandate requirement that you must have COP. It is not mandatory that you should have COP. Without COP, can I provide consultancy services? Forget about CA. Anybody can provide this. I'm not a CA. I can provide consultancy service. What you will do? What then? What institute is trying to say here? A CA in practice can also provide consultancy. That's what they're telling you here. They're not saying practicing CAs only should provide consultancy. No, that's not the intention. CAs who are in practice, sir, by default CA in practice means we generally think we are only permitted to render statutory services is what we generally assume. Can we provide consultancy also? Institute comes up with this clarification and says you can provide consultancy also. What do you mean by consultancy? All the list is given here. Able to understand? The entire list is given here. What are all consultancy? And remember, this is inclusive. This list is inclusive. There is no point of reading this list. Simple. It is a consultancy service if it is not an assurance service. If it is not an assurance engagement. What is assurance engagement? I told you. Just because the word audit is there, you can't call it as assurance. For example, in this environmental audit is there. Some environmental audit, energy audit, quality audit is there. The word audit is there, na? Audit means assurance, huh? No. I told you. Audit assurance means what? A third party must be there. In environment audit, the client only appoints you. He himself uses the report. Energy audit, the client will appoint you. He himself uses the report. These are part of internal audits. These are basically part of what? Internal audits. Internal audit itself is consultancy service, basically. Internal audit itself is consultancy and other service. It will not come under, statutory audit. Only statutory audit is excluded from MCOS, which means internal audit is included in MCOS. Mystery audit, Jan 26 one question came, that comes as part of MCOS. And remember, you have clause 10 part number 1 schedule number 1. Clause 10 part number 1 schedule number 1. A member who is in practice can charge. Basically, a CA in practice is treated as guilty of professional misconduct if at all he accepts fees as a percentage of profit or contingent upon finding. In that, exceptions were there. For providing management, consultancy and other services, you can, if at all you are providing any consultancy services, nothing but non-assurance service to non-audit client, you can happily charge fees as a percentage of finding, as a percentage of profit or as a percentage of benefit the client derives. You can absolutely charge. But in the recent suggested answer Jan 26, what they gave, they said mystery audit is permitted. Ethical Standard Board, no. One decision is there. Can a CA render mystery audit? Yes, he can render. So decision is given regarding whether can he render or not. They did not give any guidance on, is it an assurance engagement? Is it a MCOS? There is no guidance on that. Now that person who designed this question paper, who does not have a brain, okay, he took that incident and linked with clause number 10. So where a CA in practice was appointed to do mystery audit, and upon finding, contingent upon, he will receive some fees. This is how the question was drafted for Jan 26 exam. Okay, I'll show you this question, just you will understand. Until this answer comes also, the answer is mystery. Even I am worried, like what answer they will give. Even I am also excited. Until suggest answer comes, I am also excited, because this is actually a non-assurance service. Look at what answer they gave. According to clause number 10, clause number 10, part number 1, first schedule, if at all he charges or offers to charge or accepts or offers to accept, fees which is based on percentage of profit or which are contingent upon, yes or no, except as permitted by regulations. If at all you are accepting fees as a percentage or contingent, that's it, you are guilty. However, exceptions were there. Correct? Further, as per recent decisions, it is permissible for a member in practice to accept the assignment of mystery audit. You can accept mystery audits. There is no prohibition on that. In the given case, Mr. B practices has accepted assignment of mystery audit where the fees is contingent upon lapses and non-compliances which we identify with a higher fee for more significant finding. While acceptance of mystery is permissible, this audit acceptance is permissible, but fees arrangement which is contingent is not allowed. Why? Mystery audit point is not specifically given in exclusion. But last exclusion is what then? Non-audit services, non-assurance services to non-audit client. What is that? Mystery audit basically comes under non-assurance service. Sir, audit, no. That's what I told. Audit means, just because the word audit, what is exactly mystery audit? Mystery audit is nothing but surprise check for internal controls. It is nothing but what? Surprise check. Mystery. The one who is doing the audit is mystery. Is not told to the management. So DMart, that's what I told. DMart has appointed me to do mystery audit. I went to one DMart store. My duty is I just go like a customer. I just go just like a customer, but I observe every control lapse that is happening there, and I will report it to the top management, and top management will rectify the controls. If I report them non-compliances, control lapses and all, they will give me the fee. If there are no control lapses, they may not give me the fee. If I give them a valuable guidance to them, they will give me the fee. Now tell me, is this an assurance engagement? Is this an assurance engagement? No, it's a non-assurance engagement. Now here I am providing to one client the service, right? They didn't give information about whether he's an audit client or not. I assume he's a non-audit client. Non-assurance service to non-audit client covered under exception. I am liable. I am permitted to charge fees as a percentage or contingent. Absolutely no guilty at all. But they said, this is not allowed. Therefore, he is guilty. This answer is wrong. Able to understand? People don't understand comprehensively the provisions. That's the problem. The one who is setting this question paper, he only took that line and then he linked to clause number 7, clause number 10, where he misunderstood mystery audit means what? Clause number 10 purpose also he misunderstood, and then he linked these two and gave a wrong answer. I don't know how many students wrote the answer which I told, first of all. Yes or no? If at all, you don't have a clarity like this. Mystery auditor, auditor and excluded. If you also write, see, basically this is a wrong answer. Some students would have definitely wrote this answer only. thinking mystery audit is not covered in the exclusion? Yes or no? So therefore, there is no, mystery audit is not covered. Here member is charging contingent fee. Therefore, member is deemed to be guilty. If at all those who write like this answer, absolutely good. Sometimes half knowledge helps us. Yes or no? Sometimes ignorance is bliss. Correct? Huh? That's it. But but that answer need not always be correct. But tomorrow, when this answer is reviewed once again, tomorrow if they want to test this as part of MTP, where they send it to Board of Studies for review. MTPs before they publish, they send it for advisory. Okay? Where they told, "Arey, mystery audit is a non-assurance service. How come you classify like this? This answer is wrong," and then they recommended a revised answer. Suppose if the student is still writing the same answer, then he'll lose the marks. So when these kind of questions comes, you need to write two alternative answers. Okay? Now, see, when I read this question, I didn't expect they will give this kind of answer, because I thought it's a non-assurance service to non-audit client. That's how I interpreted basically. But they gave a completely different answer on this, which is absolutely wrong, for which I proved assurance engagement definition. I proved assurance engagement means three-party relationship must be there. This definition is there in the preface to the standards. You take EQC, framework you take. EQC pronouncement book will be there, right? Starting some 7-8 pages is there. In that, assurance engagement means what? Non-assurance engagement means what? They clearly tell all the points. Able to understand. Fine. Next. Again, don't ask ChatGPT and test whether it's an assurance or non-assurance. ChatGPT also understands half only. Because ChatGPT, how it compiles the data? It compiles the answer based on what is there in the internet. Yes or no? That's it. So how many have a thorough comprehensive understanding of the subject? First of all, very few. Correct? Next. But a right answer is always a right answer. A wrong answer may be right answer sometimes. Yes or no? Next. Yeah. So I hope now you are clear on this MCOS part. Now, next one. Next one. So, can a CA in practice render MCOS? Absolutely. Now the question, second question is, sir, I am rendering an audit service to one client. I am a stat auditor there. To the same client, can I also render MCOS? Yes. As long as they do not come under 144. As long as they do not come under 144. Now understand, in 144, one clause is there. Management service. Remember, prohibited services list includes management service. Whereas here, what are they talking about? Management, consultancy and other service. Are they same or different? Different. Acting as an independent director in a company. That's a management service. What is it? That's a management. That's not a consultancy service. That's a management service. A company is asking me an advisory on their governance functioning. As a supervisory body, they're asking me. So no, as a supervisory, some post they designate, some post they created. For example, Infosys you see, Narayana Murthy right now is taking the designation as chief emeritus something. Yes or no? Generally, for the founders, no, even when they retire from active operations, still the company want to recognize them by giving one position to them. Chief emeritus something, one designation will be given, Narayana Murthy. That's not a legally recognized decision, legally. Whenever a company is taking severe decisions, they generally consult him just on an advisory purpose. That's a management service. If at all company is paying some fees to them, that's a management service. That's not a consultancy service. Management service means a service provided by us where we take decisions for the management. Management consultancy means we assist management in taking a decision. Able to understand? Service of management is management service. Service for management is a management consultancy service. I hope you understood. If at all you are providing services for the management, that's a consultancy service and other service. If you are providing service of management where you are acting as a decision maker, then that's a management service. That's the basic difference. I hope you are clear. So can I provide consultancy services to the audit client? Yes, as long as those services does not come under management, prohibited services. For example, can I provide quality audit, environment audit, energy audit to the audit client? They all come under internal audit 144. So you should not provide it. Able to understand? That's it. So, and of course, we know very well, you want to practice, you can practice either as a sole proprietor form or individually or as a partnership or LLB. Can I practice in the name of a company? No. You cannot practice. You can run management consulting services in the name of a company. Can a CA firm, the partners, can they incorporate a company? Yes, they can incorporate. They can be a whole-time director. They can be a managing director. For which company? Consultancy company. Are you clear? Next, member in practice using other designation, not a big deal. This you can understand even in clause number 7 also. See, in this simple point, Ram Harsha, chartered accountant. When I use this wording, it implies to the public that I'm a practicing CA. When I simply say CA in Ram Harsha, they may interpret it as I'm in practice or they may not. Sometimes they in fact ask me, are you in practice? So using a name, just a qualification, abbreviation, does not tantamount, does not imply that I am in practice. But if at all I'm using full form designation, that implies I am in practice. Anywhere you should not use the word chartered accountant if you do not have COP. Can I use the word chartered accountant at least at my residential address? Yes, no problem. At residential address, because you're not practicing there, no problem. But anywhere else outside the residential address, can I use the word chartered accountant? Can I have a visiting card where the word chartered accountant is there? Can I have it? You can, only when you have COP. Clear? Sir, I'm also a cost accountant. I'm also a company secretary. So I put my visiting card like this: Ram Harsha, chartered accountant, cost accountant, company secretary. Full forms I put. No. Designation can only be one. You cannot have multiple designations. Sir, I want to put my qualification CA, CMS, CS, Ram Harsha. Can I use that? No problem. Or Ram Harsha, CA, MCOM, BCom, MBA like that. Can I use? No problem. They are all abbreviations. They are all qualifications. Any number of qualifications you can use. No problem at all. Provided you validly have that, first of all. Okay. Yeah. So only when you have it, you can happily use it. But designation, if at all you are using chartered accountant, you are prohibited to use any other designation. Two designations only permitted along with chartered accountant: insolvency professional, registered valuer. Only two extra designations permitted along with, beside chartered accountant designation. Can I use an extra designation? Only two designations are permitted: registered valuer, insolvency professional. Only these two designations are permitted. Any other designation is prohibited. Are you clear? Suppose I'm an MLA also. Chartered accountant, comma MLA put. No, not permitted. I'm an MP, not permitted. I'm a central minister, not permitted. Able to understand. That's section number 7. Now, coming to branch office provisions. Just 1 minute. Yeah, let's continue. Maintenance of branch office. You know, what is this maintenance of branch office provision? What will happen if this provision is not there? If you understand the concept behind it, the provision is dead easy. If at all this provision is not there, I can go to every city in Tamil Nadu. I can go to every city in Karnataka. I will give one name board where it is just 5,000 rupees, and I will meet every tax consultant there. With your name you don't get clients. You use my name, chartered accountant word, everything is there, my firm name. Put this name board outside your office. Okay? Get clients. Pay me some commission. I can enter like this contract. Yes or no? So I can open 1,000 branches across India. 10,000 branches across India. What just it cost me per name board? That to a beautiful name board, 5,000 rupees it cost me. That's it. With 5,000 rupees, I can have a branch. This institute want to prohibit. For that reason, what they mention, you want to have a branch? Do one thing. Assign one full-time CA there. Assign one full-time CA for that branch. Only if you are able to have a full-time CA for that branch as an in charge, then I don't object. Without having a CA, you want to call it as a branch. Without monitoring by a chartered accountant, you want to call it as a branch. I will not permit. Suppose you want to say, sir, I want to monitor all the branches. No. A member can monitor only one branch. A member of the institute, I will agree that you are a branch in charge only for one branch. Multiple branches I will not allow. Only for one branch I will allow you to be in charge. You want to open another branch? You want to call it as your branch? No problem. Absolutely. Do one thing. Hire one partner or hire one employee who is a CA. Make him as an in charge for that. Intimate me who is that fellow, what is his membership number, where is the branch address, and then the fact that he is in charge, your agreement will be there, right, between you both. Share me the agreement. This is the rule institute has kept. Accordingly, a CA in practice cannot have a branch without a separate branch in charge. Are you clear? For this, there is some relaxation. For this, there is one relaxation given. Suppose you want to open the branch within the same city, or you want to open the branch in the same building, or you want to open the branch within 50 kilometers, from the city municipality limits, where your main office is located, from that location within 50 kilometers from municipality limits, not 50 kilometers from head office, 50 kilometers from municipality. Yes or no? So within 50 kilometers you want to open a branch, then I will agree, you can monitor all that, because it's in the same city, you can monitor all that. For that, separate in charge is not required. You want to open a branch beyond 50 kilometers beyond the city, how can you monitor that? I will not believe in your monitoring skills there. Better hire one exclusive CA for that branch. Able to understand? That's it. So whenever you're opening, so that's what the meaning, that's what the branch office meaning. I hope you're able to understand. Now, first of all, so you must have a separate in charge. There must be separate in charge for the branch. That in charge must be a chartered accountant, nothing but member of the institute. Not only that, that in charge must be connected with your firm. How he should be connected with the firm? Either as a partner or as a full-time employee, not even part-time. Part-time is not allowed here. Full-time employee. When he can be a full-time employee? When he don't have a COP individually. When he don't have a COP individually. If at all he has COP individually, he cannot become full-time employee here. Able to understand? That's why I'm telling you, part-time practice concept is not there. It's not exist. In reality, part-time practice concept is not recognized at all, because it's useless. Nobody will count you. You will not be counted for yourself. Understood? So only a full-time, for example, you say Companies Act, only a full-time CA can be appointed as an auditor. A Societies Act, only a full-time CA with COP can be appointed as an auditor. Tax audit, only a full-time CA with COP can be appointed as an tax auditor. If at all you are having part-time COP, what is the point? You can't sign any statutory form. You can't sign anything because you are disqualified there. Part-time COP is useless. That's the meaning. Okay. So can a CA in practice open a branch office beyond 50 kilometers from the municipal limits of the city? You can open. Only one requirement: hire one CA who is already a CA member of the institute. Okay. Whether practice or not doesn't matter. Hire one CA. Put him as an in charge there. Intimate to the institute. And that CA must be connected with your firm either as a full-time employee or as a full-time partner with COP. Only then he can act as an in charge. That's it. Provision's over. Branch audit provision is over. This requirement of separate in charge who should be a member of the institute, this requirement do not apply if the other office, if the branch office is within the same building where head office is there, if the branch office is within the same city, if the branch office is within 50 kilometers from the municipality limits, then this condition will not apply. Clear? Sir, what about temporary branch, sir? What about temporary branch? For example, I'm a member practicing in hill area. Most of my clients were from plain. Okay, below the hill area, there are so many of my clients. Yes or no? Now, especially during the filing season and all, they can't reach me every time. So, I want to open a temporary branch office there. Should it also require member in charge, separate in charge of all that? Because first of all, the office itself is temporary. It is a temporary branch only when it is operating for not more than 3 months in a year. Okay, if at all the temporary office is operating for not more than 3 months in a year and the regular office is always open, even though when there is a temporary office, yes or no, you can have a temporary office. That too, this facility was given only for whom? A member who is practicing in hill area. Yes or no? If at all I'm having office in Ooty, yes or no, I can have a temporary branch office outside Ooty. Okay, where I will open that office not more than 3 months. I can open it even without separate in charge. Generally, a branch office opening is not permitted without an in charge. But since it's a temporary office, it can be permitted. But there are some conditions. The temporary office should not be open more than 3 months. The regular office should not be closed. Yes or no? Entire correspondence with the institute shall be with the head office only. Temporary office name board should only be displayed during the permitted period. The temporary office cannot be listed on the letterhead visiting cards. You cannot mention in your website visiting card that we have an office there. First of all, that's not a permanent branch. That's not a permanent establishment. Yes or no? And before opening, inform the institute and a notice must be sent to the institute after office is closed. On this, one question is there. A CA is there, has a head office in Chennai, for example. He opened another office branch within Chennai municipality only. Okay, he opened it and he does not intimate this office information to ICAI. He does not intimate, and he opened this office without a separate branch in charge. Most of the students, what they write is, since it is within the same limit of municipality, there is no guilty on the part of the member. This is what they wrote. But actual answer is what, I know on this part there is no guilty, but whenever you are having more than one offices, even though it is within the same city, all professional addresses you must intimate to institute. Here the second office, though opened within the same city without a separate in charge, though there is no guilty under the in charge provisions, but member failed to intimate the second office information to ICAI. And when you are having more than one office in the same city, you should declare, you should tell the institute which is the main office for the correspondence purpose. So simple. If a different door number is there for another office, that's it. You have to intimate that address to the institute. If door number changes, that's it. That's another office. Technically speaking, you must intimate the office details to the institute. Sir, it doesn't require separate in charge. It is within 50 kilometers. I am not asking you to keep a separate in charge, man. I am asking you, you have a second professional address, no? Intimate. Same requirement is there in GST law. Same requirement is there in GST law. It's a place of business. It's additional place of business. Simple logic. Yes or no? That's it. Branch office provisions over. Main. The introduction to this entire provisions is over. Clear? Easy? That's it. Yeah. Let's continue the clauses discussion, the schedules discussion. We have two schedules. One is Schedule 1 and Schedule 2. So what Schedule 1 talks about, what Schedule 2 talks about. By the way, first Schedule 1 has 4 parts. Schedule 1 has 4 parts. Schedule 2 has 3 parts. And last part in each schedule is dealing with other misconduct. The last part is dealing with other misconduct. And the first part is dealing with professional misconduct for CAs in practice. Correct? Professional misconducts for CAs in practice. The first part and last part constant. Correct? So the misconducts are broadly divided into 2 types, professional misconduct and other misconduct. The first part in each schedule is dealing with professional misconduct for CS in practice, and the last part in each schedule is dealing with other misconduct for CS in practice. Now, in the second schedule, last before part, nothing but the middle one, it is dealing with professional misconducts for CS generally. Okay, so the part 2. The similar one is there, last but one. Yes or no? The last but one, same. Professional misconduct for CS generally. Now, in first part, there is one exclusive item. There is one exclusive item. Professional misconduct for CAs in service. For CA in service. So, CA in service, what is professional misconduct for them is exclusively discussed only in part schedule number 1. Such a part is not there in schedule number 2. This is the difference. Okay, so technically schedule number 1 part 1 CA in practice professional misconduct, schedule number 2 part 1 CA in practice professional misconduct, schedule number 1 part 3 professional misconduct for CS in general, there professional misconduct for CS in general, last part other misconduct, last part there other misconduct. But here one extra part is there. Before they discuss generally, they discussed for services. That's it. 7 parts you can easily remember. Yes or no? Now coming to how many clauses we have. First clause we have, first part we have 12, part 2 we have 2, part 3 CS professional misconduct CS generally, I think we have here 3, other misconduct we have 2. Correct? So total we have 14 plus 3, 17 plus 2, 19 misconducts were there in schedule number 1. Then coming to schedule number 2, professional misconduct for CS in practice 10 were there. For CS in generally 4 plus 1 is equal to 5. 1 is recently added, that's why. Okay. Then other misconduct only 1. So which means total is 16. So totally 35. So how many total misconducts that we are having? How many clauses that we are having? 35. Correct? 35? 20, 29? Yeah, correct. 35 clauses we have. Am I right? Yeah, fine. So total 35 clauses that we are having. Now let's discuss one after one. Now, first thing I will discuss, first thing I will cover is other misconduct. You should discuss in the same order. You should revise in the same order next time also. For the best way to remember, you should revise in the same order. Now, part number 4, schedule number 1, which is dealing with other misconduct. Yes or no? When I say other misconduct, to every CA it applies. So other misconduct is discussed for every CA naturally. Yes or no? And again, we have a similar part. Part 3, schedule number 2, which is also dealing with other misconduct CS in general. Now, what is in schedule 2? If at all a CA was liable for imprisonment for a period exceeding 6 months, for a period exceeding 6 months, just can you just confirm me, is it more than or equal to a? Both. Exceeding only. Yeah, fine. So which means it's only exceeding 6 months. If at all imprisonment is there, here there is only one clause. There is only one clause that is there. You are treated as guilty of other misconduct under part number 3, schedule number 2. That's it. Suppose if at all you are having imprisonment, less than or equal to 6 months, less than or equal to 6 months imprisonment. I think that is clause number 2. Correct? Huh? Clause number 2 in schedule number 1, part number 4. Yes or no? So nothing but the last clause in schedule number 1, the last clause in schedule number 2, both are dealing with imprisonment. The last clause, even in the clauses list also, is last clause, not only in the parts list. First one, that's what I'm asking. Okay, fine. So first one. So here, if it is first one, then I have another logic. Clause 1 in both the cases. Yes or no? In other misconduct, clause 1 in both the cases, it will be dealing with imprisonment. So clause 1 up to 6 months. You understood how to say? You just have to update it immediately. The logic have to update it. Fine. See, I told you at the beginning, even I don't remember clause numbers absolutely, but by the time I finish the session, I will remember, I will master over it. Okay, the same thing will happen. Again, after 2 weeks, I'll forget. After 2 weeks or 1 month, I'll forget. Natural. Fine, look at. So, in schedule number 2, part number 3, other misconduct. You know, this is what dealing with other misconduct. First clause, and there is only one clause, which is dealing with imprisonment. Same part number 4, schedule number 1, other misconduct. In that also, first clause is dealing with imprisonment. So, imprisonment up to 6 months. Imprisonment more than 6 months, first clause in schedule 2. Imprisonment up to 6 months, first clause in schedule 1. Just that here it is part 4, there it is part 3. Suppose you are bringing disrepute to the profession. If an activity of a member of the institute is such that his activities are bringing disrepute to the profession of the institute, then he will be treated as guilty of other misconduct. You know, here, suppose a CA was involved in a scam. Okay, may not be related to some profession, may be related to some personal capacity. He was involved in some particular crime. Yes or no? But because he's a CA, entire news media channels, everything is saying, instead of he committed, CA committed, all that they're saying. Yes or no? Because of that, institute profession is at risk. Yes or no? So the respect is, the profession dignity is at risk. So institute can make you disqualify under other misconduct. Are you clear? With this, other misconduct is over. Easy or not? Everyone. Now I will go back to, then I will go to part number 2, schedule number 1. Then I will discuss part number 2, schedule number 1, which is exclusively discussed for CA in service. That too, which misconduct ma? Professional misconduct. Now in this we have 2 clauses. Clause number 1, clause number 2. I think clause number 1 is regarding agree to pay, right? Promises, if at all a CA agree to pay or allowing to pay, yes or no, allowing somebody to receive emoluments, correct? Yeah, this is like, yeah, I mean, you can call it as job consultancy. You can call it as job consultancy fee is prohibited. What is it? Job consultancy fees is prohibited. Whereas clause number 2 is regarding kickbacks. Clause number 2 is regarding kickbacks. Like what exactly is this? Suppose you are working as an employee in a company. You are getting salary. We call it as emoluments. We call it as what? Emoluments. From the gross emoluments, you should not pay this amount to anybody. However, you can pay it to family, friends, relatives, no problem. But you should not pay to anybody. If at all you are paying from the emoluments as an obligation to somebody, you are treated as guilty of professional misconduct. The intention behind this is very simple. Mostly job consultancy firms, what they do is, they will get you a job and from the salary that you are getting, they charge some fees. Monthly, they charge some fees for first year of job. Okay, like that. Suppose if at all you got a job through job consultancy, and now you're paying the salary, some percentage of salary to the job consultancy firm. That's a guilty. If at all institute get to know this, that's a guilty. That's the objective. You should get the job by skill and talent, not through consultancy, not through all this. Able to understand? Hello. Next, kickbacks. What is this kickback? You know, suppose CA in service means what, by the way? You are working as an employee. Yes or no? You are in a fiduciary role. Technically speaking, from employer point of view, you have to be trustworthy and honest. Now, since you are a CA, since you are in a senior role in the company, they gave you some duty. Sir, we want stat auditor. Can you refer somebody? They came and requested you, please recommend a stat auditor. You have so many friends who are in practice. You know, you went and spoke to one of your friends, negotiated a good amount of audit fee, and then brought to the company as an auditor. You recommended to the audit committee also approved your recommendation. They recommended to board, appointed. They paid 1 crore audit fee, and from your friend, you are charging 10 lakhs commission. Because you referred him, you are charging commission from your friend. That's a kickback. What is it actually? Kickback. So, you know, some CAs who are in a senior role, then they approve vendors, they approve suppliers, they approve lawyers, they approve CAs. Yes or no? Now to approve them, you are charging some commission, you are charging some amount, you are agreeing to accept some fees. Yes or no? For entering into contract with some service providers for the company purpose, you are taking kickbacks, you are guilty. Suppose if company permitted you to take that, then no problem. Unauthorizedly you are charging it, that's a guilty. And the same guilty will not apply for practicing CA. Suppose a practicing CA, suppose I'm already a stat auditor for the company, and the company is looking for internal auditor. My friend is an internal auditor. My friend is very good at expertise at internal audit. I referred my friend to the company. The company is paying to my friend 2 crore fee, and my friend paid me 20 lakh. Referral fee he paid me. No problem. In practice, referral fee is allowed. Yes or no? Sir, it's unfair, no? If at all I'm working as an employee, I'm also getting referral fee. What's wrong here? Here you are an agent of the company. Agent of the company has to be truthful to the principle. Yes or no? You can't take a commission here. That's the logic. Able to understand? Everything is very logical here. So, I hope you understood part number 2, schedule number 1. So, clause 1 is dealing with, from the salary which I get, I should not allow somebody to get a share from this. If I allow somebody to take, if I agree to pay, if I allow somebody, yes or no, to share from the salary which I'm getting on a conditional basis, that too, because I have to pay them, that's guilty. However, you are permitted to share with your friends, family, and then relatives, no problem at all. Clear? Now, coming to clause number 2, kickbacks are prohibited. Clear? Easy or not? That's it. So, with this, part number 2, schedule number 1 is also completed. Now, if you observe, 5 clauses we completed out of 35 clauses we have. 5 clauses we have completed out of 35 clauses that we have. Confident until now? Now look at part number 3, schedule number 1. Part number 3, schedule number 1. So what is this? Professional misconduct for CAs generally. In this, just we completed already clause number 1. You are not an FCA, but acting as an FCA. A CA who is not a fellow but acting as a fellow, it's treated as guilty of professional misconduct. Do you agree? Then we have 2 more clauses, clause number 2, clause number 3. What is clause number 2? You failed to supply. What is it? You failed to supply information called by whom? ICAI, council, committees, yes or no? Committees, disciplinary, director disciplinary or disciplinary committee, or quality review board, or appellate authority. That's it. Yes or no? So, suppose any of them are calling for information from you to do something, to some assessment related purpose or some checking purpose. You are failing to supply the information called by them. Yes or no? You are treated as guilty. You are treated as guilty. Now, if you see, there is a corresponding one clause. There is one corresponding clause in schedule 2, part number 2. In schedule 2, part number 2, there is one clause, clause number 3. I think clause number 3. False information, correct? Am I right? false information to institute, council, committees, a disciplinary director, disciplinary committee, board of discipline, appellate authority, QRB. Same list only. If you are not responding them, schedule 1 offense. You are responding them, but you are providing them misleading information. That's even more severe. Schedule 2 offense is even more severe than schedule 1 offense. I hope you are aware of it. In fact, in May 25 or maybe November 24, they asked a question on punishments. Schedule 2 punishment, schedule 1 punishment, appellate authority, by what time you can apply. There is a diagram in the ethics chapter. Remember, disciplinary procedure diagram, the diagram is there. That question they tested. Generally, every student neglect it. They won't even touch it. This will not be tested at all. And that question was tested for 5 marks question. Okay, fine. I'll discuss that. Now look at. So if at all you are failing to supply information called by them, you are guilty under schedule 1. Now this point is applicable for any CA. Practicing it doesn't matter, non-practice doesn't matter. So automatically part 3. Yes or no? Automatically part 3. And this is dealt under clause number 2. But if you are supplying false information to them, then it's much more severe. Yes or no? Not providing information is less severe than providing wrong information. Yes or no? So it is much more severe. So automatically schedule 2 attracts, and automatically part 2 there, and clause number 3 attracts here. Be careful. Now here you are supplying false information to whom? False information to ICAI committees, all that. What if I am giving false information to others, not to him, not to the ICAI, but I gave a false information. Suppose a client asked me, sir, how much is your experience? I gave a false information to the client. Another CA is asking me regarding some referral fee, all that. Okay, I told him I get only limited fee, I'll pay referral fee lesser. So I gave a false information to another CA while inviting work from him. Okay, so I am giving false information in my contracts, in my business contracts. I'm giving false information. Again, that's a schedule 1 offense. Again, that's a schedule 1 offense, which is again clause 3. So where you are giving false information to others, okay, other CAs while inviting work or clients, yes or no, any of that. So if at all you are giving false information while inviting work from other CAs, false information you are giving to others, not to the institute, then again it is part of schedule number 1. Now if you observe, one more part we completed in schedule 1. What is that part we completed in schedule 1? Part number 3, which has 3 clauses. Clause 1, not an FCA, acting as an FCA. Clause 2, failing to supply information, failing to provide information called for by ICAI, council, committees, disciplinary committee, board of discipline, quality review board, appellate authority. Clause number 3, false information to others. Suppose if I'm giving false information to ICAI committees, all that, then that's a schedule 2 offense. Clause number 3, part number 2. I hope you remember, everyone. Now in the schedule 2, there is part 1. In the schedule 2, part 2, clause 3 is there, part 2 is there, right? Inside that there is clause number 1. What is this clause number 1? In part number 2, you fail to comply with CA Act. Correct? Check it out. You fail to comply with CA Act provisions, regulations made there under council guidelines. Sir, I failed to comply with the CA Act provisions and guidelines made there under. Then you are liable for guilty under part number 2, schedule number 2, clause number 1. Now tell me, clause number 2, what is it dealing with? Confidentiality to be maintained by employee. What is it? Confidentiality. A CA who is in employment must maintain confidentiality of the employer information. Correct? Confidentiality only? Yes. Sir, what about practicing CA confidentiality? Part number 1, schedule 2 only, clause 1. For CA in practice, if at all he has to maintain confidentiality of client information, that's clause 1, part 1, schedule number 2. If an employee CA has to maintain confidentiality, that part number 2, clause number 2. Are you clear until now? Yes or no? Look at clause number 1, fails to comply with provisions of CA Act, regulations, guidelines they made there under. Clause 2, an employee CA fails to maintain confidentiality with the employer company data. Clause 3, false information supplied to the institute or council or other members. Clause 4, defalcation. Correct? Defalcation of money received in professional capacity. You are cheating. You are cheating the client with the money. Yes or no? Or you went to do surprise check of cash verification. You are stealing some cash there. This all comes under defalcation. And clause number 5, which is a new clause. Clause number 5 is a new clause. What is this clause number 5? If you are continuing as a statutory auditor of a company, yes or no, in spite of failing to comply with the provisions of the law, you are still acting as an auditor in non-compliance of the provisions of Companies Act. Correct? You are continuing as an auditor in non-compliance with the provisions of a Companies Act. For example, you are appointed as an auditor, you actually were disqualified. You know it, but you are still hiding it. You are still continuing, because disqualifications, unless we reveal, nobody knows. Yes or no? My relative is holding more than 1 lakh face value. Yes or no? So, and I didn't inform the company. I still continued as an auditor in provision, in non-compliance with the provisions of the Companies Act. I'm still continuing as a statutory auditor. Then clause number 5 attracts. Sir, a similar clause is there, no? Clause number 9, part number 1, schedule number 1. What is that clause? If a CA in practice accepting the audit of a client without checking provisions of the Companies Act or some other act which is applicable, that some other act is recently added. Suppose a company want to appoint me as a tax auditor. Income Tax Act also has some disqualifications. Without checking that, without checking whether I'm eligible or not, I directly accepted the audit. Then I'm guilty. A company is there. They're appointing me as an auditor. In a company, I should only give declaration whether I'm eligible or not. They don't have any mechanism to check whether I'm disqualified or not. They don't have any mechanism. I should only give a declaration voluntarily. So I should give declaration that I'm not disqualified. And I gave a false declaration to the company. Or I gave a declaration. I mean, if I give a false declaration to the company, supplying false information to others. Yes or no? Clause number 3, part number 3, schedule number 1. But here, I didn't check carelessly. Appa, thank God I got a client. I accepted blindly without checking whether I'm eligible, ethically fit, disqualified. Without checking everything, I accepted the audit. If a CA in practice accepts the appointment as an auditor without ascertaining compliance with provisions of Companies Act or any other law for the time being in force, if you accepted appointment without ascertaining your eligibility, then you are treated as guilty of professional misconduct under clause number 9, part number 1, schedule number 1. Sir, I accepted. At the time of acceptance, I'm not guilty. I accepted. I checked everything law. I'm absolutely fit. And I accepted. Clause number 9 does not apply to me. But after accepting, I suffered with disqualification. After acceptance, I am suffering with disqualification. But guess what? I didn't reveal the company until I get my fees. Once I got my fees, I gave an audit report. Then I revealed the company. Sir, I'm actually disqualified, sir, now. Now company went and filed a complaint with ICAI. Earlier clause number 9 attracts only when before acceptance only. If at all there is a disqualification, that time only this attracts. Now where ICAI can punish? So they added a new clause, clause number 5. Technically, they should not add this. They should amend this. Why are they adding another clause and making burden for the student? Yes or no? Unnecessary. But different people know when they're drafting the law, they do mistakes like this. Also, it should not come under schedule 2. But you know what? Without checking complaints or accepting, that's one type of offense. You are continuing even though you know that it is not eligible. That's a different level of offense. So for that reason, they classified this under schedule number 2. Do you understand the difference between clause 5, part number 2, schedule number 2 versus clause 9, part 1, schedule number 1? Do you? Like this, you should link. Immediately when you are having clause number 9, in whatever the notes you are having, write this reference. Clause number 5, part number 2, schedule number 2. This reference you write, immediately you should read. Again in clause number 5 below, you should write clause number 9, part number 1, schedule number 1, cross-referencing. Every time you should cross-reference and read. The same is the case with respect to part number 3, schedule 1, I told no, false in failure to supply information. There, you should immediately read what? False information to the institute. False information to the institute means what? Clause number 3, part number 2, schedule number 2. Correct? Just a minute. Correct? Everyone? Where is it? Yeah. So, So clause number 3, part number 2, schedule number 2. Now here false information to ICAI is there, no? There you write one more point. False information submitted to others. That is again clause number 3, but in schedule number 1. Hello everyone. These are the clauses where every student confuses. Now, one most important clarification. Now, if you see schedule number 2, part number 2, clause number 1, that's a very dangerous clause. What is it? If a member failed to comply with CA Act, regulations, guidelines made thereunder, you are guilty, right, under schedule number 2. Suppose if I fail to comply with the branch office provision, this clause can be attracted. Suppose if I fail with schedule 1, this clause get attracted because schedule is part of the act. Is schedule different from the act? Schedule is part of the act. If I do not comply with schedule 3 financial statements format, it's a failure of Companies Act, failure with Companies Act provision. So schedule is part, which means any misconduct that is attracted, any misconduct, this clause also automatically attracts. So the question is, sir, every misconduct, whenever any misconduct in exam they're asking, should I write this clause information also? Yes. Are you getting it? You know how you should write in exam presentation in ethics. First you should write all the relevant clauses applicable. One after one point you should write. Okay. So you should write as per provisions of or as per CA Act 1949, schedule number 1, clause number 6, part number 1, a CA, in practice is deemed to be guilty if at all he is soliciting any client directly or indirectly with an advertisement, personal communication, circular, whatever, is deemed to be guilty. Further, as per clause number 1, part number 2, schedule number 2, a CA, whether in practice or not, is deemed to be guilty if at all he fails to comply with CA Act and provisions thereunder. Now, sir, if I write an extra point, will I lose a mark? No. If you miss the point, you will lose the mark. If you write an extra point which is irrelevant there, which according to the examiner irrelevant, nothing gonna happen. Because examiner, when this valuing, they look at suggested answer, they will search for that wordings in your answer. If that wordings are there, further they'll put the mark. Extra point you wrote, he does not have that knowledge to know whether you wrote a right answer or wrong answer. Able to understand? Suppose in ethics answer, I will write one audit reporting related one line. He doesn't have the ability to understand that's a wrong answer. He only has the ability to check whether your answer is right or wrong. He does not have the ability to check whether your answer is wrong. If your answer is not matching with suggested answer, then no mark. If your answer is matching with suggested answer and you're adding extra points, no problem at all. So you can always write clause number 1. Why I'm recommending this? In illustrations in the ICA book or one TYK question is there clause number 1 is also added. We generally write what? Exclusive, special, exclusively dealing that guilty is under some specific clause, right? We write that point and then leave it. But in that one question, clause number 1, this point is also added, which means there is a possibility in the exam, suggested answer might contain clause 1 also. In addition to the actual tested clause, this residual clause would also be added. If at all in the suggested answer this clause is also there, then this clause will get 1 mark weightage. If you miss to write this clause, you will lose 1 mark even though your answer is right and complete. Hello. But in suggested answer, if this point is not there, but you are writing this point, nothing gonna happen. So why to lose even that 1 mark? Why to risk it? Now whether in the suggested answer this clause number 1 will be there or will not be there, it's debatable. That depends upon the person who is setting the paper. Because in our question bank, one question is there, okay, where clause 1 is also referred. Actually there are one different clauses tested, but clause 1 is also included. I think it's in illustrations only. Illustrations or TYK, somewhere it is there. Able to understand? Hello? That's it. So with this, we completed. Except part 1, all the parts completed. Yes or no? All the parts we complete except part 1. So in schedule 1, part 1 is pending. Schedule 2, part 1 is pending. Remaining, schedule 1, part 2. CA in service, 2 clauses. Schedule 1, part 3. This is regarding CS in general, 3 clauses. Schedule 1, part 4. Other misconduct, 2 clauses. Schedule 2, part 2. 5 clauses for CS in general. Schedule 2 part 3, only one clause. Now schedule 2 part 2, 5 clauses are there, right? What are they? First one, general residuary clause. Every provision will attract there. If a CA, whether in practice or not, fails to comply with act, regulations and guidelines made thereunder, he is deemed to be guilty of professional misconduct. Clause number 2, an employee, a CA in service must maintain confidentiality of the information acquired in employee capacity, whether for a present employer, past employer, doesn't matter. Yes or no? Failure to comply with that will be guilty of professional misconduct. Then clause number 3, a CA in practice or service is deemed to be guilty of professional misconduct if he supplies false information knowingly to the institute, council, committee, all that. Yes or no? Then clause 4, if a CA, whether in practice or not, in the professional capacity, defalcates the money received from the client, then he is deemed to be guilty. But here there is one linked clause again. Clause 10, part number 1, schedule number 2. Client money, you should keep it in a separate bank account. That point also should link here. Whenever you're reading this, you should link that point also. Clear? Then 5th clause, a CA in practice, this general is applicable for a CA. A CA is deemed to be guilty of professional misconduct if at all he is continuing as an auditor of a company in violation of, in non-compliance of provisions of Companies Act. That's it. Easy. Then other misconduct more than 6 months. Here other misconduct up to 6 months. Now here it is part 3. 3 clauses we have. 1, not an FCA, acting as an FCA. 2, fails to supply information called by all that bodies. Clause 3, false information to others while inviting work from the others. That's it. If you remember the clause, mentioning the clause number, part number, schedule number will add weightage to your answer. Clear? It will add weight to your answer. Sometimes they only look at the clause number, whether you wrote correctly or not, and then they'll put the mark. They won't even read the further answer. So that's the advantage of writing clause number, part number, schedule number correctly, and write it only when you are 100% certain. And mystery audit, one example I told. For that alternative answer they gave, yes or no? One alternative answer they gave. Actually it's not alternative, that's the wrong answer. Yes or no? But still, if such a kind of alternative is possible when you're writing, write both the answers. No problem at all. Okay. Alternative one, you should put clearly heading as alternative one. See, when you're writing, no, the presentation should be very, very clear. You should put on, question number 6A, for example, question number, 6A on the left column also you should put. At both the places you must put. Some students, they will forget the question number. They deserve failure. Obviously, how can you forget putting question number? Yeah, sir, in tension I put, sir. What tension? Yes or no? So they don't put question number sometimes. Roll number, entering OMR sheet, everywhere they do mistakes. Why are you hurried? Nothing gonna happen. 5 minutes. Don't ruin your attempt for that 5 minutes. Yes or no? Calm. Make sure the formalities are always perfect. Yes or no? The actual matter secondary. Make sure the formalities are always perfect. So now, like this you wrote a alternative 1. You just mention alternative 1. Precisely, clearly you mention, okay, so that by looking at it he should understand, yes, alternative 1 is there. Now some students, based on certified copies, what I saw is their letters are very small. It's very tough to understand. You know what? Physical paper will not be there with the examiner. Physical paper will not be there with the examiner. Scanned copy will be there. In scanned copy, by default your answer size will compress. Your letter size compresses. If there is a point, answering, valuing a right answer is easier than valuing a wrong answer. Always remember this. If your answer is right and matching the suggested answer, it's very easy for the examiner. If your answer is having different wordings, different way, different structure, it's difficult for him to trace. Easy answer. If you remember your answer, if you understand, that's not sufficient. He should understand. Yes or no? He should understand. Make bigger letters. Use bigger letters. Spacing use. No problem at all. Okay. So as per clause number 1, part number 1, schedule number 1 of CA Act, you see how bigger the letters are. Even if your handwriting is not good, it doesn't matter. Good handwriting doesn't matter. It's an added advantage. Okay. But it doesn't matter. Legibility must be there. He should understand what you wrote. That is most important. If at all your letters are small, yes or no, if you think just show it to your friend. If at all he's not able to understand, damn sure examiner will not understand. Yes or no? Be honest when you're reviewing your friend's handwriting and all. Okay. So tell them. Now like this you write. Spacing neatly use as per clause number 1, part number 1, like that you clearly write, okay? SCA in practice. And remember, in ethics, what mistake many are doing is they're not writing full clause. First of all, they're not writing full clause. First, they might given some, for example, SCA acting, SCA is providing some sponsorship services. Okay, so that question came. First, you should write entire clause number 6. Then you should write regarding sponsorship provision. Then you should analyze given facts, what happened. Then you should give conclusion. And you're giving conclusion, no? You might have given conclusion saying not guilty or guilty something, underline it. Underline it. And when you're writing provision also, clause numbers, if you are 100% confident, underline it. Provision you wrote, keywords of the provision, underline it. Why are you underlining? You are indirectly hinting. Just read this line and then go. Yes or no? If that line is matching with his suggested answer, he'll directly value. He won't even read the rest of the answer. He'll just directly put 111 mark. Understood? You see scheme of valuation, how it will be. So the suggested answer will be there. I mean, scheme of valuation will be there. There, the points will be clear. If a student wrote these 2 points, put 2 marks. If a student wrote any 3 out of these points, put 2 marks. Like that, they will be having. Generally, for every 1 point, 1 mark will be allocated. Okay. So a student wrote first provision of ethics, provision related to the respect to clause, 1 mark. Then he wrote the case situation related provision, 1 mark. Then he gave analysis correctly, 1 mark. Then conclusion, 2 marks. Sometimes conclusion, the marks which are given, no, that might be linked with the above. Conditional marking will be there sometimes. What conditional marking? Only if the above marks is scored, then put the last 2 marks. For example, many of you do consolidation steps. For example, there are some 7 or 8 steps in consolidation. So, for example, you gave balance sheet which is correct, or balance sheet is the main answer. Steps were there. Balance sheet score, the score on the balance sheet is sometimes linked with some step number 4 or step number 3. Only if step number 3 student got the mark, here you put the mark. Sometimes this step would have been right, but the previous step which is important for this step would have been wrong. Yes or no? That step you wrote wrong and this step you wrote right. Later step, you don't get step marks there. People think step marks will be there. Step marks will come when consecutively the steps are right. Hello? Able to understand? So like this, marking schemes will be there like this, because many of my friends are valuations. That's why I know this. Many of my friends are valuations. All my they're all senior, no. Now you know what? How much they pay ICAI? I made a video on how much remuneration they pay to valuationer per paper. 160 rupees. A final, I think it's 250 rupees per paper. 250 rupees per paper they pay valuationer fee, and each paper takes half an hour to value, which is technically speaking very lesser amount. If they have to pay good amount to the valuationer, first they should collect good amount from you. We are fortunate. I'm telling you, we are fortunate. Institute, the fees that they charge is very less. You look at ACCA, per exam you have to pay 25,000 or some 30,000. CPA you take, per exam you have to pay 90,000. Registration fee, CPA, only the amount that you pay to the CPA institute is 3.5-4 lakh in the entire journey. To the ICAI, how much you're paying? Less than 1 lakh. Even if 20 repeated attempts are there. Foundation fees, inter fee, final fee plus examination fee. So we have to be fortunate for that. So they're collecting very lesser fee. Per seat in exam center, they have to pay 100 rupees per seat. It's not exam hall, they're renting it. Per seat, they need to pay 75 rupees or 100 rupees. So like that, they have to pay to the exam center. Means you're paying for both the groups, 6 papers. You're paying, let us assume 3,000 rupees. Yes or no? Per paper on an average, you're paying 400 rupees. Out of the 250 rupees will go to the examiner. 500 rupees out of 250 will go to the valuation. And 100 rupees for that will go to the exam center. Now movement, overhead expenditure, they need to recover, no? Paper sending, physical paper, printing cost, everything, scanning, entire background, overhead department. Literally in examination, they won't get 1 rupee margin. Literally they won't get 1 rupee margin also in examination. So that is something very, very good. Okay. Paper setter, they need to pay the fee for paper setter. And in between, reviewer will be there. In valuation, two levels will be there. Valuation. Again, when you're writing exam, observer will come. Your paper seal will be open, no? In exam, seal will be open, right? Who will open the seal? Observer. Who is a CA? So all your papers, exam papers, 10 days before the first exam date will go to the bank, nearby bank. So examination center nearby, some national bank will be there. In that locker, it will be there. On the day of the exam, afternoon 12:30. That's the time fixed. Afternoon 12:30, the principal of the examination center and the CA who is an observer, both of them have to go to the bank, In both of their presence, the locker has to be opened by the bank official. Then the set has to be taken as per the code matching with the instruction given in the mail just 1 hour before. Just 1 or 2 hours before only the principal will get the mail, the CA observer will get the mail. Then they should bring that set, match with the mail, the code. Then only they can open it by 1:30 or maybe 1:15 they'll open. Then they will distribute it to you so that it will reach you by 1:45. In the recent Jan exam, CA inter audit paper, what happened is by mistake they brought another bundle and then they opened. They didn't distribute actually. They just opened it and the observer immediately complained. Probably they might have distributed or they might have not distributed. Actually, if it is distributed, FM exam would also be cancelled because paper got leaked. No. Actually, what happened is instead of audit paper, they opened FM paper. Or I'm not exactly sure which some wrong set is opened. Okay. So they opened the wrong cell, observer intimated immediately the institute, and within 15 minutes they announced a notification saying CA inter audit exam is cancelled and postponed. And then they designed one more paper. That's it. Clear? Do this process. So make sure valuation or job as easy as possible. He doesn't know the subject. If you think you write your answer in your own words, if you think you write an alternative answer, he does not have that intelligence first of all. What if I give you CA inter mathematics paper? Exactly the same logic. If I give you economics paper, what you will do? If I give you CA inter audit paper, what you will do? Exactly. Yes or no? Or any other paper. You just look at the answer and then value it. Costing, the same thing you do. That's it. Okay, fine. Part 1 we'll discuss after the break. Yeah. You're confident now until now ethics? That's it.